Okay, let's begin now. Start time, we already know. We have the start time. We have started at around 8 o'clock. Okay, there is no end time. There is no end time. Okay, till we reach a particular level. Okay, we'll not keep exact target, but till we reach a particular level, we will be here in class. Okay, that is one thing. And one more thing that we have to discuss is what are we going to cover? There are some important questions which we have, which I always cover because I feel that's like the very important questions which without covering that we cannot go to exam itself. Okay, in ICA study material itself, and there are some practice questions which are called as practical questions at the end. Okay, all those questions are very important. We have to discuss. And the additional target which I've kept is to even see the questions of the last 3 exams. Each chapter wise we will do the questions of last 3 exams and the questions of the RTPs. Okay, that is June 2024 RTP, September 2024 RTP, and Jan 2025 RTP, and the new RTP which is May 2025. So we will try to see all these questions. I think basically somewhere around this. By now you have seen that ICA is also lazy only. Okay, they are not putting too much extra effort to frame any questions. Okay, in fact, whoever has written last attempt, you have seen that they are making mistakes also. Okay, giving some authorized capital and then creating one huge confusion in the exam hall. Okay, that question also we will discuss when we go into company accounts, and we will see in suggested answer what they have done. Okay, there also they have not given complete clarity to that particular problem. Okay, first we'll go in the order itself. We'll start with accounting process because accounting process is very important. They might not ask too many questions from that, but it will be required for rectification of errors. That is 100%. Without that, we will not be able to do rectification of errors. After rectification of errors, then every other stage, final accounts, NPO, all those concepts will be required. Okay, so we are not going to skip accounting process. We'll start with that. Sometimes like a bonus question you might get on subsidiary or cash book, when bumper question will be there. On trial balance, just wrong trial balance, and they'll tell you to correct the trial balance. That they can do. Okay. So we'll start with the concepts, accounting process. Yes, material. Basically, we won't be solving anything. We are going to discuss everything. Okay. Only the master questions. There are 2 master questions for rectification and for VRS that we are going to. Hey, yellow. Go back. Mohit, welcome. Oh, Stoner is also here. Yes, his name is Stoner. You don't know? Huh? RCB. Yesterday we defeated them after so many years. Okay. Now see, even for examination, we can get some motivation from RCB. Okay, we will never quit. Correct. And we can also take motivation from CSK also. What is that? No, we will not cheat. We will take motivation that we should not cheat. Then we can get banned for 2 years. By cheating? We don't know that. Recently also a new video came. Something they are doing. Ruturaj Gaikwad. Hiding. Okay. Now let's start. Okay. Anyways, let's begin guys. Accounting process. We know the process already. Journal. Okay. True or false question they can ask. It is a book of primary entry. Okay. And journal is always prepared in chronological order. Chronological order means what? Date wise. Clear? And from journal, the next process. But before we go to next step, instead of journal, can we do something? I feel that too many journal entries I don't want to pass. Can I do something? Yes, I can enter it in subsidiary book or cash book. Now here only I want to discuss subsidiary book. What are they? Purchase book. Yeah, examples. Purchase book, sales book, purchase written book, sales written book, bills receivable book, bills payable book, all that is there. Now tell me one thing. Subsidiary book, one of the thing is, if there is purchase book also, later there will be purchase account. If there is sales book also, there will be sales account. But cash book, when there is cash book, there is no cash account. There is no bank account. Are you getting my point? So cash book is something which does the work of primary entry also, and it does the work of ledger also. Okay, there is no again we are not going to prepare one cash account, Because you have, if you remember cash book, cash account looks like cash book only. Ledger format only it is prepared. So subsidiary book, even though we are preparing subsidiary book, we will have a purchase account, sales account, all that. But if there is a cash book, we won't have a cash account, we won't have a bank account. But in cash book, there is also discount column. Will we have a discount account? Will we have a discount account? Yes, we will have a discount account. Okay, we will discuss that when we go to cash book again. We will have a discount account because it's not a discount book, it is a cash book. It's not a discount book. If it was a discount book, then maybe discount account would not be there. But it's a cash book. So from cash book, only cash balance and bank balance goes directly to trial balance. But discount will go to discount account only. Clear? Now, ledger analytical order. What does analytical order mean? According to, what is chronological order? You told me date wise. It's date wise. You are going to record everything date wise. What is analytical order? Based on analysis. Based on analysis means what? All purchases will be in purchase account. All electricity expenses will be in electricity expenses account. But when we are passing journal, we don't do like that. All the things together will not pass journal entry. Morning something happened, I pass the journal entry. Afternoon something happened, I pass the journal entry. Morning I paid salary, I'll pass the journal entry. Afternoon I'll pay the electricity bill, I'll pass the journal entry. Evening I'll eat some snack or something, I'll pass journal entry for that also. There is no situation that you will pass all journal entries together when we are talking about journal. But ledger, all related items will be in one ledger. That is why analysis wise. Clear? Then we go into trial balance. What happens in trial balance? All the ledgers, their balance, summary will be there in the trial balance. All ledgers, the summary will be there in the trial balance. Is this clear? Okay. Now, why do we prepare trial balance, sir? Is it required? It is required only to go to the next stage. Actually, it's like a bridge between your previous stage and your next stage. Your bookkeeping, what you do is journal, ledger, subsidiary books. You are recording the transaction. The ultimate purpose of recording every transaction is what? To know the result, that is trading P&L. Okay, to know the position, that is balance sheet. We want to know what happened today. Then we want to know how is the future. So we need to know the position. Okay, all that happens in the final accounts, but for that we need trial balance so that we don't have to look into every ledger and pick the balance. Everything is there ready in one place. And trial balance also helps you to find some errors. Find some errors. Not all errors, find some errors. Why some errors? Because only clerical errors which are one-sided will be found in the trial balance. Only clerical errors which are one-sided. If it is two-sided, it will not be found in the trial balance. That again we will discuss in detail when we go to rectification of errors. Okay. Now, all list of all ledger balances. After that, finally, obviously, when we have such a long process, something somewhere can go wrong. Rectification of errors we have to do. Okay. If you don't know how the process works, obviously rectification will be a problem because in rectification they will just tell total not posted. So now you should know where total goes. Or they will just tell amount not posted. Now you should know amount goes where. Okay, then only you will be able to rectify. Okay. Then we go into trading P&L and balance sheet. And in final accounts, we know instead of along with trading account, we also have sometimes manufacturing account also. Clear? What is the ultimate purpose? To find the profit or loss, and this is to find the position of the business. This is our entire circle of accounts. What are we supposed to do? Now, when we are talking about journal, quickly we'll recap. Journal, we already know traditional approach. We already know modern approach. Are they going to tell you pass journal entries using traditional approach or using modern approach? No, whichever you're comfortable, use it. Ultimate goal is to pass journal entries. Clear? Okay, which you have been already doing, just follow that. Don't go to change now. Clear? If at all you're someone who is like, you want to restart your journey of journals, I would suggest modern approach. Okay, if you're restarting, but otherwise, if you're comfortable, don't go to change. Now, traditional approach, what we do, it's categorized into 3 categories. What are they? Real account, personal account, nominal account. They might not ask direct questions, but I'll share the notes. I don't think you'll be able to write so fast. I'll share the notes. Just focus. Okay. Real account, personal account, and nominal account. Now, real account, personal account, and nominal account, you have to understand one thing. Okay. Real account, it's related to assets. But what assets? Fixed assets, usually. Non-current assets. Okay. Personal account has multiple things. That is natural persons, What is natural persons? Human beings like Arnav here. Okay, artificial persons like company. Okay, business, Arnav Limited. Representative persons, you have capital, drawings, etc. Clear? Anyways, whenever it is related to a person, it is personal account. Nominal account is basically your expenses and losses, incomes and gains. Clear? Now, entity concept. Some of the things of chapter 1 we will discuss. Okay, other things other than that, chapter 1 you can do it on your own. Very important things I will discuss. Entity concept means what? Business is separate, business person is separate. Even though owner only is putting money, he only is opening the shutter, he only is sitting full day, and he only is pulling the shutter down, still business and business person are different. Are you getting my point? And remember this, we are preparing books of accounts and preparing final accounts and all other things, not for the business person, we are preparing for the business. Are you getting my point? That time a lot of concepts of drawings and all automatically will be sorted. We are not preparing any books of account for the business person. Now when you go into a chapter called as incomplete records, they might tell Mr. X has faced the following problems. Not his personal, business only. We are going to prepare trading P&L of business itself. Clear? So business and business person are distinct. They are two different parties. That is why when owner gives money, that means owner contributes capital. What do we treat it as? Liability. Owner is putting money into the business. For owner, it might be an asset, investment for him. But for business, it is a liability. Why? Whenever owner comes and asks, give the money back, business is supposed to give the money. Clear? So drawings, whenever drawings are there, it is considered as asset. Okay? Actually, you might think drawings, he's taking money from the business. It is liability. No, it is liability for that fellow, but for business, it is asset. So that is why drawings is always subtracted from capital. Owner has to give you money, you have to give money to owner. Those two things are adjusted. Clear? Yes. Now, real account, what is the rule? Debit what comes in, credit what goes out. Clear? Personal account, what is the rule? Debit the receiver, credit the giver. Nominal account, what is the rule? Debit expenses and losses, credit incomes and gains. Now, they might not ask you directly past journal entries using these methods, but they might also test you in some theoretical area. Okay, true or false, they can tell you. Now, modern approach, if you're talking about modern approach, classified into asset, liability, expenses, incomes and capital. Now, if I'm talking about asset, increase in asset is always debited, decrease in asset is credited. Liability is always opposite of asset. So, increase in liability is credited and decrease in liability is debited. Okay, expenses. Expenses, increase is debited, decrease is credited. Income is opposite of expense. So, increase in income is credited, decrease in income is debited. Capital is just like liability. So, increase is credited and decrease is debited. Is this clear? Okay. Now, one small tip for final accounts also or any other place. Now, understand one thing. If you have something debit, okay, for example, when they give you trial balance and the balance is debit, things are sorted. It should either be asset or it should be expense. It cannot be anything else. It cannot go into liability side. It cannot go into income side. Okay. If at all something that has debit balance, it has to be expense or asset. Now, if you want to take it to opposite sides, it will automatically become negative. It will automatically become negative. If something has credit balance, it will automatically be income or liability. Liability includes capital as well. So now if you want to take this somewhere else other than these two, it will become negative. That is why drawings actually has debit balance. When you bring it, it should be asset, no? But you are bringing it into the liability side. So automatically it is showing negative figure there. Provision for doubtful debt, provision for bad debt is always a liability. You are creating provision, it's a liability. It should be on the liability side, but you want to show it for better presentation, you will bring it to the asset side. So when you bring it to the asset side, that automatically becomes negative. Is this clear? Yes. Now, these four things always trouble us. Okay, in different areas, different chapters. This will keep coming back again and again. Now, outstanding expense means what? Amount that is unpaid. You did not pay, right? You did not pay. Has to be a liability. Has to be a liability. You have a responsibility now on your head. Okay. But if it is prepaid, that means what? You did your work, aram se you can sit over there, no tension at all. So it's going to be asset. Clear? Income receivable. That means you have done your work, you are supposed to get the money, you did not get. Whenever you are supposed to get the money, it is always a asset. Income receivable or income accrued is always a asset. Now, institute, you know, right? They like tricking you in different ways. There are chapters like NPO where it's subscription. Subscription is income. Purposely to irritate you in the exam hall, they will write subscription outstanding. Now you will be like, sir, outstanding means automatically liability, sir. But what is outstanding? Income is outstanding. Income, you should actually not use the word outstanding. It is actually accrued or receivable. But you should see, if they tell income outstanding, then you in your head change the word into receivable and make it asset. Is this clear? And income received in advance. That means you did not do your work at all. You have a building. You allowed someone to stay there. Okay. Now next full year rent they have given you. Can you tell them to get out? No. They have done their work. No. Okay. Income received in advance is always liability. So one thing you learn over here, for something to be a liability, it does not mean that you have to make payment only. Anything is payable only is not liability. Here what is there? Are you supposed to pay anything? No. Whenever you have a responsibility or obligation on your head to do anything, that is always considered as liability. Is this clear? Okay. Next, format of journal and all you should know by now. Okay. LF column will be there simply. You'll never use it. It will always be there. Feeling lonely. Okay. But still keep it because they are cutting marks. We thought that they are not, but they are cutting marks. Depends again on the person who is correcting. Depends again on the person who is correcting. Are you getting my point? So when you write the exam, now write it in such a way that they know nothing. Don't assume that, oh, they know, we will write it, they will understand. No, they know nothing. Are you getting my point? Okay. So LF column, keep it. Always keep it. And rupees, debit in rupees, credit in rupees, always keep it. Okay. Now, don't spend too much time on neatness. Okay. Extremely neat paper is not required. Readable paper is enough. Now imagine you are extremely neat. After every solution, you are drawing a double line and all that to make it look neat. They are not going to give you any marks. It's not like school where 5 marks is reserved for neatness or something. In school, they used to keep it for us. 5 marks reserved for neatness. Okay, all that they're not going to do. And one more thing you have to understand. You have to tell me what is better. Readable. Okay, readable, 100 marks attempted. It's readable. It's not that neat, but it's readable. 100 marks attempted. Very neat. 80 marks attempted. Which one is better? Readable 100 marks is better, no? Because here, both the papers, if your final accounts problem is wrong, it's wrong. They'll cut marks here also, they'll cut marks here also. Are you getting my point? When it's wrong, it's wrong. It's very neat. That does not mean they will not cut marks. They will cut marks. Okay, step-based marking system. Now, you're getting the concept of step-based marking system also wrong. People who are not able to score. Okay, because step-based marking system doesn't mean that you feel that when you're writing the answer only, you'll be like, step-based marking system, no. It doesn't matter if I get it wrong also. For steps, I'll get marks. But depends where you got it wrong. First step only wrong. It will create a chain reaction of wrong. Are you getting my point? So you might hardly get 1 or 2 marks in a 15-mark question or something like that. Are you getting this? So step-based, you don't write the paper thinking that you have to score marks for steps. You write the paper thinking that you have to get full marks. If things go wrong, maybe steps will help you. So when you write only to thinking that I'll get marks for steps, no, it's okay. We don't know where we are going to make the mistake. Okay, so this is your journal format, you should know it. Now, narrations to be written for all journal entries. Everywhere, wherever it is there, you have to write narrations. Maybe sometimes if there are too many journal entries in the exam, they only might tell in the question, ignore narrations. If they tell ignore narrations, ignore it. Otherwise, write narrations. If you don't write narrations also, usually they cut marks. Okay, 1 mark usually they cut for narrations. All these format based. Narration, it's very difficult to write narrations. You have to just write being and write whatever you feel like. Correct? You know, right? Is it possible, tell me one thing, is it possible that you have written correct journal entry but wrong narration? It's not possible because you know why you passed the journal entry. Just write it over there. Is it possible that you have written wrong journal entry but correct narration? That is also not possible. Are you getting my point? Okay. So narration, you don't have to spend too much brain energy on narration. What you have to do? Just write being, see why you pass the journal entry. Keep it as short as possible. Don't write full story over there. Okay. Keep it as short as possible and finish it off. Okay. Why you pass the journal entry, you know. Now, double entry system of accounting we follow. What is it? Dual aspect concept. It's also called as dual aspect concept. What does it mean? For every debit, there should be an equivalent credit. Oh, sir, that means in one journal entry, one debit should be there and one credit should be there. Huh? No, we can also pass compound entries. That means what? Multiple debits, one credit, multiple credits, one debit. But basically, the total of debits should be equal to the total of credits. Clear? Now, this question I don't want to ask in marathon, but what is debit credit? There is no meaning for debit credit. Actually, it's just the left side of the ledger and right side of the ledger is debit credit. That's all. Okay. Now, when to debit, when to credit, we know. That is where we learn the rules. Accounting equation, they can ask you questions on this also. Okay, what is accounting equation? Asset is equal to liability plus capital. Basically, this is balance sheet. Basically, it is balance sheet format. One side assets, other side liabilities and capital. In assets, what we have? Fixed assets and current assets. Fixed assets and current assets. Fixed assets are long-term assets. Current assets are short-term assets. On liability side, what we have? Long-term liabilities, current liabilities and capital. Clear? Now, in this formula, we don't know what they are going to ask. Based on this formula, they might tell you what is the cash balance. What is the cash balance? That means all the assets are given except cash. All the liabilities are given and all the capital, everything related to capital is given. So what you have to find? The missing figure. Missing figure can be the cash balance. So anything, if at all we have a formula A is equal to B plus C, A can be missing, B can be missing, C can be missing. You have to remember that. Don't study like how you used to study meanings in school. You know meanings. In all the languages they used to ask meanings. Okay. Now meanings literally you used to study how you know. Left side if you ask tap 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 you will give the right side answers. But somebody changes and asks right side one, then left side one won't be there at all. Okay. That is because you are studying in a systematic order. Okay. If you ask like this, I know everything. But if you interchange little also, I don't know anything. Okay. Don't study like that. Now, capital, very, very important to understand how capital changes. Opening capital, how does it increase? If somebody puts more money, will the capital increase or decrease? Increase. Can you see additional capital? Increase. Okay. Minus capital withdrawn. That means you are taking the money. That is capital withdrawn minus drawing. Sir, both of them are same now, sir. What you have written two things just to make the format bigger. What does it mean? Capital withdrawn means what? Drawings are different. Capital withdrawn is what? I put the money, I am taking my own money back. Correct? Drawings is what? Money which belongs to the firm, I took it in anticipation of profit. I know profit will be there at the end of the year, so during the year I took the money for my personal expenses. Clear? That is drawings. Now, plus profit minus loss. If profit is there, your capital will increase because profit belongs to owner only. If loss is there, capital will decrease because loss also will be borne by owner only. This is the capital format. Clear? Now, one more thing that we have to discuss, trade discount and cash discount. What is the journal entry for trade discount? No entry at all for trade discount. Trade discount is just like that. It is there but not there. Clear? Discount at the time of buying and selling. There is no discount at all. I mean, there is no entry at all. Today after class, you go to the mall there, Forum Mall, which is there over there. Okay, sorry, it's called Nexus Mall now. Okay, you go to Nexus Mall and then you go there and you just see in one shop, something is kept, one shirt is kept. Okay, they have written like this. You'll see like this, 2000, now at 899. Correct? Now, will you pass the journal entry for 2000 and then write discount and then take it to 899 or directly you spent 899 done? No, 899 only. Okay, now you paid 899. When you go towards the counter, you forgot your wallet and everything. Now you are not able to pay that day. Okay, you told tomorrow I'll come and pay. They were very trustable. I mean, they trusted you a lot. They said, okay, go. Then next day you went and paid. That time they said 800 is enough. Now this is cash discount because you already entered 899 in your books. Next day when you are making payment, that time if there is a discount, that is cash discount. Okay, for that person when they are receiving the money, if there is discount, that is cash discount. Clear? So discount at the time of payment or receipt, it's always going to be taken as cash discount, and for that 100% we have to pass an entry. Now tell me one thing, I am giving you money. Now when I am giving you money, can I give you discount? No, when I am giving you money, you should give me discount. So when I am giving you money, you will give me discount. So for me, it will be discount received. So at the time of payment, there is discount received. You are giving me money. Can you give me discount as well? No. You are giving me money, so I will give you discount. So for me, it's going to be discount allowed. It's going to be discount allowed. Clear? Now at payment time, it is discount received. At receipt time, it's discount allowed. If discount is received, obviously it's received, so you should be happy about it. Gain. Okay, discount allowed, it's a loss, you should be sad about it. Okay, debit. Now, drawings. We'll discuss drawings in detail. Drawings in goods means what? Drawings in goods means what? Now, for example, we have Chetan over here. Okay, we have Chetan. He has one factory. In that he is manufacturing heart-shaped balloons. Okay, he is manufacturing heart-shaped balloons. Now understand this. Someday, okay, at the end of the day, he feels what to do. Okay, he saw from far one girl was there. Okay. We don't know who that girl is. Okay. From far he saw one girl. So he decided that he will take this heart-shaped balloon and go and give it to her. Okay. This heart-shaped balloon is like my heart only. He wanted to express that feelings. So he went and gave that heart-shaped balloon. Now he is only manufacturer of that heart-shaped balloon. For him is actually goods. Correct. But he is using those goods for personal purpose. Okay. So now what happens? Drawings account debited, goods are gone, purchases. If he is manufacturing, actually it will not be purchases, it will actually be to stock. Stock reduces. Okay, but usually drawings account debited to purchases. That means what you purchased, you did not actually sell, you used it for your personal purpose. That's why reduce the purchases. Clear? Now drawings in cash. Imagine Chetan. He knows already, okay, he gave many times this balloon, didn't work. Okay, this strategy didn't work. So he thought he will give chocolate. He will give chocolate. Now chocolate, he is not manufacturing, no. Is he manufacturing chocolate? No. So end of the day from the drawer, he took some cash and he went bought a chocolate and gave the chocolate to that girl whom he saw. Is this clear? So now, is he manufacturing chocolate? No. He took money but used that money for personal purpose. Therefore, it is going to be drawings account debited to cash. Now, asset. Chetan is there. He is doing chocolate business, balloon business, and then there is chocolate also. He gave, nothing is working. Now, some guests are coming home. Okay, that girl finally got impressed and the girl's parents are coming home. So, he asked that girl, how many people are going to come? Okay, to our house today. So, that girl said 30. So, Chetan thought whether they are coming to tell yes to me or whether they are coming to beat me up. 30 people. Okay, but he said 30 people are coming. So what he did in the office, whatever chairs are there, no, he put it into one tempo and took it home. Because that many chairs were not there in his house. 30 chairs who will have at home? Okay, he took all the chairs to home. Because 30 people, we can't make them sit on the floor. Okay, so now what did he take? Did he take goods? Did he take cash? No, he took the asset which is belonging to the firm. Okay, so now drawings account debited to asset. Clear? Yes. Now we come to the most important part of this thing, journal, GST. We come to the GST part of journal. If at all they ask journal related entries, it has to be GST only. Otherwise, there is nothing. They know that your CA foundation students, they will test you something higher. Okay, now GST is very, very important. What is GST? Goods and service tax. We have three types there: CGST, SGST, and IGST. What is CGST, SGST? When the goods are sold, I mean the supply happens intra-state, that means within the state, it is CGST and SGST. And if it is from one state to another state, it becomes IGST. Okay, we are not learning GST here. We are not learning GST. Later at your lunchtime, in detail, you will be learning GST. Okay, don't worry about it. GST will be there. Even if you don't want it, it will be there. Okay, so don't put too much head into, okay, how GST works, where the money goes, and all that, not required. They have only introduced GST over here because they want you to pass journal entries related to GST. Okay. Now, imagine Arnav is there over here. Okay. Sells goods to Shreya. Sells goods to one girl called as Shreya. And see the item over here. Cost is 100. Add the CGST, SGST. You don't have to worry about the rate also. Rate of that GST, they are not going to make you take it. They'll only give you the rate. Imagine it is 10%. 10 added. It becomes 120. Clear? So total value is 120. Now, how much Shreya has to pay? Shreya has to pay 120. Is that correct? So for Shreya, can you see over here? Cost is 120. Cost is 120. But this 10 and 10 which Arnav got, 10 and 10 which Arnav got, what will happen? Where does Arnav have, what does Arnav have to do with the 10 and 10? Wait, sorry. Arnav has purchased goods. Okay, sale is separately over here down. Arnav purchased goods from somebody, 100 rupees, 10 he has paid GST. So the GST that he has paid, you can pay GST only when you purchase goods or you purchase some services. So the GST that they have paid is called as input GST. Input GST, why? Because it can be adjusted with your output. You think like this, goods are coming in, GST also will be called as input GST. Goods are going out, so the GST will be called as output GST. Clear? So goods are coming in, input GST. So it will always have a debit balance. Goods are going out, output GST. It will always have a credit balance. Why we need this? Because in final accounts also they have some questions where input GST, output GST will be there. We are supposed to actually adjust both and just put it in the balance sheet. Okay. Now, he sold the goods. 120 was the total value. He sold the goods by adding 15 and 15 as GST. Now, if you have to understand this, remember when he is selling 15, he has to pay it to the government. 15, he is supposed to pay it to the government. Is that correct? Sir, how sir he is supposed to pay? You know how? 120 rupees plus 15, you will add GST. Next person in the chain is Shreya. Shreya will give 150 rupees to you. Correct? Now what Arnav will do? In that only 120 rupees is his. 15 is government's. So he will go and pay it to government. Clear? But when he is going and paying to government, what he will do? Already he has paid 10 when he purchased the goods itself. Net he will pay 5 and 5 to government. Is this clear? So if you have basically what they are telling, earlier what used to happen, same product, when it is going from one hand to another hand, it used to get taxed again and again and again. So with GST what happens? If it's in the chain, if it got taxed anywhere in the chain once, then you don't have to pay additional whatever you have already paid. Where were you? You're IC student. Okay. From where are you coming? Very far. Sit. Yes. But you're not part of this group. She is not part of this group. Okay. Why mask? Co-ed again it has come, is it? Bangalore. Dusty. Huh? Because of Arnava. Gube, you did all this in regular class. That is why you are here. Okay, focus now. We'll do again in regular class, but see inter. Yes. Now, GST. Okay, I hope you understood. For us, basically, they are testing us on purchase and sale. They are not actually testing us on the net effect. The net effect, they have not included any questions only on net effect. They are testing purchase. Do you know how to pass the entries? Sale. Do you know how to pass the entries? This is for your knowledge. You need to know the basics. Okay. I continued the chain more. Don't worry about that. Now, finally, GST always, who pays the tax? Consumer pays the tax. So the end person in the chain is there. No, for him there is no input, output and all. He just pays the tax. End of the story over there. But for government, again and again. Now, for example, if Mohit sells goods to Stoner and Stoner sells goods to Chetan, Chetan sells goods to Arnav. So in this chain, many people are there. Everybody is not paying again and again. Ultimately, total amount, whatever is there on those goods will be paid only once. It just keeps getting adjusted. Output, input will get adjusted. Finally, from whose pocket it will go? It will go from the consumer's pocket. For example, if you are manufacturing a chocolate, the chocolate manufacturer, output minus input will adjust. Next person, let's say wholesaler, output minus input will get adjusted. The next person, retailer, output input will get adjusted. Finally, consumer will pay full amount of GST. Are you getting my point? So, from whose pocket money is going? From consumer's pocket only. Okay. Now, let's learn about the entries now. Purchase. Whenever there is a purchase entry, where there is GST also, you have to be very, very careful. Purchase account debited. Purchase account debited. For what value? The value without GST. Don't add GST also. The value without GST. Purchase account debited. I told you when you're purchasing goods, the GST which comes in is called as input GST. So input CGST debited, input SGST debited. If it is IGST, you would have written input IGST debited. Okay. 2. You're supposed to make the payment to somebody. To whom? Creditor. Imagine you already paid it. That means it was a cash purchase. You would have written over here to cash account or bank account. Okay. By check, you would have written bank account. Now, sales. When it is selling, okay, you know the entry for sales, debtor account debited to sales, cash account debited to sales, bank account debited to sales. But sale will be only the sale value. The GST, when it is going out, it is output GST. So you'll write output CGST, output SGST. If at all IGST is there, it would have been output IGST also. Is this clear? Okay. Yes. Input GST is asset. First I'll tell you output GST. Output GST is liability because you are liable to pay it to government. Now, for example, I sold goods to Mohit. I collected the GST amount from him, but I cannot put this GST amount into my pocket. If I can put it into my pocket, it would have been taken as income. But I am liable to pay this to government, so it becomes a liability. Now, when I purchased the goods, I paid GST to somebody. It is not my expense. Okay, it is not my expense. Why? It can be adjusted with my liability over here. So, because it can be adjusted, it's called as asset and liability. Clear? For the consumer, no, entire amount will be expense only. For consumer, business people, it will be input, output, they can adjust. Clear? You have to reverse the GST also. Okay, now understand this. Goods are purchased. Okay, we have it in that study material question, this personal use and all. We'll discuss again. Goods are purchased. Clear? That means the GST which you paid, you can adjust it with your output. You can adjust it with your output. For example, imagine you are manufacturing sweets. Okay, you are trading in sweets. You bought sweets from someone, you paid GST. But you know that when you sell these sweets, there is GST, it can be adjusted. But after when you are hungry, you ate the sweet. Now you can't adjust, no. Now you can't adjust, no. It became drawings, no. So now whatever GST you thought you could adjust, that is gone. So that also will be reversed. Imagine you purchase sweets. Inside the sweet box, you saw one cockroach. Inside the sweet box, you saw one cockroach. What will you do? Will you eat the sweet and the cockroach sandwich? Will you eat it? No. What will you do? You will return the sweet box. So when you purchase the sweet box, there was a GST there. You thought you could adjust it, but now you can't adjust it because you returned the sweet box itself. You can't sell the box further, so the GST will get reversed. Is this clear? So whatever GST is there, if returns happen, it will get reversed. If there is returns, it will get reversed, and if there is drawings, it will automatically get reversed. Clear? Now, sales. I think we have already discussed that entry. Now, we will not go further into that. Okay, list price, one small concept is there I want to discuss. Again and again, they use this word called as list price. You know what is list price? MRP. List price is MRP. You have all gone to grocery shops. Okay, and you have ordered many things, not the supermarket. Okay, you have gone to small grocery shops where you have ordered many things. One person in the counter will be doing the billing. That fellow will have a list of things. He will see that list. Rice. Okay, this is the price. This is the price. List price. Why? Whatever is listed, that is the price. But you go to that shop regularly, he will see that, oh, it is written 60 over here. Oh, you come every day, I will give you 55. Are you getting my point? I'll give you at 55. So list price is basically like an MRP, maximum retail price. Clear? Price before discount. So you have to, if they tell list price, you should know it is before discount. So after removing the discount, trade discount only, you will get to know what is your purchase price or what is your sale price. Clear? Because in the GST questions of study material, they keep telling about list price. Clear? Now, ledger. We'll quickly go through the concepts. Then we will go into the GST questions. Huh? List price is not trade discount. List price is the price. If I tell list price is 100 and trade discount is 20%, that means 100 minus 20%, you are going to take it at 80. List price is the price before discount, before trade discount. Okay. Ledger. Analytical order, all transactions. Format, I'm not going to explain, only here one JF is there. Okay, what I have noticed, if this JF is not written, they don't usually cut marks. When you're preparing ledger, if you just do T format, okay, they usually don't cut marks if JF is not there also. Okay. Now posting. What does posting mean? Transferring the debit and credit items from the journal to the respective ledger. Okay, respective side of the ledger. You know, you have done posting many times, journal, transfer it over here, transfer it over there, that's all. Okay, example and all we will not see. Balancing. What is balancing? Finding difference between debit and credit side of ledger. Now I have a ledger over here. Debit side there is 120 and credit side you have 30. What is the balance? 90, right? Balance is 90. Now tell me one thing. Balance is 90. Now this ledger has the debit balance or a credit balance? Debit balance or a credit balance? Anybody who feels it has a credit balance? No. Okay. Just because we are writing balance carried down on the credit side, don't think that it has credit balance. It has debit balance. With this same ledger, when we go to next year, what we will do? We will write to balance brought down. So what balance you brought down? Debit balance you brought down. That's why you wrote it on the debit side. Okay, imagine they give you 5 ledgers and tell you prepare trial balance. That time you should know this is a debit item, not a credit item. Clear? Now, subsidiary books. What are they? Books which are an alternative for journal. When we have many times, every day 5 times or 10 times, if I have to pass purchase entry, that means in 365 days, it will become some 3650 entries. So it becomes a tedious task. Too many times we have to do it. So that is why they introduced an alternative, that is enter everything over here. Only the total you can take it over there later. Now, prepared when similar journal entries are passed multiple times. Clear? Now, subsidiary book, it becomes very important. Even though they don't ask questions regularly, it becomes very important because rectification of errors has a lot of things which are errors based on subsidiary books. Clear? Now, subsidiary books, you have purchase book, sales book, purchase return, sales return, and cash book. Okay, also bills receivable book and bills payable book is also there, which we never have problems on, but it's there. It is possible. Can I have a salary book as subsidiary book? Yes. Yes, you can have anything. Anything which has multiple transactions can be put into a subsidiary book. Is this clear? Now, purchase book. Very, very important to understand what is purchase book. All credit purchases of goods and services of the business directly related. Every single word is important over here. Yeah, others will go to cash book. Yeah, but imagine we have some 3000 workers every day coming. Okay, just a hypothetical situation. Usually they don't do it. 3000 workers every day they are going to come, and their timing is different. Okay, minute base or hour basis we are going to pay them. Okay, every day today there are 3000 workers. Tomorrow there are 2600 workers. Then there is, but payment I am doing end of the week or I am doing at after 15 days. So every day if you want to pass this, record the salary, passing journal entry doesn't make sense. Salary account debited to outstanding, salary account debited to outstanding. It will become a tedious task. That time you can open a book called as salary book. Just an example, that's all. Okay, usually we don't do it. We pass it into cash book only. But usually we think no, subsidiary book means these only, not these only. It can be anything beyond our imagination also, which has too many entries. But these are the ones which regularly has too many entries. Okay. Now, purchase book. This sentence you have to understand absolutely clearly. All credit purchases of goods and services of the business directly related. That means what? If you are having one person over here, his business is real estate or construction. His business is real estate or construction. So now what happens? If he constructs building or if he purchases building, will it go to purchase book? No. It is an asset. It will go to purchase book. Sorry, what am I telling? It will go to purchase book because it is, for him, it is current asset. It's a day-to-day activity. But if he purchases one computer, will it go to purchase book? No, it will go to journal. Journal proper. Whatever cannot be entered in subsidiary book will always go into journal proper. So now understand this. All credit purchases of goods or services of the business directly related. Is this clear? Now, if at all Chetan is a furniture dealer, purchase furniture on credit, purchase book. Purchase furniture or cash, it will go into cash book. Purchase computer for cash, now it will go to cash book. Purchase computer on credit, okay, it is purchased on credit, but computer is not our main business, so it will go into journal proper. Are you getting my point? Just credit is not the satisfaction criteria over here. What you have to know, just credit is not enough. Credit of things which are directly related to your business. Clear? Anything else will go to journal proper only. Wherever you cannot enter things into subsidiary book, it will automatically go into journal itself. Clear? Now, purchase newspaper for cash, cash book, credit, journal proper. Why? Newspaper is not your business. But if you are a newspaper dealer, then if newspaper was purchased on credit, it would have gone into purchase book itself. Now, format of the purchase book. Date column, you know. Particulars, what you are going to write. Okay, from whom you purchased basically. You will write the name of the party. Then if there is any discount and all, you will minus it. Inner column, you will show the calculation. Outer column, you will put the final amount. Now, why it is important is to understand after, let's say we have 4 people. We put 1, 2, 3, 4 items. This total will be there. No, where will this total go? Total will go to ledger. It will be debited to purchase account. It will be debited to purchase account. And what about this individual line items? It will go to the party. It will get credited to the creditor. Every single creditor, it will go and get credited. So, creditor no total. Why? They are different people. Different persons. So, different ledgers. But purchase total. Are you getting my point? So, now here, understand this. If they tell you in rectification of errors, total undercast. That means impact is only on purchase account. Properly we have put into the parties. But if they tell you that entered wrong, that means here also it will get impacted, party also will get impacted. If they tell you entered correctly, but omitted to be transferred to purchase account, that means entered correctly, this side it went. Is this clear? So this is what you need to understand, how the subsidiary book works. Sales book, just opposite of purchase book. All credit sales of goods and services directly related to business. Is this clear? Now, same logic again. Sale of furniture for cash will go to cash book. Sale of furniture for on credit will go to sales book. Say computer is not your business. So sale of computer for cash will go to cash book. But if you sell it for credit, it will not go to sales book. It will go to journal proper. Is this clear? Now purchase returns book. All purchase return will be there here. Huh? Will everything be there? No. Purchase return of goods which were purchased on credit. Purchase return of goods which were purchased on credit. See, all purchase return of credit purchases of goods or services directly related to business. Now, you purchased computer. You did not even put it into purchase book. You put into journal. Now, if you are returning that computer, it will not go to purchase return book. Where will it go? It will also go to journal only. Is this clear? So, think of the original record. If purchase went to purchase book, purchase return will go to purchase return book. If purchase went to cash book, purchase return will go to cash book. If purchase went to journal proper, then purchase return will go to journal proper. Is this clear? Yes. See here, return furniture, purchase on credit, purchase return book. Return furniture, purchase for cash, it will go to cash book. Clear? Now, return computer, purchase for cash, cash book. Computer was not your business. Return computer, purchase on credit, it will go to journal proper. Clear? Sales return book is again the same thing. All sales return of goods and services related to business sold on credit. Same logic, I'm not explaining that. Okay. Next, let's go further. Debit note, credit note. Theoretically also they are asking questions. Okay. You need to understand what is debit note, what is credit note. Now tell me one thing. Okay. If I am returning goods. Now, I think maybe we can understand with this example. Now see, Chetan sold goods to Bambani. Over here. Okay, what is the entry he will pass? Bambani account debited to sales. Okay. For him it is purchase account debited to Chetan. Clear? Now tell me one thing. If at all Bambani is returning the goods. Bambani, for him is it sales return or purchase return? For him it is purchase return. What entry will Bambani pass for purchase return? Chetan account debited to purchase return. Now when he is returning the goods, his account will be debited, right? So what he will do? He will prepare a debit note. So he is telling the party, I am giving the goods back to you and your account will be debited in my books. Clear? Now what Chetan sales return, what entry will pass? Sales return account debited to Bambani's account. So now what will happen? Chetan, when he gets the goods back, he'll be like, okay, I got the goods back. Now I am going to credit your account. So he'll prepare the credit note. Is this clear? So person who is returning the goods, for whom it is purchase return, debit note. For whom it is sales return, credit note. Is this clear? Yes. So debit note prepared when goods are returned to the creditor. Credit note prepared when goods are returned by the debtor. Clear. Cash book. Tell me, what should be the situation with cash book? Are they going to ask questions on cash book? Not, maybe not, but cash book will impact your chapter called as BRS. It will go to your chapter called as BRS. Okay, in BRS, they will tell you prepare adjusted cash book, then go ahead. Okay, and also BRS, you need to see cash book basics little bit, it will impact your chapter called as BRS. Now, what is cash book? Basically, all cash and bank transactions, correct? Books which are recorded, which records all receipts and payments. Types of cash book, quickly, simple cash book means what? One column. One column means which column? Answer? Yesterday whom you supported? Huh? Yesterday whom you supported? RCB. Good. Yes. Today also she is wearing red only. Where were you, man? 1 hour later you are coming. Okay, sit. You're Dhoni fan now. Coming at the end. Okay. Types. Simple cash book. Okay. Single column cash book. We call it a single column cash book. Now what is that single column? Not cash. Don't tell the answer directly it is cash. It can be cash also, bank also. Imagine you don't have cash transactions at all and you're preparing cash book. It is bank column. You are having only cash transaction. Then it is cash column. Clear? It looks just like the ledger. But instead of writing particulars over here, you write receipts. And instead of writing particulars, you write payments. Clear? Double column or two column cash book. That means you can have cash and bank, cash and discount, bank and discount. Okay? Now prepare two columns. Just enter it over there. That's all. And I have already told you, discount column will not be balanced. It will not be balanced. You will just total it and write it. On the debit side, if you have discount column, that means it is discount allowed. On the credit side, if you have discount column, that means it is discount received. Discount allowed will be debited to discount allowed account. And discount received will be credited to discount received account. Clear? 3 column cash book, we have cash, bank and discount. Okay. All the three columns are there: cash, bank, and discount. Now, this is one important thing in cash book which you have to remember. If check is received, no, there is some alternative treatment. Usually, if I tell you check received, what you will tell? You will tell bank account debited. Okay, it is bank account debited provided you got the check today, went to bank today only and deposited the check. You got the check today, went to bank today only and deposited the check. If you don't deposit the check today, can I tell bank account debited because it didn't go to bank only? Are you getting my point? So when check is received on one day, but it is deposited on some other day, that time we will write, instead of writing bank account debited, we will write cash account debited. Is this clear? So understand this: check received and deposit on same day. Then it is going to be bank account debited to debtor. But if checks are first treated as cash receipts mentioned in question, then you follow it. Okay, otherwise check is received on one day, you will pass cash account debited to debtor. Check is deposited on another day, then you will write bank account debited to cash. Clear? Now, two things can happen. In the heading of the question only, they might tell you this. Heading of the question only, they might tell you this. Another thing in the exam, I think some examination question is there on cash book where they have not told you in the heading, but they have told received goods from Ramesh. Let's assume, I don't remember the name now. Received check from Ramesh 15th of June. Okay. Deposited Ramesh check 18th of June. So now you can't write bank account debited over here because bank account got debited on 18th June. So here you'll write cash account debited to Ramesh, then you'll reverse the entry. Bank account debited to cash account. Clear? Now, not mentioned in the question. Check received on one date, check deposited on another date. Then it is treated as cash receipt only. Petty cash book. If you get, you're lucky. You should be very happy if you get petty cash book. There is hardly anything, if you no mistake you can make in petty cash book. As and when you see expenses, keep on making column. Put it over there. A type of cash book to record all petty cash expenses. Small expenses to record, you will write petty cash book. Now tell me one thing. I want to test you on this one topic. Imagine I have a petty cashier. Okay, I have a petty cashier. I told 500 rupees, take petty cash. All small expenses within 500, whatever is there, he will make the payment. If I make a cash sale of 20 rupees, will I get that 20 rupees or will it go to petty cashier? I kept the 500 rupees limit, no. Small, correct? Now if at all I have to pay 50 rupees for lunch, petty cashier will pay? No. If I have to pay, petty cashier will pay. Now I got 20 rupees. Will petty cashier receive it? No, it will go to main cashier only. Receipt is not there. Petty cashier will get money only from main cashier. So main cashier gives money to petty cashier. What will be the entry? Petty cash account debited to cash account. Clear? So petty cashier's job is not to receive small amounts also. Petty cashier's job is only to pay the small expenses. Is this clear? Okay. Petty cashier receives money from cashier. Journal entry petty cash account debited to cash account. And petty expenses, whenever he is paying, expenses account debited to petty cash. This is the format basically. You have receipts, date, particulars, LF. Sometimes even one voucher number also will get added. Okay, voucher number, debit note number, credit note number, whatever you want to add, you add if at all it is there. Cash purchases returned, credits, cash sales returned. That time debit note, credit note also can come into picture, but not required. Okay, if it's not mentioned in the question. Payment, this much is the situation. After this, what happens? Whenever you find postage, okay, one more column. Cartage, one more column. Conveyance, one more column. Stationery, one more column. So whenever you find new things which are repeating, make a column. When you are finding things which are not repeating, put it into a column called as miscellaneous. So things which are repeating, multiple times it's there in the question, make a separate column for that. Only one time it is there, then you make a column called as miscellaneous and put it over there. Clear? So petty cash shouldn't be a problem. You should be able to handle it. Trial balance. We'll go into trial balance. Journal, ledger, everything done. Trial balance. List of ledger balance. Method 1. I don't think you remember this. Do you remember this? There are actually 3 methods in trial balance. We usually use one method only. But there are 3 methods. One is called as total method. There we don't write the balance of the ledgers. We write the total of the ledgers only. Okay. Now if I have a ledger. 100, 20, 30. What is the balance? 90. If I prepare total method, no. In the trial balance, I will write 120 and If I write 120 and 120 trial balance, 100% it will tally. Okay, you're right. And 120 and 30. Total does not mean total of the ledger. Total means total of the transactions. This 90 is not a transaction, it's a balance. So you'll write 120 and 30 if it's total method. If it is balance method, what you will do? You will just write 90 over here. You can also have a situation total and balance method. That means 2 columns for total and 2 columns for balance. Okay, very rarely they ask total method, but if they ask, it should be very, what do you say, easy. Nothing, you're just going to put the total over there. Okay. Now, balance identification. If they ask you trial balance, they might not tell you what the balance is. They might not give you ledger and okay, see, oh, this is debit balance, this is credit balance. You should know. Assets will always have debit balance, liabilities will always have credit balance, expenses, debit, incomes, credit, capital, credit, drawings, debit. I think we discussed it that time. Clear? Now, format of the trial balance will look like this: serial number. Why we are not putting date over here? Because we are not recording transactions, only the list of ledgers are brought forward. Serial number, particulars, LF, debit total, credit total if it is there, debit balance, credit balance if it is balance. If total method is not followed, then those columns are not required. If balance method is not followed, then these columns are not required. Usually what do we follow? Balance method only. Clear? Yes, rectification of errors. Oh, beautiful. Before that, we'll go into 2 questions we have to see. Question number 1 and question number 2. After that only we'll go into rectification. That is study material question number 8 in journal and study material question number 9 in journal. Other than that, journal questions you have to revise on your own. These are the 2 things that I want to look at. Okay, journal, study material. If you have the study material, you can go directly into the study material. With you can use it, no issues. Yes, question number 8. Question number 8. Online students, are you there? What? Question number 8 and 9. Question number 8 and 9 we are going to discuss, so that the GST concept is absolutely clear. If they ask journal entries, we should not lose marks. Okay. Once we finish this, we'll go into those things I told you. The past 3 exams, I don't think past 3 exams, and then we are also going to go into the RTPs with all these concepts. Then we'll go into rectification. We'll follow the same methodology. Okay. Now, journalize the following transactions in the books of Mr. Rohit. Okay. Purchase goods from Sahil, 50,000 plus CGST and SGST at 9% each. So purchase account should be debited. I told you it should be the value of the goods. See, purchase account debited 50,000. 9% of 50,000 is going to be 4,500. So input CGST, input SGST. Always put CGST on top and SGST after that. Why? Central government always on top, no, state government after that. Okay, so just like that. Even if you see any bill also, CGST will be on top only. Even though amounts are same, it's not going to make any difference to you in journal entries. What will happen if you interchange? Both are 4,500 only. Okay, and then to Sahil. That means you are supposed to pay Sahil 59,000. This can be adjusted in future when you have output GST. Clear? Now, that entry shouldn't have been a problem at all. Now, purchase goods from Sam 40,000 at a trade discount of 10%. Now, tell me one thing. When they tell trade discount, are you going to add the GST, then calculate the discount? If you do that, what will happen is, for example, see over here, 40,000, okay. What is the GST amount? 9% each. So, 9% of 40,000 is what? 3,600 plus 3,600. That makes it 47,200. And then if I do minus 10%, what will happen? Entire thing got discounted. That means I am giving discount on the GST portion also. I am not government to give discount on GST. If I was government, I would have given discount on GST portion also. But GST portion, who can give discount? Only government. So what we are going to do, not like this. What we are supposed to do is 40,000, remove the discount. Discount is how much? 10%. So it becomes 36,000. Then you calculate GST 9%. 36,000 into 9% is going to be 3,240, 3,240. Now see, 20,000 was paid immediately and balance payable after 3 months. So whatever amount is there over here total, out of the 20,000 is paid immediately, remaining is paid later. So cash purchase, credit purchase, both are happening in one question itself. Now see over here, purchase account debited, okay, into 90%. Can you see 90%? Because they have removed the discount. Input GST on 36,000. They didn't calculate on 40,000. Okay, and our input SGST is also there. To Sam's account, whatever the balance, this is actually your balancing figure. Because cash they have told 20,000. They paid through check, so to bank 20,000. Is this clear? This entry, any doubt with this one? No. Next, goods costing 20,000 withdrawn for personal use. Oh ho ho. So whatever the GST is there, that has to be removed now. Okay. Such goods were purchased by paying CGST and SGST 9%. Now you became the consumer. So for you GST is no longer input GST. It is your expense only. So what happens over here? See over here. Drawings account debited, not 20,000 along with the GST part. To purchases 20,000, to input GST and to input SGST also. Is this clear? So whatever input was there, it just got reversed because it is drawings. Clear? Now, next. Paid rent to Gagandeep 30,000 plus CGST and SGST. Sir, rent we paid, no sir. For this, why GST is there? Goods and service tax. Goods and service tax. So if you're getting services, if you're giving services, it will always be there. GST. You have paid the bill, no? Okay, ArivuPro, you have paid the fees, no? All in that one GST got added, right? Service, there was no goods you are getting, nothing. Books you are getting your own only. Clear? Okay, so goods and service tax. Paid rent to Gagandeep. What is usually the rent entry? Rent account debited to cash account. Don't write Gagandeep. Paid already. Rent account debited to cash account. GST will get added. So your rent account debited, input CGST, input SGST, and right, they have written to Gagandeep. I don't know. This is actually wrong by the institute. Why? Paid rent, no, already. When rent is already paid, why we are bringing Gagandeep as a creditor? Are you getting my point? If they would have told rent payable, then fine. Okay, but in the exam, don't make that mistake because institute will not make the same mistake in the solutions. They will correct it over there. Okay, so you don't make the same mistake. Don't buy at entries basically. Now, goods costing 5,000 before trade discount of 10% returned to Sam. Goods are returned, but how much it is returned? Not 5,000. It is 4,500. 4,500 is returned. Clear? Returned to Sam. Such goods were purchased by paying CGST and SGST 9%. So now what happened? When you purchased, you had paid GST. Now you are returning, GST gets reversed. But when you are returning, also you are returning after discount only, no? If I give you a shirt, 1,000 rupees, but I gave it to you at 800. When you return to me, you are returning the shirt of 800 only, not 1,000. Clear? So, see over here, Sam's account debited, to purchase return account, to input CGST, to input SGST. GST got reversed, and I told you it's not going to get reversed on 5,000, it's going to get reversed on 4,500. Is this clear? Next, after that, purchase furniture for 44,800, including IGST. Now they are not, now if you add again, it will become double effect, including IGST. If your GST is always 12%, that means it's calculated on 100, no, percentage is always on 100. So 44,800 is 112. How much is 100? Clear? Cross multiplication. Basically 44,800 into 100 divided by 112. How much you got? 40,000 you got. Correct? That means furniture value is only 40,000. So what you will do? Furniture account debited 40,000, input IGST, so two GSTs are not there directly, and to bank 44,800. Why? Because furniture is purchased, paid. Clear? Next, after that, purchase machinery from Symphony Industries 1,40,000 plus CGST, IGST at 9% each. Paid 1 lakh immediately and balance to be paid after 2 months. Isn't it the same thing like what you had done with Sam? Similar entry it is. 1 lakh, there is no trade discount in this. 1 lakh, you will add the GST and then you will see 1 lakh is paid. I mean, 1,40,000 you will add the GST. 1 lakh is paid immediately. Balancing figure will be credit. Okay, you can see over here. Simple industry. This is actually the balancing figure because 1 lakh is paid. Clear? Shouldn't be a problem. See, input tax availed earlier is reversed. That we already discussed that time. Whenever it is consumed, if you're a consumer, it is reversed. Clear? Next. Illustration number 9. Any doubt in that illustration? No. Let's go further, guys. Yes. Sit. Atal. This working nota. This one now. This one. No. This in the study material they wrote this for you to understand it. That's all. They have reversed. No. So to make you understand why they have given that note, you don't have to write that. Nothing. This calculation you will have to show. Either there only below the journal entry or outside. You are going to show the calculation. Yes. Now journalize the following transactions in the books of Nidhi Traders. Okay. July 2022 is the month. Now understand this. Now we are seeing from the sale angle. We finished from the purchase angle. Now we are going to see from the sale angle. Okay. Sold goods of 50,000 charge CGST and SGST at the rate of 6% each. Clear? Sold goods 50,000 charge CGST and SGST. They did not tell to whom. So what you are going to do? Bank account debited to sales and output CGST, output SGST. Whatever we did, just the opposite of that is happening over here. Clear? Next. Sold goods to Surjit for 28,000 including CGST and SGST. So now Surjit becomes the debtor for you. Okay. Go and write Surjit account debited 28,000. You don't have to add again because that is already including the GST. So what you will do? How much is the GST? They said 66%. That means 12% total. 28,000 is basically 112. How much is 100? You will get 25,000. And on 25,000 calculate output CGST and output SGST. Is this clear? Okay. Same thing we had done for purchases. Now that is also tested in sales. Sold goods to Kapil for 30,000. Charged IGST at the rate of 12%. Charged. That means it is not included. Received 12,000 immediately. Balance to be received after 1 month. That means Kapil's account, whatever you are going to write, it is going to be the balancing figure. 30,000 plus 12%. How much is it? 33,600. 33,600. How much is paid immediately? 12,000. That means 21,600 is going to be balancing figure. You can see over here. Kapil's account debited 21,600. Bank account debited 12,000. To sales to output IGST. Is this clear? Yes. Next. After that we have Kapil was allowed rebate of 5,000 as goods supplied to him were defective. These goods were sold by charging IGST of 12%. Obviously the thing has to get reversed. Are you getting my point? Now some of them have a doubt. What is rebate? It is a form of discount only. It is a form of discount only, but usually it is not cash discount. See, imagine you purchase goods from me, okay, and goods are spoiled. I will give it back to you. Goods are spoiled. I'll give it back to you. Okay, you have always ordered on Zomato, right? Okay, Zomato or Swiggy. Everybody has ordered somewhere or the other. You have ordered. Okay, when you order on Zomato or Swiggy, if at all the food is spoiled, what you will do? You will immediately click a picture and you will raise a complaint. They will come and take it, or they will refund full amount to you. Correct? Now, when you ordered, everything is proper only, but it has leaked. Chutney and all has come out. It has fully leaked. So now also you pick a picture and you will send it. They will not return full amount to you. They will give you something. That means it is still usable. Goods are still usable. So same way, if it is usable, you won't return the goods. Only thing is you will get a discount. That discount is called as rebate. Is this clear? Now, these goods were sold by charging IGST. So now you have to reverse it. Whenever the opposite happens, you have to reverse the GST as well. So now you can see over here, rebate account debited 5,000. Output IGST just got reversed to Kapil 5,600. Clear? Now, next. Sold goods to Manpreet for 1 lakh at trade discount of 20% and charged IGST at 12%. Now, IGST will be calculated on 1 lakh or after removing the discount, whatever is there. After removing discount, so it will be calculated on 80,000. You can see the calculation. Sales they have taken 1 lakh into 80% because it is 80,000. Output GST is on 80,000 only. Manpreet's account debited for the total amount. Next, goods of list price 20,000 returned by Manpreet. Goods of list price. List price was what? We discussed it. Before discount. That means before discount it is we want 20,000 minus 20%. This becomes 16,000. So the return entry will be passed only for 16,000. Obviously, when you are returning goods, when the goods are returned, the GST also will get reversed. Okay, you can see over here, sales return account debited 16,000, output IGST and to Manpreet. Is this clear? Next, they have told received commission, service, your provided service, charge CGST, SGST. What is the entry here? Bank account debited, including GST part, to commission, to output CGST, output SGST. See over here. Okay, we have used cash, no problem. Cash account debited to commission to output CGST, output SGST. That should be it. Is this clear? So whatever you learned in purchase, that only is happening in sales also, opposite effect. Now, question illustration 10, we have not mentioned it, but we'll just see this. Sold goods to Mukesh at a list price of 50,000 less 20% trade discount. That means 50,000 minus 20%, it will make you 40,000. So after on 40,000, you have to calculate the GSTs. Sold goods to Mukesh at the list price of 1 lakh less 20% trade discount and 5% cash discount. That means goods are sold, okay, 80,000 directly, then cash discount also comes into picture. This entry becomes important. You have to see this entry. See over here. Discount allowed. See, sales is 80,000. 80,000. On that sale only you will calculate GST, no? On that sale only you will calculate GST. GST was how much? 6%. 80,000 into 6% is 4,800 and 4,800. Now totally it is 89,600. Correct? 89,600. Out of that, how much you got cash? How much you gave cash discount? 4,000. So balance amount you received. That means balance amount will be debited to bank. Is this clear? Okay. Next, after that, third one, sold goods to Mukesh at list price of 1,50,000 less 20% trade discount. Out of this amount due, 60% is received and 3/4 is received by check. We have done this, okay, in the last two questions. 60% is received. So 40% is the balancing figure. Correct? Out of the amount due, 60% is received. 40% is balancing figure. So that balancing figure should go to Mukesh. Mukesh account should be debited. Now in this 60% also, 3/4 is received by check. So for the 3/4 what you will do? Bank account debited, and for 1/4 what you will do? Cash account debited. Is this clear? Okay, the calculation you can check it out. Okay, bank account debited, cash account debited. Can you see this is in the ratio of 3:1 because it is 3/4 and 1/4. Okay, and this one is Manpreet. This is basically the balancing figure. If you take this total, okay, whatever this amount is there, out of this, this is 60%. This total is 60% and this total is 40%. 60% is received. Whatever is received also 3/4 by check and 1/4 by cash. Okay, is this clear? Yes, that should be it with the GST part. That they are not asking you. They are only asking you to pass journal entries. See, sale, purchase, purchase. They are not asking you to set off that set off entries. They are not testing you. That is your question, right? Yeah, they are not asking you on that. Basically, if you have to pay to bank, output GST was 100, input GST was 80. You have to pay 20 to bank. You have to pay 20 to bank. Okay, that what will happen? For example, your input GST 80 has debit balance. Okay, output GST has credit balance. Now debit, let's say this is 100. Now you are supposed to pay. So when you are supposed to pay, what will happen? Output GST, okay, debited 100 to input GST 80. Now there is a shortage. So 2 bank account 20. That means you are going to pay the 20. That would have been the entry. If they ask you, but they are not. They only want to ensure that you know to pass the correct entries. GST payment and all, they will test you at future levels. Yes. You have some doubt. Second one, this one. Sold goods to Mukesh at list price of 100 less 20% trade discount and 5% cash discount. How much is the goods? 80,000. Okay. On 80,000 you have to calculate this thing, GST. So total amount you got 89,600. You are supposed to get 89,600. But they said 4,000 is cash discount. Now, are you thinking that how trade discount and cash discount is in the same transaction on the same day? Okay. They did not tell percentage, right? Yeah. It is on this thing. 80,000 only. 5% on 80,000, yes. That is 4,000. Clear? Cash discount is a reward that is received for paying early or receiving early. Now, if you take it on 89,600, I told you, then it will be like you are giving discount on GST also. That you can't do. Is it clear? Only on the amount without GST. Yes. You'll reverse it.
They mentioned goods given clarity costing 1,600. Sales price is 2,000. GST, CGST, SGST 6% each while purchasing of the such goods.
You'll reverse it. You purchase goods thinking that you'll sell it, but you gave it for free. Now you'll reverse the GST. Whatever the percentage is there. See, what entry would have passed for drawings? Same entry, but instead of writing drawings, write charity. Imagine if the same transaction you would have taken and consumed it, then you would have written no drawings account debited, 2 goods purchases, 2 input CGST, 2 input SGST. But instead of writing drawings over there, you will replace it with charity or donation. Tell me the amounts.
Costing 1,600.
Costing 1,600.
Purchase value 2,000.
Okay.
And CGST, SGST at 6%.
Okay, then you'll calculate on 1,600. Yeah. Because purchase value 2,000 means now you are not giving everything for charity. You are giving only 1,600 out of 2,000 for charity. 400 is still with you only. Goods costing 1,600 you are giving as charity, no? Which was originally purchased for 2,000 rupees. 1,600 only you calculate. Yes, let's go further. With that we are done with journal. Okay, RTP. We'll go into RTP May 2024. Do we have journal there? Yes, journalize the following transactions in the books of Gopal traders. Okay, let's check that. Discounted a bill of exchange for 20,000 at 2% through bank. This we will discuss in bills of exchange anyways, but let's quickly write it down also. What should be the entry here? Bank account debited. Discounting charges debited. 2 bills receivable. 2 bills receivable. Clear? Next. Sold goods to Malik costing 20,000 at 25% above cost. Less trade discount of 10% plus CGST, SGST at 6%. Now, whom are you selling the goods to? Malik. So, you'll write Malik account debited. How much will you debit Malik? Total amount is how much? Goods costing 20,000 at 25% above the cost. So, 20,000 plus 25%. That makes it 25,000. Correct? On that, there is a trade discount. Trade discount. So, minus 10%. That becomes 22,500. On that, you are going to charge the GST also 6% and 6%. So, 12% of that is how much?
1,350.
Are you telling 12% or 6%? 1,350 you are going to add. So 2,700. So 25,200. 25,200. Is this clear? Yes. This is your Malik account will be debited for so much, because so much amount Malik has to give you. Now what will you write? 2 sales. How much is going to be your sales in this? No, 22,500. 25,000 from the trade discount is removed. Your sales will be 22,500. Clear? 2. Output. CGST, output, SGST. Next. Purchase goods from Trends Industries for 8,000 plus CGST, SGST. This I'm not even discussing. We have done it. Okay, you should know it. Received 5,800 from Amar Singh in full settlement of his account of 6,000. No GST is there. No GST. Amar Singh. Just because in one transaction there is GST, don't think about it. You received money from Amar Singh, bank account debited, discount allowed account debited to Amar Singh. End of story. Goods given as charity costing 800, sale price 1000, CGST, SGST 6%. Each was paid at the time of purchase of such goods. This is the question you were asking. Okay, now goods given as charity 800. Now your question is, I have to reverse the GST. No. Now when I purchased, GST was paid on 800 or on 1000? 1000 only. So drawings also, if it is there, what we do? We pass the drawings entry at the sale value or drawings entry at the purchase value? Purchase value only. So now here, charity is an expense. So we'll write charity account debited. Charity account debited to purchases 800 to input CGST to input SGST also is 6%. So it is becoming 48. So here you'll write 896. 896. Basically, can you see your input is gone and it becomes an expense. When you got the input, it was a debit balance. No. You had a thought, why it is asset, sir? It could have been expense also. As long as you are not the consumer, it is not expense. When you only are now you are not the consumer, but you gave it to somebody for free. Are you getting my point? That time automatically the input is getting reversed. Only if you sell it, output comes into picture and that time it can be adjusted. Clear? Received 510 from Ganesh on his account of 600. This shouldn't be a problem. What should be the entry? Bank account debited or cash account debited, discount allowed account debited to Ganesh. Interest on loan from Akash 1000 due but not paid. Okay, very good. Ignore it. Interest on loan from Akash 1000 due but not paid. What will you pass entry for that? You'll pass the outstanding entry. Sorry. I thought loan they are talking about interest. Interest account debited 1000 to outstanding interest. This is also a very regular entry. Okay, you should not make mistake in that. Done. That's it with RTP May 2024. September 2024, we'll check if there is anything from journals. Yes, again they have asked journals. Okay. Check amounting to 9,000 from Hari Krishna in full settlement of his account 10,000. Just now we discussed discount allowed entry. Okay. Withdrawn for personal use goods. Okay, and cash. What will be the entry here? Drawings account debited. Drawings will be debited for how much? 7,000. Drawings will be debited 7,000 to purchases 6,000 to cash 1,000. Withdrawn for personal use goods. Sale price is 8,000. Cost is 6,000. And also cash. So two drawings. Goods also you are taking. Cash also you are taking. And it has to be at cost. The goods not at the sale price. Goods costing 3,000. Sale price is 4,000. Very good. Distributed as free sample. If it is free sample, what is the entry? Advertisement expense account debited to purchases at 3,000. Not at 4,000, at 3,000. Clear? Received commission 10,000, half of which does not relate to current year and is related to next year. It is received in advance. So what should be the entry? Cash account debited. You received 10,000 to commission account. How much? 5,000 to received in advance. So commission received in advance 5,000. This 5,000 will be taken as a liability in the balance sheet. Next, purchase second-hand machinery from Jawahar Industries for 3 lakh plus CGST and SGST 6% each. Paid 1,000 immediately by check and balance to be paid after 2 months. This we had in the study material itself. Balancing figure. Doesn't matter if you purchase second-hand machinery and all, GST will be applicable. Okay, don't get confused about second-hand machinery. Entry will be same. Next. RTP Jan 2025. Do we have anything from journals? See, past journal entry in the following cases. Running business was purchased by Mohan with the following assets and liabilities. Can you see what they have done? What they have told over here? You are purchasing the asset itself. This can be something tricky, which is not there actually in syllabus. You are purchasing business. Anyway, we are not discussing that. So what entry will you pass? When you purchase business, did you get cash? Did you get cash? Yes. So you'll write cash account debited 20,000. Land you got, land account debited 40,000. And what did you get? Furniture. Furniture account debited 10,000. What did you get? Stock. Stock account debited 20,000. And you got creditors. So two creditors 10,000. And you got on bank OD. Two bank OD 20,000 to 20,000. Now how much extra are you getting? 60, 70, 90. 90 minus 30 is 60,000. You're getting benefit. To what? Capital account. Okay, to capital account. Actually, this is not part of your syllabus, but they have put it over here just as a bouncer. Okay, you can go and check the solution of that one. Logically speaking, it should be in company accounts. I don't know why it's there here. Capital account. Clear? Yes. So don't get confused if at all something like that comes. This was in what? Jan 2025 RTP. So ICA is also a little smart. They play a little smart game sometimes. They know that Jan 2025 RTP, the people who are writing in Jan, they will always see that RTP. Okay, they will see that RTP. People who are writing in May, they will see May RTP and they'll forget about Jan RTP. So usually sometimes they'll give questions from leaving one, the previous RTP they give questions. So basically you cover everything. No tension then. Sold goods to Gagandeep for 1 lakh. Name also they didn't change from study material directly. Goods distributed by way of free samples. Advertisement account debited to purchases. Goods of list price 40,000 returned by Gagandeep. We have seen this in the study material. I'm not going to discuss this. Okay. Discount you have to remember that you have to remove discount and then do all your calculations. Kuldeep became an insolvent and could pay only 50 paise in a rupee. Amount due from him is 6,000. That means what should be the entry? Bad debt account debited 3,000 and bank account debited 3,000 to Kuldeep. Kuldeep will be 6,000. I don't think there should be any confusion with this. It's a very regular transaction. Okay. RTP May 2025. Journals. Prepare journal entries for the following transactions in the books of Harpreet. Okay, customer's check of 4,000 returned dishonored for insufficient funds in his account. Customer had availed cash discount of 400. Very good. Now what should be the entry? Imagine you purchased goods from me, okay, and I gave you discount. Now your check bounced. Will that discount still be there? Now I will come and tell you, no, give the discount money back. Okay, now I will not tell you. I give you 5,000. Remember, if at all, if I give 5,000 and I remove 500, I don't pay 4,500. You gave one check. Check bounced. When check bounced, will I ask you 4,500 or will I ask you 5,000? I'll ask you 5,000. Tell me what should be the entry now. Customer's check 4,000 returned dishonored. Yeah. Bank account debit. Dishonored, no, is not giving money. Debtor account debited. Debtor account debited. How much? 4,000 or 3,600? 4,000. Okay, 4,000. Two bank account 3,600 because check was only 3,600. To what? Discount received. Allowed. Sir, usually credit I used to put for discount received, sir. What is this? The discount which was allowed got reversed. Are you getting my point? So because you are paying, I'm giving you discount. If you don't pay what discount, you pay the full amount next time. Clear? This should be the entry. Income tax liability of proprietor 8,500 was paid out of petty cash. Very good. What should be the entry? Tax expense account debited to petty cash. No, it should be drawings account debited to petty cash. Income tax is a personal expense in sole proprietorship. Clear? When we go to company accounts, that time income tax will be there. That you don't have to worry now. But income tax is a personal expense. So what you will do? Drawings account debited to petty cash. Next, defective goods worth rupees 5,000 are sold for 3,000. Defective goods worth rupees 5,000 sold for 3,000. What will happen? Actually, just pass the entry. No, pass the sale entry for 3,000. When you prepare trading panel, automatically profit loss will be calculated. Are you getting this? Or immediately, if you want, also you can write it. But otherwise, why you have to worry? Now, if you have to think so much, then the entry will be. If you have to really pass a proper entry for this, it will actually be, how much did you get? Bank account debited 3,000, abnormal loss debited 2,000, to sales. How much? Why? Where did I sell for 5,000? I sold 3,000. No, sales 3,000 to trading account 2,000. What is the entry for abnormal loss? Abnormal loss account debited to trading account. When I'm already telling abnormal loss, I cannot tell sale there. Clear? This should be the actual correct entry for this. Yeah, I got 3,000 rupees. Bank account debited 3,000. I did not get 2,000. Abnormal loss 2,000. To sales 3,000. To trading account 2,000. I have just clubbed it if you are passing. Otherwise, you can just pass the entry bank account debited to sales. Over done. No. Later, when you prepare trading P&L 2,000, you'll get automatically over there. Are you getting my point? Okay, I don't know if they have passed like this only. We'll check 3A. But that should be the correct entry if you are thinking very in depth into accounts. 3A, where are you? See, they have passed profit and loss account. That also is, there is a reason for that. Why? Abnormal loss account debited to trading account is the first entry. Next entry is P&L account debited to abnormal loss. So they have given the net effect only and they have written P&L account debited. But to sales is actually wrong. To sales is actually wrong. How can you write sales when you have sold only 3,000 rupees? The amount that you got from sale is only 3,000 rupees, no? So to sales should be actually 3,000 only. Okay. Have they passed one more entry? No.
So they mentioned cost of goods is 5,000, right?
Cost of goods is 5,000. For me, cost of goods is 5,000. I gave it to you for 1 rupee. For me, sales is 1 rupee or 5,000? For me, sales is 5,000 or 1 rupee? That's my point. Are you getting my point? Okay, cost of goods is 5,000, yes, but I sold for how much? 3,000. So sales should be 3,000 only, no? We are not basing it on the cost, no? We are basing it on the sale value, no? Okay, that's why I'm telling this is actually doesn't make sense to show it as 5,000. Yeah, it should be to trading account because abnormal loss always goes to trading account. If you want the full entry, I'll write the full entry only over there.
For the percentage, the check is amounted to 4,000, right? After this completion of 4,000. So
Which first entry? This one now.
the check amount is 4,000, right? After this, so the sale amount will be 4,400. Proceed.
Customer's check for 4,000 returned dishonored for insufficient funds. The customer had availed a cash discount of 400.
So will pay the check, right?
Oh yeah, sorry, correct. The check amount was not, this was not the transaction amount, correct, that's right. This should actually be, bank account should be 4,000 and this should be 4,400, correct, yeah. This is not the transaction amount, it's the check amount itself, yes. And here if you are passing one more entry, you will pass the entry P&L account debited 2,000 to abnormal loss. Abnormal loss 2,000. Usually when there is loss by fire and all that, we pass this entry. Okay, this should be the treatment. Showing sales as 5,000 doesn't make sense. Why? See over here, defective goods worth rupees 5,000 sold for 3,000. So sales should be 3,000 itself. Is this clear? Yes. Purchase goods from Sunny of the list price 20,000. He allowed 5% rate discount, 200 cash discount. This entry was there. Okay, in the study material. Purchase goods from Sara Industries for 50,000 plus CGST, SGST. This also you should be able to handle. Goods given as charity costing 1,600, sale price 2,000. So you're going to pass the entry on 1,600. Same thing was there. I think there it was 800 and 1,000. They doubled the numbers. That's all. Okay, this should be your thing from RTP May 2025. June 2024. There is one question, journal. Okay, journal. They have asked one question. Past journal entries for the following transactions in the books of Mr. Kapil. Purchase goods from Sono 1,50,000 at a trade discount of 10% plus CGST, SGST. Same thing, name changed, that's all. Sold goods to Mohit 50,000 and charged CGST, SGST 5% each. Out of the amount due, 40% is received by check. So balancing figure is cash. Clear? Sorry, balancing figure is this thing, not received. So balancing figure will be Mohit's account will be debited, not cash. Goods costing 25,000 withdrawn for personal use. Such goods were purchased by paying CGST, SGST. Drawings account debited. Okay, then what will happen? the GST also, input GST also will get reversed. Machinery purchased from Bright Industries for 2 lakhs plus CGST, SGST, paid 1 lakh immediately by check and balance was paid after 2 months. Same question from study material, copy paste. Clear? Shouldn't be any problem. 4-mark question they have asked. Next. I don't think in this there is any journal. This one, yeah, there was not, it was not there. Jan 2025, do you have journals? No. No journal there also. So with that, we are done with the journal part. Okay, GST you need to focus really. Now we'll go into rectification of errors. Rectification of errors is really important. Okay, because it can fetch you 10 marks in the exam. 10 marks in the exam, it can be there. Now, guess what? It can be asked for 5 marks also. You should be happy or sad. Actually, you should be sad because it's a scoring area. Okay, and error can be anything actually, but ICA has created a boundary. Okay, same kind of errors are repeated. Okay, actually, it has no boundary at all. They can frame any kind of error and twist the question, but they are not doing it. At least as of now, they are not doing it. Maybe in future they will do it. Now, rectification of errors. Let's quickly discuss. Usually your halat is like this when you come to this chapter. Okay, so that's why we put this fellow here. Yes, types of errors. Error of principle and clerical errors. Error of principle means what? Example I have given here. Capital item treated as revenue item. Okay, you purchased machinery, but you pass the entry. Instead of passing machinery account debited to cash, you pass the entry purchase account debited to cash. Clear? So that is error of principle. That means your rule that you are supposed to follow in accounting, that only you have not done properly. Clear? Clerical errors. We have here trial balance will tally. Why trial balance will tally in error of principle? For trial balance to tally, no. They don't care about error and all. You just need one debit and credit, that's all. Okay. Your entry is this. Salary account debited 1000 to cash 1000. This is the entry. Clear? You have passed the entry. Okay. Virat account debited 1000 to Dhoni 1000. Does it have any connection? Completely wrong, right? Trial balance will tally. Trial balance will tally. Trial balance just requires debit and credit. You put anything over there, trial balance will tally. Clear? So when there are two-sided errors, always trial balance will tally. Now, clerical errors, we have error of omission. What is error of omission? You have this accounting process, now journal, ledger, subsidiary book, and entire process. Is there something in that process you have missed? This is called as error of omission. Omission can be complete omission. That means full process only is missed. Trial balance will tally. Partial omission. That means half you have done, half you have not done. That means trial balance will not tally. Because we follow double entry system of accounting, dual aspect concept. Clear? Now, error of commission. That means you have committed some error. Again, when you have committed some error, if you have to know whether trial balance will tally or not, if it's a one-sided error, trial balance will not tally. If it's a two-sided error, trial balance will tally. Clear? Compensating errors. Compensating errors. What does it mean? One place you made a mistake in debit, another place you made a mistake in credit. Because of that, this debit credit, they compensated with each other, trial balance will tally. That means one error compensated for the difference that is caused by another error. One error compensated for the difference that is caused by another error, trial balance will 100% tally. Clear? Now, error of commission. This is what we were discussing now. Now, what kind of errors of commission we can do? Writing wrong amount in the journal, both debit and credit. Will trial balance tally? Wrong amount you put, debit and credit, trial balance will 100% tally. Entering wrong amount in the subsidiary book. I told you no, if you enter wrong amount, here also wrong amount, total also wrong amount. So obviously trial balance will tally because both the places it got affected. Correct entry posted to wrong account. Correct entry, Ram account debited to cash, but you posted to some other person's account. So again trial balance will tally. Clear? Now we have posting wrong amount in the ledger. Journal entry is correct, but you posted the wrong amount. Trial balance will obviously not tally. But if you posted wrong amount both the places, then trial balance will tally. Posting amount on the wrong side of the ledger. You should have written sales account credited. You have written sales account debited. Now you wrote this wrong, you wrote that also wrong, then again become compensating errors. Trial balance will tally. You should have passed one entry, debtor account debited to sale. You passed the entry, sale account debited to debtor. You made two mistakes here. They compensated for each other. 100% trial balance will tally. Otherwise, posting wrong amount on wrong side, trial balance will not tally. Clear? Next, wrong balancing of ledger. Wrong balancing of ledger. What does it mean? You did the ledger everything correctly. Calculator did not support you. Okay, you wanted to write the correct balance only. Calculator gave you the wrong number. What should you do that time? Automatically your trial balance will not tally. Clear? Wrong total in subsidiary book. Totaling. Only totaling is mistake. That means it's one-sided error. Other side correctly it has gone. Okay, trial balance will not tally. Now, when you are rectifying, no, it depends where you are. Which stage of rectification you are in. Okay, stage of rectification you have to understand before preparation of trial balance. Can I use suspense account here? Why? Suspense account only is not created. What is suspense account? You prepared trial balance is not tallying, but you still want to see a nice tallied trial balance. You don't like to see trial balance which is not tallying. So what you will do? Difference you put into suspense account. Is this clear? So before preparation of trial balance, okay, if there is before preparation of trial balance, what you will do? No suspense account, just go and rectify by writing a statement. Okay, not under total, over total, whatever it is, write that statement and rectify it. If it's one-sided, if it's two-sided, pass the entry itself. After preparation of trial balance, you have two things. After preparation of trial balance in the current year, in the next accounting year. In the current year, if you are doing, trial balance is prepared, right? Trial balance is prepared. When you are rectifying one-sided errors, suspense account will be there. When you are rectifying two-sided errors, no suspense account. When you are rectifying one-sided error, there is suspense account. When you are rectifying two-sided error, there is no suspense account. Clear? In the next accounting period when you are doing, now see, whenever you go to next accounting period, now you always get confused between suspense account and P&L adjustment account. No connection at all. No connection. These two things don't have connection at all. Suspense account logic is still same. Is it one-sided error? Suspense account will be there. Is it two-sided error? No suspense account. P&L adjustment logic is only something else. When you are in the next accounting period, in your rectification entry, if you have income or expense, don't write that, write P&L adjustment. Is it clear? Logic, last year's error should not impact the profit of this year. That's why instead of writing expense or income, we are writing P&L adjustment. Clear? So, in the next accounting period, rectification before preparation of trial balance, suspense account not to be used. Why not to be used? Because suspense account didn't get created only. Rectify one-sided errors by passing a statement. Rectify two-sided errors by passing necessary journal entry. We discussed this just now. Okay. Rectification after preparation of trial balance in the same accounting period. Suspense account to be used. Okay. If there is suspense, you should use it. When one-sided errors are rectified, suspense account to be used. When two-sided errors, suspense account not required. Why? Because suspense only is not there. Okay. When one-sided errors are rectified, if we in the rectification entry an account has to be debited, then suspense account has to be credited and vice versa. In the rectification entry, you have only debit. Then what will you do? Credit will be suspense account. You have only credit. Debit will be suspense account. Clear? Rectification after preparation of trial balance in the next accounting period. Suspense account logic is still same. Only new entry, new introduction over here is P&L adjustment. Rectification entry will be passed same as the previous case. No change. In the rectification entry, if there are incomes or expenses, then use P&L adjustment. Clear? In the rectification entry. Now, one-sided error. Trial balance will not tally. Difference would have been put into suspense account. Therefore, use suspense account in rectification entry. So the suspense is gone. No. So you are using suspense account. Two-sided errors. Trial balance will tally. That means suspense account is not needed. That means they also didn't create. You will also not create. Clear? Now, method to rectify. This is the method that I follow. If you have any other method, you can follow that. Okay. Method to rectify. Pass correct entry, wrong entry and rectification entry. Clear? If you are very thorough with rectification of errors, no, actually directly you can pass rectification entries. There also, in your head only you are passing correct entry, wrong entry. Clear? Correct entry means what? Ignore the error in the question. Pass the entry as it has to be passed. Wrong entry means what? See the mistake that they made, you also make the same mistake. Clear? When you see these two things, automatically you will get the rectification entry. When you see these two things, automatically you will get the rectification entry. I hope it is clear. Correct entry means passing the correct entry correctly. Wrong entry means passing the wrong entry correctly. That means what? Making the same mistake that they made. If you make a different mistake, then your rectification entry will not be same. Are you getting this? Correct entry is ignoring their error and passing the entry. Wrong entry is making the mistake just like they made and writing the entry. Then you will get the rectification entry automatically. Clear? Now, whenever you are doing rectification entry, you can keep these notes in mind. If account is not debited, what will you do? Debit it. If account is debited less, what will you do? Debit it. If account is not credited, credit it. If account is credited less, what will you do? Credit it. If account is wrongly debited, what will you do? Credit it. If account is wrongly credited, you debit it. Clear? Now, basically you cannot go and cut the amount. You have to reverse it by passing opposite effects only. Okay, that should be it with rectification of errors. We have one question to solve in rectification of errors. That is your small question, which is basically a master question. I tried to put everything which is there. Question number 3. I think I think we'll take the break once we finish question number 3. Okay, rectification will be done. Chapter number 1 will be done. Then we can take a break, have breakfast and come back. Okay, 31 errors only. No. Better we should not have. That time mind will be working. So no, 31 errors only. Let's keep a target that 31 minutes are there right now. 9:59 it is. Okay, one minute, one error. If you rectify also by 10:30 you will be done. Okay, but we are going to before preparation of trial balance, after preparation of trial balance, in the next accounting period. So basically we are seeing all the cases in one question itself. Clear? Yes, get ready guys. This one, it's not just seeing, you have to solve on your own. Now, let's start. Open your notes. Rectification of errors. Okay. Now, what and all we need? Basically, we need correct entry. You need correct entry. And what do you need? You need wrong entry also. Correct? Then you need rectification entry. No. You need rectification entry. Rectification entry will be before preparation of trial balance. Then you will have after preparation of trial balance and in the next accounting period, next year. This much we have to do. Okay, before preparation of trial balance, after preparation of trial balance and next accounting period. Okay, you have to be quick. Okay, with your analysis. Now, let's go and start. Give me a second. Chetan, what? Shall we have breakfast and then come and solve this? No, I'm asking Chetan. Chetan, huh? Is it? Let's continue. Yes, question number 1. What time you came? What you are doing here? At 6:30. Nicely, you could have come at 8 o'clock, no? Oh, is it? Before you used to come by bus, right? Now he doesn't trust you. Yes. Question number 1. Purchase return day book had been correctly entered and totaled at 6160 but had not been posted to the ledger. They are talking, see, there is one golden rule in rectification. Okay, what is the golden rule in rectification? What they don't tell you is correct. What they don't tell you is correct. Why? Because in the question usually they tell the following errors are listed below. So what are they listing? Errors. They are listing errors. So correct things they are not listing over there. So they are telling you about mistake only. So if they don't tell you something, that means they have done it correctly. So here they are talking about purchase return day book. Okay, has been correctly totaled, but not had not been posted to the ledger. They are talking about purchase return. They are talking about purchase return. What is the correct entry? What is the correct entry? Creditors account debited to purchase return. Creditors account debited to purchase return. How much? What did they tell the amount over there? Creditors account debited to purchase return 6160. 6160, 6160. Correct. What is the wrong entry? Creditor account debited 6160. Okay, purchase return is not posted. So what should be the rectification entry? Before trial balance, you'll just go and credit it. So you'll write to purchase return 6160. You'll write a statement over there and credit it. Okay. Yes, after preparation, it is going to be suspense account debited 6160 to purchase return 6160. In the next accounting period, it's going to be suspense account debited 6160 to P&L adjustment 6160. P&L adjustment 6160. Clear? By total not posted or by omission of total, something like that you will write over there. Here, no, you are telling this, no. Two. You will go to the purchase return ledger and you will write over there by total not posted or by omission of total. Something like that you will write. Just a statement telling what error it was and you will credit it. See, usually when you go and credit no, one-sided error, what will happen? Whenever you credit something, you write no, by from whom you are debiting. Now you can't write by creditor because already creditor is debited once. If you write by credit, it becomes twice. So one-sided error, you are just writing the mistake and writing the amount over there. Okay, that is the situation. Next, second, discount received 1320 had been debited to discount allowed account. What is the correct entry? Correct entry. Creditor account debited to discount received 1320. What have they done? Had been debited to discount allowed account. Very good. Discount allowed account debited 1320. Then to creditor. No, creditor is debited only. Creditor is debited only. Where did they tell you? See over here. Discount received 1320 had been debited to discount allowed. They are not told about party. What is not told is correct. Are you getting this? They are not told about party. Okay. So now, what should be the rectification entry before preparation?
To discount allowed
To discount allowed 1320. To discount received 1320. One is not credited, so credited. One is wrongly debited, so credited. Okay. Then what you are going to do? If it is in the next period, what will happen? Same thing will be there. No, again. Suspense account debited. Extra is only suspense account debited 2640. And these two things are same. Clear? Now, if you are going into next accounting period, you are going to write suspense account debited 2640 to P&L adjustment 2640. Why is it P&L adjustment? Because it is an expense. Okay. Next. And income, both are there in that. Okay. Next, third one. Sales account had been under added by 10,000. This I think are we in a position to directly pass the rectification entry. Sales account. It's a very common error. Sales account under added. That means less you have put in sales. So directly you will go and write over here to sales 10,000. Clear? What will happen in the next in the second stage? Suspense account debited 10,000 to sales 10,000. What will happen in the next accounting period? Suspense account debited 10,000. To P&L adjustment 10,000. Is this clear? Next, 4. A credit sale of 1470 had been debited to the customer as 1740. Can you see in that only you know that you have put extra to the customer? Okay. Credit sale 1470, you have put extra to the customer, so you have to remove from customer. So what will happen over here? To debtor. To debtor how much? 270 rupees. You are going to remove 270 rupees. When you go to the second stage, it becomes suspense account debited 270, to debtor 270. When you go to the last stage, it is same. Yeah, because there is no expense or income here, directly P&L adjustment. I mean, no P&L adjustment, directly you pass the same entry. Now, next, 5th. A vehicle bought originally for 7,000 4 years ago and depreciated to 1,200 had been sold for 1,500 in the beginning of the year, but no entries other than the bank account has been passed through the books. You have sold a vehicle. Tell me what should be the entry. Actually, correct entry, what is it for this one? Bank account debited. How much did you sell it for? You sold it for 1,500. So you'll pass entry 1,500 to vehicle. Vehicle is 1,200 to P&L, profit on sale 300. What is the wrong entry they have done? Money received, they have not forgotten that. They have written 1,500. That's it. What is the rectification entry now? See, they have told in the question only the bank account has been passed through the books. Other than that, nothing. No entries other than bank account has been passed. So what should be the rectification entry? You will write to vehicle, to P&L. Correct? 1,200 and 300. What about the wrong entry? Second stage. You will write suspense account debited 1,500. These two will be same. Clear? These two will be same. What about the next thing? Suspense account debited 1,500 to vehicle 1,200 to P&L adjustment 300. Is this clear? Now, whenever these errors which are related to assets, remember this. Now here they have not spoken about depreciation. Remember this. If you don't record the asset, that means you have missed the depreciation also. So when you record the asset, you should pass the depreciation entry also. If you don't remove the asset when it is sold, if you don't remove the asset, that means you have passed the depreciation entry by mistake. Because asset is there in your books. So when you remove the asset, you have to remove that depreciation entry also which you have passed by mistake. Is this clear? I hope it's clear, guys. That was your 5th one. We'll go into the 6th one now. 6. Accrual of 560 for telephone charges had been completely omitted. Completely omitted. I'm not wasting time on correct entry, wrong entry. All directly pass. Okay. The rectification entry completely. Accrual of 560 for telephone charges has been completely omitted. What should be the rectification entry here? Telephone charges debited 560 to outstanding telephone charges 560. What will be the thing over here? Same. What will be the thing over here? P&L adjustment 560 to outstanding 560. That will not change over there. Is this clear? Only when income and expense comes, that time you have to worry about this thing. What is that? P&L adjustment. So don't get confused about suspense account and P&L adjustment. They are there for different purpose altogether. Okay. 7th one. A bad debt of 1560 had not been written off and provision for doubtful debt should have been maintained at 10% of trade receivable, which are shown in the trial balance at 23,390 with the credit provision for bad debt of 2320. Okay, this is a very common thing. Simple. Bad debt, whenever we are discussing, again, I am not going to discuss this in final accounts. Here only I will explain to you. Okay, the entire concept of bad debt I will explain to you. Imagine you have a situation. Okay, this is your pocket money. This is your pocket money. Clear? And you want to go and watch a movie. You want to go and watch a movie. It is releasing after some time. At home, they are not going to give you money to watch movie. Okay. So you are creating one movie fund. You are creating one movie fund. So what you will do, whenever you get pocket money, you will put little money into the movie fund. So on the day you are supposed to go for the movie, what you will do? Will you take the money from the pocket money or will you take the money from the movie fund? You will take the money from the movie fund. Imagine you didn't have movie fund, sudden plan movie. That time you have to take the money from where? From the pocket money only, correct? Okay. Pocket money is nothing but P&L. Movie fund is nothing but your provision for bad debt, which you call it as PDD, PBD and all that. Now, tell me one thing. And movie is nothing but your bad debt. Movie is nothing but your bad debt. Now tell me one thing. If you have a bad debt situation and you have provision for bad debt, now the bad debt will be taken from P&L or will it be taken from provision? It will be taken from provision. You don't have provision only and there is a bad debt. That time the bad debt will be debited to P&L itself. Is this clear? This you have to remember for entire final accounts also. Okay, and obviously incomplete records also. Incomplete records, you know. Anything, anywhere, anytime they can ask. Okay, bad debt of 1560 had not been written off. Okay, so what should be the entry for bad debt? Bad debt account debited 1560 to debtor 1560. Clear? Next. And the provision for doubtful debt should have been maintained at 10% of the trade receivable, which are shown at 23,390 with the credit provision of 2320. Okay, 23,390 was there, but it is not there anymore. Why? Just now we have done the bad debt entry. Bad debt 1560. Remove 1560. 23,390 minus 1560. What are you getting? 21,830. 830. Clear? Yes, tell me. Provision to be? Okay. The bad debt entry is bad debt account debited to debtor only. After that, bad debt is a loss. You should actually pass P&L account debited to bad debt. But if provision is there, you'll pass PDD account debited to bad debt. So first bad debt entry, this will remain unchanged. Bad debt account debited to debtor will always happen. But if you have provision, it will not be P&L account debited to bad debt. It would be PDD account debited to bad debt. So debtor will get reduced. Is this clear? So now they are telling they want provision to be maintained at what percentage? 10%. So 10% of this is how much? 2183. 2183 they want provision. Okay, but existing provision is there 2320. Now existing provision 2320. Is it still 2320? No. What did you do? You have removed 1560 from that. Remove 1560. What are you getting? 760. You have 760. That means you have to create provision of 2183. That means 760 and 2183. What is the difference? 1423 is the provision that is required. Provision that is required to be created. Are you getting this? Again, I'm explaining this. Okay, 1560 has been written off as bad debt. So bad debt, what is the entry? Bad debt account debited to debtors. So debtor got reduced 21,830. Okay, and provision for doubtful debt should have been maintained. Should have been maintained at 10%. 10% of that is 2183. Okay, which are shown in the trial balance at 23,390. Okay, with the credit provision for bad debt of 2320. Actually, what happens if bad debt is also there in trial balance? We'll discuss in final accounts. Okay, in detail. Here it is not written off, they said, so we are writing it off. So remove that from provision. Now your provision is sitting at only 760, but you need provision of 2183. So 1423 will be actually new provision that is created. Okay. So what should be the journal entries that we have to do here? Bad debt account debited to debtors. Then P&L account debited. How much? 1423 to PDD. 1423. And also please don't forget one more thing. What is that one more thing? Bad debt account debited 1560 to PDD. What have we done? PDD account debited 1460 to bad debt. 1460. This should be the situation. All these entries. 1560. Sorry. Okay. 1560. Yes. Okay. Wrong entry is not there only. Nothing is done. Rectification entry will be same. Rectification entry will be same for the first stage. For the second stage also it will be same. For the third stage, what will happen? Wherever you have bad debt, this will come as P&L adjustment. This P&L will come as P&L adjustment. This bad debt will be coming as P&L adjustment. Okay, this is like expanded version of the rectification. If at all you can pass one compound entry and rectify it, you can do that also, because bad debt debit, bad debt credit, that's not there at all. Is this clear? Next, let's go further, guys. 8. Yeah. Tools bought for 1,200 had been inadvertently debited to purchases. These are very, very easy errors. Whenever you do something instead of something, no, you just have to remove that extra thing and put the correct thing. So what will be the rectification entry here? Rectification entry will be tools account debited to purchase account. Here also it will be same, but here what will happen? Instead of purchase, it will become P&L adjustment account. Tools account debited to P&L adjustment account. Is this clear? Now 9. Next, the proprietor had withdrawn for personal use goods worth rupees 1,960. No entry has been made. Very good. Make the entry. So drawings account debited to purchases 19, whatever the value is, 1960. Correct. So what will be the rectification entry? Same. Here what will be the only change? Purchase will be written as P&L adjustment. Drawings will be drawings only. It will be P&L adjustment. Is this clear? Okay. Next, we'll go forward. I think most of the errors you all are thorough with it. Now, those errors you should be very happy. Instead of this, that. So what you will do? You will do this and remove that. That's all. Okay. Next, 10. The total of the debit side of the expense account have been casted in excess by 50. Debit side of expense account. Debit side of expense account is expense. Clear? Has been casted in excess by 50. That means you put extra expense of 50. If you have put extra expense, what will you do? You have to remove that extra expense. So you will write 2 expenses 50. 2 expenses 50. And next you will do suspense account debited 50. 2 expenses 50. So rectification entry will be what? Suspense account, yes, but this will be P&L adjustment. Is this clear? This will be P&L adjustment. Next, 11. The sales account had been totaled in short. Very good. Totaled in short. So you will write 2 sales 100. Here it will be suspense account debited 100, 2 sales, and this sales will automatically go in as P&L adjustment. Is this clear? Yes. Next, supplier account had been overcast. Supplier is what? Debit balance or credit balance for us? Supplier means what? Creditor or debtor? Creditor. Overcast means what? We put more. Overcast by 225. So what should we do? Creditor has to be debited for 225. Okay, so now what will happen? Creditor account debited 225 to suspense 225. This will be same because we don't have any expense or income. Clear? 13. Sales return of 100 from a party had not been posted to that account, though the party's account had been credited. What is the correct entry for sales return? Sales return to debtor. Okay, they have credited that person. What they have not done? Only sales return is not done. So what we are going to do? Sales return debited for 100. Here what will we do? Sales return debited to suspense account. Here what we'll do? This will become as P&L adjustment. This will be considered as P&L adjustment because sales return is income expense item. 14. Next, check of 500 issued to supplier's account shown under trade payables towards his dues has been wrongly debited to purchases. What is the entry for check issued to supplier? Creditor account debited to bank. Correct? Instead of that, they have done what? Purchases. So now the entry should be what? Creditor account debited 500 to purchases. Instead of creditor, they have taken it as purchase. Here it will be same, but here it will not be same. Purchase will become P&L adjustment. Is this clear? Purchase will become P&L adjustment. Next, 15. A credit sale of 50 had been credited to the sales and also to the trade receivable account. What is the correct entry here? Here you need to understand little. What is the correct entry? Debtor account debited 50 to sales 50. Correct? What did you do? credited to sales, very good. But you have credited the trade receivable also. So you have written 2 sales 50 and you have written 2 debtors 50. So the rectification entry sales, don't touch it, it is done. So debtor account will be debited for 100. Whenever instead of debit you are crediting it, you have to do it double. Why you have to double it? First you have to remove the wrong effect, then you have to give the correct effect. To remove the wrong effect, you have to do it once and then you have to give the correct effect. Clear? Here what will be the entry? Debtor account debited 100 to suspense account. Do we have income expense? No. So here it will be same. Is this clear? Yes. Now we go into 16. 16th one. A sale of 2,300 to Mr. Lala had been posted to the credit of Mrs. Mala. Somebody's husband, somebody's wife. Okay, very good. Okay, now what is the wait? Now don't get too carried away. Okay, it is not direct. What is the entry for sale? Mr. Forget, no respect. Lala account debited to sales. Correct? Here they did not do Mala account debited to sales. They credited Mala. Wrong person, wrong side also. Wrong person, wrong side also. Usually when we see these kind of errors, what we think? Oh, instead of Lala, Mala, directly we'll do Lala to Mala, over finished. Yes. What is the entry actually? Lala debited to sales. Here what they did? To sales to Mala. Now what should be the rectification entry? Lala debited, Mala also debited. But when you go to next stage, what will happen? 2 suspense account also will come. Okay, this will be the same. There won't be any rectification entry which is going to change. Amount of 2000, Lala 2300, sales 2300, 2300, 2300, here 2300, 2300, suspense is 4600. Clear? Yes, let's go further. 17. Total of the returns inward book for July 2021 1240 was not posted in the ledger. Returns inward book means which it is? Sales return. Okay, so it is only impacting sales return. So you are going to write directly sales return account debited amount. Clear? Next it is going to be sales return account debited to suspense account. Then it is going to be instead of sales return, this is going to be P&L adjustment. Clear? Next, that was 17. Let's go into 18. Freight paid on machine 5,600 posted to the freight account as 6,500. Wrong thing, wrong place. Now here you have to be careful. 10% depreciation is charged on this machine. I told you, if you don't take it, if you miss the asset, you will miss the depreciation also. It's a natural thing. So freight paid on machine, what should be the entry? Freight paid on machine, what should actually be the entry? Machinery, remember capital and revenue expenditure. Machinery account debited how much? 5,600 to cash or bank account, whatever it is, 5,600. Then you also have to pass the entry depreciation account debited 560 to machinery 560. What is the wrong entry that they have passed? No, they have passed it as freight account debited 6,500 to cash 6,500. They put the wrong amount, correct? So now what should be the rectification entry? Machinery account debited 100%. Now machinery account debited, instead of debiting 5,600, one credit is also there, no? 5,600 minus 560. How much is it? 5,140. 5,040. Yeah, okay. 5,040. Instead of doing debit credit, net effect you can take in the rectification entry. Are you following this, guys? Machinery account debited, machinery account credited. Take net effect only. Okay, machinery account debited for 5,040. Okay, bank account is credited. Is it done? But done. Okay, I think I made a small mistake here. Here, bank, there is no mistake. Bank is 5,600 only. Only freight is mistake. Okay, can you see? Freight paid on machine was posted to the freight account as 6,500. They didn't tell that bank account also it is posted at 6,500. That is proper, 100% proper it is. So, two freight account, yes, 6,500. I don't think it is matching. So, you'll put the difference to suspense account. How much? Sorry, suspense account will be debited. How much? 1,460. 1460. Are you clear with this? Next here it will be. Actually, first stage the suspense is not there. Only second stage suspense is there. Okay, first stage no suspense. Second stage this is. First stage suspense will not be there. Machinery account debited, freight account. That's it. Go and do the rectification thing. Last stage, what will happen now? Instead of freight, you will call it as P&L adjustment. Freight will be the P&L adjustment part. Is this clear? Yes. This is your 18th one. 19. While carrying forward the total in the purchase account to the next page, 65,590 is written instead of 56,950. Did you put extra purchase? What do you mean no? Yes. Okay. Instead, yes. Did you put extra purchase? Yes. So we should remove. To remove extra purchase, what should we do? We should write to purchase. Can you find the difference between these two? 65,590 minus 56,950. 65,590 minus how much? 8640. To purchase. Correct? Now, next, what will happen over here? Suspense account debited to purchase. And this purchase will become P&L adjustment. This purchase will become P&L adjustment. Is this clear? Yes. Next, 20. A sale of machinery on credit to Mr. Mehta for 9,000 on 30th September was not entered in the books at all. Book value of the machinery was 6,750. You have to pass the sale entry. What is the sale entry? Not entered in the books at all. Sale entry. Can somebody tell me the sale entry? They never told money came. Sale of machinery on credit to Mr. Mehta. So you will write Mehta account debited to sales. We sold machinery. We did not sell goods here. To machinery. And it is sold for 9,000. So 9,000 over here. And it is value is 6,750 to 6,750 over here. And to P&L 2250. Second stage also it is going to be same. Third stage what will happen? This P&L will become P&L adjustment. This P&L will become P&L adjustment. Is this clear? I hope there is no confusion there. Okay. 21. Total of the purchase book of one page 4539 was carried forward to the next page as 4593. Did they put extra? This is same as this one. Okay, same as 19th one. I am not doing it again because just now we did that. Okay, you have to take the difference and rectify it. Sale of 573 was entered in the sales book as 753 and posted to the credit of the customer. Now here there is a problem. What is the correct entry actually? Debtor account debited to sales. Okay, debtor account debited to sales. Sale is actually 573 only. Sir, can I write the correct entry here as cash account debited, sir? No, not possible because they said sales book. It is sales book, so it should be credit sale only. Debtor account debited to sale. What did they do? Entered in the sales book as 753 and posted to the credit of the customer. So they have written to sales 753 to debtor also 753. Why? When you enter in the sales book wrong, posting also will be wrong. Now posting not only wrong amount, wrong side also. Are you getting my point? Now I told you subsidiary book. If you don't enter the correct amount, both the sides the amount will go wrong only. Imagine you entered the correct amount, but totaling you made a mistake. So only one side there will be an error. Is this clear? So now what should you do? Sales you have to rectify it. So what will you do? Sales account debited. 753 minus 573. 180. 180. Then debtor what we have to do? Debit. Debtor account debited how much? 1326. Wrong credit we have to remove and correct debit also we have to put. To remove the wrong credit, what should we do? 753 has to be debited and then it will be 753 plus 573. In the next stage, it will be same thing, but you will write to suspense account. In the next stage, what will happen? Instead of sales, you will use P&L adjustment. Instead of sales, you will use P&L adjustment. I hope it's clear. Okay, 22. Let's go further. Yes, a sale of 573 was entered in the sales book as, that is done, no? 23, sorry. A return to creditor of 510 was entered in the returns inward book. However, the creditor account was correctly, sorry, it should, I think I made a mistake here, was not entered in the returns inward book, it should be. If they have entered in the returns inward book, what should we do? We should be happy about it. However, creditor's account was correctly posted. That means returns inward is not recorded. Returns inward means what? Sales return or purchase return? Sales return. So sales return has to be debited, not done. Okay, do it. Then it should be sales return debited to suspense. Then sales return will be taken as P&L adjustment. Clear? 24. I think this was 23. 24. Cash received from Sidas 620 was posted to the debit of Gdas. What is the entry for cash received from Sidas? Bank or cash account debited to Sidas. Not okay. They are posted to the debit of Gdas. So you should have passed the entry cash account debited to Sidas. They have passed the entry cash account debited. No. Gdas also debited. Posted to the debit. They not only put to the wrong person, they put the wrong side also. So now what will you do? You will write to Sidas, to Gdas. And next you will write suspense account debited to Sidas, to Gdas. Then nothing. Here it will be same. There is no P&L adjustment here. Is this clear? So whenever, see, I know you can tend to make this mistake in the exam. When you see two people, no, this person instead of this person, you will always think, remove from this and put over there. But the person is wrong. Just see which side they have put. Wrong person, wrong side. It becomes double. Two errors over there. Okay, so be careful. 25th. Next. Goods worth rupees 840 were dispatched to a customer before the close of the year, but no invoice was made. What will you do? Just pass the sale entry. That's it. Just pass the sale entry. That's all. Debtor account debited to sales. Next time also debtor account debited to sales. Next time it's going to be debtor account debited to P&L adjustment. Clear? Shouldn't be a problem. 26. Goods worth rupees 1000 were sent on sale or return basis to a customer and entered in the sales book. At the close of the year, the customer still had the option to return the goods. The sale price was 25% above cost. Oh ho ho. Do you know there is a topic called a sale or return? Yes. Is it there in our syllabus? No. But is it going to impact us? Yes. Where? In rectification of errors and in inventory chapter. Sale of return means what? I gave the goods to you and I'm telling you keep it. If customer buys good, then tell me you want the goods. Accept it. Okay. Otherwise you tell you don't want. That means reject it. Pass your phone. Pass your phone. Fast. You're not using your phone, yellow color. No. Sure. Then why are you looking down and smiling? Huh? Hey, not you. CSK over there. Oh. You have low BP, yeah? 5 minutes. Okay. Almost done. Okay, now, whenever sale of goods on approval or return basis is there, what has to happen? If you don't accept or don't reject, you still have time. Okay, year got over, you didn't accept, you didn't reject. When will you accept or reject? You will accept or reject in the next year, correct? So, therefore, this year you will reverse the sale entry. Whenever sale entry is reversed, that means sale did not take place. If sale did not take place, that means goods are still with you. That means it should be closing stock. Sale entry will be reversed at the sale value and closing stock will be recorded at the cost value. Clear? Now here, what will be the entry over here? You'll pass the entry sales account debited to debtor. This will be for 1000, I think. Is it 1000? Goods worth rupees 1000 were sent. Worth rupees, okay. The sale price was 25% above cost. Now what will you pass? Closing stock account debited to trading account. Closing stock account debited to trading account. 25% above cost. So this will quietly become 800. I am not telling you how it became 800. Magic. 25% on cost is 20% on sales. 25 by 125 on sales. Okay. Same entries again. Only thing that I am going to tell you is sale will be taken as P&L adjustment. Trading account will be taken as P&L adjustment. Obviously you can pass net effect entries. Okay. You don't have to worry about passing the entire thing again. Next. 27. Repairs made during the year were wrongly debited to the building account. Okay, so what should be the rectification entry? Directly you are going to pass repair account debited to building account. Same entry in the next stage and repair will be taken as P&L adjustment. I hope it's clear. 27 that is. You should have told that problem which you had when we started it at 10 o'clock. That time I would have given you breakfast, but in middle I don't want to stop now. Okay, just 5 minutes, that's all. 28. Addition of the freight column in the purchase journal was short by 15,000. Freight column if 15,000 it is short. That means what is the mistake? Only freight, no? Freight is the mistake. Go and record freight. Go and record freight. How much is the freight? 15,000. So debit freight 15,000. So freight account debited 15,000. Here what will happen? Freight account debited to suspense account. Next freight account will be taken as P&L adjustment account. Is this clear? Now 29th question. Goods to the value of 4,500 returned by a customer Shiva and Company had been posted to the debit of Shiva and Company and also to sales return. What is the correct entry for sales return? Sales return account debited to Shiva and Company. Here it is Shiva and Company debtor. Yes. Okay. Here what they have done? Shiva and Company has been posted to the debit of Shiva and Company also to sales return. So to Shiva and Company done. Okay. To sales return they have done. Is it? Had been posted to the debit of Shiva and Company also to sales return. Sorry. Okay, so they have done sales return debited and Shiva and Company also debited. Sales return no problem, correct? Okay, so you are going to write to Shiva and Company. How much? Double the amount. Amount was how much? 4,500. So the amount will be 9,000. Double the amount. And here one suspense account will get created 9,000. And here it will be same. No P&L adjustment is going to be there because there is no income or expense. Then 30. Sundry items of furniture sold for 30,000 had been entered in the sales book, the total of which had been posted to the sales account. What does it mean? Items of furniture sold you put into sales book. Okay. Actually, what should have been the entry? Cash account? No, you don't know. Okay. You should have actually credited. See, they said sales book. Okay. So you should have credited furniture. Instead of that, you have credited sales. So you will now remove sales and you will credit furniture. Here it will be same, but here instead of sales, you will use the word P&L adjustment. Clear? Next, bill of exchange received from Ms. Sapna 75,000 had been returned by the bank as dishonored and had been credited to the bank account and debited to bills receivable account. This is a situation where bills discounted dishonored. So the entry is actually Sapna account, your debtor account debited to bank account. To bank they have done, only they have what they have done, bills receivable account debited to bank account. Can you see there it has been debited to bills receivable. So now what you will do, you will write Sapna account debited to bills receivable. Here also same, here also same, because we don't have any income or expense. Yes, with that we are done with till rectification. We are done. Okay, chapter number 1 is completed. Let's continue after a small break. You can take a break for half an hour for breakfast. Okay, then we'll continue. Okay guys, welcome back. Let's continue. BRS, we move forward to BRS, another 10 mark potential chapter. Okay, they can ask for 10 marks BRS. What usually they do is, if at all it's a tricky BRS, lesser number of adjustments, okay, then they'll give tricky adjustments. If they give more number of adjustments, they'll give simple adjustments. Okay, yes. What is BRS? Someone was here? What is BRS? You were not there in the morning. You both were there sitting there? Or you were back? Huh? Who was sitting next to Chetan? That's why you send him front. What did I tell you?
Left side is the question.
Full flat ಅಲ್ಲ ಹೊಸ ಫ್ಲಾಟ್ ಅಲ್ಲ ಹಾ 3 ಗೊತ್ತು ಲೆಫ್ಟ್ ಸೈಡ್ ಅಲ್ಲಿ ಓಕೆ yes let's continue. Okay, BRS let's start. Bank reconciliation statement. Okay, what does BRS do? It reconciles the difference between cash book and passbook, but cash book specifically only bank column. Cash column, what is the connection? Okay, only bank column of cash book and passbook. Clear? Bank reconciliation statement. Now cash book bank column are records maintained by business. That means whenever we have bank transactions, we record it in the cash book bank column. Clear? Now, whenever we make any bank transactions, where will bank record it? In the passbook or bank statement. Okay. Record of transactions done in our bank account maintained by bank, and records maintained by business about transactions done in our bank account. Now, simple. Understand this. For bank, okay, for bank, you're a customer, correct? That means they have taken money from you. They have to give the money back to you. For you, bank, you have kept the money there. So it's an asset. Is this clear? So bank will treat you like a liability and you will treat bank like a asset. That's why whenever money comes to your account, you always get a message, amount credited to your account. That means there is credit balance in your bank. That means bank is treating you like a creditor. Clear? But you are treating bank like an asset. Always it is like that, you know. If one person has to give money to the other person, one person will be debtor, other person will be creditor. Clear? Next. In our books, bank is an asset which is debit balance. In books of bank, customer is a liability which is credit balance. Clear? Now, normal balance and overdraft balance. Normal balance is also called as favorable balance and unfavorable balance. If it is normal balance in books, okay, in books, asset will have debit balance. If it is OD balance, if it is OD balance in books, it will be liability for us. Normal balance means what? I kept money there. I can take it whenever I want. Debit balance. OD balance means what? I have already taken more money. That means I have to return the money to them. Credit balance. Clear? In books of banks, if somebody has kept money and they have to give the money back, for them it is liability, so credit balance. In books of banks, if at all it is OD, that means they have given you money. If they have given you money, it's good for them, asset. Is this clear? Are you following this? Yes. Now, so when they tell you debited in bank or credited in bank, you need to understand. If they tell debited in bank, that means it is withdrawal. If they tell credited in bank, that means it's a deposit. Okay. Yes. Cash book, passbook. Normal balance. Money comes in. If money comes in, what happens? Now, see, we have to understand two things. We use the hand movement method, okay, to prepare BRS. Now, in this hand movement method, two things only are very crucial. What is the crucial thing about the hand movement method? You need to understand where the transaction has happened. Has it happened both the places? If it has happened both the places, then we will not be talking about it in BRS at all. 100 rupees deposited, you have recorded in cash book also, you have recorded in passbook also. Then we will not talk about BRS. There is no topic only called BRS for them. Okay, when you enter in one place, but it's not entered the same way in another place, that time it causes a difference. Clear? That time BRS comes into picture. Okay, so you have to understand, first you have to understand where the transaction happens. Then you have to understand because of the transaction, the balance increases or balance decreases. In cash book, money comes in, balance increases. Money goes out, balance decreases. Even in passbook, it is same. Even in passbook, increase and decrease is same. Only thing is we debit, they credit, and we credit, they debit. Because we are opposites. Clear? But if it's OD, OD means what? You have already taken more money. You have already taken more money. So if money comes in, OD balance decreases. If money comes in, OD balance decreases. Imagine you have to pay 500 rupees to bank and you deposit 100 rupees. Now what happens? That OD balance goes down to 400. Clear? If money goes out, already you have to pay 500 rupees to bank and you have again taken 200. Now the balance goes up to 700. Is this clear? So understand this, simple. Most of you are, all of you, not most, all of you are having normal balance. Correct? You don't have OD. None of you in class has OD balance. Maybe your parents are, but you don't have. Clear? So now for you, if I send money through Google Pay, your balance increases. But if you send money to me, your balance decreases. But if it is OD balance and I send you money, your OD balance decreases. And you send me money, your OD balance increases. OD is a liability. So already you have to pay someone. I have to pay Mohit 50 rupees. Again I take 10 rupees from Mohit. Balance will increase, no? Are you getting my point? Okay. Same logic over here. Causes for difference between cash book and passbook. Some causes, some common ones we have discussed. Okay. Other than that, we will discuss in the question itself. Check deposited, not credited. check deposited, not credited. Okay, now you have to identify, I told you, two things. Who has entered? Cash book. Check deposited means what? You went and deposited the check. So when you deposited the check, you know, right, that you have deposited, so you will pass the entry. Clear? Check deposited, cash book, you will pass the entry. Entered in passbook, entered in cash book, not entered in passbook. Okay, cash book entered, passbook not entered. Check deposited, not entered in cash book. Now we have this problem. Whenever we see check deposited, we are like, oh, check deposited, not credited, check deposited, not credited, that only. Suddenly I say will be like check deposited, not entered in cash book. Now what happened? Entered in passbook, but not entered in cash book. Is it clear? So don't come to a conclusion. Please read the full sentence. Sir, you're muted. What are you talking? Can you guys hear me? Okay, I think now you can hear, right? Zoom was muted. I don't know who muted Zoom. But anyways, it's okay, no problem. Okay, you saw everything, right? Yes. Now, check deposited, not entered in cash book. If check is deposited, that means you passed the entry, but not entered in cash book. That means you did not pass the entry. So, passbook, they have passed the entry. Again, like rectification only. What is not told is done. What is not told is done. Okay, because BRS questions always starts with these are the things which are causing difference between cash book and passbook. That means they are talking about only those things which are causing difference. Which is not causing difference, they are not talking about it. Clear? Check issued, not presented for payment. Check issued, not presented for payment. Cash book entered. Passbook not entered. Check issued, not recorded in cash book. Cash book not entered and passbook is entered. Bank charges charged. Whenever bank has to charge money and all, no, they will not call you and ask. They will cut the money, that's all done. So cash book not entered, passbook entered. Clear? Now errors in cash book, errors in passbook. Okay, that also can cause difference. Now if cash book you make a mistake, do you think passbook also they'll make the same mistake? If they do, then no BRS. If they do, then no BRS. If passbook they make a mistake, do you think you will make a mistake in cash book also? No. If they do, then no BRS. So when somebody makes error, the other person also will not make the same error. Okay. Now method. Hand movement method only. Everybody has been doing hand movement method? Yes. No? Any other method? Plus minus method. That's the same thing, no? But I think you by hearted a list. Plus minus method, you have by hearted a list. Okay. See, actually, honestly speaking, I never learned hand movement method when I was studying. Okay, I was doing it as logical. It's actually logic. Okay, but only to teach, I learned the hand movement method. Because I remember when I took my first batch of CA Foundation, right? I was teaching them logic and it was going over their head. Okay, because they're so used to doing hand movement method, then I'm like, okay, fine. Then I understood hand movement method is basically logic only. Are you getting my point? Only thing is logical method we just think, okay, it's done here, not done here, put it, okay. But then hand movement makes it simple, okay. Let's, that I don't suggest.
For example,
You can do it, if you are already doing it, do it, but I don't follow that. What he's telling is, normal cash book balance is actually opposite of that is OD passbook balance, correct? So you learn one and just do the opposite. Okay, but I don't do it. I follow normal OD movements only. You can do it. If you are doing it, you can do it. You'll get the answer. Okay, right hand will always be your start point and left hand will always be your end point. Now your thing you should understand, left hand is constant. Left hand is constant. That means if left hand has moved, to adjust it, you will not move the left hand. You will keep the left hand like that only. Now, imagine something. Anything can be right hand, no? What is right hand? Cash book, normal balance, passbook, normal balance, cash book, OD balance, passbook, OD balance. Anything can be right hand. Now, the thing is, if right hand moves and left hand has not moved, then what we will do? We will just reverse the right hand itself. Now, don't look at me and you also keep the hand on the same side. Then you will be in trouble because this right hand, for you it is left hand on that side. Okay. You look at your right hand only. Don't look at my hand and raise the hand on the same side. Are you getting my point? Then everything opposite you will be doing. Okay. So remember this. If right hand moves, okay, left hand has not moved. So what you will do? You will just reverse the right hand. If left hand has moved, then you will not reverse the left hand. You will move the right hand to match it. Is this clear? You will move the right hand to match it. See, if right hand moves, reverse the movement. If left hand moves, move the right hand. Clear? That's why I said left hand is like God. Left hand is like God. You will not ask God to reverse the moves they have done. Okay, you will make your moves and match it. Are you getting my point? Okay, yes. Now, start point can be anything. Now, this is one more thing that you have to understand. Listen, start point is normal balance as per cash book. Okay, when you prepare your BRS, okay, plus minus you did, and you got positive number only. That means it is normal balance as per passbook, but you got negative number. Opposite of normal is abnormal or unfavorable, correct? So it will become OD balance as per passbook. If your starting point is OD balance as per cash book, then when you do plus minus and you get a positive number, then it will become OD balance as per passbook. But if you get a negative number, that means opposite of OD is what? Normal. Opposite of OD is normal. So it will be normal balance as per passbook. Is this clear? Are you following this? Yes. Now, adjusted cash book. What is this adjusted cash book? Here, like, see, so many things are there, difference. Some things are under our control. We don't have to ask God. It's under our control. Working hard is under our control. Giving result is God's. Are you getting my point? But when we have to work hard, if we are walking on a rainy day, it might be problem. Correct? Mohit, do you get my point? You didn't get my point, right? Good. Sometimes no bullet you have to shoot in one direction, but it will hit in the other direction. Sometimes you have to shoot the bullet in one direction, then it will hit in the other direction. Yes. Did you understand, Mohit? Yes. Adjusted cash book. Chetan, did you understand? Okay. Adjusted cash book is basically certain things. See, you entered, bank did not enter, not under your control. You cannot go at night to bank and pass the entry and come out. Okay, not under your control. Bank entered, you did not enter, it's under your control. You can enter it, correct? That time if you enter it, no need of doing BRS only. Now, you made mistake, it's under your control. You can rectify that mistake. But if bank made mistake, just to match the bank balance, we can't make the same mistake. Are you getting this? So, pass entries to adjust cash book balance before reconciliation. Before reconciliation, you are going to pass the entries. Now, items entered in passbook, not entered in cash book. Is this clear? Enter in cash book. Items entered in passbook, you did not enter it, your mistake, enter it, done, finished. No need to prepare BRS only, no. Now, error in cash book, rectify it, again done, you don't have to worry about anything else. Okay, now biggest challenge is, sometimes I think in your 11th and 12th and your POC and all, they have a different methodology only of adjusted cash book. They're like, if the BRS is at the end of the year, you have to prepare adjusted cash book. Some colleges teach that. Okay. There is nothing like that in ICAI. If they tell BRS, just do BRS. Don't do adjusted cash book. In suggested answers, ICAI gives both. Alternatively, this can also be done. But why you want to take risk? Suggested answers is not final. I hope you know that. Suggested answer is just suggested. ICAI's answer this is. Not our answer. ICAI only gave answer. Somebody had written same thing as ICAI only, suggested answers, and then they went to court and all, telling that what is this? Suggested answer, same answer is there. I have written same answer. It is not marked. So ICAI gave reply in the court, telling that suggested answers, as the name suggests, it is just suggested. Suggested answer is just suggested. Who told you that it is final answer? I told you suggested answer. What can you answer? What can you argue with such people? Can you argue with such people? No. It is like me talking to me within me. Do you know that? Nityananda. Yes. So we don't know what to talk only to such people. So better to not talk only. You do your work properly. Okay, they'll give marks. Okay, so do not go to do any changes. If they tell BRS, just do BRS. If they tell adjusted cash book and then BRS, then you do adjusted cash book and BRS. Okay. Now, again, BRS also, I have actually made one master question. There are few adjustments only, 20. Few adjustments only, 20. Now, obviously, I can't solve with all starting points. Okay, I'll solve with 1 or 2 starting points, then rest of the things you can try it at home. Now, BRS questions, you can solve more and more questions at home in less time. You know what? You don't have to sit and write everything. Just do plus minus, and do plus minus and find the answer. Over, done. One question done. Next question. Are you getting my point? Did you think about it? When you're solving formats, once if you learn, over, done, finished. Then your target should be to solve more and more questions. Every time, every question, if you are going on writing the format, you're going to spend a lot of time. So every question, what you can do for BRS? Plus, okay, this is happening, plus, minus. Do plus minus, find the answer. See if it is matching, done. Go to the next question. Same way when you're doing final accounts also. You know, right? Opening stock, to opening stock. You don't have to write. Put the numbers. Gross profit, got matching, good. Go. You should maximize your time to solve more and more problems. Because I'm telling you, it's just a data game. It's just data. Volume game it is. Okay, CA exams. That means you cover all the database which institute has. From somewhere there only will be there. Okay. But it's not like your BCom exams. Where same question, same name, same number, everything will be same. It is not that. Okay. Concept you have to understand. They might take 2 adjustments from here, 2 adjustments from here. That's all. Okay. Now, see this. Prepare BRS for the year ending 31st December 2021. From the following information, if starting point is balance as per cash book 1 lakh, balance as per passbook 1 lakh, OD balance, and your OD balance as per passbook. Okay. Now, what I am going to do is BRS. I am taking OD balance as per passbook. Because starting point as per cash book is usually preferable. You like it. Cash book starting point, normal balance starting point, you like it. OD balance you don't like. Plus OD balance passbook starting point, you don't like it at all. Is it clear? So now, register in your head. What is your right hand? What is your right hand? Passbook. Passbook OD balance it is passbook. So left hand is your cash book. Clear? And here it is 1 lakh. Some things will be added and some things will be less. Some things will be added and some things will be less. Now, listen. On 15th December 2021, payment side of the cash book was overcast by 10,000. Payment side of the cash book means what? Forget about OD, everything. Payment side of the cash book means what? Credit side or debit side? Credit side. Okay, that was overcast. Means what? You have put extra expense. Wait, calm down. We'll do it. Wait. Okay, minus. Okay, OD balance as per both the sides if you are taking OD. Expense makes the balance move upwards or downwards. Move upwards. What is your starting point? Passbook. That means where did the transaction happen? Cash book. Cash book is your left hand. Cash book you have taken extra expense. Expense means up. Plus. That means left hand has moved. So right hand also has to move upwards. Not less. Plus. Yeah.
Okay, fast.
Alright guys, I know you like cash book, but I don't like it. Okay, I know you like normal balance starting point, but I don't like it. What you like, you do it at home. No, you're comfortable with it. Okay, now one if I do, then all the other things will just have reverse effects only. Clear? You don't like OD balance, let me do it. I take the responsibility. Okay, you don't like normal balance, I'm doing OD. You don't like passbook, you don't like passbook, I'm doing passbook. Are you getting it? Is it clear now? What are we starting with? OD passbook. OD passbook. Everybody raise your right hand. Don't look at my hand and raise your own right hand. What is it? OD passbook. What is your left hand? OD cash book. Okay. Now, going back to the first one again. Payment side of the cash book. Raise the correct hand. Payment side of the cash book. Which hand should I raise now? Left hand. Okay. Was overcast. That means they put more expense or less expense? More expense. That means increase. Left hand has moved. Can we change God? No. So what will we do? Right hand also we will move. Is it add now? Yes. I'm just writing the adjustment number. I'm not writing the description. Okay. First one, no, it is. Yes. How much? 10,000. Huh? 10,000. Are you getting this? 10,000. Okay. Later on for the other things and all, here only you can write plus minus and solve and get the answer. Next, second. Okay, guys. Check of 1,18,000 issued on 6th December was not taken in the bank column. Who has taken? Who has taken? Passbook. Which is your passbook? Right hand. Check is issued. That means balance increases. OD it is. So balance increases. Correct? Otherwise, if check is issued, your balance decreases. But it's OD. So balance increases. Which hand moved? Right hand moved. So what will we do? Reduce. Go back. Okay. Minus 1,18,000. Okay. Description you know to write in the BRS. You can write the description on your own. Okay. On 20th December 2021, the debit balance of 8460 as on the previous day was brought forward as credit balance in the cash book. Debit balance. Where has it happened? Cash book. Cash book is not your right hand. It is your left hand. Debit balance means what? You had money here. You had money. That means your balance was actually 8460. Positive. It was positive. What did you do? It was taken as credit balance. That means negative. That means you have increased the balance or decreased the balance. It is OD. Okay. What did you do? How can it go from debit to credit? That means you made two payments. You made two payments. That means OD balance has increased twice. Are you getting my point? Two payments are taken. So here what you should do? You also should add no. 16,920. Are you clear with this? I'll tell you. See, what has happened is balance is 8460 debit balance. From debit, if it has to go to credit, that means they took two payments. Two payments of 8460. Two payments. That time it went into credit. Two payments if you take, OD balance actually increases. So left hand increase. So what will you do with right hand? Right hand also will increase. Is this clear? Right hand also will increase. But double the amount. Because to rectify, what should you do? You should double it only, no? 16,920. Next, of the total check amounting to 12,370 drawn in the last week, checks aggregating to 9360 were encashed in December. That means we don't have to worry about 9360. We have to worry about what is not encashed. So 12,370 minus 936. 3010. Who has passed the entry? Cash book, left hand. Okay, checks are issued, right? Drawn means what? You write the check and give it. That is called as drawn. Balance increased. Left hand moved. What should you do? Left hand. Right hand also should move. Add 3010. Now, fifth one. Dividend of 35,000 collected by the bank and fire insurance premium 7,900 paid by the bank were not recorded in the cash book. That means dividend. Passbook is your right hand. When dividend is collected, passbook balance decreases. Because it is OD. It decreases. We are in OD. Money comes, balance decreases. So what should we do? Increase it. Fifth one. What? 35,000, right? Oh, no. I am taking separately. Okay. Fine. 7,900 paid by the bank. What happens? 35,000. Okay, 7,900 paid by the bank. What happens? Balance. OD. Increases. So you will decrease it. 7,900. Fifth one. Okay, next. A check issued to a creditor, 1,75,000 was recorded twice in the cash book. Check issued. Who has made the mistake? Cash book. If you issue check, OD balance, what will happen? Increase. Once it increased, bank also once it increased. But cash book, once more it increased. Now what you should do? Left hand move. So you should move the right hand also. Add 1,75,000. Okay, next. Bills for collection amounting to 53,000 credited by the bank on 21st December, but no advice was received by current till 31st December. Credited by the bank. That means bank has already given you money, but your OD balance when they give you money decreases. So you will add it back because right hand moved. You will add it back 53,007. Next, customer who received a cash discount of 3%. This is a very important adjustment. Okay, a lot of students have seen making mistake in this one. Customer who received a cash discount of 3% on his account of 60,000 paid a check on 10th December. The cashier erroneously entered the gross amount in the bank column of the cash book. What is this? Less 1,800. Huh? What is the mistake here? You received actually how much? After removing discount, 58,200 you will receive. But by mistake, what you did? You put 60,000 only. You should have put actually 60,000 in the amount column and 1,800 in the, sorry, you should have put 58,200 in the amount column and 1,800 in the discount column. By mistake, you put the entire amount. So where you have taken extra? Cash book is your left hand. You took extra receipt, not payment. Extra receipt. Can you see your customer who received a cash discount? So cash book balance decreases. So passbook balance also should decrease. Why decreases? Because it is OD. That answer we have. Why decreases? Money comes in, balance will go down. Okay, 1,800 minus adjustment number 8. 1,800. Are you clear with this? Next, checks amounting to 60,000 issued to creditors have not been presented for payment till date. Who has entered? Who has entered? Cash book. Cash book balance, what happens? Left hand. Left hand balance increases when you issue check. Because it is OD, balance increases. So what will happen to passbook? You also should add it 60,009. 60,000. Next, checks paid into bank. Paid into bank means deposit 1,10,500, out of which checks amounting to 55,000 only collected. Collected? Good. Not collected? That is bad. So what is the difference between 110,500 and 55,000? 55,500. Who entered? Cash book. Checks paid into bank. That means cash book balance will go down. Why? Because it is OD. So what will you do? Left hand has moved. You will also reduce it. 55,510. 55,500. Is this clear? Next. Rent amounting to 60,000 received by the bank and entered in the passbook but not entered in the cash book. Received by the bank. What happened to passbook balance? Decreased. So you will add it back 60,011. Along with BRS, we will also learn Roman numbers. Okay, because only till 10 we are confident. After that we are not confident. Yes. You know Roman numbers, Chetan? Do you know Roman numbers? Yes. Why you are laughing? I just asked a simple question, that's all. Insurance premium up to 30th June. Pay anytime, no issues. In cash book, we don't bother about prepaid and all. You pay whenever. For next 10 years, you pay also. We don't bother about it. Okay, paid by the bank, 2,700. Not entered in the cash book. Paid by the bank. That means bank has increased the balance OD. Now you will reduce it. 11. 2,700. Next. Payments. Oh, sorry. Was it 12? Sorry, 12. 2,700. 13. Payment side of the cash book has been undercast by 500. Undercast means what? You did not put a payment. You did not put a payment, but passbook they have put the payment. No. So what happened to passbook balance? Increased. So you will right hand mode. What will you do? Decrease. How much is that? 500. Next. Bank charges 150 shown in the passbook had not been entered in the cash book. That means bank they have entered it. Increase. So now you will decrease. How much was that? 150. 150. Next. Bills payable of 20,000 had been paid by the bank but was not entered in the cash book. We'll stop there. Not entered in the cash book. Bills payable paid by the bank. That means right hand is your bank. Balance increases. So what will you do? Decrease it. 15, right? What 20? Yeah. Amount is 20. I was telling number. Question, sub-question number. Yeah, correct. I was writing this 15, man. Okay. And bills receivable of 6,000 has been discounted with the bank at a cost of 100, which had not been recorded in the cash book. Bills discounted. That means you got money or you lost money. Got money. Passbook they have entered. Passbook, what happens to the balance? OD. So balance decreases. So you should add it back. Yes. 5,915. Okay, why 5,900? Bank will not give you 6,000. They'll cut the discounting charges and give you. Bill discounted. Okay. So now here you see, bills receivable had been discounted with the bank at a cost of not recorded in cash book. So when you discount the bill, you get money. So passbook balance decreases. So you add it back. Checks received rupees 10,000 entered twice in the cash book. Checks received. That means first of all, it is left hand now. Checks received. That means balance decreased once. Balance decreased once. But here you recorded twice. So balance decreased again in the cash book. So now what will you do? Left hand move. So you will move the right hand. Let's write 16. So 10,000. Is this clear? A bill of exchange of 26,200 which was discounted with the bank returned dishonored, but no entry was made in the cash book. Dishonored means what? They took the money. Dishonored means what? They took the money. So what happens to the cash book balance? Nothing. What happens to the passbook balance? Increases. Because it is OD, it increases. If it was normal, it would have decreased. Passbook balance increases. Right hand mode, what will you do? You will decrease it. So it is going to be 26,200, 17th one. 26,200, 17th one. Is this clear? Yes. Next. Bank charges entered twice in the cash book, 2,000. Twice in the cash book. Okay, you added, they also added, you added again in the cash book. So what will you do? Add it, 2,000. 18, no? 2,000. Next, interest allowed by the bank, 3,000. Allowed by the bank means given. Interest charged by the bank means taken. If they give you interest, what will happen to passbook balance? Increase or decrease? Decrease. Normally it would have increased, but OD it is decreasing. So you will add it back. 3,000. Yeah, overdraft. Okay. Interest on investment 83,800 collected and credited by bank, but the same has not been entered in the cash book. Collected and credited by the bank. That means balance decreased. Now you are going to add it back. 20. 83,800. I don't even want to calculate the balance and all. Doesn't matter. You just have to know plus minus. Totaling you will do using the calculator. Okay, now BR is actually done. But what I want to do now is, okay, revision. Revision of what? All the RTPs which we have kept in our line of RTPs. Okay, we will see rectification if there is anything, and then BRS. One by one together we will do. Okay, capital or revenue receipt, revenue expenditure and all this you have to do on your own. Okay, I'm not doing that. Subsidiary book also, just check it out. Rectification of errors. Okay, and BRS. Simultaneously we'll do both. Now, Beta Chemicals Labs were unable to agree the trial balance as of 31st March and have raised a suspense account for the difference. Next year, the following errors were discovered. That means next year, P&L adjustment has to be used. Okay, repairs made during the year were wrongly debited to building account. I think it's covered in our master problem only. Actually, it will be P&L adjustment debited to building account. The addition of the freight column in the purchase journal was short. Okay, whatever is similar, which we have already done, I'm not discussing that. We have done it in the master problem itself. Freight column we have done. Goods to the value of 4,500 returned by the customer Shiva and Company had been posted to the debit of Shiva and Company and also to sales return. Did we have the same error? Yes. Sundry items of furniture sold for 30,000 had been entered in the sales book. Okay. The total of which has been posted to to sales account. Did we have this also? Same wordings also same. Okay. Bills of exchange received from Sapna. I think forget it. Sapna. When we saw the name Sapna only, we remembered everything. What? What did you remember? Okay, has been returned by the bank, dishonored, had been credited to bank and debited to bills receivable account. I think it's the 31st error in that master problem. Okay. I think maybe rectification of errors, we don't need to see the RTP problems because it's already there. Okay, same things are there. Solved one, I'll send. Okay. BRS. Quickly. Goods given as samples omitted to be advertisement account debited to purchases. Next year. Then P&L adjustment account debited to P&L adjustment. Actually, you don't need to pass entry only. Yeah, you can actually write P&L adjustment to P&L adjustment. Otherwise, you can write no entry. I think ICA has written no entry only. Because no effect, right? Profit increases, decreases. Same it is. Yes. On 31st December 2023, bank statement of Summer and Company was showing a favorable balance of 1,05,980. This did not agree with the balance of the cash book. On scrutiny of the cash book and bank statement, following discrepancies were found. What are you starting with? What are you starting with? Balance as per what? Balance as per passbook. See, bank statement, okay, favorable balance. Okay, here only we are writing plus minus. Okay, no need to solve it. Deposit of 30,825. Now, what is your starting point? Passbook. Right hand is passbook, normal. Right hand is passbook, normal. Deposit of 30,825 made on 29th December had not been credited by the bank. Cash book, normal it is. Normal. Cash book, what happened? Left hand increase. You will also increase. Clear? You will also increase. Checks issued 48,400 not presented for payment. Cash book decrease. So you will also decrease. Next. On 25th September 2023, firm had entered into hire purchase agreement to pay by bank order a sum of 25,000 on the 10th of each month, commencing from October. For this transaction, no entry has been made in the cash book. Bank has gone on making payment. So balance, as per balance, bank, the balance decreases. So you have to add, but you are going to add 75,000. You are going to add 75,000. Why? The 25th September they have entered, no. That means October, November, December, 3 months. See, they are talking about everything on December. Is this clear? So 3 times bank made payment. You missed all 3 times. So now 75,000 is the difference. Is this clear? I think this adjustment is there in study material. Same cost, same thing. Customer of the firm who received a cash discount. Oh, 2 lakh into 4%, which is basically 8,000. Erroneously entered in the gross column of the cash book. What should we do? Did they put more payment? Yes, they put more payment where? Cash book. Cash book is your left hand. Cash book balance. What happened to cash book balance? Increases. What should you do? You also will add. Clear? Bank charges amounting to 1250 not entered in cash book. Passbook balance decrease. Right hand is your passbook. Decrease. You will add it back. Okay. Dividend 2,500. You will minus it. Passbook balance increased. So you will decrease. Is it clear? Okay, fine. Like I'm not doing that. You can do it. No issues. Okay, because you have to just plus and minus the numbers. If you get positive, that means that is also normal. If you get negative, that is OD. If you start with OD and you get positive, that means that is still OD only. If you get negative, it is normal. Clear? That was RTP May 2024. RTP September 2024. Okay, capital revenue, please do it on your own, okay? Rectification of errors, just I want to see if there is something different we will discuss, otherwise we will just ignore it. Wages paid for construction of office building, debited to wages account, very good. Credit sale of goods, 1,200 to Ramesh has been wrongly passed through the purchase book. Okay. Wait, first of all, which stage are we in? Detected during the preparation of trial balance. That means before preparation of trial balance. They said during the preparation we found out. Okay. Only statement. Amount of 2,000 due to Mahesh Chand, which had been written off as bad debt. Bad debited since. Oh. Bad debt in the previous year was unexpectedly recovered and has been posted to the personal account. This I want you to tell. What is the entry for bad debt recovered? How's the housing? We are paying how's the housing? Many numbers. No, the entry is cash or bank account debited to bad debt recovered. Why debtor to bad debt recovered? If you write debtor account debited, that means debtor balance will increase. No, debtor balance will increase. If you write bad debt recovered debited, the other answer I heard was bad debt recovered debited. If you write bad debt recovered debited, it's expense. No, but actually bad debt recovered is good for you. It's income. And when it is recovered, first thing you should understand is what are you getting? Money. Cash or bank account debited. Clear to bad debt recovered. Is this clear? So now here what they did, they have posted to the personal account of Mahesh Chand. So you should have passed cash account debited to bad debt recovered. They have passed Mahesh Chand account debited to, cash account debited to Mahesh Chand. So you will pass the entry Mahesh Chand account debited to bad debt recovered. Clear? Yes. Now goods cost being 15,000, sale price being 16,000, distributed free samples. I think we have seen this. Okay, it was already there. Goods worth rupees 1,500 returned by Ritu have not been recorded anywhere. Good, record it. What return is it? Sales return. Okay, goods worth rupees returned by Ritu. Are you Ritu? No, they didn't tell that your name is Ritu. So it is sales return only. Okay, in the first line, if they had told, make this in the books of Ritu, then it would have been purchase return. Okay. Now, here they have asked, make appropriate adjustments in the cash book. Okay, appropriate adjustments in the cash book. So first, whenever you have that situation, first you prepare adjusted cash book. After doing adjusted cash book, you will get one balance. No, use that balance and prepare BRS. Clear? Now, according to the cash book of Mihir, there was a balance of 4,45,000 in his bank. Is your starting point passbook or cash book? But they said bank balance. In your book, there is bank balance. Is it clear? Bank column. So your start point is balance as per cash book only. Is this clear? Now, checks amounting to 60,000 issued to creditors have not been presented for payment till date. Who passed the entry? BRS entry it is. Who passed the entry? Cash book or passbook? Cash book. Cash book already done. See, things which are already done in the cash book, you can't put it into adjusted cash book. Errors which are made by passbook, you can't put it into adjusted cash book. Okay, understand this. Checks amounting to 60,000 issued to creditors. Issued to creditors. So what happens now? Cash book balance already it has reduced. Normal it is. Normal, not OD. It has reduced. So what should you do? Reverse it and add it. What I write as add is in the BRS. What I write as debit credit is in the adjusted cash book. Clear? Checks paid into bank amounting to 1,10,500, out of which checks amounting to 55,000 only. 55,500. 55,500. Checks paid into bank. That means balance increased. So now you have to decrease it by 55,500. Clear? Dividend of 4,000 and rent amounting to 6,000 received by the bank, entered in the passbook, not recorded in the cash book. That means we can record it. That means what you will do? You will debit it. Debit is receipt side. You will add it to debit side. That means receipt will increase. Clear? Next, insurance premium paid by the bank, not entered. That means you will credit it. What is entry for insurance premium paid? Insurance premium account debited to cash or bank account. Clear? Payment side of the cash book had been undercast by 500. Yeah, it is under our control. No, payment side was undercast. That means you didn't put a payment. Put the payment. So you will credit it. Payment side undercast means what? You did not put a payment. So you put that payment, credit it. If at all they would tell overcast, that means you put more payment, then you have to debit it. Clear? Bank charges 150 shown in the passbook had not been entered in the cash book. So enter it. Again credit it. Clear? Bills payable of 20,000 had been paid by the bank but was not entered in the cash book. Credit it. Bills receivable of 6,000 has been discounted at a cost of 100. Not entered in the cash book. 5,900. Debit it. Discounting charges will also get debited but not to cash book. No, it will go to discounting charges account. We are preparing adjusted cash book only bank column. So it will not bother us. Clear? So after doing all this, you are not going to do plus minus. These two plus minus are there, no? You are not doing it to 4,45,000. After adjusting whatever balance you get, to that you are doing plus minus. Is this clear? Yes. That was your BRS of September 2024. We'll see Jan 2025. What have they asked? Okay. Rectification of errors, guys. Satvik was unable to agree the trial balance last year, wrote off the difference of to the P&L account of the next year. They appointed a chartered accountant to examine the old books and found the following errors. Very good. You should get job, no? They should make errors, you will be happy. What should you feel? Very happy when people make errors. Why? Otherwise, they will not come to you, right? Rectification of errors and incomplete records, you should feel very happy about those chapters. Why? Other day I was doing incomplete records somewhere, okay? I asked them, should you feel happy or sad when there is incomplete records? When you have a client who is coming with complete records, you should be happy, or with incomplete records, you should be happy. Incomplete records, you should be happy. Complete records, what you will do? Trading P&L balance sheet. Incomplete records, what you will do? Prepare books and then prepare trading P&L balance sheet. Bill will be bigger, no? Are you getting my point? Completed records, he also has knowledge. Then he knows your work is limited. Incomplete records, he knows nothing. We will tell so much work was there. Huh?
Pages in the center add
Extra pages, huh? Oh, which extra pages?
in the statements.
You've seen, no? What they do in office. You work somewhere? In CS, some CS office you have worked? Don't tell it to others. Because you should tell good things, about articleship. Bad things, they only should experience. They should go with positive mindset when they go to articleship. Yes, all that, all that they do. Okay. Now, if a client calls you and tells that there is some work, okay, urgent work. Now you know that you can finish it in 5 minutes. Before I used to do, okay, 5 minutes only it takes me. Some work is there, like income tax return filing and all. Some simple return, 5 minutes I'll finish it. Okay, I used to prepare it in 5 minutes to show off my talent. I was like 5 minutes I finish, and I thought that client will feel happy. But when I tell the fees, client will be thinking, for 5 minutes work, this guy is charging so much. Then one of my senior told, what you should do is, even if it is 5 minutes, you should give after 2 days. That time the client will think, so much work was there. Oh, okay. Are you getting my point? But actually, you're actually not charging for 5 minutes. People are getting the concept wrong. You are not charging for 5 minutes. You are charging for the ability to do in 5 minutes. Are you getting my point? You are charging for the ability to do in 5 minutes. If you give the same work to your client, do you think they will be able to do in 5 minutes? If they do it in 5 minutes, no, you should be very happy. You know why? 100% there will be mistakes, and income tax will send notice, you will get more work. Are you getting my point? If your client does it in 5 minutes, you should be very happy. Yes, you should tell you only do it. Because then when notice will come, you will get more work. When notice comes, they will be ready to pay anything. Because they just want to save themselves, right? See, what I should tell was, before, no, you're all in a very, 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 very crucial profession, okay, which is going to even on CA day and all, even Prime Minister also keeps telling about how important chartered accountants are to the country and all. See, earlier, no, there was a very big notion in people's head that if you have to become a rich chartered accountant, okay, then you should only do all these golmaal things. Okay, that was the notion. It is actually true also. It was actually true. There was a sentence, it seems in 90s and early 2000s, they should tell it seems that you can either be a rich chartered accountant or a successful chartered accountant. You can't be both. If you are rich, that means you are not successful because you are only looking for loopholes. Okay. But now it's not like that. You know why? Because earlier people would go and tell, I will pay you any amount, make my tax less. Make my tax payment less. And these people would do some golmaal and all, and they would make it less. And they would charge fees. Now, everything is linked to your Aadhaar card, left, right and center, like on Kadle, you are distributing it over there. Everywhere you are giving Aadhaar card. So, whatever you do anywhere, everything is linked. At the end of the year, no, it will come and sit in your income tax portal. So, now, people want to go to a chartered accountant who will do it perfectly, and I should not get notice. I should not get notice. I have to pay tax today, tell me, I'll pay today only. I should not get notice because when notice comes, no, you'll have to pay 3 times, 4 times later. So now what is the thing is, you can actually become a rich chartered accountant and successful chartered accountant. That means if you make people follow rules, you can make more money. Before what, income tax, if there is a hearing and all, you just pay bribe and settle the case, right? Now you can't pay bribe because it happens on a video call like this. It happens on a video call like this. There is something called as all case hearings are on face-to-face basis. Okay, faceless hearing it's called, appeal, or faceless hearing. So now what happens? There will be a video call. You'll be talking to the other person over there. Now you can't tell no on the video call. Little adjustment. We can't do that, no. Obviously you'll get caught. So now you have to prove according to law only you have to prove. There is no other way. Okay, GST might have still some loopholes, but income tax, everything is almost wiped out. So you should be making people follow rules. Is this clear? Yes. Purchase of scooter was debited to conveyance account, 30,000. Ratan charges 10% depreciation on scooter. Scooter was not recorded, record the scooter and also record the depreciation. Okay. Total of return inward book was not posted. Return inward is sales return. We have seen this error many times. Credit purchase of goods from Mr. X for 20,000 was entered as sale. This also we have seen. Instead of recording the purchase, they have recorded it as sale. What would be the rectification entry for this? The rectification entry for this will be P&L adjustment account debited 40,000 to creditor 40,000. Did you get it? No. Correct entry is actually purchase account debited to creditor. Wrong entry is actually creditor. Creditor means party. Party account debited to sales. See, credit purchase is recorded as sale. Instead of passing purchase entry, you have recorded it as sale entry. So, you have to record purchase and you have to remove the sale. So, two things are to be debited. Both are P&L adjustment only. To creditor. Two times you have to, instead of credit, you have done debit. What you should do? You should do double, no? Are you getting this? Yes. Receipt of cash from Mr. Preetish was posted to the account of Mr. Ravish. Very good. Remove from one person's pocket and put it to the other person's pocket. Next. Receipt of cash from Mr. Chandu was posted to the debit of his account. What is the entry for receiving money? Cash account debited to Chandu. They have done cash account debited, Chandu account also debited. So rectification entry will be credit Chandu double. Credit Chandu double and suspense account will be debited. Clear? While carrying forward the total in the purchase account 65,590. I think same thing we have seen. Same numbers are also same. Sale of goods to Mr. Rohan 20,000 was omitted to be recorded. Sale is not recorded. Record it, overdone. But you have to record it as P&L adjustment. Freight paid on machine was posted to the freight account. I think this also we have seen. Okay. Now, the following particulars of Messrs. Iqbal Enterprises prepare a bank reconciliation statement. Did they tell you anywhere that you have to prepare cash book, adjusted cash book? No. Bank OD as per passbook. The thing that you don't like only they have asked. The bank OD as per passbook. ICA was also once upon a time you. ICA also was once upon a time you. So they know the mindset. Clear? Now, starting point is OD as per passbook. First thing you have to register in your mind is right hand is passbook. Second thing you have to register in your mind is money comes in, balance decreases, money goes out, balance increases. Okay. Check deposited in the bank 5,800 but only 2,000 cleared. So 3,800 what will you do? Cash book, balance decreases, left hand move. What will you do with the right hand? Right hand also will move. Is this clear? Now, check issued 2,500, 3,800, 2,000 during the month. The check of 5,800 is still with supplier. Check issued. That means cash book balance increased. As per OD, it increased. So, right hand, what will you do? It will also increase, add 5,800. Dividend collected by the bank, but was wrongly entered as 1520 in cash book. Every time when you see dividend, it is not the same treatment. Dividend collected by the bank. Can you tell me the difference between these two? 250, 270. Yeah? Now, wrongly entered where? Cash book. Wrongly entered where? Cash book. Cash book, did you put extra or did you put less? You put extra. So, cash book balance decreases. OD. So, you will also reduce it. Minus. Corporation tax 1,200 paid by the bank as per standing instructions. Passbook balance increases. So, right hand is passbook. So, you will decrease it. Interest on OD 930 was debited by the bank in passbook and the information was received only on 3rd April. Interest debited. Passbook balance increases. So, you will decrease. Direct deposit by Rajesh Trader 400 not entered in the cash book. That means passbook balance decreases. So, you will add it. Amount transferred from fixed deposit account into current account appeared only in passbook. It's important adjustment. from fixed deposit, they have transferred it to your current account. That means passbook balance has reduced, so you will add it back. Clear? I am telling you one more error or difference. Okay, amount deposited into HDFC account has been recorded as SBI account, SBI in cash book. What will be the treatment? Amount deposited in HDFC bank account has been taken as SBI bank account in cash book. What will be the treatment? No treatment. No treatment. Why? Both HDFC or SBI, both are bank column only, no? Both. I have two accounts, one in SBI, one in HDFC. I deposited money actually into HDFC. Clear? Has been taken as SBI in bank column of cash book. What difference it makes? Nothing. But if you are doing BRS separately for SBI, separately for HDFC, then it makes a difference. Are you getting this? Then it makes a difference. Okay. Anyway, this is not that. We had one FD investment sold. I mean closed, not sold, closed, and money came. That's all. It came into your current account. You did not record the entry in the cash book. Any doubt with this one? Any number. Every bank account you go and open. No issues. Yeah, they can open. No issues. What difference it makes? Bank account means actually good only. Loan, also you can open any number of loan accounts. But bank should give, that's all. If you are like Vijay Mallya, then bank will give. Then you will go to London and you will settle down. Correct, no? Present?
It is not. It will not happen because of what was registered. Under that, they are able to see everything about the money.
Before also they could see.
No, sir. Present.
No, before also ROC could see what and all is happening. But loan is not given by ROC, no. Loan is given by bank.
But to websites, it will be able to see.
Yes. Before you think it was not able to see? It was able to see. It is not mistake of bank. It is mistake of the bank manager. Bank manager will sanction the loan and take money into his pocket. Even though company is in loss. Who will lose money later? Bank. Indirectly, public. Bank managers will take commission and they'll sanction the loan. That's how Vijay Mallya got so much loan. No. Is it Vijay Mallya's fault? No. Bank manager's fault. They thought he's king of good times. Yes. Next, RTP May 2025. RTP May 2025, rectification of errors. Mr. Mathu's trial balance did not agree. Difference was put into suspense account during the next same structures they are using. Total of the purchase book of one page. Something else it has become. Sale of 281 not entered in the sales book as 821 and posted to the creditor of customer. Okay, you should be able to do this. Return to creditor of 1595 was entered in the returns inward book. However, the creditor's account was correctly posted. We have had this situation. Check of 500 issued to supplier account shown under trade payables towards his dues has been wrongly debited to purchases. Check issued to supplier account debited to bank. They have returned purchase account debited to bank. Okay, goods worth rupees 1400 were dispatched to customer before the close of the year. No invoice. Sale entry, pass the sale entry. Goods worth rupees 1600. Sale or return. This we have discussed. Okay, reverse the sale entry. Take it as closing stock. Sale of goods to Mr. R 3000 was omitted to be recorded. Record it. But when you record it, please keep in mind your P&L adjustment. Because we are in the next year. Can you see over here? We are in the next year. During the next trading period. Yeah. Tell me.
Goods dispatched before 31st March, but invoice is prepared after the what we consider which year sales.
31st March only. Sale of goods act. Goods are dispatched. It's sale. 31st March only. Goods are dispatched before 31st March. Sale. It should be taken as sale. That is your mistake. That is your mistake. It should be sale only. Sale of goods act. When ownership is transferred to the buyer, all risks and rewards of ownership transferred to the buyer, it becomes sale, no? It should be taken as this year's sale. Rectification will happen.
Same concept in the inventory space.
Inventory there are. That time what happens? You will do plus minus and arrive at the closing stock, no, in inventory. You will do plus minus and arrive at the closing stock in inventory. We'll see in inventory, we'll see that, those adjustments. Okay, done. Also prepare, show the bank balance that will appear in the trial balance as on 31st March 2024. What are they telling? Following information as on 31st, prepare a bank reconciliation statement after making necessary adjustments in the cash book. What is adjustment? We will write it as debit or credit. What is by BRS? We will write it as plus or minus. Bank balance as per cash book debit, normal or OD? Normal, because they said debit balance. If they would tell bank balance as per passbook debit, that would be OD, because in passbook you are supposed to have credit balance. But if it is OD, that means it is debit balance in passbook. In cash book, OD means credit balance. Clear? Now, check deposited but not yet credited. Is it under your control? Why? I mean, okay, to rectify it. Okay. We already passed it. Check deposited. What will happen to the cash book balance? Increase. So what will you do? Decrease. Check issued but not yet presented for payment. Check issued. What will you do? Passbook balance should actually decrease. So what will you do? Cash book balance will decrease. So what will you do? Add it back. Your starting point is cash book only. Bank charges debited by the bank but not recorded. So what will you do? Credit it. Credit, because you are preparing adjusted cash book. Dividend directly collected by the bank. So you will debit it. Insurance premium paid by the bank. So you will credit it. Basically what all incomes or receipts will be debited. All payments will be credited. Cash sales wrongly recorded in the bank column of the cash book. Cash sales wrongly recorded in the bank column of the cash book. What is the entry for cash sales? Cash account debited to sales. What did they do? Bank account debited to sales. So what we should do? Cash account debited to bank account. That means should be credited. Is this clear? Rectification is basically clear. Now, customer's check dishonored by the bank, not recorded in the cash book. Dishonored. That means it is credited. Balance increased. Now it's dishonored. Balance decreased. Wrong credit given by bank. Be happy. But what we should do? Huh? What should we do? Boss, if bank put money by mistake, you will go and tell, oh, very good, I will also debit it. Are we going to do that? No, then when bank removes it, you will also have to go and credit it. Is it clear? So, this is not under your control. You have to put it into BRS. Wrong credit given by the bank. That means bank balance increased. What will you do? You will add it in BRS. Is this clear, guys? Whatever is plus minus is BRS. What is debit credit is adjusted cash book. Okay. Now, if bank puts money by mistake, no, don't go and put in your cash book also. Then you will end up spending money and then bank will take that money later. Then your balance will go into OD. Because you didn't have money only, no, you spent it. Yes, that should be it with the RTP May 2025. We'll look at June 2024. June 2024. I don't think there is rectification. There is rectification. See, trial balance of Sarvesh Kumar did not tally. Difference was posted to suspense account on a scrutiny. Following errors were detected. Oh, but it is not next year. It is current year only. Total of the sales return book had been cast short. Freight paid for installation of machine was posted to freight account. See 6,500, 5,600. Same numbers also. Goods of the value of 2,500 returned by the customer entered in the sales day book but not posted to the credit of customer. So goods returned means it's a sales return account debited, right? Returned by a customer. Sales return account debited to customer. So they have entered it into the sales book, but customer they have correctly put credit only. Rectify it. 18,000 paid for purchase of old motorcycle for personal use has been debited to conveyance account. Old motorcycle is what? Huh? Yeah, but it is personal use. Drawings. It is personal use, so drawings. Purchase of 6,700 has been posted to the creditor's account as 6,000. Recorded. Receipt of cash 5,000 from Avinash was posted to the debit of his account. Again, these kind of errors we have seen many times. Check of 2,500 received from Alok has been dishonored and posted to the debit of Ashok. Instead of Alok, it is Ashok. You should have actually passed Alok account debited to bank. You passed the entry Ashok account debited to bank. Now you will pass the entry Alok account debited to Ashok account. Okay, sale of 8,500 to Mr. Deepak was recorded in the sales book correctly. But while posting in ledger, credited to his account. Deepak's account should have been debited. No. You have credited Deepak's account. Now what happens? You have to double the amount and debit Deepak. Total of the discount allowed column in the cash book for the month of December 2023 amounting to 3,800 was not posted. Discount allowed is not posted. What should be the rectification entry here? Discount allowed account debited to suspense account. Only total did not get posted. Total did not get posted. That means it is one-sided error. Is this clear? Sale of old office table 2,200 treated as sale of goods. Sale of old office table for 2,200 treated as sale of goods. What should we do? Sales account debited to office table. Sales account debited to office table. Is this clear? Yes, that should be it. And do we have BRS? Did we have BRS in that paper? I think yes. I'll just quickly see somewhere. I remember seeing BRS. NPO. Resolution. Admission. Incomplete records. Inventory. Manufacturing account. BRS, yes. BRS came for 5 marks. Bank OD as per cash book. Bank OD as per cash book. Okay, check deposited as per bank statement but not recorded in cash book. Cash book is your right hand. Cash book is your right hand. Did they ask you adjusted cash book? No. Okay, check deposited as per bank statement, not recorded in the cash book. Passbook balance increased. So you will also add. Oh, sorry. OD. Bank OD as per cash book. So cash book balance decreased. So you will also decrease. Is this clear? Right hand is what? Oh, I think right hand, sorry. I took normal and passbook also. Okay, right hand is what? OD balance as per cash book. So what happened to cash book balance when check is deposited? Balance decreased. So we'll add it back. It is add. See, we just made a compensating error and we got add first. First we wrote add on, because it was compensating error. Why? I didn't see OD also and I took left hand as cash book. Good, no? Full question we solved and we think it is wrong, but it's correct. Yes. Cash received from X. Was entered in bank column of cash book. Cash received from X was entered in the bank. I shot the bullet this side. Okay, cash received from X was entered in the bank column of cash book. What should be the entry? What should be the entry? Cash received, guys. We should not put in bank column. We should remove from the bank column. Now, what happened to bank column over here? Bank column, the balance decreased. So, what should we do? We should add it back. Why we should add it back? OD it is. By mistake, if you put into bank column, what will happen to OD balance? It will decrease. Clear? Debit side of the bank column, cash short. Debit side of bank column. Debit side is receipt side or payment side? Receipt side. Receipt side, cash short. Cash short means what? How can it be cash short? That means you put one extra payment. Cash book, what happens to the balance now? Cash short. Now see, debit side of the bank column, not the ledger balance. That means it is increased, right? If it's increased, you will minus it. Is this clear? Why increase? Debit side is receipt side. Clear? Cash short. That means you put one extra payment. If you put extra payment, increase in OD. Now it will reduce. Check of 9,000 deposited but collection as per, check for 9,000 deposited but collection as per bank statement. That means entered in passbook. Passbook balance decreased. You will also decrease. How much will you decrease, by the way? 8,950 or 9,000? 9,000 or 8,950? 8,950. Why? When the check was deposited, no. 50 rupees they cut as charges. Check was deposited 50 rupees as charges. Or what you have to do? You have to minus 9,000 and you have to add 50 rupees. Clear? Bill sent to bank for collection. Collected by the bank but not recorded in cash book. Collected by the bank. That means passbook balance decreased. So you will also decrease. Bank charges recorded twice in the cash book. That means cash book balance increased. So you will decrease. Noting charges debited in the passbook for discounted bill dishonored. That means passbook balance increased. So you will also increase. Check deposited on 25th March but collected by the bank. Check deposited. That means cash book balance decreased. You will increase. Check issued. Passbook balance, cash book balance increased. So you will decrease it. 5 marks. See, 10 things were there for 5 marks. When the transactions are simple, there will be 10. There can be more. When transactions are complicated, then there will be lesser number of transactions because you'll have to think, right, for every transaction. Yes, June 2024, now September 2024. September 2024. Okay, rectification, I'm not sure if it is there in September. Okay, we'll do BRS. Cash book of Hari showed a debit balance of 1,36,800. Debit balance means favorable or unfavorable? Favorable. As on 31st March, which was in disagreement with the bank balance as per passbook. Following discrepancies were noticed. Prepare BRS. They didn't tell adjusted and ascertain balance as per passbook. Okay, they did not tell adjusted cash book. That means just BRS. Normal balance or OD balance? Normal balance. Starting point is cash book or passbook? Cash book or passbook? Cash book of Hari showed a debit balance. Cash book. Dividend 18,000 was deposited in the bank, of which Hari had no information. Passbook balance increased. You will also add. Check was issued to Suresh 14,780, which was recorded in cash book as 14,870. Did you record more or less? You recorded more in the cash book. Starting point is cash book only. So you will subtract it. You will reduce not this amount, not this amount. You will reduce only the difference. Oh, check issue. Minus, yes, correct. Add. Yes, what? ACR. I'm sweating actually. It's cold. What? What is shaking? Is it that cold? Wait, now only like half an hour more, no? We'll take a break at 1 o'clock for lunch. 1 o'clock, yes. 1 to 2. 1 to 2. Low BP, we have to take care of it. Now you're all right. Yes. Okay, guys. Shh. Checks totaling of 55,000 were deposited in the bank, which were not cleared. Checks deposited. That means cash book balance has decreased. So what will you do? You will wait. So many OD questions. Okay, sorry. Cash book balance increased. So we will decrease. Good mind workout. No, we are switching. That time OD, next question only, it's normal balance. Mediclaim premium was paid as per standing instruction of Hari, which was not recorded in the cash book. Passbook decreased, you also minus. Goods amounting to 1,60,000 were sold to Ajay in November 2023. He deposited check after deducting 4% cash book. This entry was missed while preparing cash book. 1,60,000. Yeah. What is 4%? 6,400. Okay, where did you take extra? Cash book, you took extra amount. Cash book is your starting point. You added, so what you should do? You should subtract. Starting point is cash book, you know. Yeah, the discount is missed, no? See, he deposited check on 15/12 after deducting 4% cash discount. Okay, now it's not clear whether they missed the full amount or they missed the discount. If they missed only the discount, listen. If they missed only the discount, 6,400 minus. Otherwise, 1,53,600 plus. Okay, better to cross check and see what they have done. Full amount it is. Full amount. Yeah, we should add 1,53,600. Okay. Now see, they said over here this entry was missed while preparing. So we don't know actually whether they missed the discount entry or the deposit entry only. So now what happens? They are actually telling deposit entry only is missed. If deposit entry is missed, that means passbook balance has increased. Cash book balance has not increased. So you will add. But when you are adding, you will add 1,53,600. Clear? If they change the same question into that same thing, erroneously entered the gross amount and all, then it would be 6,400 minus. Bank charges for issue of check 150 was skipped while preparing cash book. We should minus. They have done it. We will also do it. Hari received a UPI of 1000 for sale of scrap which was not entered in the cash book. Passbook balance increased. You will also add it. Checks amounting to 1,80,000 were issued during the month, but checks of 1,44,000 were only presented during the month for payment. Difference is 36,000. Checks amounting were issued minus, so you will add it back. That's it. Clear? Then what happens? Jan 2025. Recent exam. Depreciation. Depreciation was not asked, no? Was it asked? No. Only BRS. The following information prepare a bank reconciliation statement. Okay, and what was it asked for? 10 marks. Bank column of cash book was overdrawn to the extent of 24,768. So we are starting with OD balance as per cash book. Okay, right hand is OD balance as per cash book. Bank charges amounting to 350 had not been entered in the cash book. Passbook balance increased. You will also increase. Add. Checks amounting to 88,678 issued before 30th June but not yet presented to bank. We have already added, so we will minus because it is OD. Because it is OD, we have added it. One payment of 4590 was recorded in the cash book as if there was no bank column. That means what? Payment we have not recorded only in the bank column. So what happened to passbook? Passbook they have recorded. Increased. So you also have to increase. Add. Not less. One payment was not recorded in the cash book. Now you are getting confused. As if there is no bank column. If there is no bank column, that means you have put it into cash column. So you have not entered in the bank column. Passbook they have entered. So balance has increased. So you will also increase it. Company paid 15,500 to a creditor and received a cash discount of 2%. Cashier erroneously entered the gross amount in the bank column of the cash book. Always it was check received. In the exam they twisted it and made it check paid. Amount paid. It was always amount received. So 15,500 into 2%. 1550, 3,000. Sorry, 310. Okay, 310. Now what has happened? You paid extra or you paid less? We put payment extra or less? Payment. See, cashier paid 15,500 to creditor. Received discount. But we have put the entire amount in the bank column. So what happens to cash book? Cash book balance will increase. So you will decrease 310. Is this clear? Same questions were there in the material. But there what it was? Receipt. A debit of 5,700 appeared in the bank statement for an unpaid check which had been returned marked out of date. The check had been redated by the customer and paid into bank again on 8th July. Okay, they paid, but it is later. 5,700 appeared in the bank statement, unpaid check. Okay, debit, that means passbook what they did? Balance, increase or decrease? Increase. OD, if it was normal means it would have decreased. OD it increased. Cash book we have not done. What will we do? We will also increase it plus. Are you following this? Which one? Sixth one. Now see, debit of 5,700 appeared in the bank statement for unpaid check, which had been returned marked out of date. That means we gave one check. Okay, date got over. Okay, now the check bounced or reversed. Debit in the bank means what? They are taking money. When they are taking money, this is OD. If they take money, the bank balance increases. If it increases, left hand increases, right hand also should increase, no? Because left hand is passbook, right hand is cash book. Clear? Checks deposited in bank. Did you understand? Checks deposited in bank but not yet cleared amounted to. Check deposited. That means cash book balance decreased. You will add it. OD it is. Right hand is cash book. See over here. OD balance as per cash book. Right hand is cash book. Cash book balance decreased. So what will you do? You will add it back. Dividend 1980 collected by the bank not recorded in the cash book. Minus. Will decrease 1980. Next, amount of 2340 wrongly credited by the bank to company account for which no details are available. They gave money. Passbook balance decreased. So your cash book balance also should decrease. On 25th June, the credit side of the bank column of the cash book was overcast. Credit side means what? Payment side or receipt side? Payment side. Credit side means payment side. They put more payment. They put more payment. So cash book balance decreases, sorry, increases because it is OD. So you will minus it. Are you getting it? If they would have told undercast, it would have been something else, but they said overcast. Clear? With that, we are done with BRS. Whew. We are done with BRS. Let's go into depreciation. Okay, let's go into depreciation. What we'll do is we'll try to discuss the concepts of depreciation before break, and then we will solve the questions of depreciation after break. Okay. Now, depreciation and amortization. What is depreciation? Yes, Chirag, what is depreciation? Depreciation is decrease in the value of asset, which asset, fixed asset, which fixed asset, tangible, if it is tangible. Decrease in the value of intangible is called as amortization. Now, imagine you have one BMW car, 1 crore. How can it depreciate? Passage of time. You parked it nicely in this compound and cleaning it every day, not even touching that car once also to drive it, only cleaning and keeping, but still passage of time. Automatically the value goes down. Wear and tear. You don't care only. You are using the car every day, wherever you want. You want to buy one packet of milk also, you're taking your BMW car and going and getting the milk. So wear and tear, automatically the value will depreciate. Technological changes. You bought BMW car, next day only Modi came at 8 o'clock and told from tomorrow only EV. Now in that BMW car you can only make charmuri, that's it. You can't do anything. BMW car, the value will go down. Or they introduce some rule, odd even rule. Like in Delhi there was a rule, odd even rule. So they introduced one rule. On even days, it is going to be only EV. Odd days, you can use petrol cars. So now the usage is cut down by half. No, obviously the value of the car will go down. These are the reasons for, they are called as causes for depreciation, causes of depreciation. Why should depreciation be recorded? That is a very important question. Accurate financial position. You are showing the car in your books at some random value. Now suddenly if you want money, if you look at the book and go and sell it, you will not get that value. So you are not showing the real financial position. To show correct profit. Why correct profit? To get your profit, you are using your assets. Your assets are also used for earning your profit. So asset value also has to be put into this year. Little. Imagine you are using your asset for 5 years. You are using machinery for 5 years. That means 5 years you are manufacturing with this machine. So the cost of the machine also should be apportioned for these 5 years. This is actually matching concept. This is actually called as matching concept. Matching concept tells us if income is there, whatever expenses are incurred to earn that income, that expense also should be shown. Clear? Okay. To save money to buy new asset in future. This is actually the most important thing. What is this to save money to buy? See, depreciation is a non-cash expense. Clear? When you pass a non-cash expense entry, what happens? Imagine over here. This is my P&L. 20 rupees profit was there. Sorry, 20 rupees profit was there. I put 10 rupees depreciation. Now how much will be net profit? 10 rupees. But depreciation is a non-cash. Money does not go anywhere. Now with this 10 rupees, what owner will do? Owner will take 10 rupees. But this 10 rupees which I pass as depreciation will just get saved in the bank account. Because it gets saved year after year. When 5 years or 10 years, whatever useful life gets over, that time we are in a position to buy the new asset. Are you getting this? Okay. Did you get this? This is actually the most important feature. Other than that, everything is financials. Based on financials. But main thing is what? If I don't save money to buy new asset, when this asset gets old, then I have to again arrange for the entire amount. So when you pass depreciation entry, every year that much money gets saved in the bank account. Clear? Government regulations. Legal requirement. Government has told. For companies and all, they have told. Depreciation has to be calculated. Income Tax Act. They have told depreciation has to be computed. To show correct cost of manufacture. When you are manufacturing using a machine. So your major cost is machine only, no? But if you don't put depreciation, the cost of manufacturing will be so less. Are you getting my point? I have one machine which I have spent 1 crore. I am using one worker whom I am giving 10,000 salary. Can you see my major expense is this 1 crore machine only? So if I don't apportion that cost of the machine, then my cost of manufacture will be completely wrong. Because I'll be thinking that only with this 10,000 I'm manufacturing, but I'm actually manufacturing with this 1 crore machine and the 10,000. Are you getting this? Okay, these are some of the reasons why depreciation is supposed to be recorded or to be recorded. Doubt? No. No, you're looking like this, so I thought you had doubt. Method to compute depreciation. First we have to learn. Only two things are there in depreciation. What are they? No, not that. One is computation, one is accounting. Methods many are there, not straight line and WDV. Methods many are there. Only two things in depreciation. One, we need to know how much depreciation. Now we know how much. Record it. So we need to know the accounting methodology. Clear? Straight line method, which is called as SLM. It's also called as fixed installment method. Original cost method. Clear? Now, what is the formula? Cost minus scrap value or residual value divided by useful life. Very important feature of SLM. Every year same. Every year same it is. Okay, amount spent to acquire the asset is the cost. Scrap value is amount receivable at the end of the useful life. This has to be given in the question. This also has to be given in the question. This also has to be given in the question. Otherwise, how will we know? Cost has to be given in the question. Scrap value has to be given in the question. Useful life has to be given in the question. Otherwise, we can't. Did I go and buy the asset? No, right? So they have to tell me. Okay. Useful life is number of years expected. Note. SLM depreciation is same every year. What if, sir, if they don't give all this, sir, they tell 20%, sir, depreciation percentage, then this is which method, sir? They said only 20%. Only 20%. This is WDV. They only tell rate is 20%. This is WDV. If they tell 20% and then tell SLM, then it is SLM. Okay. What is the difference between SLM and WDV? This 20% would be multiplied into cost. If it is WDV, 20% would be multiplied into written down value. If it is WDV, 20% would be multiplied into written down value. Okay, I have a very important question now. If we are following WDV method, do we have written down value? Yes. Okay, fine. Okay. If we are following straight line method, do we have written down value?
Yes, sir.
Every method written down value is there. Written down value is nothing but balance carried down. Written down value is nothing but balance carried down. In straight line method, balance carried down, we will not use only for depreciation calculation. In WDV method, balance carried down only we will use to calculate depreciation. Is this clear? Yes. Now, examples and all, I don't think you require. We will solve bigger questions only later. We will go into WDV method. Written down value method. Written down value method, first year depreciation will always be cost into depreciation rate. But from second year onwards, it will be WDV into depreciation rate. Clear? Now, WDV of any year will be cost minus depreciation till previous year. If they ask me, what is the WDV on 1/4/2024? Then what I should do? I should take the cost and take the depreciation till 31st of March 2023. Till 31st of March 2023. That time I'll get the WDV on 1/4/2024. Is it clear? Is it required? Yes. Because some questions they will tell you, asset is purchased in 2020. Prepare machinery account only for 2024. Now if you are going to start from 2020, then you can solve only depreciation question. You lose so much time. You have to do only 2024. So immediately you have to find the opening balance and then start. Is this clear? So if you want the WDV of any year, cost till the previous year, whatever depreciation is there, you have to remove. Any doubts? Yes. Now, okay, this example I'm not discussing. Sum of digits method. Very, very long time ICAI has not asked any question from this method. That means we should skip it, sir. No, that means we should study it first. Why? What ICAI has not asked from many years, that means it is always possible that there can be a question from that. What ICAI is, okay sir, okay, then ICAI regularly what they are asking, that I'll skip. No, that also you should study. Basically the rule is you have to study everything. Is this clear? You can't skip anything. Okay, now see, you will have that fear, no? So many times they didn't ask, this time they might ask, this time they might ask. You will not have the courage to skip this. Correct? What they're asking every time, you're like every time they're asking. You will not have courage to skip that also. Yes. Sum of digits method. Sum of digits method. What is the depreciation? Number of years remaining divided by sum of digits of useful life into cost minus scrap value. If I have 5 years, useful life 5 years, first year, how many years are remaining? Correct, 5. How many years are remaining? 5, including current year. If I don't include current year, then in the last year, number of years remaining will be 0. That means last year no depreciation, is it? It should be there, no? So every time number of years remaining will be including current year. Clear? Now, sum of digits of useful life. Basically, if you have 10 years as useful life, 10 plus 9 plus 8 plus 7 plus 6 plus so on till 1. But you can use this formula n into n plus 1 divided by 2. N into n plus 1 divided by 2. Is this clear? So if it is 10, you'll do 10 into 11 divided by. If it is 5 years, you'll do 5 into 6 divided by 2. It just saves your time. Clear? Now, this one I want to show you the example because people tend to make mistake. Cost is 1 lakh. Useful life is 5 years. Scrap value is 10,000. Okay. Now see the formula into cost minus scrap value. Okay. Now, first year, we are in the first year. That means how many years we have remaining? Not 4, 5. Correct? 5 divided by 15. How did I get 15? 5 into 6 divided by 2 is equal to 15. Okay. You get 30,000 here. Depreciation year 2. Year 2 you have year 2, 3, 4, 5. Don't remove year 2. So 4 by 15. That's why when you go to year 5, 1 divided by 15. Is this clear? Into cost minus scrap value. If you observe this, what is changing? Every year what is changing? Only the numerator is changing. Only the numerator is changing. Everything. Denominator remains same. Multiplier also remains same. Is this clear? Okay. Next. Machine hours method, production units method, depletion method. These are triplets. Okay, triplets. Same it is. Machine hours method, what you'll do? Number of years, number of hours used divided by total hours into cost minus scrap value. Production units, number of units produced divided by total units into cost minus scrap value. Depletion method, number of kgs or liters or whatever quantity extracted divided by total quantity into cost minus scrap value. If they ask you, you are lucky. This methods. If they ask you. Actually, there's nothing in this. Okay. Accounting. Sir, computation was never a problem. Accounting also never a problem, sir. But suddenly when that provision for depreciation comes, no, we don't know what is happening in life. Okay. Now, understand this clearly. We'll maybe discuss once again post lunch the accounting part and start. Accounting. Okay. We have 2 methods. Only 2 methods. What are the 2 methods? SLM and WDV? No. First method, depreciation is reduced from the asset value. Second method, depreciation is transferred to provision for depreciation. That means asset will remain same. One alternate liability will be created. Basically, net effect is same. I have asset account 100. I charge depreciation account, it becomes 90. In method 2, asset account will be 100. And provision for depreciation will have 10. Net effect on the balance sheet is still 90. Is this clear? Okay. See, in method 1, it becomes 100, 90, 80. It keeps on reducing. In method 2, it will remain 100, 100, 100. But provision from liability side, when it comes to asset side, what happens? It becomes negative. So it becomes 90 and 80. Is this clear? Yes. Now, accounting methodology number 1. What is method number 1? Creating provision or not creating provision? Not creating provision. That means you are going to reduce from the cost of the asset, value of the asset. Asset purchased. Whichever method you use, asset purchase will be what? Asset account debited to bank account. Whichever method, this will not change at all. Clear? Now, depreciation entry. Depreciation account debited. What did we tell? We should reduce the asset, we told, no? So, depreciation account debited to asset account. We have to reduce the asset. Okay. When the sale of asset happens, we get money. We get money, but we don't sell at the starting of the year or end of the year. We can sell anytime. So, whenever there is a sale, compute depreciation till the date of sale. Pass the entry. Depreciation account debited to asset account. Compute depreciation till the date of sale. Then what you're going to do? Pass the sale entry. What is the sale entry? You got money. Bank account debited to asset account. Clear? Now compare. Do the comparison between two things. Sale value and WDV on the date of sale. WDV on the date of sale. If I'm selling today, sale value is today's, right? I cannot take WDV at the starting of the year. I should take WDV of today only. If I sell it at higher value, that means it is profit. Profit should be debited to P&L or credited to P&L. Credited to P&L. So asset account debited to P&L account. Clear? What if sale value is lesser? That means it is loss. Loss should be debited to P&L or credited to P&L. Debited to P&L. So credited to asset account. Is this clear? Yes. Method 2. Provision for depreciation created. Method 2. Provision for depreciation created. What should be the entry when you purchase the asset? Doesn't matter. Same entry. Asset account debited to bank account. Depreciation, what is the entry? Depreciation account debited to provision for depreciation. And P&L account debited to depreciation. Depreciation will always get transferred to P&L, whichever method it is. It is an expense. Okay. When you sell the asset, always depreciation up to the date of sale you have to calculate. But the entry is depreciation account debited to provision for depreciation. Disposal of asset. You have to open one new account called as disposal account. So what you have to do, I'll tell you in simple. Asset is sold. Take the cost, put it to disposal. Take the cost, put it to disposal. Take the cost only, you put it there. So whatever provision for depreciation is there on that asset, take it and put it to disposal. Then got money, put it to disposal. Got profit or loss, remove from disposal and put it to P&L. Did you understand this? Whenever there is a provision for depreciation, that means you are following method 2. And if you sell the asset, you have to open one account called as disposal account. When you open disposal account, remember this simple logic. Take the cost of the asset, whichever asset is sold, take the cost, put it to disposal. If I have to take the cost and put it to disposal, asset is what? Debit balance or credit balance? Debit balance. To remove debit balance, what should I do? Credit it. So I'll write disposal account debited to asset account. Clear? Then asset removed. So now remove the provision for depreciation also and put it to disposal account. Provision for depreciation is asset or liability? Liability. Debit balance or credit balance? Credit balance. So what should you do? Debit it. Provision for depreciation account debited to disposal account. Clear? You got money. Bank account debited to disposal account. You got profit. Remove from here. Put it to P&L. Disposal account debited to P&L. You got loss. P&L account debited to disposal account. Is this clear? Now see this. Transfer of cost of asset to disposal account. Disposal account debited to asset account. Cost of the asset which is sold. Transfer provision of depreciation to disposal account. Provision for depreciation to disposal account. Amount received. Bank account debited to disposal account. Profit or loss on sale. Logic is same. Sale value is greater than WDV. Logic is same. Sale value is greater than WDV. Disposal account debited to P&L. Everything is in disposal. From here remove and put it to P&L. Loss. Sale value is less than WDV. What will you do? P&L account debited to disposal. Is this clear? Now there is one small chart here which will be very important. When asset is unsold, when there is an asset which is unsold, so usually what happens is the major problem I have seen in depreciation chapter is when asset is purchased, they'll pass the entry. When asset is sold also, they'll calculate depreciation till the date of sale and pass the sale entry, calculate profit or loss and pass that entry also. You know what is the biggest challenge? Sir, after selling everything, no, what is remaining on that I am not able to calculate depreciation. The biggest challenge is after selling everything, end of the year some old assets will be remaining. No, you have to calculate depreciation on that. So now understand this. If asset is unsold, that means depreciation is from starting of the year till ending of the year. Okay. If asset is sold, then from starting of the year till date of sale. If asset is purchased, then from the date of purchase till the end of the year. Is it clear? So whatever is unsold, full year depreciation, whatever is sold till the date of sale depreciation, whatever is purchased from the date of purchase, the depreciation starts. Is this clear? Now, asset unsold. Okay, how to find out? Total WDV you take at the beginning of the year. Beginning of the year you have total WDV. But in this, there is also WDV of some assets which are sold. So remove the WDV of assets sold at the beginning of the year. Now what students will make mistake is WDV at the beginning of the year they'll take. From that they'll remove the WDV of the assets sold on the date of sale. That doesn't make sense. You're removing WDV from starting of the year. You have to remove starting of the year only. Date of sale you have WDV just to calculate profit or loss. Is this clear? So total WDV whatever is there, from that please remove the WDV of the assets sold on the first day of the year, at the beginning of the year. Is it clear? So WDV everything minus WDV assets sold. WDV everything minus WDV assets sold. And this calculation is at the start of the year. Is this clear? That time you will get the WDV of the asset which is not sold. If it is not sold, good, no. Calculate depreciation on that for the full year. Now, small concepts, we'll finish it off 1-2 minutes. Okay, depreciation method change. What will you do? Will you calculate from once upon a time? No, you will calculate from the date of change. So, WDV method, if you are following for 3 years, follow 3 years. Today, you change the method from here, apply SLM. Is it clear? Now, retrospective effect is not applicable, only prospective effect. Retrospective effect means giving effect from before. Prospective effect means giving effect from today. Okay. If method is changed, follow new method from the date of change. Revaluation is the last thing which we have to discuss. Revaluation. Now simple. Again I'll tell you. First time you are revaluing upwards. Put the if you revalue the asset upwards, profit or loss? Profit. Put it to no revaluation reserve. Put it to revaluation reserve. See over here. Asset is 100, revalued to 120. Asset account debited to revaluation reserve. That same asset in future, if it is revalued from 120 to 70, do we have 50 rupees loss now? Yes. Loss, don't debit to P&L. Remove from revaluation reserve, then extra loss you debit it to P&L. Is this clear? Yes. Now here, revaluation, asset is 100, revalued to 70. First time no. Now you cannot tell revaluation reserve. Why? Because we don't have only revaluation reserve. First time, so you're going to write P&L account debited to asset account. P&L account debited to asset account. Then the same asset in future, if it is revalued from 70 to 110, do you have profit? 10. Now can I put full 40 to revaluation reserve? 30 you put it to P&L back and then put 10 extra to revaluation reserve. So what I'm trying to tell you is, if at all first time you are revaluing upwards, profit goes to revaluation reserve. If you are revaluing asset downwards first time, the loss gets debited to P&L. But asset which was revalued upwards, if it is getting revalued downwards, then when there is a loss, take the loss from revaluation reserve, extra loss you take it from P&L. Asset which was revalued downwards, if later it is revalued upwards, then when you get the profit, put the profit back to P&L what you had incurred loss in the previous periods, and extra profit that you get, put it to revaluation reserve. Is it clear? Yeah. That is it, guys. This is the depreciation. Okay, depreciation, there are a lot of questions. There are some really tricky questions in the practical questions which are there at the end of the chapter. We'll discuss that. And again, same process will follow, seeing all the RTP and examination questions. Yes, you can take a break for 1 hour. Come back at 2:05. Yes. So we'll start with depreciation now. We'll begin with depreciation. Then we'll think what to do next. Okay. Depreciation, we have discussed the concepts previously. Let's go into the questions of depreciation. There are a few. First, question number 5. Change in the method of depreciation. Study material question number 10. Yes, I can. Do you want me to? Yes, question number 10. Let's go into question number 10 from study material. Okay. Now, look at this question. Anshul and company commenced business on 1st January 2017 when they purchased plant and equipment for 7 lakhs. What did they purchase it for? 7 lakhs. Okay. They adopted a policy of charging depreciation at 15% per annum on diminishing balance method, that means WDV, and over the years their purchase of plant have been. Now, 1/1/2018 they have purchased 1 more plant, and 1/1/2021 they have purchased 1 more plant. 2 plants are purchased. On 1/1/2021, it was decided to change the method and rate of depreciation to straight line basis. So till this date, you have to follow WDV. After this date, you are going to follow SLM. On this date, remaining useful life was assessed as 6 years for all the assets purchased before 1/1/2021 and with no scrap value, and 10 years for assets purchased on 1/1/2021. That means this old asset will have 6 years useful life, and this will have 6 years useful life. This will have 10 years useful life. Clear? Now calculate the difference in depreciation to be adjusted in plant and equipment account for the year ended 31st December 2021. So what are we going to do over here? See over here, the asset which is purchased on 1/1/2017, 1/1/2018. Okay, if you have to apply the new method, we need to know the WDV, no? So you can see here 1/1/2017, whatever was there, 7. First, we have removed the depreciation for 2017. Okay, then we have removed the depreciation for 2018. Then we have removed the depreciation for 2019. Then we have removed the depreciation for 2020. That time we have arrived at the WDV. Clear? Okay, how to remove? You know, every year you'll keep on removing 15%, 15%, 15%. What is the rate? 15%, right? Yes. Next, see this one. This was purchased in 1/1/2018. So 2018 depreciation is removed, 2019 depreciation is removed, and 2020 depreciation is removed. Now you reached 1/1/2021. 1/1/2021, this is the WDV. Are these two old machines? Yes, for old machines, they said the useful life anymore is going to be 6 years. If you take 365,404 divided by 6, you will get 60,900. Are you getting 60,900? 365,404 divided by 6 years. Here, 92,119 divided by 6 years. That time you are getting 15,353. Can you see how they have switched over to the new method? Now, the new machine which is purchased. What is the new machine which is purchased? New machine which is purchased is 2 lakh. For this, there was no WDV method at all. Straight away, the day it was purchased itself, we are following SLM. For this, directly it is 10 years. So 2 lakh divided by 10 is equal to 20,000 depreciation. 20,000 is a depreciation. You can see over here in the plant and equipment account. Okay, 20,000 depreciation. 96,253 is the total depreciation. Now, how did they get the opening balance? We already know the opening balance. See over here, this plus this. That is the total total value of the asset on 1/1/2021. Then they have purchased one more asset. If you purchase asset, what is the entry? Asset account debited to bank account. So you can see the 2 lakh over here. Depreciation entry, depreciation account debited to asset account. So you can see over here by depreciation, finally the balance is carried down. Clear? So whenever we change the method of depreciation, till that day follow the old method. After that, from that day you can follow the new method of depreciation. So till that day, if you have followed the old method, you need to know the WDV. Once you know the WDV, then from there you can apply the new method of depreciation. Clear? That is a simple question which we have to know about change in the method of depreciation. Next, after that, you have 6. Depreciation with provision for depreciation. SM practical question number 1. Very, very beautiful question. Many of you would have already fallen in love with that question. Okay, practical question number 1. Yeah. This is the question. Okay. Question is simple only. Question is nice only. Okay. Don't worry about it. Now, there are so many things in this question which you have to understand. Okay. First, the firm's plant and machinery account as at 31st December 2021 and the corresponding depreciation provision account broken down by year of purchase are as follows. Are they following method 1 of accounting or method 2 of accounting? They are following method 2 of accounting. Why? Because they have depreciation provision. How will they have depreciation provision in method 1? Clear? They are following method 2 of accounting. Now, asset is purchased in 2005. Can you see this asset 2005? It is purchased for what value? 2 lakh. What is the depreciation provision? 2 lakhs. That means asset is there or not there? Asset is there or not there? Physically, the asset is there. We are still using the asset. But in books, the WDV has become 0. So this asset which is there now in 2005, if I sell it for 1 rupee also, 1 rupee is the profit. 1 rupee is the profit. Why? Always when we are calculating profit or loss on sale, what do? Sale value is compared with WDV on the date of sale. Clear? WDV on the date of sale has already become 0. Clear? Fully depreciated. So if I sell it at whatever price, that is profit for me. Now 2011 asset, can you see 3 lakh? This also has become 3 lakh. So this also is nil. That means if I sell it at any value, I will get complete profit. Okay. 2012, 10 lakh. There is still some value for that asset. That means this asset is not fully depreciated. And after that, obviously 13, 20 and 21, those assets are also not fully depreciated. Only these two assets are fully depreciated. Is this clear? Okay. Depreciation is at the rate of 10% per annum on original cost. 10% SLM. 10% per annum on cost. That means, can I tell that 10 years is the life? 10 years is the life. This is very crucial information for solving this question. 10 years is the life because on cost, imagine my cost is 100 rupees. If I remove every year 10%, 10%, 10%, 10%, 10%, in 10 years the asset will become 0. That means useful life of the asset is 10 years. Is this clear? Okay. It is the company's policy to assume that all purchases, sales or disposal of plant occurred on 30th June in the relevant year for the purpose of calculating depreciation irrespective of the precise date on which these events occurred. What does it mean? They are like, boss, usually when you purchase, you will take depreciation from that day. When you sell, you will calculate depreciation till that day. But they said, you purchase whenever you want, you sell whenever you want. But we will always take depreciation as if it has occurred on 30th June. That means if I purchase on 1st January also, you will consider as 30th June. If I sell on 31st December also, you will consider as 30th June. Do you get this point? This point plays a huge role. If you don't understand this policy, then we will not be able to understand the problem itself. It plays a huge role. Is this clear? So what they are telling? Whenever you sell, okay, whenever you sell, the date will be taken as 30th June. That means you have to calculate depreciation for half year. Whenever you purchase, it will be taken as 30th June. That means you have to calculate depreciation again for half year. Whenever you sell, you have to calculate depreciation till 30th June. Whenever you purchase, you have to calculate depreciation from 30th June. Clear? Okay. During the year 2022, the following transactions took place. Purchase of plant and machinery amounted to 15 lakhs. They purchased one new one. Correct? For this, will there be full year depreciation or half year depreciation? Half year depreciation because it is going to be assumed that it is purchased on 30th June. TV? It's flickering, is it? Okay. Next time it happens, we'll call them. Happened again. Next time when it happens again, we'll call. Not happening. Is it? But not for a long time, right? 1 second. Okay. This question will finish, then we will call them. Yes. Plant that had been bought in 2011 for 1,70,000 was scrapped. Scrapped means what? Sold for zero value. Scrapped means sold for zero value. You just took this asset and put it in one side. That's all. Okay. So there is no profit. 100% there is no profit. But there can be loss. What is the loss? Imagine my books. There is some value for that asset. Now if it is scrapped, what will happen? It will become complete loss. Okay. If there is some value, it will be complete loss. But this is the asset which is purchased in 2011. Can you see the asset which is purchased in 2011 is already fully depreciated? We don't have to worry only about that asset. It is already fully depreciated. Second, give me a second. Okay. Now, 2011 asset is fully depreciated. Therefore, no profit or loss on asset that is scrapped. Is this clear? Only 4 transactions happen in this question, but still it is one of the toughest questions in depreciation chapter. Okay. Only 4 transactions happen. 1 purchase and 2 other transactions. Now, see the next one. What happened after that? 2 transactions done already. Purchase, there is nothing. You are going to write asset account debited to bank and calculate depreciation for half year. Now, third one, plant that had been bought in 2012 for 90,000 was sold for 5,000. When was it purchased? 2012. Now you have to understand, 2012 if it was purchased, it is sold for how much? 90,000 is the value. It is sold for how much? 5,000. Whatever is purchased in 2012, can you see 10 lakh, provision for depreciation is 9 lakh 50. That means 9.5 years are over. 9.5 years are over. How did we get this 9.5 years? 2012 we purchased. 2012 we are going to calculate depreciation only for half year. 2013, 14, 15, 16, 17, 18, 19 and 20. Correct? And 21 also. Okay, 9 years. So 9 plus half, 9.5 years are over. That's why you are seeing depreciation of 9 lakh 50,000. Okay, asset is sold for 90,000. So now what is going to happen? 2012 asset which is which is sold. 90,000 into, what is the percentage? 10% into 6 divided by 12. The depreciation is 4,500. 4,500 is the depreciation, 6 months. Clear? So now, what is the WDV? What is the WDV? How do we get the WDV? WDV will be what? 0. How is it how the WDV is 0? 9.5 years depreciation was already charged. Now half year depreciation we charged. So WDV is going to become 0. Okay, therefore, what is the sale value? Sale value is 5,000. That means profit on sale 5,000. Just because we see two numbers, we don't have to minus that. Just because you saw 4,500 here and 5,000 here, we don't have to calculate 500 over there. Are you getting my point? Okay. This is depreciation till the date of sale. That's it. Depreciation we have to pass entry in 2022. And this is WDV is 0. Anybody has confusion how we got 0 here? 9.5 years are already over for this asset. Now we have calculated depreciation for the other half year also. So WDV on the date of sale is actually 0. Is this clear? So now you are getting profit on sale of 5,000. Okay. 3 transactions are there. 4 transactions are there. 3 are done. Now the fourth one. Plant that had been bought in 2013 for 2,40,000 was sold for 15,000. It is purchased in 2013. Now understand this. 2013 asset which is purchased. 2013 is going to be half year only. 14, 15, 16, 17, 18, 19, 20, 21. 8 years. 8 plus half. 8.5 years are over for this asset. 8.5 years are over. Now we sold something that had cost of 2,40,000. So now 2013 wala asset 2,40,000 into 10% into 6 divided by 12. 12,000 is the depreciation for 2022. Correct? Is that right? Okay. WDV on date of sale. WDV on date of sale. Did this asset also become 0? No. 8.5 years was over. Half year depreciation we have charged. That means 9 years are over. That means 1 year is still remaining. Correct? So WDV will be basically 2,40,000 minus 2,40,000 into 10% into 9 years. 9 years depreciation is over, no? So basically this will be 24,000 WDV on the date of sale. Clear? What is the sale value? 15,000. Sale value is 15,000. That means 9,000 is loss on sale. Loss on sale of goods. Clear? Is this clear? These are the two critical informations that are there. First one, purchase, nothing. You will pass the entry and you will give half year depreciation. Why half year depreciation? Because you are going to consider that it is purchased on 30th June. Second one, what we are going to do? Second one, it is scrapped. That means sold for 0 value. If it is sold for 0 value, we have to compare it with the WDV on the date of sale. But there is no WDV on the date of sale. Why? Because that asset is fully depreciated. Third one, it is sold, but already that asset was 9.5 years depreciation completed. So now half year depreciation we are going to charge. then what is going to happen? WDV is 0. Full 10 years is depreciated. So sale value is 5,000, profit on sale will be 5,000. The fourth transaction, 8.5 years are over. So half year depreciation we are going to charge in this year. And WDV on the date of sale will be 9 years completed. So 1 year's value will be there. That is 24,000. Sale value will be 15,000. We sold at a lesser value. So 9,000 is going to be the loss on sale. Is this clear? Now, having a look at things. Okay, why it is confusing for you is because they have not treated it properly. They have merged things and shown. See, forget about that one. See, 30 lakhs is the balance brought down. Okay, which was given in the question itself. Okay, can you see 2 bank 15 lakhs? That new asset was purchased for 15 lakhs. 2 bank. Then after that, what we are supposed to do? When asset is sold, we are supposed to remove the cost. When asset is sold, we are supposed to remove the cost. Did we scrap one asset of 1,70,000? Did we sell one asset of 2,40,000 and did we sell one asset of 90,000? So that is 3,30,000. We have removed that and put it into disposal account. I told you, second method, remove the cost and put it to disposal account. Okay, then whatever is there, you will get the balance carried on. See, provision for depreciation account. Did we have opening balance of 2135? It's given in the question itself, opening balance. Now, what was the provision on the asset which was scrapped? It was fully depreciated. So cost was 1,70,000. Provision for depreciation is also 1,70,000. Second asset, it was not fully depreciated, but we depreciated it for 6 months. Can you see this asset? It was not fully depreciated. Okay, we charged the depreciation for 6 months and we made it fully depreciated. So that also provision for depreciation is 90,000. Provision for depreciation is 90,000. Third asset is not fully depreciated. It is depreciated for how many years? 9 years. 8.5 it was. We made it 9 years by calculating depreciation for 6 months. So now 2,40,000 into 10% into 9 years is basically 2,16,000. 2,16,000 depreciation we have calculated. So can you see whenever asset is scrapped or sold, they took the depreciation provision also and transferred it to disposal account. They transferred it to disposal account. Is this clear? This is the 4,76,000 which you are seeing over here. And this is the 170 and 330 which is coming from there. Clear? Cash proceeds. What is cash proceeds? 20,000 here. First asset you sold for 5,000. Second asset you sold for 15,000. So that total is 20,000 over here. First asset you had a profit of 5,000. Second asset you had a loss of 9,000. Net they are showing the loss of 4,000. Is this clear? They have not shown transaction by transaction. So when you look at the solution, this becomes little irritating. Clear? Otherwise, it's simple only. Now, only thing that is there is to calculate depreciation for remaining things. Okay, remaining assets. Or no, asset is purchased, asset is sold, sale entries and all we have seen in the disposal account. Only thing is this, the balance depreciation. Okay, out of this, okay, do we have already calculated? Can you see? I have already shown you that here I am charging 4,500. Here I am charging 12,000. Now what I have to charge depreciation for? Remaining asset, all the other assets. Depreciation on old assets. Depreciation on old assets. Now understand this one. Okay. Where is the question? Yes, understand this one. Is this asset fully depreciated? This one? We don't have to bother. Is this asset also fully depreciated? Yes, we don't have to bother. Is this asset fully depreciated 10 lakh one? No. We did it only for 90,000 value. What is sold only we did. What is not sold we did not do. Out of this 10 lakh one, 90,000 is sold. The costing asset which is costing 90,000 is sold. What about the remaining? Remaining still there, no? 9,10,000. So what will happen over here? 2012 wala asset. 2012. 9,10,000 into 10% into 6 divided by 12. Sir, only if it is purchased or sold, we have to calculate 6 by 12, sir. Why are we taking 6 by 12 here also? Because already 9.5 years depreciation is done. What is remaining is only half year. When only half year value is remaining, you can depreciate only half year. What is the value you are getting here? 45,500. Clear? Now, what about the asset which is purchased in 2013? It is depreciated already for 8.5 years. But out of this 7 lakhs, did we sell something?
Yes.
Yes, 2013 asset. 7 lakhs minus 2 lakh 40 into 10% into what? This is already depreciated for 8.5 years. Am I going to do 1.5 now? No, we will do only for 1 year. Are you getting my point? Depreciation is for the year, no. But when we are doing depreciation for the year, if only half year is remaining, we can calculate depreciation only for that half year. Clear? Now, when the depreciation is remaining for 1.5 year, we'll calculate depreciation only for 1 year. Imagine 10 years useful life is remaining. Will you calculate depreciation for full 10 years? You'll calculate for that year only, no. But when only half year is remaining, we cannot calculate depreciation for the full year. That's why we are calculating only for the half year. Clear? Here, 1.5 years is remaining. So we'll calculate depreciation for what? For the year. For the year, depreciation will be how much? 56,000. 46,000. Okay. Now, what about 2020 asset? Do we have to worry about any time remaining or something for 2020 asset? No, lot of time is there. So 5 lakh into 10%, this is basically 50,000. Then 2021 asset, 33 lakh into 10%, 30,000. But we also have one new asset. New asset is how much? 15 lakhs. 15 lakhs into 10% into 6 divided by 12. 75,000. Now, what is the total depreciation? Wait. Here we have depreciation on old asset which is sold 4,500. Asset which is sold 12,000. Then we have 45,500, 46,000, 50,000, 30,000 and 75,000 total. How much are you getting? 2 lakh?
2,63,000.
2,63,000. That's it. See the depreciation which we saw that time. 2,63,000. Only thing is they have not done the working note to show the breakup of asset by asset. That's why when you see this 263, we'll feel that way from where it is coming. Clear? Otherwise, it is 2,63,000. Is that clear? Okay. Now understand this. Again, depreciation on asset which is scrapped, not there, because it was already fully depreciated. Depreciation of asset which is sold, there for 6 months. Depreciation of asset which is sold, there for 6 months. Then depreciation of 2012 asset. Depreciation of 2012 asset, there only for 6 months. Why? Already 9.5 years are over. Depreciation for 2013 asset, full year. Why? Because only 8.5 years were over. Depreciation for 2020 asset, only few years are over, full year. Depreciation of 2021 asset, only full year is there because only few years are over. Depreciation for the new asset, 6 months. Why? Whenever we purchase or sale, we take it only for 6 months depreciation. So this is the 2,63,000, which is the total depreciation. Clear? This is one of the deadly questions which is very, very important. I don't know if they will ask such a big question in the exam, but any part of it can be asked in the exam. So what do you have to remember? When asset is sold, you have to calculate depreciation. But if the asset is already fully depreciated, you don't have to calculate. Now, asset is sold. Number of years remaining is 5 years. You will calculate depreciation for how many years? Yeah. You will calculate depreciation for how many years? Number of years remaining is 5. Hello, they'll take their bag. You look here. Okay, number of years remaining is 5. Okay, so you will calculate depreciation for only 1 year. Number of years remaining is only 3 months are remaining. You will calculate for 1 year now. No, you will calculate only for 3 months. Are you getting my point? How much time period is remaining, that much we can calculate depreciation. But if the time period remaining is more than a year, you are calculating depreciation only for the year. But if time period remaining is less than the year, you cannot calculate for the year because the time period remaining is only little. So you will calculate for that time period. Is this clear? That is why you are taking 6 by 12 over here for 2012 asset, even though we have used the asset for full year. Are you getting this? This 2012 asset, which is 9,10,000 over here. If I ask you a question, did I use it for full year or half year? I used it for full year. I used it for full year. But depreciation will be only for half year because only value wise only half year's depreciation was remaining. Is this clear? Yes, that is one important question which you have to know. Let's go further. Flickering again. Too much, huh? Answer. Tell me. Okay. I'm continuing with the depreciation. Okay, guys. In the material which I had picked, the next question which I want to solve is a question from. Okay, this is the question from June 2022. Hello, monkey. What circus, sir? Yes, June 2022. Now, let's go into that question. What? Same problem again.
No, TV.
Yes, we'll go to this question. We'll start. It's still flickering? Once in a while, manageable. Okay, we'll see.
1 second. I will check.
Yes, we'll finish this question and then call him again. Okay, question number. No problem. Okay, question number 2. Okay, this is from June 2022 question. Okay, we'll just have a look at this question. Machinery account of a factory shed showed a balance of 95 lakhs on 1st April 2020. Now you have to understand they are asking you to prepare for which year? 31st March 2021. That means this will be written as what? Closing balance. 1st April 2020 will be written as opening balance. So you can see over here 95 lakhs, 2 balance brought down. Clear? Now, after that, okay, understand this. Then depreciation is written off on factory of the factory are closed on 31st March every year and 10% per annum is under diminishing balance method. Which method is diminishing balance? WDV. Okay. Now, anywhere in this question, did you see the word provision for depreciation? No, that means we are following which method? Method 1 or method 2? Method 1. Good. On 1st September 2020, a new machine was acquired at a cost of 14 lakhs and 44,600 was incurred on the same day as installation charges for erecting the machine. Is it going to be added or is it going to be left off? Added. So can you see over here, to bank 14 lakh 44,600, but 1st September. So whenever you're calculating depreciation for this, depreciation will be from 1st September only, not 6 months, 7 months. 1st September it is, not 30th September. Always when we see September, it's not 6 months. Okay, next. On 1st September 2020, a machine which had cost 21 lakh 87,000 on 1st April 2018, okay, was sold for 3 lakh 75,000. Once upon a time we had purchased it, but what we have to do, we are selling on what day? On what day are we selling? 1st September 2020, but when did we purchase it? 18, from 18 till now. From 18 till now we have to calculate the depreciation. Okay, and then we will get the WDV. Another machine which had been purchased on 1st April was scrapped on 1st September 2020 and it realized nothing. Scrap means we are not getting anything. If they get something behind our back, we are not going to worry about that. Okay, prepare machinery account. Now, see the calculation for this. Last machinery. No, yeah, see, if at all we are scrapping the machine, that is, just remember that scrap means sale at zero value. We will not get profit, we will get loss. In the last question, when we scrapped, we did not get profit also, we did not get loss also because asset was fully depreciated. If in my books asset is showing 10 rupees and I throw that asset, 10 rupees is loss now. If asset is showing 10 rupees and I sell it at 12 rupees, 2 rupees is profit. Yes. What? We should not worry. Worrying is not good for health.
We should present our pay.
Yes, so. कहना क्या चाहते हो? So what? What are we not showing in true way?
They're going for money, but they're going for scrap.
That you did behind the back. We did not do. We were showing in books only. Huh?
They mentioned that
Arey, you are contradicting yourself. You ask the question, no, what if they do behind the back? It's a fraud. Now what can I do about it? Huh? Correcting we will do in audit. Okay. Here accounting, correct entry we passed in books. Now in behind, see for example, okay, if I tell that this iPad is not working, okay, and management told okay, throw it. I kept it in the side. Later I pressed, it started working. I didn't tell the management. I sold it on my own and I got money. Management in the books of accounts, have they done properly? Yes. They told you to throw. They thought that you threw. As an employee, if you have done fraud, how will management get to know about it? Only God will watch everything. Clear? Other than that, anyone will not watch everything. Certain things which you did, we didn't watch. I am talking about him going for a movie. What are you talking about? Yes. How everyone knows about... all these people are laughing. Huh? Chetan is so popular. See, in regular class I told Chetan, there is a graph.
Sorry.
Like stock market. At one point of time, it was very high. At peak. This is during law class. Okay, accounts class, the curve was over here. Then maths class, it was over here. Law class, it was like all-time high. Market had reached all-time high. Then economics class, it started falling down. And then literally the market crashed. But always market is market. Now market has crashed few months, but it will correct. Now it's slowly correcting itself. So we don't know. Hope is a good thing in life, Chetan. Yes, let's continue. Okay. Don't ask stupid questions. Okay. What they are doing behind the back and all, what we will know? We don't know, right? It's a fraud. For fraud, what accounting I'll do? It is like you telling me in rectification of errors, go and pass the wrong entry only. Are you getting my point? If I knew it was wrong entry, I wouldn't have passed. No, I would have passed that entry thinking that it is the correct entry. Clear? Okay. Now, understand this. See this working note. There was an asset which is purchased in 2018. Okay. Remove depreciation for 2018. Remove depreciation for 2019. Remove depreciation for only 5 months in 2020. Did I tell you 5 months? 1st September. So only 5 months. That time you will get the WDV on the date of sale. How to minus this? I am not teaching. You know that. Okay. But very important is to remove only 5 months over here. Now you got WDV on the date of sale. What is the sale value? 3,75,000 they said. That means remaining everything is loss. Remaining everything is loss. There was one more asset which was not purchased in 2018 but it was purchased in 2019. Remove depreciation for 2019 and remove depreciation for 5 months for 2020. Okay. And this is the value. They are directly telling the loss. Why? This is actually the WDV on the date of sale. We sold it for zero value. It is scrapped. So this is going to be 100% loss. 100% everything is loss. Clear? Now tell me one thing. This depreciation of 2018 and 19, did you already pass entry for this in the books? Did you already pass? We are in 2020. So this is already passed. This 5 months depreciation, did you pass? No. This 5 months depreciation, did you pass? No. That's why whenever we sell, I told you, you have to calculate depreciation till the date of sale. Till the date of sale. So now what happens over here? Can you see over here by depreciation 73,811 and by depreciation 81,938. These were the two depreciations which we saw. 73,811 depreciation for 5 months and 81,938 is the depreciation for 5 months. That will be debited over there. When we sell, we got money. What is the entry? Bank account debited to asset account. Can you see over here by bank 3,75,000. Second situation, there is no buy bank. Why? Because it is scrapped. It is scrapped. It's gone for zero value. And then depreciation is done. Loss on sale. Loss is debited to P&L or credited to P&L. Debited to P&L. So here you can see, not this one, sorry, here by loss on sale. Basically you can just write by P&L. And here one more, by loss on scrapping, which is nothing but by P&L. Is this clear? Where did we get these numbers, sir? Over here. Can you see the loss here? Can you see the loss here? These are the numbers. Now, my question is, whatever is sold, okay, whatever is sold is gone, but whatever is not sold is still remaining. Okay, for that you have to calculate depreciation. So now what you will do, 95 lakhs, okay, from this you will remove the WDV of the asset which is sold. Will I remove the WDV on 19? Just before lunch break, we had discussed that. How to calculate depreciation for the assets which are not sold. You will take WDV, okay, 95 lakhs. From that, you will remove the WDV of the assets which are sold. And we have to take the WDV on 1/4, not on the date of sale. Clear? On 1/4. So on 1/4, what is the WDV? See, 95 lakhs. WDV of the machinery which is sold. If you make a mistake, no, you will take 1697,659. 1697,659 is the WDV on the date of sale. But we want the WDV at the starting of the year. How much was it? 1771,470. Remove that. And here, if you make a mistake, you will take 1884,562. But no, at the starting of the year, it was 1966,500. Remove that. That time you will get the total WDV. Remove that. Whatever is remaining is the WDV of the asset which is not sold. On that you calculate 10% depreciation. You will get depreciation. And new purchase which you have made it on 1st September. So for that, October, November, December, January, February, March, April. So you will have only 7 months depreciation for that. So this will be your total depreciation at the end of the year, which you have to calculate 606,471. Clear? And you can see that 660,471 is there. And remaining everything is balance carried on. Is this clear? So what and all you have to do when you sell? Calculate depreciation till the date of sale. Calculate the WDV on the date of sale. Calculate profit or loss. If you scrap it, calculate depreciation till the date of scrapping. After that, if there is WDV, everything is loss. Everything is loss. Clear? Then, if you are calculating depreciation on remaining assets, whatever asset is there, out of the WDV at the starting of the year, remove the WDVs which are already gone. Remaining WDV, calculate depreciation for the entire year. And new purchase is there, calculate depreciation for the remaining time period. Is this clear? Okay. This should be it with that particular question, June 2022. The next question which we have to see, okay, 7th one done, 8th is with the provision for depreciation. There was a question in June 2023. Okay, June 22 done. Now we'll go into June 2023 with provision for depreciation. Now, if provision for depreciation is there, what is extra? Disposal account. Disposal account, what we are going to do? Whatever asset is sold, take the cost and put it to disposal account. Take the total depreciation till the date of sale and put it to disposal account. Get the money, put it to disposal account. Take the profit from there, transfer to P&L. Take the loss from there, transfer to P&L. Clear? Now, following balance appeared in the books of Dheeraj Enterprises. Machinery account on 1/4/2021. How much? 12 lakhs. Machinery account on 1/4/2021 is 12 lakhs. So now you go and check the machinery account. To balance brought down 12 lakhs. Clear? Next, after that, provision for depreciation on 1/4/2021. 4,65,000. That means it should have to balance brought down or by balance brought down. By balance brought down, you can see 4,65,000. Is this clear? Next, after that, okay, on 1st October 2021, that means this year, the machinery which was purchased on 1st April 2018 for 2 lakhs was sold for 1,10,000. Machinery which was purchased in 2018, that means 18-19, 19-20, 20-21, 3 years depreciation is already removed and now it is sold on 1st October. That means 6 months depreciation we have to calculate. Clear? So obviously you need to do the working note. How much was it? 2 lakhs. Okay. Depreciation in this question, they have told depreciation is 10% per annum on written down value of the machinery every year. The firm charging depreciation at 10% per annum. So what are you going to do now? 2 lakh was the cost, correct? Okay, 2 lakh was the cost. First year depreciation is 20,000. Then it becomes 1,80,000. So second year depreciation is 18,000. Then it becomes 1,62,000. Then the depreciation is 16,200. All these things are done. This year you have sold it in the middle of the year. So depreciation for 6 months. That becomes 7290. Now tell me one thing. 7290 depreciation entry, is it already passed? It is not passed. So you have to pass the entry by depreciation 7290. By depreciation 7290. Is this clear? In the provision for depreciation ledger. Now, after removing all that depreciation, the total provision is how much? 61,490. Okay. Cost should be removed and transferred to disposal account. Can you see disposal account debited 2 lakhs and asset account credited 2 lakhs. Provision should be removed and transferred to disposal account. Can you see the provision 61,490 removed from here and it transferred to disposal account? Did you get money? Did you get money? You sold it for how much? 1,10,000. Bank account debited to disposal account. 1,10,000. Is this clear? Now, whatever remaining is there, that is profit or loss. Okay, here also you can calculate. This is the WDV on the date of sale. This is the sale value. 28,510 is the loss on sale. 28,510 is the loss on sale. 28,510 by P&L. Is this clear? Okay, this is the disposal account. Now, assets are gone. Don't feel too happy. Okay, new asset is also purchased. There is one new asset which is purchased over here for 4,80,000. So you'll go and write asset account debited to bank account. For this asset, you'll calculate depreciation for only 6 months. And for the remaining assets, you'll calculate depreciation for the entire year. Okay. So see over here. WDV on remaining machines. 12 lakh. Okay. Minus cost of the machine 2 lakh. So 10 lakhs. On 10 lakhs, provision for depreciation is 4,65,000. Okay. Out of this, do you know that depreciation, provision for depreciation was 54,200, sir? No, it was not 54,200, sir. It was 61,000 something. But we have to calculate on 1/4. 1/4. That means that day it was only 54,200. It was, you should calculate on 1/4. WDV on 1/4 minus WDV of assets sold on 1/4. So that's why it is, when you remove it is 54,200. So if you remove that, you will get 410,800. Net to what is the WDV? 589,200. WDV of the remaining machine is 589,200. What did we do? From the cost, we removed the cost which is sold. From the provision, we removed the provision which is gone. So remaining provision, remaining WDV, whatever is there, it is entirely of the assets which are not gone. Clear? On this, you will calculate 10%, 58,920. New asset is purchased, but it is used only for half year. So half year depreciation is 24,000. So total depreciation is 82,920. Which provision? This one. Okay. See. Asset is sold 12 lakhs. Not asset is sold 12 lakh. Total asset is 12 lakh. Out of that 2 lakh asset is gone. So what is the cost of the old assets? 10 lakhs. Provision for depreciation total was 4,65,000. What is the provision which is related to the asset which is gone? 54,200. 61,000 is after taking even this year's. This we are doing on 1/4, no?
6 months you're taking the last question.
No, we are calculating. See, that's what I told you, depreciation. WDV on 1/4 minus WDV, what is gone on 1/4, not on the date of sale. If you take 63,000, it will be on the date of sale. 54,200 is on the date of starting of the year. Okay, provision for depreciation, we know for all the assets together at the starting of the year. Remove the provision for the asset which is sold at the starting of the year. But asset is sold somewhere later, for that extra depreciation we have charged. Okay, so 410,800. So net to whatever you get now, this is everything WDV related to the assets which are not sold. So 589,200 into 10% will be 58,920. And new asset we are going to charge half year depreciation. That should be it. Is this clear? Are you following this, guys? Okay. Yes, that is it with that particular question. Now, we have a lot of work to do. What is that lot of work? Sleep. Okay, depreciation, study material not required anymore. RTP May 2024. RTP May 2024, depreciation and amortization. Let's have a look at this question. Now, Mohit Transport Company purchased 10 buses at 25 lakhs each on 1st July 2020. How many buses he has purchased? 10 buses on 1st July 2020. You can see year ending 31st December. That means they are not following financial year, they are following calendar year. Okay. 10 buses at 25 lakhs means 2.5 crore into what is the rate of depreciation? 20% on original cost per annum. Original cost into 20% into 6 divided by 12. How much is it? 25,000. 2.5 crore we are depreciating, but depreciation is only 25,000. 25 lakhs. 25 lakhs. Is this clear? One bus also will become 2 lakh 50. Yes. Now on 1st October 2022, one of the buses is involved in an accident. Same year? Same year? No. It is happening in which year? 1st October 2022. So, give the bus account for 2 years ending 31st December 2023. That means they are asking you the bus account for only 2022 and 2023. They are asking bus account for which years? 2022 and 2023 only. So, now what happens? 2020 we purchase the bus. 2020 we purchase the bus. 2020 half year depreciation. 2021 full year depreciation. So this is 2020 and 2021 will be 50 lakh depreciation because full year depreciation. Clear? So now what will be the WDV in 2022 starting? 9 months. Wait. To open the ledger, no, depreciation account to open, I need 2 balance brought down. 2 balance brought down. So 2.5 crores is the value of my buses. 2.5 crores minus 75 lakhs. I'll get 1.75 crore. 1.75 crore. Are you getting this? 1.75 crores. I'll get as the opening balance. Balance brought down. Because now see, you might be thinking, sir, I will start preparing ledger from 2020, but you're wasting time. They did not ask for 2020. They said 2 years ending 31st December 2023. So what you will do, you will prepare for 2022 and 2023. But the bus was purchased on in 2020. 2020 it was purchased on 1st July. That means there is 6 months depreciation in 2020, which came up to 25,000. In 2021, the buses were good, fit and fine. That means full year's depreciation. That is 50 lakhs. So total depreciation for 2 years is 75 lakhs. From 10 buses cost is 2.5 crores. If you remove 75 lakhs, you'll get 1.75 crores, which is the opening balance. Clear? Now in 2022, what happened? One bus is involved in an accident and completely destroyed, and 17 lakh 50,000 is received from insurance company in full settlement. Very good. We should feel very happy. Correct? One bus is destroyed. Correct? One bus, the cost is what? 25 lakhs minus depreciation for 2021. How much is it? 2 lakh. No. Sorry, not 2021. 2020. How much is it? 2 lakh 50,000. And 2021, the depreciation is 5 lakhs. Correct? Depreciation is 5 lakh. That means 17 lakh 50,000 is the value of my bus. But now this bus is sold. I mean, not sold. It is getting destroyed on what date? 1st October. 9 months you use that bus. So now what will be the depreciation? 17 lakh 50,000 into 10% into 9 divided by 12. Sorry, not 17 lakh 50,000. We are not following WDV. We are following original cost only. 25 lakhs into 10% into 9 divided by 12. Are you getting 7 lakh 50,000? Oh, I'm sorry. 20%. 20% into 9 divided by 12. 3 lakh 75,000. So you'll write over here by depreciation 3 lakh 75,000. Is this clear? 3 lakh 75,000. Next, what are you going to do after that? Sale. Luckily, you got 17 lakh 50,000 from insurance company. So you're going to write over here by bank 17 lakh 50,000. Now, 17 lakh 50,000 you got. But what was the WDV on that date? WDV was 17 lakh 50,000 minus 3 lakh 75,000. 13 lakh 75,000. That means how much profit are you getting, or are you getting loss?
Profit.
13 lakh 75,000. You sold it. It's almost like sale because insurance company is going to give you. So 2 P&L 3 lakh 75,000. Is this clear? This is the story of that one bus which got destroyed. But what about the remaining buses? On the same day, another bus was purchased by the company for a sum of 30 lakhs. Did you purchase one more bus? So what will you do? You will just write 2 bank 30 lakhs. You will write 2 bank 30 lakhs. And now you have to calculate depreciation for 10 buses. You have to calculate for 10 buses. 9 old buses and 1 new bus. Clear? What is the value of 9 old buses? 25 lakhs into 9 buses into 20%. 25 lakhs. How much? 45 lakhs. Clear? One bus, new bus is 30 lakhs, right? 30 lakhs into one bus into 20%. That makes it 6 lakhs. So what is the total depreciation you are getting? 51 lakhs. So you will write over here by depreciation 51 lakhs. Clear? Oh, it is purchased on what day? 1st October. Oh, sorry. 3 by 12 then. 1 lakh 50,000. So this becomes 46 lakh 50,000. Here also you will write 46 lakh 50,000. Can you see what and all happened in 2022? 2022, we don't know the opening balance because the buses were purchased in 2020. 2020 half year depreciation and 2021 full year depreciation. If you remove, you will get the balance brought down. Then you purchased one, you sold the bus. Actually not sold, it got destroyed and you got money. So now for that one bus, you have to calculate WDV on the date of destruction. And then you'll get the profit. Profit you got 3,75,000. Then what you're doing, 9 old buses are still there, depreciation for the full year. One new bus is purchased, depreciation for 3 months. That time you will get total depreciation of 46 lakh 50. Whatever is there, just do balance, carry it down. When we go to next year, 2022, in 2023, do you have any purchase? Question got over here actually. In 2023, we don't have any purchase. 2023, we don't have any sale also. So in 2023, what will be the depreciation? 2023, the depreciation will be 25 lakhs into 9 buses into 20%, which is basically 45 lakhs. And 30 lakhs into 20%, which is basically 6 lakhs. So basically, it will be 51 lakh of depreciation. Is this clear? Okay, this is the question that they have asked in RTP of May 2024 on depreciation. Is this clear? Yes. Any doubts with this one? No. Obviously, you have to prepare ledgers. That you know. I'm just focusing on the calculation part of that. Now, let's go into RTP September 2024. September 2024 depreciation question. Messrs. Deepak Transport Company purchased 10 trucks. Wow. They are also very lazy like you only. At 50 lakhs each on 1st October 2020. Date changed. But same effect. Because there it was 30th June, but year end was 31st December. Here it is 1st October, year end is 31st March. So first year depreciation will be 6 months only. 1st January 2023, one of the trucks is involved in an accident. Now 1st January, there it was 30th of September, correct? Or 1st of October. There 9 months because you are following calendar year. Here also 9 months because you are following financial year. Okay. And completely destroyed and 35 lakhs is received from the insurance company in full settlement. On the same day, another truck is purchased for a value of 60 lakhs. Company writes of depreciation of 20%. Okay, 20% on original cost. Give motor truck account for the year ended. Okay, one we have discussed. This shouldn't be a problem. Okay, Jan 2025. Next question. See, I see. That's why I'm telling you it's again data game. You have to cover the database. You cannot fail. You're not covering the database. That's why you're failing. You have to cover the database. See how ICA is just repeating things. Okay, they are also lazy. Out of the paper, if you see, only 10% will be new questions or some new twists. Other than that, from somewhere they have picked. Okay, that's somewhere you have to cover. That's all. Yes. Let's see this one. Deep Lakshmi. purchased a second-hand furniture machine on 1st April 2020 for 1,60,000. Go to the end of the question and see what they have asked. You are required to prepare machinery account for the years 2020 to 2024. Very good. 5-year plan they are doing. 20, 21, 22, 23, 24. 5 years. Huh? Too much flickering, huh? Okay. We'll go to our next question. Question number 7. Okay, this is from Jan 2025. Deep Lakshmi purchased second-hand machinery costing something on 1,60,000. It is on 1/4/2020. First day of the year or any other day of the year? Is it first day of the year? No, they said 2020 to 2024. Anywhere did they tell you that the year is closing on 31st of, year is closing on 31st of March? No, when they tell 2020 to 2024, calendar year. That means for this first year, you will calculate depreciation only for 9 months. Overhauling and erection charges were 40,000. So total value of the asset was 2 lakhs. Clear? Another machine was purchased for 80,000 on 1st October. Another machine is purchased on what? 1st October. Which day? 2020 only. Same year. For this, the depreciation will be for how many months? 3 months. 1st October 2022. Another machine is installed. So 2020 done. In 2021, not a single machine is purchased. So 2021 full year depreciation. Depreciation is 10% on original cost. That means SLM. Okay. Then in 2022, machinery is installed and was sold. Machinery which was installed on 1st October 2022. 1st April 2020 was sold for 1 lakh. That machine which we purchased here, no, it is sold for 1 lakh. Okay. So what we have to do? We have to calculate depreciation of 2020. We have to calculate depreciation of 2021. And then 2022, we have to calculate depreciation for 9 months. Then we'll get the WDV on the date of sale and then put the sale value and you'll get profit or loss. On the same day, another machine is purchased for 30,000. Okay, it was installed on 31st December 2022. Okay, now, what should we do? Should we take depreciation from 1st October or 31st December? Why? Another machine was purchased and was installed on 31st December 2022. When did they purchase? They did not tell that it is purchased on 1st of October. If they purchase on 1st October and install on 31st December, depreciation will start from 1st October itself. Passage of time. Clear? Okay. For this, what depreciation will do? We'll calculate for 3 months. Under the existing practice, the company provides depreciation at 10% original cost. However, from 1st April 2023, it decided to adopt WDV to change the depreciation at the rate of 15% per annum. So 2020, 2021, 2022, you're going to follow original cost only. And 2022, when you finish the year, you'll write no by balance carried down. Based on that, for 2023, you will calculate depreciation under WDV. Then you'll write again by balance carried down in 2023. Based on that, in 2024, you are going to calculate depreciation under WDV. Is this clear? Are you following this? Okay, there shouldn't be any issue. So what they have tested? Nothing. One purchase, one sale, done. That's all. Okay, but what you have to do? 2020, you have purchased lot of things. Okay, 2 assets are purchased in 2020. That will be done using which method? SLM. 2022, it will be which method? 2021, which method? SLM. 2022, there is a sale also. That year also you are following SLM. But when you finish 2022, automatically you will get balance carried down. So 2023 and 2024, you are going to follow WDV. Yeah. Which 30,000? Yeah, you will calculate for 3 months, no? Under SLM only. Oh no, this is on 31st December. So you will calculate under WDV only directly. It's on 31st December. No, why will you calculate SLM? But from 1st April 2023. Okay. See, one thing is in this RTP, ICA has not framed the dates properly. It should have been calendar year only. Nobody in the middle of the year will change the method of depreciation. No. Till last year, they have followed one method of depreciation. Now, fresh year, they'll use new method of depreciation. Middle of the year, they will not change. So, if you follow calendar year, this is actually middle of the year. So, then for 3 months, you have to follow SL. If you follow financial year, it's a fresh year. Is this clear? Okay. Anyways, for this one, you have to calculate depreciation for 3 months under SLM only because it is changed on 1st April 2023. Okay. Next, RDP May 2025. The most recent one. We'll see what they have asked. Anything complicated. Machinery of a factory shed showed a balance of 95 lakhs on 1st April 2023. Books of accounts of the factory are closed on 31st March every year and depreciation 10% per annum under diminishing balance. On 1st September, a new machine was acquired at a cost of 14 lakhs and 44,600 was incurred on the same day as installation charges for erecting the machine. On 1st September 2023, 1st September means only 5 months. A machine which had cost 21,87,000 was sold for 3,75,000. Another machine which had cost 21,85,000 was scrapped and it realized nothing. Did we see this somewhere? Where? No practical question. It is from the examination. It is not from practical question and all. It is here. June 2022 exam. Same question was there. They put it into RTP. Jan 2025 RTP. Did we see this little sometime back only? Yes. That is it with that particular thing. Now let's see June 2024 examination. Do we have depreciation question? June 24, 100% depreciation question is there. For few marks. June 24, there is a, depreciation question in June 2024. On 1st April 2022, LMP company, which depreciates its machinery at 10% per annum on diminishing balance method, WDV, had 9,72,000 to the debit of the machinery account. What is it? It's opening balance. Two balance brought down. So straight away you can see in the machinery account 9,72,000, two balance brought down. Clear? Then next, after that, they have told on 1st October 2022, part of the machinery purchased on 1st April 2020. When did you purchase it? 1st April 2020 for 80,000 was sold for 45,000. So what you have to do? 2021, 21-22, 2021 and 21-22, 2 years depreciation you have to calculate. Then you have to calculate depreciation in for 22-23 for 6 months. Okay, why? It is sold on 1st October 2022. Okay, it is sold for 45,000. That time you will get to know the profit or loss. Obviously, we have seen these kind of calculations before. Okay, do you remember 80,000? See, 2021 depreciation is removed. 21-22 depreciation is removed. And then you will get some value and you have to calculate depreciation till 30th September. That time you will get WDV on the date of sale. We are selling it at 45,000. Are we selling it at higher value or lower value? Are we selling it at higher value or lower value? We are selling it at a higher value. What higher value? We are selling it at a lower value. So loss on sale. First, what we have to do when we sell? Depreciation till the date of sale. Now, what depreciation entry will I pass? Will I pass entry for this 8,000, 7,200, 3,240? This 8,000 and 7,200 old years already done. So we will calculate only for this one, 3,240. So you'll go to asset account and write buy depreciation 3,240. Can you see this? You got money, buy bank 45,000. You have loss, P&L account debited 16,560. Clear? Asset sale, three things. Depreciation for the year till that date, then the sale entry, then the profit or loss entry. Okay, now remaining machines you have to calculate. That is the challenge, no? Remaining machines, what you're going to do? 9,72,000 is the cost of the machine. Okay, into 100 by 90, into 100 by 90. What they have done? They're going backwards. Why they are going backwards? Because there was some machine which was sold, no? Which was purchased on what date? Can you see it was purchased on 1/4/2020. 1/4/2020. Are you getting this? 9,72,000 is the value of the machine. In this, what they could have done, they have to remove the WDV of the asset which is sold. But what they are doing, they are going backwards, getting the total value, then removing the 80,000, getting this value and calculating depreciation separately. You could have just removed WDV also and calculated how we used to do earlier. WDV on the date of opening balance sheet. Okay, from there you are going to remove the WDV of the assets which are sold. Then we will get the WDV of the assets which are not sold. Do we already know the WDV of the asset which is sold on 1/4/2022? See over here. 64,800. Is this clear? Okay, this also we have done in one of the earlier questions. You'll get the depreciation. That's it. After that, balance carried down. All these questions, if you see only and go, no, your concepts are covered. You don't have to see anything extra also. But first you have to learn the concepts. Okay, if you have not learned. September 2024. Did they ask depreciation question? Yes. Did they ask? No. Final accounts. Yes, after that there is nothing. September they didn't ask. Jan 2025. Do we have depreciation question in Jan 2025? They didn't ask? They asked. Question number 2. 10-mark question. Small. Okay, a firm purchased a second-hand machinery on 1st April 2021 for 15 lakhs. Is there any problem? Okay, they purchased on 1/4/2021 for 15 lakhs, subsequent to which 2 lakhs were spent on its repair and installation. So what you will do? Totally, how much will you take the machinery value? 17 lakhs. Total, you will take it as 17 lakhs. Okay, it was some other date, sorry. It was purchased on what date? 1st April 2021. They asked you to prepare machinery account for what date? 31st March 2024. Oh. Are you getting this? Now if you start from 2021, you are wasting time. 21, 22, 22, 23, 23, 24. 3 years you'll end up preparing. Okay. This is purchased, okay, on 1st April 2021. And on 1st October 2021, another machinery was purchased for 9 lakhs and cost of installation was 20,000. Something is purchased in 2021. To start our ledger for the year ending 31st March 2024, that means we need the ledger for 23-24. 23-24 to prepare the ledger. What do we need? We want opening balance. Correct? Okay. Now, see this. 15 plus 2, 17 lakhs. 9 lakh plus 20, 9 lakh 20. Now, what we are going to do? We are going to calculate depreciation from 1st April over here. And we are going to calculate depreciation from 1st October over here. Okay. 21, 22, 12 months depreciation here. And 6 months depreciation over here. Clear? You got the WDV on 31st of March 2022. Is it good enough for your calculation? No. Because we want 1st April 2023. So next year again you calculate depreciation 12%, 12%. WDV method. So you got WDV on 31st March 2023. Is this what you need? Is this what you need to start the solution?
Yeah.
Okay. So what you can see over here? 2 balance brought down is machine 1, machine 2. Can you see those values? Okay. If someone started the solution in the exam with 17 lakh and 9 lakh 20, they have gone horribly wrong. Because it was 17 lakh and 9 lakh 20 in 2021. We are preparing for 23-24. That means 23-24 when you are preparing, we want the value on 1/4/2023. Is this clear? Okay. Next, after that, what did they tell? Then they said, the firm also shifted the machinery purchase on 1st April 2021 to the new plant and incurred freight 10,000. Do you have to bother? It's a revenue expenditure. If you have taken it in the machinery account, 100% gone. Are you getting my point? This point is just to test you whether you have learned revenue and capital expenditure unit in chapter number 1. Are you getting my point? It has nothing with depreciation chapter. What did they tell? Firm also shifted machinery purchase on 1st April to the new plant and incurred freight. They shifted. Any extra benefit I'm getting from this? No. Remember, future economic benefit if you get, then it will be taken as capital expenditure. Otherwise, it's just a revenue expenditure. Ignore it. Don't bother at all. Now, they adopted a policy of charging depreciation of 12% per annum on diminishing balance. We know that. Okay. 1st April 2023, it was decided to change the method and rate of depreciation to straight line basis. Clear? They are going to change to straight line basis. On this date, the remaining useful life was assessed as 5 years for both the machines purchased with no scrap value. Old machines you had no. Actually, this question was there in study material. That one change in method of depreciation question which we did is this. But there they gave you nice box. You're like, oh, this number is here. Take it. This number is here. Here they give paragraph. When you read, you are like, okay, this is something irritating. And this 10,000 is extra. Okay, that 10,000 they just put as a bouncer over there. To test, they can't ask everything from chapter number 1, no. And they also know, no, chapter number 1, many things you're skipping. Okay, so they put 1 point of chapter number 1 in depreciation. Now you are like, depreciation I did not skip, sir. But chapter number 1 I skipped, sir. Now I don't know 5 minutes, people would have thought about what to do with this 10,000. Where to put this freight? All those things would have come into mind. Rectification of errors. There are so many entries about freight. Is that the entry over here? Okay. So do not skip anything. On 1st October 2023, the first machine became outdated and it was sold. Okay. Now first machinery became outdated. But first machinery, when it becomes outdated and it is sold for 2,50,000, okay, you have to calculate depreciation for 6 months, no? 6 months depreciation, you have to calculate under which method? WDV or straight line? WDV or straight line? 1st April 2023, it was decided to change the method of depreciation to straight line basis, 5 years useful life. So now, when you are calculating depreciation till the date of sale, you have to use straight line method for that. Which machine you have sold? First machine. First machine, the value was 13,16,480. Now, when you are selling that, okay, calculation of depreciation on straight line basis with effect from 1st April. Okay, purchased on 1st April, 17 lakhs minus 2,04,000 minus this. You got already 13 lakhs 16,480. I don't know why they are showing the calculation again. Divided by 5 years, actually the depreciation is 263,296. Again, they did divided by 2. Why? Because you are supposed to do into 6 by 12. Into 6 by 12. You have used the machinery only for 6 months. That time you get 131,648. 131,648 is the depreciation till the date of sale. 131,648. Depreciation till the date of sale. When selling that, did you get some money? It was sold for what value? 2,50,000. Bank account debited to asset account. 2,50,000. Whatever is the value of that, okay, whatever is the value of that, everything will be loss. Okay, because you can see the value of the asset was what? 13,16,480. Depreciation is only 1,31,648. Money that you got is only 2,50,000. Balance everything from that asset, it will be 100% loss. Is this clear? Then, what did it ask after that? On the same day, another machinery was purchased for 8,50,000. Very good. Estimated useful life is 10 years. Residual value is also there, 30,000. So what you will do? 8,50,000 is the value. You will write 2 bank over here. When you are calculating depreciation for the third machine, what you will do? 8,50,000 minus 30,000 divided by what? 10 years. But you have purchased on 1st October. So into 6 by 12, 41,000. Into 6 by 12, 41,000. Now the second machinery, it is sitting alone. It is feeling bad. We have not spoken about it at all. Have you used that second machinery for the full year? Did not sell it at all. So 7,61,024 divided by how many years useful life they gave? 5 years, right? 5 years. Is it giving you 152,205? Is it giving you 152,205? 761,024. 152,205. Okay. Then everything is just balance carried out. Anywhere in this ledger, can you spot the 10,000? That freight? That point was put just to confuse you. Are you getting this? So now, old machines are purchased somewhere in the past. Please calculate depreciation under WDV method and find the opening balance. And now you have changed the method of depreciation. So it is going to be SLM with the useful life of 5 years. For this, we have calculated depreciation only for 6 months because it is sold in 6 months. For this, we have calculated depreciation for the full year because it is used for full year. New machinery is purchased. For that, we have calculated depreciation only for 6 months because it is used only for 6 months. Is this clear? This is your Jan 2025 question. With that, we are done with depreciation. Okay, I don't think there should be anything. Almost everything from depreciation we have covered. Next, we have to move into bills of exchange. Without doing bills of exchange, I can't do final accounts and I can't do incomplete records also because there they test you on all that. Okay, they test you on incomplete records, topics. I mean, incomplete records is basically test of everything. Only thing is partnership and all is not covered. But if they want to, they can do it. There is bills of exchange, yes. No, incomplete records actually I was planning for today. No, today. Yes. You can take a break for 10 minutes. Next, we'll continue. We'll go into bills of exchange. Okay, another topic which has good weightage. They can ask question for 10 marks, 12 marks, and this can also impact your incomplete records chapter. Okay, there you'll have to prepare bills receivable account, sometimes bills payable account, sometimes. Without this chapter, you will not actually lose 10 marks, you might lose more. You will not be able to attempt that as well as this. Okay, so now, bills of exchange, first one. Understand this. What is a bill of exchange? It is a negotiable instrument. Okay. When imagine Arnav is there, he sold goods to Bambani. Okay, he sold goods to Bambani. Now, if he sold goods to Bambani, Arnav is having fear that what if Bambani doesn't give the money back? Okay, he is having fear that Bambani will not give the money. So what Arnav will do? What will Arnav do? He will draw a bill. Okay, he will draw a bill on Bambani. This bill is called as negotiable instrument. Clear? Now what we are supposed to worry about, this is how a bill looks. It's actually looking like similar to a check only, but not check. It is a bill. Okay, where the date will be there, who is preparing will be there, who is the payer, who is the drawee, and the sign will be there obviously. Clear? Now drawer is who? The person who prepares the bill. How we write? Somebody drew a check. Drew a check means what? Somebody is preparing the check. Here it is preparing the bill. Clear? Drawee or acceptor. That means what? On whose name this bill is drawn, that person is called as drawee or acceptor. Clear? Payer. Payer means what? Person who is to make the payment. Pay means what? Who is supposed to get the payment. Clear? Tenure of the bill. Tenure of the bill means what? Duration of the bill. Duration of the bill. Clear? We have two types of bill. You can get it in theory. Bill drawn after date, bill drawn after sight. I drew a bill on you. Now, the day I drew the bill, if I tell 3 months, time starts from here. That is bill drawn after date. If they tell bill drawn after sight, I drew a bill on you today, you accept it 5 days later, time starts from there. After you accept, the time starts. So, if the question is silent, always it is bill drawn after date. If it's bill drawn after date, tenure starts from the date of the bill. If bill drawn after sight, tenure starts from the date of acceptance. Is this clear? Okay. Now, due date means what? Date when payment is to be made. But when you are supposed to make the payment, something might happen. You might fall sick or not well or something can happen. That's why always 3 days grace is provided, and finally last date for payment is maturity date. At least by maturity date you are supposed to make the payment. Okay, date of bill or date of acceptance plus tenure of the bill. If you do, you'll get the due date. Is this clear? Okay. Next, examples for date of bill. 1/1/2023. If at all the bill is there, duration is for 3 months. Listen. Shh. When I tell 3 months, duration is given in months, right? You'll add months directly to the month column. So it becomes 1/4/2023. And then add 3 days grace, you'll get 4/4/2023. If I tell 1/1/2024 and 1 month, directly I'll add month to the month column. It becomes 1/2/2024 and it becomes 4/2/2024. If I tell 30 days, that means 30 days and 1 month is not the same. When I tell 30 days, add days to the days column, you'll get 31st of January 2024 and you'll get 3rd of February 2024. Clear? And if I tell 1/1/2024, 60 days, add 60 days, that time you will get the due date and the maturity date. If I tell 23rd of December 2023, 1 month. Okay, if I'm telling 1 month, that means I will add, it becomes 23rd of January 2024. Adding 3 days grace, it becomes 26th of January. But I can't write 26th of January because 26th of January is a national holiday. Is this clear? Whenever it's a national holiday, you will take the previous day. Okay, whenever it's the national holiday, you will take the previous day. When it's an emergency holiday, you will take the next day as the due date or maturity date. Because national holiday doesn't come as a surprise. You already know when the national holidays are. Correct? Therefore, it is taken as the previous day. And then emergency holiday is surprise. Like other day you had an emergency holiday over here. No. You didn't know, you were not aware of it. Suddenly it was a holiday. So next, if you had planned for a payment on that day, you wouldn't be able to make it. So next day. Is it clear? Now, what are the national holidays? What are the national holidays? Yes, Chetan. Independence Day. When is Independence Day, Chetan? 15th August is Independence Day. Then Republic Day. Wait. Republic Day. 26th of January is Republic Day. And when is the next national holiday? 2nd October is Gandhi Jayanti. Yes. Now you have learnt it. No clap. That you are supposed to know. It was the most obvious thing. I was surprised when you didn't know it. Okay. Actually, he was not aware of the national holidays. We were very surprised. Okay. So this is the situation. 3 days, which you have to remember. Obvious dates it is. But ICA will frame the question sometimes in such a way that one of the bill will fall on the national holiday. So in the hurry of the solving, don't miss that particular date. Clear? Now, accounting. We'll go to accounting. Arnav and Bambani. 2 people are there. We'll try to cover the entire bills of exchange with this example. Okay. Now, Arnav sold goods. So, after date means I drew a bill on you today. Okay, today is 29th of March. I drew a bill on you today. Okay, I sent it to you. You have to accept it. No, otherwise the bill does not have any validity. I sent the bill to you today. Okay, but time duration has started already from today itself. Usually in the question we see bill drawn after date only. But imagine if it is a bill drawn after sight. I sent the bill to you today, 29th of March. You have accepted it on 5th of April. So now the time duration will start from 5th of April. If there is 3 months, whatever, it will start from 5th of April. In question, they usually don't tell. They just tell bill is drawn on this date. That means it is already bill drawn after date. If they tell specifically if it's a bill drawn after sight, then it will be from this date, from the date of acceptance. Yes. Now we'll go into this question. Arnav and Bambani. So we'll cover both. Arnav is what in this case? He is the drawer and Bambani is the drawee. Now understand this. Arnav sells goods. If Arnav sells goods, you don't have to worry about bills of exchange for that. What is the entry? Bambani account debited to sales. Bambani account debited to sales. Same way what Bambani will do. Purchase account debited to Arnav. Basically, drawee. Debtor account debited to sales. Purchase account debited to creditor. Clear? Now, Arnav draws bill on Bambani. No entry. Why? A bill is valid only when it is accepted. So when the bill is accepted by Bambani, that time you will pass an entry. For you, bill is an asset or liability. For bills receivable, asset. Bills receivable account debited to Bambani's account. Clear? And for Bambani, what is it going to be? Bills payable. Bills payable is a liability. Arnav account debited to bills payable. Now here if you notice what has happened. Bambani was an asset which was called as debtor. He is supposed to pay you money. Usually debtor goes if they pay you money. But debtor did not give you money. What did debtor give you? Debtor gives you bill. So bills receivable account debited to Bambani's account. Is this clear? Yes. What's your name? Huh? Sorry? Najib. Najib, can you get up once? What's your name? Chetan. What's your name? Chetan. Go and sit there. Take your books and belongings and come to first bench. Arnav, make way for your old friend. He's back. Fast, Chetan. See, because when I'm explaining bills of exchange, right? I don't think it is that fascinating that you have a smile on your face. That also at 4:15 in the evening. Okay. Here, Arnav. Let's spoil your weekend plans. Okay. Yes. Comfortable? Okay. Now let's continue. Online students, sorry for the interruption. Yes. Now, listen. Here, Bambani is a debtor. A debtor goes when they give you something equivalent to money. Correct? A debtor goes when they give you something equivalent to money. Debtor went. but they did not give you money. What did they give you? They gave you something which can be exchanged for money in future, which is bills receivable. So bills receivable account debited to Bambani. You're supposed to make payment to Arnav. Arnav is a creditor. Creditor will go if you make payment. But if you don't make payment, you give something equivalent to money. Creditor will go. So Arnav is debited and bills payable is credited. Clear? Basically what happened? One asset is replaced with another asset. Here one liability is replaced with one more liability. Clear? Now, during the tenure. What is tenure? The time period of the bill. During the time period of the bill, what can you do? As Arnav, what can you do? You can do three things. What is that? Hold the bill. Just keep the bill in your pocket and wait for 3 months. Clear? Otherwise, you want urgent money. You can go to bank and tell, take the bill today. You give me the money today. Later on, Bambani will make the payment to you on due date. Clear? That can happen. Then, third, what you can do? You can endorse it to somebody. Endorsing means what? You have to pay money to somebody. You also don't have money. You just took this bill and gave it to them. Is this clear? So now, if Arnav holds the bill, no entry. You're just keeping the bill in your hand and you're waiting every day, looking at the bill. Time is not over. Correct? Is there going to be any entry for that? No entry. Clear? But if bill is discounted, what happens? Bill is gone. So now what happens? Bank account debited, but bank will not give you full amount. Bank is not your uncle's. Are you getting my point? Bank will charge something. If it's a 50,000 bill, bank has taken 2,000 rupees. Why is bank charging? It's a 3-month bill. Bank is paying you early. Bank will get the money after 3 months. So bank is giving you money early. For 3 months, they're actually charging you interest only. And that is called as discounting charges. Discounting charges account debited to bills receivable. Bill is gone. Money came. Full money did not come. Expense. Bill is gone. Money came. Full money did not come here. So it is expense. Clear? Now, if you endorse the bill, Arnav endorses the bill to Chetan. If Arnav endorses the bill to Chetan, Chetan was a creditor, gone. If you make payment to Chetan, what is the entry? Chetan's account debited to bank account, but he did not make payment in cash. You gave them bill. Chetan's account debited to bills receivable account. Chetan is nothing but a creditor. A creditor is paid, but not in cash by giving the bill. Clear? Now, Arnav will be called as endorser and Chetan will be called as endorsee. When all this circus is happening in Arnav's books, nothing in the books of Bambani. Why? I signed the bill and gave you, told come after 3 months. Middle, don't disturb me. I already told you come after 3 months, right? So during those 3 months, you do whatever you want with the bill. I am not bothered at all. As a drawee, I will not be bothered. You discount the bill, no problem. You endorse the bill, no problem. Every day, while you endorse it to someone, they endorse it to someone. Every day it is getting endorsed. I don't care at all. When 3 months are getting over, somebody come to me, show the bill, I will make the payment. Is this clear? Yes. Now, on maturity date, what can happen? On maturity date, what can happen? Honor. First, you should think positive in life. Honored. Dishonor, why it's coming out of your mouth? First, honored. If it is not happening, second thing is dishonored. Clear? If bill is honored. Okay? If bill is honored. Who is paying? Bambani is paying. Clear? If bill is held, that means you only kept the bill. That means who is making payment? Bambani is making payment to Arnav. So bank account debited to bills receivable. If bill was discounted, who is making the payment? Bambani is making the payment to bank. No entry. Who are you? You are Arnav, right? Bambani made the payment to bank. For you, what is the situation? Nothing. Bill is endorsed. Bambani made the payment to Chetan. Who are you? Arnav. So no entry. Is this clear? Now, in the books of drawee, whoever comes and shows the bill, you will make the payment, right? So bills payable account debited to bank. Whether Arnav only came and showed the bill, bank showed the bill, Chetan showed the bill, doesn't matter. Bills payable account debited to bank. Is this clear? Any doubts with this? No. Now, second thing, negative. Bill dishonored. Okay, bill is dishonored. If bill is dishonored, let's say you kept the bill. Okay, Arnav has kept the bill. Arnav went to Bambani. Bambani told, get lost. Okay, what will happen that time? Dishonor, right? So now, reverse. Bambani will come back as debtor. Once upon a time, Bambani was debtor in your books. You told Bambani gave me bill. So Bambani you told bye bye and sent him from debtor position. Now because the payment is not received, Bambani is back as debtor and bills receivable is credited. Bills receivable is gone. Clear? If bill was discounted, who will go to Bambani? Bank will go to Bambani. When bank does not get the money, what bank will do? Will they give you a call and tell hi? No, they will directly take the money from your account. So, when they take money from your account, will you just ignore that? No, you will start making calls to Bambani. So, Bambani account debited to bank. Clear? If the bill was endorsed, who will go to Bambani? Chetan will go to Bambani. If Chetan does not get the money, like bank did, can Chetan also take money from your account? No, only bank has that power. So what Chetan will do? Chetan will start making calls to you. And you will start making calls to Bambani. So Bambani is back as debtor and Chetan is back as creditor. So Bambani account debited to Chetan. Is this clear? Now, register it in your head. If bill is dishonored, always drawee only will be debited. If bill is dishonored, always drawee only will be debited. If the bill was with you, 2 bills receivable. If the bill was discounted, 2 bank. If the bill was endorsed, 2 endorsee. Is this clear? Now, if bill is dishonored again, okay, the books of drawee is always very simple. Whatever you want to do, I am not paying. Okay, bills payable account debited to Arnav. Bills payable is gone. Arnav comes back, keeps calling again and again, becomes a creditor. Are you getting this? Are you following this? Okay, this is when bill is honored and bill is dishonored. Now next, noting charges. What is noting charges? Amount that you are supposed to pay to lawyer. For what? Fees paid to notary public. For what?
To write the truth.
To write the truth.
Like, it's not true.
Yes.
Document
Okay.
So attesting the fact that this is dishonored.
Yeah, attesting the fact that bill is dishonored. Now Arnav did not get the money. If Arnav goes to court and there Bambani comes and tells, I have made the payment, what are you talking about? Clear? Then court has to bear the headache now of proving who is right, who is wrong. So what they are telling, before you come to court, take your bill which you did not get the payment, go to a notary public. Notary public is a lawyer. Okay, who has the right to become a notary public. There are some exams and all that you forget about it. Notary public, everywhere on the road you'll find some or the other notary will be there everywhere. Okay, notary public to note the fact of dishonor. That means when you go and tell them that I have not received the money, what will that person do? That person will contact the drawee and tell you to make the payment. Tell the drawee to make the payment and ask your bank statement to check actually whether the payment has come or not. Then after they have confirmed the situation and then they will note. Okay, basically they'll write dishonored and they will sign. Now it is easy for you to take it to court and prove your case. Is this clear? Now, bill was held. That means you had the bill. That means who will go to lawyer? You will only go to lawyer. So Arnav had the bill. So Arnav only will go to notary? No. So if Arnav goes to notary, who will pay the notary public's fees? Arnav only will pay. Noting charges account debited to bank or cash account. Wait a second for that. He's just at the lawyer's office now. Just now at the lawyer's office he made the payment. After coming back he'll think about it. Oh, extra money went from my pocket. Wait for that. Okay, noting charges account debited to bank. Now if I just leave it like this, noting charges is an expense, it will go to P&L, right? If it goes to P&L, it's considered as my expense. But why should it be considered as my expense? Somebody's mistake, I'm paying extra money to the lawyer. So then what he will do, that also he'll put on Bambani's head only. Bambani's account debited to noting charges. You can combine that. Okay. I have seen people when I give them tests and all, okay, they write, they can combine that entry. But if you combine the entry and if you write like this, Bambani account debited to noting charges, then you're 100% wrong. Yeah, that is correct. I heard you. Yes. If you write to bank, it's fine. But if you write Bambani account debited to noting charges, that is wrong because noting charges was never debited. So if you write this and then write this, that's correct. Or because bank is debit and credit, it's going to get, noting charges is debit and credit, you can just pass the compound entry, you can pass that also, no problem. Clear? Now, if bill was discounted, who will go to the lawyer? Bank will go to the notary. So bank will pay the money to the notary. Then bank will not sit quietly. When they are taking the money of the bill, no, bank will take the money of the noting charges also. So it becomes Bambani account debited to bank. Bambani account debited to bank. Yes. Now, if bill is endorsed, who will go to the notary? The endorsee. In this case, Chetan. Chetan will go to notary. Chetan will pay the fees. But will Chetan keep quiet? No, he will tell you have to pay that money to me. What will you do? You will start asking Bambani. So Bambani account debited to Chetan. Is this clear? Again, just like dishonor, all the cases, Bambani is going to be debited. Bambani is going to be debited. If it is you held the bill, that means that money is going to go from your pocket. If it was bank has taken it, so to bank. If it is endorsee, to endorsee. Is this clear? Any doubts with this? Now, for Bambani, what is the thing? They have to pay money. Noting charges account debited to Arnav. You can't write noting charges account debited to bank. If you write this, 100% wrong. Why? Main bill amount only is pending. You think he'll pay the noting charges? Are you getting my point? Main bill amount only is not paid till today. Okay, do you think he will keep that bill amount pending and send the 200 rupees noting charges? No. So this will get added to whatever was payable. Clear? Is this clear? Okay. After that, then we'll go into renewal of bill. What is renewal of bill? That means person is not bad, time is bad. Okay, person is not bad, time is bad. He does not have a plan of cheating you. Okay, just that at that time he does not have money. So what he will do? He'll come and tell you, I need more time. So we'll cancel the old bill and one new bill will be drawn and accepted. But you are not too nice. Once you trusted. Correct? So now what will happen? Now you will not give. I'm talking about bill. Why you are laughing, man? Okay. Now, now, what will this person do? When new bill is drawn, are you getting my point? Say, two things only can happen in this marathon. Either this fellow's graph will go up or because of me, his graph will go down. Only two things can happen. It will never remain stable in my class. Okay. And the chance of the second one is higher. You know that, right? I usually ensure that the graph goes down only. Okay, simple logic I have. Okay. I am not against relationships. Okay, I am not against. Don't think that, oh, this fellow full villain is in my relationship. No. Okay, I am not against relationships. You know what I am against is getting into relationships now. I am against getting into relationships now. I am not against getting into relationships before or after. I'm not against the fact of you getting into relationships before this or after this. For example, I'll tell you, if at all there is someone in this class who is in a relationship from 3 years, I don't care. You'll 100% pass the exams. You'll 100% pass the exams. You know why? All the interesting part of the relationship is over. Okay, it's already over. Okay. Or if you're getting into relationship after your exams, that time it doesn't matter. There is nothing to distract. But if you're planning to get into relationships now, usually the first 1 year of the relationship, no, is like the beautiful phase. Okay. Whatever happens, you feel there is no outside world only. Correct? First 1 year, first 6 months, whatever time period. Okay. Even if they send good morning also. Oh, what a nice good morning message I got. Okay. And without good night message, you will not feel sleepy only. Oh, I didn't get good night message. I have to get good night. Then only my eyes will close. Okay. All this will happen. Some forward. Okay. Instagram forward, whatever. Some forward. Somebody has made some 3-4 beautiful lines. When they send, you will see the deep meaning of that. Wow. This means so much. Okay. So everything, basically your life will be they are outside the bubble. What I'm trying to tell you is, if at all you get into relationships now, your bubble will be only this much. ICA will be sitting here and keeping an eye on you. Are you getting my point? So usually I tell, like for example, when I finish my class and all, I tell, okay, if at all you are writing the May exam, okay, and I just tell, it's not cursing. I just tell the reality. I'll tell you. If you're like, for example, you're writing the May exam and you're planning to get into relationship now, okay, forget about me. Forget about me. May will not happen. I'll guarantee you. Okay, May will not happen. September also won't happen. If Jan 2026 happens, you're lucky. Huh? Yes. If Jan 2026 happens, you're lucky. I'm telling you. You're lucky. Yes. If people who are just getting into relationships, right? Okay, this attempt will not happen. Next attempt, if it happens, you're lucky. You're not in that because yours is the old story. Okay. Don't think I'm telling it to you. I'm just generally telling you. Okay. And in future, whatever the next attempt, whichever is there, that will happen. But that again, it depends on your what do you say, commitment towards the course. This is the journey of CA course. Okay, you are here, CA foundation. You have to reach here, not for CA final. You have to reach here, end of the journey. Convocation. Correct? Now, this is one alternative path. Sometimes you go outside the track and you'll be standing over here. From here, no. The end goal is always visible, but it's very difficult to come back to the track and go here. If you are in this track and if you are not making it, you will surely make it. If you are in this road, you can see the destination. Okay, maybe the vehicle which you are going in is going slower. Okay, it doesn't matter. You'll still make it. But when you go outside the track to find the way back to the original road and go, it's very difficult. I'm telling you, it's very difficult. Okay, you know the percentage of people who clear, right? The people who go take an alternative route. I'm not telling that you went into a relationship only. There are a lot of people who stop studying and they go into working and then trying to make a comeback into studying. It's very difficult. It's not possible at all. It's very hard. Maybe 5% of the people will be making a comeback and clearing. Otherwise, it's not possible. Okay, if you are on the road, even if you're going slower, it doesn't matter. You'll still reach the destination. Okay, so if you're planning to get into relationships now, okay, this is not the time, guys. Okay, if you are already in a relationship from some time, good. I'm telling you, those people pass. Okay, those people pass because they'll have dedication, right? They'll be like, what is there to talk? But if you are in the first year of your relationship, then you'll be like, even if there is nothing to talk, you won't drop the call. You'll be like, then? Then the other side also will be like, then? Okay, first year, it will be then only. You don't want to drop the call. Okay, so everything can wait. Okay, we'll keep that pending. If the person is true or if the person is real, they'll be there. 6 months later, 8 months later, whatever, they'll be there. Okay, doesn't matter at all. Yes, let's continue, guys. Renewal of bill. What does renewal of bill mean? Yes, time is bad, person is correct. Okay, now more time is asked by drawee. When they ask more time, we cannot sit quiet. That old bill is gone, no. Old bill is cancelled. For cancelling the old bill, it is nothing but a dishonor entry. Cancelling the old bill, nothing but a dishonor entry. Drawee account debited to bills receivable, bank or NDOC. Is this clear? Now, bills payable account debited to drawer. Whatever dishonor entry you are passing that time, same thing. It's not going to change at all. Clear? New bill accepted. New bill accepted. Okay, so what are you going to do over here? First, interest. Now, as a person who has already trusted once, but you did not get the money on time, don't you think you will ask interest? 100% you will ask interest. Now, when you ask interest, don't you think there are two possibilities? You are a person who is still having some doubt. So, you will tell pay interest now, bill amount you pay later. You might tell, still you are having extreme trust on the person. You might tell pay the interest also along with the new bill. Possible? Correct? In the question, they will tell specifically interest is paid now or interest is added to the new bill. Okay? Interest is paid now. Interest is paid now. For you, you are the person who is receiving interest. So cash or bank account debited to interest account. For this person, it is the person who is paying interest. Interest account debited to cash or bank account. Clear? And new bill is drawn. No. New bill has no connection with the old bill. New bill has no connection with the old bill. Is it true? What? Yes, same amount. New bill and old bill will be same amount because interest is already received. Okay, so you'll pass an entry, bills receivable account debited to drawee. Here, drawer account debited to bills payable. Whatever is the old bill amount, this will be the same thing. Interest is already paid. Okay. If interest is added to new bill, what will you do? You will still pass the interest entry because accrual concept you follow, right? Accrual concept. Drawee account debited. Here, what did you pass? Cash account debited because you got money. Here, you're going to pass the entry drawee account debited to interest account. Clear? Here, you're going to pass the entry interest account debited to drawer account. Accrual concept. Clear? Then, bills receivable amount will be debited. Old bill plus interest. Old bill plus interest to drawee. And here it will be drawer account debited to bills payable, old bill plus interest. So, simple thing you have to remember. If the bill is, interest is paid now, old bill will be equal to new bill amount. If interest is not paid now, new bill will be old bill plus interest. Clear? Yes. Retirement of a bill. Always think people will not be bad. Sometimes people will be good also. Okay. Retirement of a bill. Somebody came and told you, I'll pay you early. But if they are going to pay you early, you have to give them discount. That discount is called as rebate. It's called as rebate. So, bank account debited, you didn't get the full amount. So, it's going to be rebate account debited to bills receivable. Rebate is a loss for you. For the person paying, bills payable account debited, you didn't pay full amount. So, discount received is nothing but rebate. Is this clear? Okay. After that, bills for accommodation. Okay, this is a very important topic because most of the times exam they ask bills for accommodation only. Now bills for accommodation, you know what? I don't know why people are struggling. Whatever bills of exchange concept is there, no, same thing. Same thing you're supposed to pass journal entries. Only thing different is two things. Ledger creation. First one is interest calculation, no. The discounting charges. The discounting charges for the second bill. You have to remember one thing. In the first bill, whatever amount, whatever ratio you shared the amount, no. Same ratio you will follow for the second bill also, discounting charges. Okay. Another thing is, later you don't know who has to pay to whom. So prepare a ledger and see. If that ledger has debit balance, that means you have to get money. If the ledger has credit balance, that means you have to pay money. Clear? There might be multiple transactions. No. First bill is drawn, that is not done. Second bill is drawn again. So many circle of transaction it happens. So later you don't know actually who has to pay money to whom. Okay. So draw a ledger. As a working note, you just draw a ledger. Just post all the journal entries that you have written. That time you will get to know whether it is debit balance or credit balance. If it is debit balance, that means you are supposed to get money. It's a debtor. If it's a credit balance, that means you are supposed to pay money. Clear? So now, bills for accommodation means what? Two people are there who have no business relationship at all. Who have no business relationship. Starting when I told you about that Arnav and Bambani's journey, where did the story start? Sold goods, correct? It started with sale of goods. Here there is no sale of goods only. There is no sale of goods. Nobody sold goods to anybody. But both the people are in need of money. So what did Chetan tell? I will draw a bill on you. You accept it and give it to me. Now obviously Mohit will ask, no, what is the benefit for me? Correct? He's like, okay, I will sign and give. Now Chetan will take that bill to the bank, discount it, and whatever money he gets, he's sharing it with Mohit. He's sharing it with Mohit. On due date, who has to pay to bank now? Mohit has to pay 50,000 to bank. But did Mohit enjoy full 50,000? No. So what Mohit will do before due date, Chetan has to pay 24,000. Why 24,000? That was Chetan's money which he enjoyed. Plus his share of discounting charges. He will put 25,000 to Mohit. He'll give 25,000 to Mohit. What will Mohit do? 25,000 he got. 24,000 he had with him only. That he will put, and 1,000 extra, the discounting charges which is there, his share, he will put, and 50,000 he'll pay it to the bank. This is basically a tool or a mechanism where people are using bills of exchange for short-term funds. For short-term funds. Is this clear? Now, on the due date, if Mohit does not pay the bank, what will bank do?
Chetan.
They will just take it from Chetan. They will not call Chetan, they will just take it from Chetan because bill discounted if it is dishonored. Money goes from the drawer's account. Money goes from the drawer's account. Clear? Now what happens? It becomes a vicious cycle. Now what happens over here? One person did not give the money back. So now Mohit will be like, I will draw a bill on you now. You accept it. I will go to bank and discount it. Then we will share the amount. That's why second bill and all comes into picture whenever bills are for accommodation situation is there.
In real life, how many times the cycle?
Huh?
In real life, how many times the cycle?
Until somebody runs away. It will become, see, now what will happen? You will keep drawing bigger and bigger amounts. Your needs will never be satisfied. No. It will be bigger and bigger amounts. You are looking at someone who is like you. Huh?
No, sir. Question.
Yeah, because you also asked this question in regular class. That's why I said. Okay, see, just becomes a bigger and bigger cycle. So finally what will happen? One person is unable to pay the other person and the other person is unable to pay the bank. Either both will run or one person will run away. Okay, it's actually a big trouble. So usually just for short term funds if they need, they use this tool.
So now also it works.
It works, but you should have that bill. Now you cannot go and discount a bill with the bank because you don't have a discounting facility only. It is like, can you go and take 500 rupees is there in your account? Can you stand in front of the ATM and tell, oh ATM, can you give me 800 rupees? Will it give you 800 rupees? No, because you don't have OD facility. Are you getting my point? But if somebody has OD facility, having 500 in the account, they can actually take 800. Clear? Same way, bill discounting facility if you don't have, you cannot go and give bill to the bank. Are you getting my point? They will tell, make a boat and leave it in water. I am not giving you water. Okay, you leave it in water. Is this clear? So, remember this, bills for accommodation, you need to have the facility. And obviously, bank is checking your background when they're giving you that facility. Somebody having a transaction of 10 lakhs, the bank will give you facility of 5 lakhs. Okay, bank also is staying on the safer side. Okay, yes, but it can be done many number of times. Now, discounting charges. This is the major note I want to tell you. Discounting charges must be shared in the same ratio in which the amount is shared. Which amount? The first bill amount. Now, second bill, the amount might be shared in different ratio. But still the discounting charges will be shared in the same ratio in which first bill was shared. Why? Why is that? Because second bill came into picture just because first bill was not settled properly. So second bill is a chain reaction of the first bill. Therefore, second bill also what you will do, discounting charges will be shared in the same ratio in which the first bill is shared. Is this clear? Are you following this? Okay. At the end of bills for accommodation question, please prepare ledger to find out how much is to be received or paid. Only then you will get to know. Then you will know whether you will receive or not. In the question only they will tell you 30% is collected or recovered or all that they will tell you. Okay, one extra point is that bills for collection. Bills for collection. What is this bills for collection? Bills are given to the bank. Bank is not giving you money. Bank is just doing the follow-up job. They will follow up with the customer, collect the money and put the money into your account. Clear? Now, bills handed over to bank. Bank will keep track of the due dates. Bank will collect the amount from drawee. Bank will charge bank charges. Why? Because they are actually giving you one facility, right? Okay. Now, when the bill is given to bank for collection, your bill is gone, right? So, you will pass the entry, bills for collection account debited, to bills receivable. When bill is honored, bank account debited, to bills for collection. When bill is dishonored, bank will give the bill back. So, drawee account debited, because bill is dishonored. When bill is dishonored, always drawee, to bills for collection. Is this clear? That is your bills of exchange concepts. Okay, all this you need to know and then you need to solve problems. Let's see what problems we have in life. We'll do that. Problems you'll see. Okay, inventories, bill of exchange, SM4. I like all these problems from SM. Katrak, Don, Bob. We never have to forget them. Okay, they revise all your concepts. Okay, like how in final accounts you have Ganguly and Gavaskar. Okay, now let's go further, guys. Question number 13 from bills of exchange. That will play later. Otherwise, I see you will play Kerem with this. One second, guys. Yeah. 13th question, bills of exchange SM4. Okay. Now, journalize the following transactions in K. Kathrak's books. This is one of the deadly question which is there in bills of exchange. Okay. Now, let's go into bills of exchange. Question number 4. Actually, solving many questions is equivalent to solving this one. It will revise everything. Okay. Kathrak's acceptance to Basu for 2500 discharged by a cash payment of 1000 and a new bill for the balance plus 50 rupees interest. Kathrak's acceptance. Who are you in this question? Kathrak. Kathrak's acceptance to Basu. That means for you it is bills payable. So bills payable account debited, gone. Okay. But you are going to pay extra. So interest is an expense. Interest account debited. 2. What are you giving? Cash payment of 1000. So 2 cash. Okay, 1000. 2 bills payable. So balancing figure will be bills payable. Is this clear? Are you following this? Now, Gupta's acceptance for 4000, which was endorsed by Katrak to Mehta, was dishonored. Mehta paid 20 rupees noting charges. Bill withdrawn against check. Now understand, who are you? You are Katrak. Gupta's acceptance of for 4000, which was endorsed by Katrak. If you are endorsing something, that means somebody gave you the bill. Who gave you the bill? Gupta gave you the bill. Correct? 4000. For Gupta, it is bills payable. For you, it is bills receivable. What did you do? You endorsed it to Mehta. Okay, you endorsed it to Mehta. Was dishonored. So what will Mehta do now? Mehta went to lawyer and incurred 20 rupees noting charges. But Mehta will ask you money and you will ask Gupta money. Correct? You will ask Gupta money. So now what will happen? Mehta becomes creditor and Gupta becomes debtor. So Gupta's account debited to Mehta's account 40204020. Withdrawn against check. That means you are making payment to Mehta. Mehta account debited to bank. Clear? You are making payment to Mehta. Mehta account debited to bank. But Gupta has not given you money yet. Dalal retires a bill for 2000 drawn on him by Katrak at 10 rupees discount. This is just retirement of a bill situation. Okay, retires the bill at 2000 drawn on him by Katrak, 10 rupees discount. So what will happen? Bank account debited 1990 only you will get. Discounting charges or discount account debited 10 rupees. 2 bills receivable 2000. Clear? Now, last one is beautiful. Katrak's acceptance to Patel for 5000 was discharged by endorsing Modi's acceptance to Katrak for a similar amount. Bills payable to bills receivable. Why? Katrak's acceptance to Patel. That means Katrak has given one bill to Patel, discharged by endorsing Modi's acceptance to Katrak. Modi has accepted, given one acceptance to Katrak. So now what happened over here? Katrak gave acceptance to Patel, no? For you it was bills payable. For Patel it was bills receivable. What did Patel do? Patel endorsed that to Modi. So now this Modi, what he did? He has to make payment. He gave the amount to Katrak back. So it became one full cycle. So actually, when you get someone endorses the bill to you, for you it is bills receivable. But someone endorsed your own bill back to you. So that time bills payable account is gone and bills receivable is also gone. Clear? Bills payable account debited to bills receivable account. Is this clear? Once again, yes. All the entry. Okay. Katrak's acceptance to Patel. Okay, that means we have Katrak over here and we have Patel over here. Okay, Katrak's acceptance to Patel means for Katrak in his books it is bills payable and for Patel in his books it is bills receivable. Okay, then they said was discharged by endorsing Modi's acceptance to Katrak for a similar amount. So Modi's acceptance to Katrak. That means we have Modi. Okay, for Modi it is
Bills payable.
one second. Katrak is bills receivable. Katrak is bills receivable. How can you discharge this now? So basically what Patel has done, Patel has endorsed the bill. This bills receivable, Patel has endorsed the bill. So now this bills receivable came over here. So what this fellow did, he endorsed it back to Katrak. So now Katrak's own bills payable came back to him for this bills receivable. So bills payable is gone and bills receivable is also gone. Bills payable account debited to bills. So first this fellow would have passed an entry, Patel account debited to bills payable. Then this fellow would have passed the entry, bills receivable account debited to Katrak. And here this fellow would have passed an entry, when he received that bill, bills receivable account debited to Katrak. And also Modi has one acceptance over here. Okay, so Modi has also told Katrak's account debited to bills payable. From when this bill comes back, here actually this fellow has to write bills receivable account debited to Modi. Okay, now bills receivable and bills payable just get cancelled with each other. Is this clear? Modi, Patel, everybody will be gone and these two bills will get cancelled with each other. This is one very important question from bills of exchange. Without studying this, you should not go only to the exam. Clear? Yes. 14th question, which is bills of exchange SM9. Bills of exchange, study material question number 9. That is also a nice and small simple question. No tension at all. Accommodation of a bill. Now, normal accommodation of bills we know. One person draws on another person, that fellow went and discounted it, shared the money, then like that only the story continues, correct? But this one is very important because nobody is discounting the bill, but it's accommodation. Clear? Now understand this question. On 1st July 2022, George drew a bill for 1,80,000 for 3 months on Harry for mutual accommodation. Clear? Now first you understand, always bills of exchange question, you have to go to the end of the question when you start solving, not the starting of the question. End of the question. Go to the end of the question and see in whose books they are asking you. Once you get that, then you will be able to pass the entries. Because when you know that you are passing entries in the books of Harry, then you will think from Harry's angle. Now you are only Harry. Correct? In the books of Harry. Then we will think as George. Then we will think as Jack. Clear? So first, if you are Harry, you have to worry only about Harry. Other people are irrelevant to you. Now, George drew a bill for 1,80,000 on Harry. Somebody drew a bill on you. You are Harry now in this entire case. Somebody drew a bill on you. So what is the situation for you? George's account debited to bills payable account. George's account debited to bills payable account. Clear? Now, Harry accepted the bill of exchange. Okay, very good. George had purchased goods from Jack. Ignore. George purchased goods from Jack. Something happens in your neighbor's house. Will you pass entry in your house? No. But you'll still be interested what's happening on the same day. Correct? Correct. You'll see what's happening in neighbor's house. That's more interesting than what's happening in your house. Okay. George endorsed Harry's acceptance to Jack in full settlement. What did George do? He endorsed Harry's acceptance. Okay. To Jack. What should you do? Nothing. You had accepted the bill. That fellow went and endorsed something. Why will you bother? Nothing. On 1st September, Jack purchased goods worth rupees 1,90,000 from Harry. Jack purchased goods worth rupees 1,90,000 from Harry. What should be the entry for this?
Sales entry.
Who purchased? Jack. But who are you? Harry. Jack's account debited to sales account 1,90,000. Clear? Now, Jack endorsed the bill of exchange received from George to Harry and paid 9,000 in full settlement. Your own bill had gone into that fellow's pocket. Okay? Now understand this. There is one person called as Harry. You are Harry. And you gave the bill to George. What did George do? George gave the bill to Jack. Then Jack gave that same bill back to you. Jack gave that same bill back to you. So now what happens? But you have to get 1,90,000 from Jack. But the bill is only 1,80,000. So what happens? 9,000 is paid in full settlement. That means 1,000 rupees gone. Correct? Now, bills receivable account debited. Okay. Bank account debited. Discount account debited to Jack. And then they have done bills payable to bills receivable. Here only directly you could have written bills payable account debited. Here only directly you could have written bills payable account debited. Because your own bill you got back. No. Whenever somebody endorses bill to you, it is always bills receivable. But when your own bill is getting endorsed after a full circle back to you, instead of writing bills receivable, you can write bills payable. ICA likes to follow different methodology for different questions. In that Kathrak's question, they wrote directly bills payable to bills receivable. Okay, so here they are showing step by step. Is this clear? Did you understand this? Okay, now finally, after all this, on 1st October, Harry purchased goods worth rupees 2 lakh from George. Are you Harry? Yes. Yes, you're Harry. So what should be the entry? Purchase account debited to George 2 lakhs. Now, Harry paid the amount due to George by check. Now, amount due to George means you'll think, oh sir, I have to pay 2 lakh. Huh? No, you have to prepare ledger and see. Amount is only 20,000 actually. You have to prepare ledger and see. You'll get only 20,000. How? Now see over here. Whose ledger you have to prepare? George. In this first entry, do you have George? Yes, George is debited for 1,80,000. Right, 1,80,000 on the debit side. Second entry, do you have George? No George. Is there George? No George. Is there George? No George. Last entry, do you have George? Yes, purchase account debited to George, 2 lakhs. 2 lakhs. Now, debit is more, credit is more. Credit is more. So 20,000 is payable. You have to pay 20,000. So what you will do? You will do George's account debited to bank 20,000. Any accommodation of a bill question, you cannot come to a conclusion anywhere. You have to prepare ledger and see whether it is payable or receivable, or what is the amount that is payable or receivable. Clear? Now, if you see this question from whose angle now? George's angle. Just now we saw Harry's angle. Next we are going into George. Now, George's angle, if you see the question, see over here. George drew a bill, okay, on Harry. George drew a bill and Harry accepted it. What is the entry? Bills receivable account debited to. Sorry. Who drew a bill on? George drew a bill on Harry. Bills receivable account debited. They just interchange the entries. Next purchase is actually the next entry. They interchange the entries. Bills receivable account debited to Harry. Next, after that, what happens? George purchased goods worth rupees 1,81,000 from Jack. Are you George? Yes. So you'll pass the entry. Purchase account debited to Jack. Both are happening on the same day, but they just interchange the entries. Clear? Next, George endorsed Harry's acceptance to Jack in full settlement. George has endorsed the bill. So now what you'll pass the entry? Jack account debited. Okay. Jack account debited. 1,81,000 gone. But you're giving him what? Only 1,80,000 ka bill. Jack account debited. 1,80,000 gone. You are getting discount or you're giving discount? Your discount received. You are paying Jack, no. But you are paying less, no. So if you're paying less, it's good for you, right? So 1,000 is discount received. Is it clear? Next, after that, what do we have? On 1st September 2022, Jack purchased goods worth rupees 1,90,000 from Harry. Who are you? You are George. Ignore. Jack endorsed the bill. Received from George. Who are you? What, do you have to bother? No. Okay. On 1st October 2022, Harry purchased goods worth rupees something from George. Are you George? Harry purchased goods from you. That means what should be the entry? Harry account debited to sales account. Finally, there you saw, no, Harry was making payment. So obviously this fellow has to get money, no? Harry was making payment, so this fellow is receiving the payment. So finally the entire thing from Jack's angle. First, can you see what is happening? You are purchasing goods from Jack. So here it is sales to George. Okay. Then some bill is endorsed to you. Bill was endorsed that time. You are getting a bills receivable. What did you do? You purchased goods from Harry and gave this bill only. Okay. And that bill is basically you are getting 1,000 rupees discount over there. This entry you will find in the books of Harry. This entry you will find in the books of Harry. And this entry you will find in the books of George. Just the opposite image or the other side of the story we are seeing over here. Is this clear, guys? Okay. Done. Now, next. We'll go into the next thing. Okay. SM practical question 3. I think your best friend. SM practical question number 3. There is a question. Oh, sorry. Yeah. 1, 2. Hey, that is a solution, right? We need the question. Okay. Here. Yes, we got it. Question number 3. Journalize the following in the books of Dawn. Who are you? Dawn. Okay. Who are you? Dawn. Shah Rukh Khan. You know, there's a movie of Shah Rukh Khan, Dawn. Dawn 3 Shah Rukh Khan is not there. Ranveer Singh it is. No fun with it. I am not a Shah Rukh Khan fan, but in Dawn he has done well. I mean, it suits his character. What?
Change the direction.
No need, no need. We'll change the direction of our life by listening to Marathon. Okay, Dawn. You are Dawn now. Dawn changes other people's life. Okay, don't ask me to change anything. You change it. Now, journalize the following in the where are your multiple jackets? You didn't get one also. Huh? Okay. Journalize the following in the books of Dawn. Now, this question also, just like Atrak, it is little different. You know why it is different? In bills of exchange, no, you like it when the story starts from the start point and goes to the end point. Nicely, you will go on passing entries. When they dive directly to the point, you don't like it. Someone talking to the point and all, you don't like it. You want little from before the build-up has to be given. Okay. So now, Bob informs Dawn. Who are you? Dawn. Bob informs Dawn that Ray's acceptance for 3,000 has been dishonored and noting charges 40. Now, you are Dawn, right? You are Dawn. Ray's acceptance, if at all Bob has to tell you Ray's acceptance is dishonored, that means what?
Be endorsed.
It should have been endorsed. Otherwise, why is he bothering and telling you somebody's acceptance is dishonored? Why will he come and tell you? So basically, Ray had accepted. So for Ray it was bills payable, and for Dawn it was bills receivable. And Dawn has endorsed this bill to Bob, and Bob went and asked the money. Did not get the money. Did not get the money. So now what Bob did? Bob has informed you. Okay, Bob informs Dawn that acceptance is not there. What should be the entry? And also 40 rupees noting charges. What should be the entry?
Reverse entry.
What should be the entry? What is the reverse entry?
Roy.
Ray to Bob.
Okay, Ray to Bob.
Ray to
Bob.
Bob. Correct?
Noting charges.
Ray to Boba. Are you sure? Yes. Who you are supposed to pay now? Who you are supposed to pay?
Bob.
Bob, sir.
We are Dawn. That's all we know. Other than it, Bob and Ray, they are coming and talking something. We don't understand what's happening also. Okay, Ray is informed. Bob is informing you that acceptance did not happen. So now you are supposed to make payment no to Bob. Are you getting my point? You are supposed to make the payment to Bob. So Bob will be bills payable. But no bills payable and all right now. It's just Ray account debited to Bob account. Okay, Ray account debited to Bob account. The first one is a little irritating. Ray's account debited 3040 to Bob 3040. Clear? Okay. Bob accepts 1000 rupees cash. Bob is like, okay, 1000 rupees I will accept cash. And balance as bill at 3 months at interest of 10% per annum. That means Bob is still you have to pay money to Bob. Okay, now what will happen? Bob account debited 3040 to.
So interesting.
Wait. Patience, sabr. Okay. Now, what will we do? We have to have interest also. Now, how much is the interest? Interest will not be on 3040. Interest will be on 2040. Why? 1000 rupees cash. So, to cash 1000 rupees. Okay, interest is expense or income?
Expense.
Expense. Yes, because you are supposed to pay interest. Interest is an expense. So, what you will do? Interest account debited. Interest account debited. Is that right? Yes. Now, how will you calculate? 3040 into the percentage is 10% into how much time did you ask? 3 months, 3 by 12.
51 rupees.
51 rupees is interest. Interest is paid now.
No, sir.
No, it's paid in future, right? So, 2 bills payable 2091. No, it's 51. 2091. Is this clear? Are you following this? Okay. Now, I can just show quickly the solution to you. Now see, Ray to Bob. Okay. Can you see these entries? Okay. Bob is gone, but he's giving you more time. So there is interest, and then you are going to pass the entry. What about the next person? What about the next person? Don accepts from Ray his acceptance at 2 months plus interest at 12%. So what is Don telling? Don is telling okay. Okay, Don is telling okay. From Ray he's accepting. Accept from Ray his acceptance for 2 months. So now whom you are supposed to pay, you have settled that. Now whom you are supposed to get money from that person, that also you are settling. You are giving only 2 months time, but you are charging 12% interest. Are you getting this? So now Ray is gone. No, what is Ray giving you? Bills receivable. Bills receivable account debited. Any cash and all immediately? Nothing. So 3040. No. Wait, 2040. You're talking about this.
No, we are talking about
Oh, okay. This one is 2040. Yeah. Because we calculated on 2040. Just wrote there 3040. So now, what we are going to do, Don accepts from Ray's acceptance at 2 months plus interest at the rate of 12% per annum. So Don accepts from Ray. That means you are getting or you're giving. You're getting. So you're going to write bills receivable account debited. Bills receivable account debited. To what? To what? Who is the person going? 3040. But you are going to get little extra. So it's going to be to interest account 3040 into 12% into 2 divided by 12. 61 point?
60 point.
Okay, take it as 61. So this will become 3101.
Sir,
What man? Yes, they have taken decimal. Ignore. You round it off. Don't keep pice and all. 3101 it is. They have written 3100.8. Is this clear? This is the entire situation for that particular case. Now, James owes Don 3,200. Who are you? Who are you? Don. James has to give you money. Correct. James has to give you money. He sends Don's own acceptance in favor of Ralph for 3160 in full settlement. My own acceptance came back to me. Bills payable account debited to bills receivable. Bills payable account debited 3160. Okay. Discount allowed account debited 40 rupees to bills receivable 3200. Correct? No. Wait. James owes Don 3200. Yeah. He sends Don's own acceptance. Bills payable is only 3160. Okay, quickly we'll have a look at that as well. See here, bills payable account debited. They have passed bills payable account debited, discount account debited to James. Because they never told bills receivable there, they just told James owes money. Everybody who owes money does not have bills receivable situation, no. Are you getting my point? Somebody has to give you money. Will it always be bills receivable? No. Okay, it's just a person who is supposed to make payment. Now, next, let's go further. Don meets his acceptance in favor of Singh 4,500 by endorsing John's acceptance for 4450 in full settlement. Don meets his acceptance in favor of Singh. Don has to pay money to Singh. Don has to pay money to Singh. Okay, how is he giving? He is giving John's acceptance of 4450. That means you are giving bills receivable where you are supposed to have bills payable. Okay. So 50 rupees obviously you are going to get a discount over there as well. So bills payable account debited to bills receivable to discount. You can call it as rebate as well. Okay, bills payable account debited to bills receivable to discount. Is it clear? Because bills pay, what you are supposed to pay was 4,500, but what bill you gave was 4450 and remaining everything was discount. Clear? Last thing over here. Last thing. Ray's acceptance in favor of Don retired 1 month before due date. Interest is taken at the rate of 6% per annum. This is nothing but retirement. Okay, obviously there is going to be discount in this, which is going to be called as rebate. Okay, 6%. You are not going to make the mistake of multiplying 6% per annum. Okay, directly 6%, no, 6% into 1 by 12. Okay, now amount is not told only, sir. What is this, sir? Raise amount, that time we only calculated. No, what was the bill for Ray now? 2091, right? New bill, guys, 2091 it was. Okay, so you're going to pass the entry bills payable. Oh, sorry, 3101, 3101. It was the other person, right? Okay, 3101 was the bill. On that, you're going to calculate, let's say 3101 into what was the rate of interest they said? 6% into 1 divided by 12 should give you 15.5, 15 or 16, somewhere you will get that amount. Okay, remaining amount is received. Discount can also be called as rebate. Again, they have used the word discount. Okay, that means they cannot cut marks. They can be used interchangeably, but to stay on the safer side, use the word rebate. Clear? Yes, that should be it with that particular question. Accommodation of bill, there is a question. This one I am not doing because we'll see the recent RTPs. Because in recent RTPs, 100% there is one accommodation of bill situation. Okay. Oh, we have a lot of time. RTP May 2024. Same process will follow. It doesn't matter what time it is. Okay. What? How many? Yeah, actually, I was supposed to drink water. Huh?
Yeah.
Okay, guys, let's continue. Yes. See, I'm going to go on. I'm not forcing you to sit. Simple. I'm going to go on. Yes, bills of exchange. Let's start. RTP May 2024. Chavi owed 1 lakh to Ritu. Chavi owed 1 lakh to Ritu. What entry will you pass? No entry. Before you think, I'm telling you, no entry. Why? Somebody had to give you money. For that, there is no entry. Something happened in the past. Entry is already passed. Chavi accepted a bill drawn by Ritu. Amount is for that amount 3 months. Okay, now go to the end of the question. Past journal entries with narration in the books of Ritu. Who are you? Ritu. Who are you? Ritu. So, what is the entry that you are going to pass? Chavi accepted. So, you're going to pass the entry bills receivable account debited to Chavi. How much? 1 lakh. Okay. Now, Ritu got the bill discounted with her bank for 99,000. Very good. So, what should be the entry? Bank account debited 99,000. Discounting charges debited 1,000. Bills receivable 1 lakh. Clear? Before the due date, Chavi approached Ritu for renewal of the bill. Okay. Ritu agreed on the conditions that 50,000 be paid immediately together with interest on the remaining amount at 12% per annum for 3 months for the balance. Guess what? This exact same question is in the study material. Yes. What should be the situation now? Are you paying? Are you paying? So 50,000 you're going to pay. Correct? So now what you're going to do? If you're going to pass a compound entry, you'll pass the entry like this. Chavi, first you have to dishonor the bill, no? Yes, old bill. So you'll write Chavi account debited 1 lakh to bank account. Bank will not ask. They will just take the money. Okay, there is no noting charges luckily. So now what Chavi is doing? Chavi said half the money I will give you. So bank account debited 50,000. Bank account debited 50,000 along with interest. Bank account on the condition 50,000 to be paid immediately together with interest. Interest will be how much? Interest will be how much? 1,500. How? 50,000 into 12% into 3 divided by 12. So this automatically becomes 51,500. 51,500. Remaining money not getting. So it will be new bill. Bills receivable account debited 50,000. 2. Chavi gone. Bye bye. How much? How much? No, only 1 lakh. 1 lakh. 2 interest 1,500. I pass the compound entry. This can be passed. Otherwise, you have to pass an entry first where you're going to write Chavi account debited to interest 1,500. Then full 1,01,500 you can put to Chavi itself. Is this clear? Now, Chavi should accept a new bill at 3 months. Okay, these arrangements were carried out, but afterwards Chavi became insolvent and 40% of the amount could be recovered from his. Oh. You thought something else? Now it is his here. Okay, Chavi is a guy. Anything can happen in life. Yes, from his estate 40% could be recovered. So what will be the entry? You'll write bank account debited 20,000. Okay, bad debt account debited 30,000. To whom? Bills receivable 50,000. This if you pass, ICA is not giving marks. Yeah, first you should dishonor the bill. You know why? When you are going and selling the estate, no. Today the bill got dishonored. Today only you went to court, and today evening only you sold his properties. Is it possible? No. Okay, it might happen on the same day in the question, but practically it's not possible. So whoever has written this entry, no compound, I have seen that they have not given marks at all. So first what you should do? First you should reverse it. That means you are going to pass the entry. Who is the person? Chavi, right? Chavi account debited 50,000. 2 bills receivable. Then what you're going to pass the entry? Then you're going to pass the entry. Bank account debited 20,000. Okay, bad debt debited 30,000. 2 bills, to Chavi 50,000. Is this clear? This question? Any doubts with this? Okay, shouldn't be a problem. You just have to be careful about the entries. That's all. If compounding is difficult, do it individually. Interest also do it individually. No issues. In the concept we discussed individually only interest actually. We didn't compound it. Clear? Let's go further to RTP September 2024. Did they ask bills of exchange? Obviously. Okay. Adaya owed 1 lakh to Anaya. Accepted the bill. I feel it's same. 99,000, 50,000 to be paid immediately. They put lot of effort and changed the name. Okay, that's it. Next, RTP Jan 2025. Bill of exchange. Somebody sells goods. Okay. Sells goods to Y. First, you don't see that at all. IGST also has come into picture. Go to the end of the question. Pass the journal entries along with narrations in the books of X. Who are you? Somebody's X. Okay. Now, on 1st April, I am not writing dates, but we are just discussing entries. Okay. Why are you laughing at him? Who? Arnav. Okay. X sells goods to Y. Who are you? X. X sells goods to Y. So what should be the entry? In your book, you'll write your name only. No, right? So it cannot be X to sales now. Y is account debited. Y is account debited to sales account. What we learned in the morning, you can't forget in the evening. Okay, so 2 output IGST 18% on 25,000. Please calculate 4,500, and this sales is going to be 25,000. That means its Y has to give you 29,500. Clear? Chapter number 1 just got linked to this chapter. In chapter number 1, everything you learned, only GST part you skipped. Then here, this automatically got skipped. You can't even start the question because you don't know where to put this GST itself. Do not skip concepts. They will link and ask questions. Clear? Next. And draws 2 months bill of exchange on him. Bill of exchange is drawn. Now what you're going to do? Bills receivable debited 29,500 to Y 29,500. Oh, there are 2 bills. Oh, okay. First bill is 15,000. Second bill, this is for 2 months, and second bill is for the balance at 3 months. So what you can do in these kind of cases, just for your understanding, you can write bills receivable 1 debited 15,000 and bills receivable 2 debited 14,500 to Y 29,500. Clear? Y accepts and returns these bills. Good for us. Both the bills are sent to the bank for collection on 1st April. Both the bills, what did we do? We gave it to bank. We are like, I can't follow up with this person, you follow up. So what should be the entry now? Bills for collection account debited 29,500 to bills receivable 1 15,000 to bills receivable to 14,500. Is this clear? After that, this. Next, we go further. In due course, X receives information from the bank on the due date of the respective bill that the bill for 15,000 has been duly met and the other bill has been dishonored. Noting charges paid on dishonor of the second bill is 500. What should be the entry now? First bill is met. So due dates are there. Okay, you follow the due dates. Keep the due dates in mind when you're writing. I'm just giving the transaction. So first bill you got the money. So you're going to write bank account debited 15,000 to bills receivable 15,000.
Sir, bill for collection, right?
Sorry. Bills for collection because it is already sitting over there. Second entry, what? Second one, you're not getting money. So bring back Y. Y is account debited. Y is account debited how much? 14,500. Let's make it 15,000. To bills for collection 14,500 to bank 500. Bank will take the 500 rupees. Bank will not take 14,500 because bank, it's not discounting situation. Bank will take 500 rupees. And why you will ask 15,000? You will ask why to pay you 15,000. Is this clear? Any doubts with this? That's it. That was the question Jan 2025. We'll see what they have asked which is relevant to your exam, May 2025. Bills of exchange. On October 2024. Or same?
Name only same.
Oh, very good. They have put so much of 500 only. They put the lot of effort they have put and they have given the same question. Okay. Now we'll go into exam questions. There, same you will not find too much because I think some recent exam question troubled you a little. Bills of exchange. Didn't it? No. Bills of exchange. Where are you? Prayer. Where is that question? Unnecessarily they give extra questions. I think in June there was nothing, I think, no bills of exchange. Doesn't look like there is anything. June there is nothing. September there is a question, 100% there is there. People have spent a lot of time on that question. Yes, here you go. Jab Harry met Sejal. Okay. There is a movie called Jab Harry met Sejal. Shah Rukh Khan movie, which we didn't understand at all. It was so boring. I watched only first half. Yes. Harry draws a bill on Sejal. Okay. For 60,000. We don't care. First we have to go to the end of the question. Give journal entries in the books of Sejal. Also prepare ledger account of Harry. All working should form part of your answer. Okay. Now, Harry draws a bill on Sejal. Who are you? Whom do you want to be? Not that. It is Sejal. Okay. You want to be Harry, but no, you are Sejal only. Harry draws a bill on Sejal for 60,000 on 1/1/2023 for 3 months. Sejal accepts the bill and sends it back to Harry to get it discounted for 56,000. That we will see later. Okay, first you have to go and pass entry. What will be the first entry? Harry account debited to bills payable. Harry account debited to bills payable. You are Sejal. You are the one accepting it. Okay. Next what happens? Who discounts the bill? Harry discounts the bill for 56,000. Very good. I will keep quiet. I am not bothered only about it. Okay. Harry remits 1/4 of the amount to Sejal. Now I'll be very happy. 1/4 of the amount will be sent to Sejal. Okay. Ignore. Okay. How much is he going to send? 56,000 into 1/4 is equal to 14,000. But Harry lost some money. How much did Harry lose? 60,000 bill. Harry got only 56,000. That means 4,000 is discounting charges. Out of this, if I am sharing 1/4 of the amount, 1/4 of the charges also falls on my head only. So 1000 will be my share of charges. Clear? Now look at the entry. Bank account debited 14,000. Discounting charges debited 1000. To Harry 15,000. Clear? Is this clear? Any doubt with this one? No. Now next, after that what happens? On the due date, Harry was unable to remit his share to Sejal. On the due date, Harry was unable to remit the share to Sejal. So now bank took the money from Sejal. Bank took the money from Sejal. Okay, I accepted the bill. That fellow took to bank, discounted it. If at all I don't pay, then what will happen? Bank will take the money from that guy. Okay, but listen, you have to dishonor the bill, no? Okay, dishonor the bill. So what will you do? Bills payable account debited. Sorry, it was bills receivable. What are they doing? This bill got dishonored, right?
The new bill.
Oh, sorry. What am I doing? Yes, on due date, Harry was unable to remit his share. Okay. Rather accepts a new bill for 80,000 for a period of 3 months. Okay. They're like, I can't give you money, no problem. Now I will accept a bill. Okay. So that becomes bills receivable account debited. Okay. To Harry 80,000. Is this clear? Now what next? I got a bill. What will I do now? Okay. This bill was discounted by Sejal for 74,600. Okay, bank account debited, you are discounting the bill. So bank account debited, but you didn't get full amount. Discount charges debited to bills receivable account. Is this clear? So now, after that, see all this is on 4/4/2023. All this on 4/4/2023. Now, after this what happens? After drawing the new bill and making myself comfortable, okay, that money has come in, what did I do? Sejal, after making the payment of the first bill, sent 3/4 of the amount remaining to Harry. So what Sejal did? Used the money to pay the first bill. Otherwise, money would have gone from pocket. Okay. So now first you have to do bills payable account debited to bank account. Bills payable account debited to bank account. You're not following this cycle of the story, right? Who are you? Sejal. First, what did you do? You accepted a bill. Correct? You accepted a bill. Harry, account debited to bills payable. What did Harry do? Harry went and discounted the bill, but gave you only 1/4 of the amount. Correct? On due date, who is supposed to pay? I am only supposed to pay. Sejal only is supposed to pay. But I got only 1/4 of the amount. No, bills for accommodation situation. So 3/4 of the amount has to be sent by Harry. 3/4 has to come from Harry. It did not come. So what did I do? I drew a bill on Harry. Harry accepted. So I got a bills receivable. What did I do? Took that bill and discounted with the bank. Now I have money, no, to pay the old bill. Otherwise, I had to pay from my pocket. Now what did I do? Bills payable account debited to bank. After that, whatever is there. I'm sending it. Okay. How much was the amount? 15,000. Okay. Harry account debited 15,000 to bank. 10,950. How much did you get? See, simple, no. How much was the amount? 1/4. Did they tell 1/4 again? 3/4. Sorry. So now actually, old bill was 80,000, no? New bill is 60,000. Simple. Old bill is 80,000. New bill is 60,000. So what is the amount now? 20,000. 20,000. What you are going to do? Okay, 3/4 you are going to send. No? Sorry. New bill is 80,000. Old bill was 60,000. So what happened? To pay that 60,000 bill, you did not have money. So what did you do? You have a new bill of 80,000 now. Now extra money which you got, extra 20,000, that is going to be shared. Okay, but shared how? Earlier what was the ratio? 1:3. Now also the ratio is 1:3 only. So 15,000 is nothing but 20,000 into 3/4. 20,000 into 3/4. Bank account debited how much? Okay, now discount will be in what ratio? Same ratio, no. How much is the discount? Can you see this 5,400 discount? I told you, discount will always be shared in the same ratio. So 5,004, they have done extensive calculation, forget that. 5,400 into 3/4 will be 4,050. 3/4, 3:1 or 1:3 is the ratio. Okay. Now remaining amount, you will send the amount to bank. Basically, are you getting this? This was the place where many of you got stuck. This was the place, whoever wrote that attempt, September, they got stuck over here. They're like, what on earth is happening? Actually, nothing on earth was happening. It was very simple. 60,000 was the old bill. To pay that, now I don't have money. So what I did, I drew a new bill. 80,000 is a new bill. Differential amount is there, now 20,000. That we will share. That we will share. But when we discounted, we obviously did not get full amount. So what happens now? 20,000 difference into 3 by 4. Sorry, it is over here. Into 3 by 4, 15,000. Now, discounting charges is how much? Second bill, discounting charges came to 5,400. This also will be shared in the ratio of 1:3 only. Clear? 4050. That's it. I think this was the most crucial entry in this particular question. Now, after that, finally, what happened? Harry account debited to bank. Harry account debited to bank. Why? You know why? That person did not pay. That person did not pay. Now, actually, if you see, both the bills you only paid. Both the bills you only paid. How? First bill, you were the drawee. But that person discounted. Okay, he discounted. And he told, I cannot give you the money. Can you please pay it? So you paid. Second bill, you are the drawer. You went and discounted. Now that fellow as a drawee did not pay. So bank took the money from me. So both the bills, actually, if you see, here also it is to bank. Here also it is to bank. And finally, I think they told in the question that something is recoverable and all from the estate. How much is it? 40 paise in a rupee is recoverable. Became bankrupt. His estate paying only 40 paise. So now what will be the entry? Okay, bank account debited, bad debt account debited to Harry. Okay, 40%, 60%. This is 100%. Is this clear? How did we get the 60,000? You will get that only if you prepare ledger. Otherwise, you will not get that 60,000. You have to prepare ledger, and here the balancing figure will be 60,000. Is this clear? Accommodation of bill situation, nothing is straightforward. You have to prepare ledger. In fact, in this question, you can't even avoid the ledger. They only told prepare ledger. They only told prepare ledger. How can you avoid it? Are you getting this point? Okay, this should be it with this particular question. Any doubts with this? The major thing is over here. Major thing is over here. Okay, this calculation if you get, other than that, it's just regular question only. Okay, let's go into Jan 2025. Do we have a question? Jan 2025. Did you have it? There was, right? Where is it? Subsidiary book and all, they are scoring, it was. There's a question for 5 marks, no? I think at the end then. This is final accounts, partnership basics, death of a partner, incomplete records. NPO, bills of exchange. 5 mark question they have asked in the exam. Okay, shouldn't be a problem. Mr. A accepts 2 bills of exchange on June 1st, 2024 for 1,50,000 and 60,000 drawn on him by Mr. B. Who are you? We don't know. Go to the end of the question. You are required to pass journal entries in the books of Mr. B. What did you do? You did not accept. Mr. A accepted. So for you it is bills receivable. For you it is bills receivable. 2 bills are there. Okay, go and write. Okay. Bills receivable 1, bills receivable 2. We have done this before. Bills receivable 1 and 2. Okay, next. What happens after that? The bill of exchange for 1,50,000 is for 2 months. Very good. Well, the bill of exchange for 60,000 is for 3 months. Very, very good. Okay. Mr. B got the first bill discounted with the bank for 1,49,000. I don't think this should be a problem. You will pass the entry bank account debited 1,49,000. Discounting charges account debited 1,000. 2 bills receivable. On August 2nd, 2024, Mr. A requested B to cancel both the bills and drew a new bill on him with the combined amount for both the bills along with interest of 12% per annum for a period of 2 months. Okay, August. Huh? Yeah, you have to reverse the entries first of all. First of all, you are in June, right? And the first bill is for how many months? 2 months. So July 1st, August 1st. 1st August. Okay. Second bill is for how many months? It is for 3 months. It is for 3 months. That means it was supposed to be actually on 1st September. But on 1st August only you are going to cancel everything. You're going to cancel everything. So now this interest calculation becomes little critical. Okay, otherwise there is nothing. First, what you're going to do, always you are going to cancel this entry I discussed already. Always what you're going to do, cancel Mr. A's account debited, dishonor, always it is like this, to bank 1,50,000, to bills receivable 60,000. Why? First bill was discounted. So bank will just take the money from you. Second bill is with you. So two bills receivable. So bill dishonor with you, bill dishonor with bank, both in this entry. Is this clear? Now, after that what happens? Okay, new bill comes into picture. Bills receivable account debited. Okay, total amount they said. What is the total amount? 2,10,000. And how much extra time now? Okay, 12% per annum for 3 months. 2,10,000 into 12% into 3 divided by 12. How much did you get? You're not getting right? Why? You're giving 2 months extra. Oh, I am sorry. 2 divided by 12. You're 4,200. Is this clear? Actually, there was a mistake here.
Sir, for 1 month, we have to add another bill.
Yeah. But ICA has not considered it at all. Actually, it is wrong. You know why? Because see, I cancelled 2 bills, okay? For 1 bill, that fellow still had 1 month time. I shouldn't charge interest for that 1 month. I should charge interest only for that extra month which is getting. For the other bill, I'm giving 2 months time. So I should actually give 2 months, interest should be charged for 2 months. But randomly. He asked to cancel both the bills and told give 2 months, fresh bill 2 months. But the second bill already was due on 1st September only, no? So now he'll get time till 1st October. Okay, ICA just kept it simple, but logically it doesn't make sense. I think people who have thought properly, they have not done this. People who did not think, they did this and they got it correct. Are you getting my point? People who really thought about the concept and all and saw the dates and all, no, they wouldn't have done like this, right? I think you didn't do like that. You would have taken, according to me, it should be 1,50,000 into 12% into 2 divided by 12 and 60,000 into 12% into 1 divided by 12. That is the correct way actually. Okay. But see the language also, what they told. What did they tell in the question? Here is the question. Yeah, here they said combined amount of both the bills along with interest of 12% per annum for a period of 2 months. They just told period of 2 months. They kept it straightforward. They're like, forget about the old thing. Old thing gone, end of story. We start fresh. Are you getting my point? Old thing gone, end of story. We are going to start fresh. So that's why they have taken 2 months. Otherwise, logically, in practical situation, nobody will agree, no? Okay, at least I will not agree because I am the person who is supposed to pay money. Why should I pay interest for 2 months? I could have just sat and enjoyed 1 month and then cancelled the bill. Okay, but they framed the question in such a way they told that it is 2 months. So 2 months directly they have calculated interest. Before the due date of the renewed bill, A becomes insolvent and only 40 paise recovered from his estate. This is not a problem. Okay, you should know this entry. Now, are you A or are you B? You are B. So for you it is what? Obviously it is going to be bad debt. Okay, for you obviously it's going to be bad debt. Okay, this entry is very, very common entry. Here do I have to prepare ledger? No. ICA is given. See, alternatively 2 separate entries can be passed in place of entry pertaining to 3rd September. Okay, Mr. A's account debited to bills receivable. Number 3, okay. Bank account debited, bad debt account debited to this thing. They have not still considered that interest point. They are only telling that here end result, no, you can pass 2 entries. Usually what we do, bills dishonored will do, then we'll pass the entry, no. Are you getting my point? First we'll dishonor the bill, then we'll pass this receipt entry, bad debt entry, everything. So they gave together, then they told, okay, actually we should do like this. Are you getting my point? You should always do like this. Even though dates are same. Because dates are the same, they can justify this entry, but otherwise you cannot justify the entry in real situation. On one day, bill got dishonored. That day you came to a conclusion that this fellow will not pay and you went and filed a case. Then court heard you also and then they told sell his estate. You found a buyer, sold the estate and you recorded bad debt also. Is it possible?
No.
It's not possible. Okay, but dates are same in the exams, always dates are same. That's why they have combined the entry, but you pass it separate only to stay on the safer side. Because anywhere else they are not combined, only some one or two places like this they have combined. Okay, that should be it with the bills of exchange, guys. That is your bills of exchange chapter. Next, we go into final accounts. Very, very nice and small chapter. Nothing is there in that. Correct, no? Final accounts from the beginning of time. Ever since you are in, what do you say? Ever since you are in commerce, you have been seeing final accounts. You know, whatever is there in adjustment, 2 times you put it, that's all. Why you are putting, we don't know. Correct? Oh, later. Consignment, all that. Finally, we have reached final accounts, guys. Okay, take a break for. Okay, last chapter, guys. Final accounts. Let's go into final accounts for today. Okay, if at all we have time, we'll think about something else as well. Okay, but right now we will think about final accounts only. Okay. Yes, very, very important chapter. Why? What is the maximum weightage? 28. Why? What if they ask you 14-mark question from final accounts and 14-mark question from incomplete records? That time it becomes 28. If you don't know final accounts, you don't know what is trading P&L balance sheet. Are you getting it? So final accounts becomes very, very important. We don't know where it will be of use, but it's very important. Okay, I will not listen to you. Yes, final accounts, manufacturing business, and you can also have non-manufacturing business. If it's manufacturing business, usually we see non-manufacturing. Correct? I think in school, what you saw was non-manufacturing. Correct? There, trading account, P&L account, balance sheet. What's the purpose of preparing trading account? Gross profit computation. Net profit computation is P&L. Balance sheet is just the position of the business. If it is manufacturing, you have, this side. If you have manufacturing, you have one thing extra. What is that one thing extra? Manufacturing account. Is manufacturing account going to find some profit? No, manufacturing account is prepared for what reason? To find the cost of the goods manufactured. See, if you are not doing manufacturing, no, that means you are buying and selling. So directly you are doing trading. Correct? If you are doing manufacturing, after manufacturing, what will you do? After manufacturing, what will you do? Sell. Again, you are doing trading only. Are you getting my point? So manufacturing, you will manufacture, find how much you spent on manufacture. After that, you do trading only. Clear? Now, trading account format, I don't think anyone does not know. Okay, opening stock, purchases, less returns, sales, less returns. And here, closing stock, gross profit or gross loss, direct expenses are there. What are the direct expenses? Wages, carriage inward, freight, etc. etc. Clear? Whatever direct expenses directly related for trading activities. Now, tell me one thing. This purchase less returns and sales less returns is there. No? Does it happen automatically? You write minus. Correct? No minus happens without passing journal entries. In books of accounts, no plus minus happens without passing journal entries. If they're telling purchase less returns, you know what is the entry for that? Purchase returns account debited to purchases. Purchase account debited to purchases. Now the reduced purchases will come and sit over here. Then for this one, sales account debited to sales return. Correct? The reduced sale will come and sit in the trading account. Is this clear? That is the journal entry if at all they ask you. Now journal entry, see purchase return account debited to purchases, sales account debited to sales return. Clear? Now, if at all they ask you journal entry for trading account, what will you do? Trading account, opening stock and all was debit, correct? So you'll write trading account debited to opening stock, to purchases, to direct expenses. And what about sales? What will you do with sales? Sales account debited to closing stock. Sorry, sales account debited, closing stock account debited to trading account. Never thought of the journal entries because we never pass journal entries for trading account. Directly we go and write by sales, by closing stock. So don't always memorize the posting. Always memorize the journal entry. That posting automatically will be there. Clear? Now, gross profit. From trading account, gross profit goes to P&L. Trading account debited to P&L. That's why we write to balance carried down, gross profit carried down, and by gross profit brought down. Gross loss P&L account debited to trading account. Clear? Now if you're going into P&L, gross profit or gross loss gets brought down. Clear? Then indirect expenses, indirect incomes. Some of the examples I've written over here: rent, electricity, salary, carriage. Sir, carriage I already saw once over there, sir. That was carriage inward. This is carriage outward. Now carriage inward is expense. What about carriage outward? That is also expense only. Are you getting this? What is carriage inward? You're standing over here. Okay. Truck has reached your godown. Carriage inward. You're standing over here. Truck is leaving your godown. Carriage outward. Are you getting my point? Okay. Goods are coming in. You have to pay for the transportation. Carriage inward. Goods are going out. You have to pay for the transportation. Carriage outward. Okay. Carriage inward is direct. Carriage outward is indirect. Clear? That's why you're seeing carriage over here. Carriage outwards. Depreciation. Okay. Indirect expense, indirect income. What will you do? Sale of old newspaper, interest received, commission received, discount received, all those things. Now, net profit gets carried forward to balance sheet. Net loss also get carried forward to balance sheet. Balance sheet, where do we adjust this net profit and net loss? It will be added or subtracted from capital. Clear? Okay. Journal entry. P&L account debited to expenses. Incomes account debited to P&L. Then net profit. P&L account debited to capital. That's why you go and write add net profit over there. Okay. Capital account debited to P&L. Clear? That's it. Balance sheet. What is balance sheet, guys?
Financial position. It helps us estimate
Position statement. But actually what is balance sheet? Actually what is balance sheet? Actually what is balance sheet? Assets and liabilities. Actually balance sheet is a sheet. No. Balance sheet is just a sheet of balances. A sheet of balances. That's it. That is it. Balance sheet means that much only. Whichever ledger has balance will come and sit in your balance sheet. Whichever ledger has balance will come and sit in your balance sheet. That means if you pass your journal entries and do the accounting process properly. Hello. This side. You have done that before. Now you see this side. Okay. You finish looking outside. Okay. Now, whichever ledger has balance will go into balance sheet. Seriously, I'm telling you. Balance sheet is not a position statement if you don't do your accounting process properly. If you don't do your accounting process properly, balance sheet is not a position statement. Now, tell me one thing. What is the entry for salary? What is the entry for salary? Salary account debited to? Okay. Salary has a balance now. Correct. Will it go to balance sheet? No. Why? Before that, you pass the entry P&L account debited to salary. Now salary becomes zero. That's why salary does not have balance. So it doesn't go to balance sheet. If you miss this entry, salary also will come and sit on the asset side of the balance sheet. Are you getting my point? It's a position statement 100% correct. It is a statement which shows assets and liabilities 100% correct. But if you miss your accounting process, it will be 100% wrong. Are you getting this? It's just a sheet of balances. If you do everything before that, then it will give you correct position set. Clear? Assets and liabilities. Actually, you don't have a format. Okay, you can write it anyhow. Only for companies, there is a format of preparing balance sheet. Now, but for better presentation, keep the fixed assets on top and keep the current assets below them. Clear? And keep the capital on top. Then write the long-term borrowings. Then write the current liabilities. Is this clear? Try to use this format only. Okay? Even when you are preparing final accounts, when you're preparing problems, usually you prepare trading, P&L, balance sheet, everything open, you keep it, go on entering the numbers. But still, when you're entering numbers also, ensure that current assets comes in the second half and fixed assets comes in the first half. Clear? Yes. Adjustments. Very, very important. This is how you learnt in PU. Items mentioned in question for which entry is not passed outside the trial balance. Now, adjustments. In PU, you know how you learnt. In PUC, in adjustments, they just told nothing. Whatever you see in adjustments, put it in two places. Whatever you see in adjustments, put it in two places. Why? When you understand that why, all the adjustment will be damn easy. Why?
Dual aspect.
Because dual aspect concept. If they had passed entry, it would not be in adjustments. It would have been there in the trial balance. If it is not there in the trial balance, that means they did not pass the entry. That's why it is in adjustments. So now if you want to bring it into the books, you have to pass entry. If you have to pass entry, for every debit, there should be equivalent credit. That is why whatever you see in adjustments, it usually has two impacts. Clear? Now, outside the trial balance, they'll mention the adjustments. First, depreciation. If you see it in trial balance, don't think anything. What you see in trial balance, no, you should only think, is it an expense? Is it an income? Is it an asset? Is it a liability? Okay, then put it into the respective place. If you see depreciation in trial balance, directly P&L debit. Directly P&L debit. But if you see it in adjustments, then P&L debit and the asset has to be subtracted, because entry for depreciation is depreciation account debited to asset account. Clear? Next, provision for depreciation. If you see it in trial balance, directly balance sheet subtracted from the asset. But if you see it in adjustments, P&L debit and then balance sheet subtracted from asset, because the entry for provision for depreciation is P&L account debited to provision for depreciation. Is this clear? Now, drawings. If you see it in trial balance, just subtract it from capital. But if you see it in adjustments, in cash, subtract from capital also, subtract from cash also. You have learned the journal entry today morning only. Correct? If it's in goods, subtract from capital and subtract from purchases. If it's asset, subtract from capital and subtract from assets as well. Outstanding expense. If it's in trial balance, nothing. It's a liability. Go and put it to the balance sheet liability side. If it's in adjustments, entry for outstanding expenses, expense account debited to outstanding expense. That's why go and add it to expense and then show it in balance sheet as liability. Clear? Prepaid expense. If it's there in the trial balance, just go and put it in the balance sheet as asset. But if it's there in adjustments, then subtract it from expense and show in the balance sheet as asset. Is this clear? Okay. 6. Income accrued, income receivable. If it's there in the trial balance, it's just an asset. Otherwise, if it's an adjustment, add it to income and show in the balance sheet as asset. Income received in advance. If it's there in the trial balance, it is just a liability. And in adjustments, subtract it from income and show in the balance sheet as liability. Clear? Bad debts. Bad debts, bad debts, bad debts. Very, very important. If it's there in trial balance, P&L account debited. If it's there in adjustment, P&L account debited and balance sheet subtract from debtors. But remember the movie fund. If you have provision, take the bad debt from the provision. Otherwise, you take it from P&L. Clear? Provision for bad debts. Amount kept aside for expected loss in future. Okay, trial balance, if it is there, what you will do, directly reduce from debtors. Otherwise, P&L account debited to and then provision. So in the balance sheet, you will reduce it from debtors. Example, we'll take these examples. In trial balance, I have debtors of 5 lakhs. Okay. Bad debt is 5,000. In trial balance only. Bad debt is 5,000 in trial balance only. So what happened in P&L, you will show 5,000 as bad debt. Balance sheet debtor will be 5 lakh only. No minusing. Balance sheet will be 5 lakh only. Because both are in the trial balance. That means entry is already passed. What is the entry for bad debt? Bad debt should debtor. Bad debt has a debit balance. That's why you're seeing it in the trial balance. Without passing that bad debt account debited to debtor, it won't come into the trial balance. So, if both are in the trial balance, don't go and subtract again. You're doing double effect now. Okay, bad debts is given in adjustment 5,000. Now, this is called as further bad debt. Okay, so you're going to write in P&L, you'll show it as expense and balance sheet, see debtor became 495. Clear? Next, PBD 10,000 in trial balance. In trial balance, you're seeing 10,000. So what will you do? Debtor minus PDD 4,90,000. What is the entry for PDD? What is the entry for PDD? P&L to PDD. No. Okay, I know that you will tell PDD to debtors. You know why? You're like, sir, debtor reduces. No. So debtor should be credited. PDD debited. PDD what? Expense. PDD asset. Are you getting my point? The entry for PDD is P&L account debited to PDD. That's it. Bad debts to PDD. Yeah. No,
That deducting.
no, that not deducting also.
Balance to
P&L.
P&L there will be bad debts.
Ah,
Can we add it with the new P?
that is for computing the amount, but the entry. Bad debt entry has to be bad debt account debited to debtors. Now it's there in the trial balance. Next entry should be P&L account debited to bad debt or PDD account debited to bad debt. You can't have any other entry other than this. Okay. Now entry for PDD is always P&L account debited to PDD. To PDD. PDD is a liability. Liability should be on the liability side of the balance sheet. But if you bring that liability to the asset side of the balance sheet, it will become negative. Is that clear? That is why you are seeing negative. Are you following this? Is this clear? Very important for you to understand this. Clear? Do not ever think that, okay, now if I ask you, in this question, if I ask you, okay, after all this, you prepared balance sheet, what is the debtor balance?
5 lakhs, sir.
Debtor balance is 5 lakh only, not 4 lakh 90. But here if I ask you, what is the debtor balance? Debtor balance here is 495. Bad debt reduces the debtor permanently. PDD doesn't reduce the debtor at all. You just have a doubt. So you are reducing and showing this is the potential amount. But debtor is still 5 lakh. Is this clear? Okay. PDD is there in trial balance 10,000. Maintain PBD at the rate of 5% they said in adjustments. Debtor is 5 lakh. If you calculate 5%, you're getting 25,000. Already you have 10,000. That means should you calculate, should you create extra PBD? Yes. Extra will be 15,000 provision to be created. Now tell me in P&L how much will you show as provision? What you created only will go to P&L. What is already there from before will not go to P&L. What you created is 15,000. So P&L account debited 15,000. Okay. And here you will subtract 25, not 15, 25. 10 was there. 15 you created, total 25. Is this clear? One of the major adjustment is this only, bad debt. Now imagine PBD is 30,000 in trial balance. PBD is 30,000 in trial balance. And they are telling maintain PBD at the rate of 5% in adjustments. Now you are getting 25,000. Existing provision is 30,000. That means you don't require that much provision. What will you do? 5,000 provision is going to be reversed. What should be the entry for reversing the provision? PDD account debited to P&L. What you passed when creating, you will pass the opposite when reversing. Clear? And in P&L you will credit 5,000 and in balance sheet PBD will be 25 only because 30 minus 5, 25 only will be shown in balance sheet. Is this clear? Next, in trial balance PBD is 25,000. Clear? In adjustment, bad debt is 6,000. Now, P&L, nothing. Sir, what are you talking? Because you have PBD, this bad debt will not come to P&L. It will be taken from PBD itself. And in balance sheet, your PBD becomes 19,000. Did not get it. Okay, PBD becomes 19,000. Because out of 25, 6,000 bad debt you have already removed. Clear? PBD is that movie fund which we are talking about. Okay, note. If PBD exists, then bad debt to be reduced from PBD. If PBD not there, then bad debt to be debited to P&L. Is this clear? Now, PBD is 25,000 in trial balance. In adjustment, they said bad debt 6,000. And then they said maintain PBD at the rate of 8%. Now, very important. First bad debt or first PBD? First will be bad debt or first will be PBD? First it will be bad debt. Why? Who is not going to pay, send them. Who is remaining, you have doubt. Are you getting my point? So debtors minus bad debt, you remove the 6,000 and what remains is 4,94,000. 4,94,000. Is it clear? Maintain PBD at the rate of 8%. Calculate 8%, you're getting 39,520. Clear? Now, 6,000 bad debt will be removed from P&L or from provision? Provision. You have 25,000. No. Why to go to P&L? So you remove from PBD only. How much provision will remain? 19,000. Can you see only 19,000 is existing provision? You didn't try 25. So remaining you have to create 20,520 will be the provision to be created. Is this clear? Give me 1 second. Huh? Okay. Let's continue. Now, sorry, where are we? You finished PPT? Yes. Yeah. So 19,000 will be created and 20,520 will be the provision to be created. Now tell me, will I show 6,000 bad in P&L?
No.
No. Why? Because we removed this from provision itself. Will I show 19,000 in the P&L provision?
Yes.
No, that was already there, existing provision. Will I show 20,520 in the P&L? Yes. Provision in P&L will be 20,000. P&L account debited only for the provision that is created. Clear? In balance sheet, you will show debtors. See 494. It already became 494. You are not writing 5 minus 6. You are writing 494 only because already reduced debtors come to balance sheet. And we are not writing 20,520 or not, nor are we writing 19,000. We are going to write 39,520. Entire provision will be subtracted from the debtors in the balance sheet. Is it clear? So what provision will go to balance sheet? Entire provision. What provision will be debited to P&L? Only the provision that is created. Is this clear? What bad debt will go to P&L which could not be covered by the provision? Okay. Otherwise bad debt will not come to P&L if provision is sufficient. Closing stock. Very, very common. Okay. Adjustment. If you see, what will you do? You'll write trading account. Okay. And in balance sheet, you'll show it as asset. Now, important. Closing stock if it's there in trial balance.
Balance sheet.
That means you'll show it in balance sheet. That means purchases which are there in the balance sheet are adjusted purchase. Adjusted purchase means what? Opening stock plus purchases minus closing stock they have done. They have added the opening stock to the purchases and subtracted the closing stock from the purchases. That's why adjusted purchase. That means if you see closing stock in the trial balance, it is 100% adjusted purchase. Clear? There cannot be opening stock in the trial balance after that. So if you see closing stock in the trial balance, take the closing stock, directly put it to the balance sheet as asset. Is it clear? Yes. Usually when they do this, they will only tell purchases in bracket adjusted. Now, opening entry, closing entry. What does it mean?
Opening balance sheet.
Balance sheet usually goes from 1 year to another year. No. Usually before what people used to do? They used to close the books. Then next year they used to have a fresh book which is going to be opened. So when you're closing the book, book has to become empty. When you're opening the book, book has to be created. So balance carried down, balance brought down also happens because of journal entries only. Clear? Closing the books. What will you do? Entry passed at the end of the year to close the books of accounts. Okay. We should remove everything. So liability account debited. We should remove liability. We should remove capital to asset account. Opening the books, entry passed at the beginning of the year to start the year. So we should create everything. Asset account debited to liability to capital. Is this clear? Okay. Now provisions. What is provision? Amount kept aside for a specific purpose. What is reserve? Amount set aside for anything. You can use it for anything in the future. Clear? Provisions and reserves, you need to know the difference. Clear? Now, if it is manufacturing concern, what will you do? Extra. You will prepare one manufacturing account. Trading P&L balance sheet we already know. Now, to find the cost of the goods manufactured. Is this clear? Now, manufacturing account. Understand this. Opening stock of WIP. Okay, now see, if we have not done inventory chapter yet, but inventory has 3 things, no? Which is raw material, work in progress and finished goods. Correct? Now, raw material and work in progress will impact your manufacturing account. Finished goods, you are going to trade with it. You are going to sell the finished goods. So it will go to trading account. Understand that. Raw material and work in progress is part of your manufacture. That's why you are seeing it in manufacturing account. Finished goods, you are going to trade with it. So it will go to your trading account. Is this clear? Now, manufacturing account, see, opening stock of WIP, closing stock of WIP. Usually you used to write no, 2 opening stock by closing stock, same thing over here. But raw material, you will not write raw material purchased. You will write raw material consumed. How much did you use for manufacture? That is your expense, no. How much did you purchase? Is it your expense? No. Imagine you got 5 chocolates today. Okay, if you want to know the cost of today's chocolate consumption, can I tell 5 chocolates? No. You ate only one in that. Then one is only the consumption, right? 4 you are going to eat tomorrow. It should be tomorrow's expense. Is this clear? So, raw material consumed. How will you get that? Opening stock of raw material plus purchases minus closing stock of raw material. Okay, 2 direct wages. Direct wages is direct labor, which is also required for manufacture. Just with raw material, can I manufacture it? I'll buy raw material and keep it over here. It will get manufactured on its own. Is it possible? No, you need workers also. So direct labor and other expenses related to manufacture. Any other expense which is related to manufacture will be there. Now, one thing is there. When you're manufacturing, sometimes you'll get some waste product. But that waste product people are ready to buy. This is called as byproduct. Byproduct sale, it's income for you. That income will reduce your cost of manufacture. For example, biggest example is buttermilk. Buttermilk. You are actually manufacturing ghee and butter. Buttermilk is that waste liquid which comes over there. But people are ready to buy it. Put it in packet, sell it, nothing, no effort at all. Are you getting this? If you have eaten butter, you don't know. But if you have made butter, then you will know it. Okay? When you are making butter at home, you'll get buttermilk automatically. So what these dairy industries, they do? They put it in packet and sell it. That's all. Clear? So when I'm manufacturing something, I got one waste. I was planning to put it in the dustbin. But somebody is ready to buy. I will sell it to you. So now my cost of manufacture, didn't it reduce?
Yes, sir.
Okay, that's why it's on the credit side of the manufacturing account. Finally, whatever the cost of manufacture is there, it will be transferred from here to trading account. This will go to trading account. From there, everything is same. From there, everything is same. Now, some things can cause confusion. We'll see the notes over here. Stock, raw material, work in progress will go to manufacturing. Finished goods will go to trading. Carriage inward is for purchase of goods, right? Usually raw material. You're like, sir, it can be purchase of finished goods also, but you're doing manufacture. So you are only creating the finished goods. So carriage inward will be manufacturing account. Carriage outward will go to P&L account. Okay. Supervisor salary, manufacturing account. Sir, supervisor is not doing any work, sir. But supervisor is ensuring that you are doing the work. Are you getting my point? So he is also required for the manufacture. So manufacturing account. Rent, factory building, manufacturing account. Go down, manufacturing account. Office building, P&L. Office building, P&L. Depreciation, machinery, manufacturing account. Factory building, manufacturing account. But if it's office, P&L. Clear? Now, if it's vehicle, now you have to again see whether vehicle is a factory vehicle, manufacturing account. Like truck, manufacturing account. Motor car, P&L. Is this clear? So everything you have to know whether it is used for manufacture or not. Now, heating and lighting. Light is there. Electricity bill you have paid. Divide on floor area. Divide on floor area. Imagine first floor is a factory. Ground floor is the office. Or ground floor is a factory and first floor is the office. Electricity bill. Can you put full to manufacturing? No. You divide it based on the floor area. Okay. That's it, guys. That is it. We have few problems to solve. Only few. Once we finish that, we can go. Yes. No. It's already 6:40. Now what difference it's going to make? No, final accounts we are going to finish because otherwise the burden on tomorrow will be too much. Tomorrow you will have partnership. That will take almost half the day. Okay. Non-profit organization, company accounts, incomplete records, inventory is also there. So tomorrow it will be too much. I'm not keeping anything for tomorrow. Final accounts has to get over today itself. Okay. We have 2 questions. First question, which is very important, is 12th question in the study material, which is Gavaskar question. Then the next question is again the practical question, which is Ganguly question. Ganguly. Then there are some questions which is actually December 2023 exam and all. You can see that question. They have actually asked you trading P&L and balance sheet with all the adjustments. But I feel if you do Gavaskar question and Ganguly question, these 2 questions will be covered automatically. Huh? Yeah, but then we have RTPs and the past examination questions to see. Guys, 1 second. Yes. Final accounts we have to finish, guys. No other option. We have to finish it today itself. Yes. Question number 12 from study material. Final accounts. Illustration. Tomorrow first chapter. Partnership.
So don't start with partnership. Start with small chapters.
No.
Start with companies.
Start partnership.
We'll start a partnership.
So partnership will start.
We'll take time. Morning to evening.
Yes, tomorrow we'll start with partnership itself.
Yes, sir.
Starting.
So not start.
You can?
So you can play.
Why are you skipping? NPO is?
He said the last one.
You told that last time also. Yeah, that's why you didn't score the marks in the accounts. Yes. Okay, guys, let's continue. See, online students, they're still there. Quietly, they are not talking anything.
Because we have in online. Two members. Two. So right to two.
क्या हुआ? कितना दूर है? Huh? All of you stay together. Huh? And remaining people? You're from? Bangalore. Oh, okay. Fine. You can watch it later, guys. No issues. Yes. Anybody else? Now, let's go into final accounts. I told you there are two very important questions. Okay, the first question is question number 12. Okay, guys. Shh. Question number 12. Let's go to question number 12. If you have the material, you can go straight into question number 12. In your final accounts. Yes. See, basically, I have a feeling that if you do these two questions in final accounts, everything gets covered. Okay. The Gavaskar question and the Ganguly question, if you do, everything gets covered. But still, we will see what is there in RTPs as well. Now, following is the schedule of balances on 31st March 2022, extracted from the books of Sri Gavaskar, who carries on business under the same name and style as Messrs. Gavaskar and Vishwanath and Company. Okay, very good. Let them do whatever they want. No problem with the names. We are not worried. Prepare trading and P&L account for the year ended and the balance sheet as at that date after making provision for the following. Okay. So many things are there. Now, first we'll discuss depreciation. Okay, first we'll discuss depreciation. Shh. Yeah. So now depreciate building, okay, used for business by 5%. What is the treatment for this? Building is to be depreciated by 5%. So what will you do? Minus from building, okay, and you are going to show that as depreciation in the P&L. Okay, shouldn't be a problem. Take the amount and just multiply. That's it. Furniture and fixtures by 10%. But one steel table purchased during the year for 14,000 was sold for same price, but the sale proceeds were wrongly credited to sales account. Rectification of errors you do first, then you do the final accounts. Clear? So what has happened? You sold what? Steel table. Okay, you should have passed the entry actually cash account debited to furniture account. What did you do? You have credited it to sales account. So what will you do now? Yes, sales you will minus 14,000 and furniture you will minus 14,000. Just because one is minus, other one should not be added. Need not be added. Are you getting my point? You should remove it from furniture and you should remove it from sales as well. Then what you should do after doing this, then you should calculate depreciation. Is this clear? Then you should calculate depreciation. Now, office equipment by 15%, but purchase of a typewriter during the year 40,000 has been wrongly debited to purchases. By mistake, you put it into purchases. So what you should do? Office equipment, you have to add 40,000, and then you have to, from purchase, you have to minus 40,000. Remove from purchases, and you have to add it to office equipment because there is a purchase. Last time what did we do? We removed from sale and we removed it actually from furniture. Clear? Now, then you calculate depreciation. After that, obviously you're going to calculate depreciation, but depreciation will be after rectifying the errors. Motor car 20%. Motor car, there is no rectification at all. Directly 20% calculate. Value of closing stock. What will you do? Trading account, you're going to credit, and in balance sheet, you're going to show it as asset. 2 months rent for go down is outstanding. They didn't tell you the amount. That means rent what is paid is for 10 months. So go and find what is the rent. Can you see rent for go down 55,000? So what we are going to do now? 55,000 divided by 10 is equal to 5,500 per month is the rent. They said 2 months is outstanding. So 5,500 into 2 is equal to 11,000. This is the rent which is outstanding. So you will add it to rent. You will add it to rent in the P&L, and you will show it in the balance sheet as liability. Is this clear? Now, interest on loan from Vishwanath is payable at 12% per annum. This loan was taken on 1/5/2021. Go and find loan from Vishwanath. Loan from Vishwanath is 3 lakhs. So 3 lakh into 12% per annum into 11 divided by 12. That gives you an interest of 33,000. But interest on loan from Vishwanath is only 27,000. You are supposed to pay 33,000, but you have paid only 27,000. So now what happens? 33 minus 27, 6,000 will be outstanding interest, and the 6,000 will get added to interest. Okay, you have to add it to interest, show the interest as 33 only, and then you have to show 6,000 as outstanding interest. Clear? Provision for bad debts is to be maintained at 5% of sundry debtors. Go to the trial balance. Do we already have any provision in this question? Where? Provision for bad debt, we have 30,000. Okay, so now when you're creating provision for bad debt, you have to be little careful. Okay, did you have any adjustment till now which impacted debtor? Anywhere here impact on debtor, here impact on debtor, then go down rent, any impact on debtor, interest on loan from Vishwanath? No. 5% on sundry debtors. How much is the debtor? 8,60,000. 8,60,000 into 5% gives you 43,000. How much is the provision here? 30,000. Are you telling me that 30,000, now 13,000 should be the provision creation? No. You know why? Because there is bad debt. Because there is bad debt in the question. Bad debt is how much? 20,000. This calculation is very, very important. Okay, now understand this. What is the provision for bad debt that we had? 30,000. Okay, what is the bad debt that is there? 20,000. When you have movie fund, you will not take the money from P&L, no? You will take from movie fund. So now your provision is only 10,000. But you need provision of 43,000. Okay, now you're like, sir, this 20,000 we don't have to subtract from debtor. No, it's already in the trial balance. We don't have to subtract. It's already subtracted. 43,000. That means you're going to create a provision of 33,000. You're going to create a provision of 33,000. Huh? P&L 33,000 will be debited. Balance sheet 43,000 will be minus. Balance sheet total provision will be minus. No. Are you getting this? That is it. That is it with the adjustments. Insurance premium includes 40,000 paid towards proprietor's life insurance policy, and balance of insurance charges cover the period 1/4/2021 to 36/2021. How much is the insurance premium paid? 55,000. Insurance premium paid is 55,000. Now understand this. 55,000. Out of that they are telling 40,000 is paid towards proprietor's life insurance premium. So remove the 40,000. Okay, remove the 40,000. That time you will get only 15,000. But this 15,000 also is paid from 1/4/2021 to 36/2021. That means it is paid for a period of 15 months. So what you will do, out of this 12 months only you need, that is 12,000, and 3,000 which is 3 months, which will be taken as prepaid. Clear? So in P and L you will take only 12,000, and in balance sheet you will take 3,000 as asset. Is this clear? Asset side. Now, apart from that, see here, typewriter purchased is minused. Sale of furniture is minused. The rectification which we had discussed. Okay. Rent of go down, can you see 11,000 is added. Okay. Provision for bad debt, can you see 33,000 is there in the P and L. There 43 minus 10, 33 is there in the P and L. But if you're thinking in balance sheet, sir, how much will be there? 43 only will be there. Total provision gets subtracted from debtor in the balance sheet, but provision created will be there in the P and L. Is this clear? Are you following this? Any doubts with this? See, prepaid insurance is also there, 3,000. Apart from that, see over here, motor car, building depreciation, motor car depreciation, office equipment depreciation, furniture and fixtures depreciation. But if you noticed, the furniture and fixture, this was not 2 lakh, it was something else. It was something else. What is the furniture and fixture value? If you see the trial balance, it is not 2 lakh, it was 2,14,000. That means depreciation is calculated after rectification, not before rectification. Closing stock, I don't have to tell you, it's a regular adjustment. Okay, other than that, there is nothing. One more thing is that interest on loan from Vishwanath, can you see 6,000 is added and 33,000 only is taken over here. Apart from that, whatever you see is directly it is coming over here. Now you should know quickly, I want to discuss that also. Okay, because almost everything will be covered here. Cash in hand is asset. Cash at bank is asset. Sundry debtor is asset, but you have to remove the provision, that is 43,000. Opening stock will go to trading account. Correct. Furniture and fixture is asset. Rectification has to happen. After rectification, depreciation also has to take place. Office equipment is asset. To this 40,000 will get added because purchase was not included. Clear? Then you have to calculate depreciation. Building is also asset. The depreciation you have to remove. Motor car is also asset. Sundry creditors, directly liability side. Loan from Vishwanath, liability side. Provision for bad debt. Don't bother about this. You are going to take 43,000. We did all the circus related to that. Okay. P&L will take 30. Yeah. P&L will take 33,000. In balance sheet will take 43,000. Okay, we did this calculation over here for that. Okay. Purchases, trading account. Purchase return will be minus from purchases. Sales, trading account. Sales return will be minus from sales. Clear? Salary is P&L. Expense it is. Rent of go down, you are going to add that outstanding rent. Interest on loan from Vishwanath, you are going to add the outstanding interest. Yeah, purchase we have to minus. See here, we already discussed this. Okay, next. Rates and taxes. It is going to be expenses. Discount allowed to debtor. P&L expense. Discount received from creditor. P&L income. Freight on purchases. Freight on purchases is carriage inward. This will go to trading account. Carriage outward will go to P&L account. Drawings will be subtracted from capital. Okay, further drawings are also there. Not only this one, in adjustment also we have that drawings, 40,000 which we removed from insurance premium. Okay. Then printing and stationery is an expense. Electricity charges is an expense. P&L, yes. Insurance premium, what we are going to do? We know we are not going to take 55 and all. We'll take only 12,000. We'll take only 12,000. Why 12,000? Out of 55, 40 went drawings. 3,000 is prepaid. That is also gone. General office expenses. Expense and P&L. Bad debt will not be there anywhere. Why? Because it is going to be reduced from PDD only. Okay. Bank charges, expense. Motor car expense, expense. Capital account in the balance sheet, you are going to show it. Liability. Clear? Only capital account I want to show you. Can you see? Drawings is 120. That is that further drawings also is added. Both are taken over here. Insurance premium, see, insurance premium is 40. Clear? Insurance premium is also a drawing only. Is this clear? Any doubts with this? No. Very important question. Without doing this, you should not think of going to the next chapter itself. Yes.
is within the year starting or ending. Can
Huh.
we calculate depreciation for the furniture sold?
We don't know, no. So we are assuming that it is sold at the beginning of the year itself. I mean, end of the year itself. They have not spoken about it. If they tell you sale is on this date, then you will calculate depreciation till the date of sale. It becomes more complicated. They have not told. They might reduce the number of adjustments in the exam and they might add this date over there for the sale.
In case it says like that, we have calculated. If there is a profit, we have to show in the P&L.
Yes, yes. You have to do that. If they give you book value and sale value, then you have to calculate the profit and put the profit or loss. You have to put it into P&L. And when you're calculating depreciation, you have to calculate depreciation on the assets sold till the date of sale, and all other assets for the entire year. You have to show the depreciation. Nothing says, you can assume that no information. That's it.
Manufacturer account.
Manufacturing account illalla idralli. Trading account. Manufacturing account irtidre manufacturing account. Okay.
Trading account.
Illa hogala. See, if carriage inward manufacturing account was there, it would have gone to manufacturing account. But in this question, there is no manufacturing account. So it is going into trading account. Okay. Next is that question which is Ganguly. Dada. Okay. Following is the information about Ganguly. Now listen. Very important question. It becomes value of stock as on 31st March 2022 is 3,93,000. This is closing stock. Correct? Can I come to a conclusion on that? Yes. Closing stock, you will put it to trading account
Balance sheet.
and you will show it in balance sheet as asset. This includes goods returned by customer on 31st March 2022 to the value of 15,000 for which no entry has been passed in the books. Sales return, right? Will it change my closing stock?
No.
They said closing stock is 393. In that, goods which are returned are there. Good. It should be there. Are you getting my point? Goods are returned, it should be there. But what is the thing? For sales return, you didn't pass the entry.
Data-
Basically, what happened is, sales return happened, goods came, it was sitting over there. So when I calculate closing stock, remember you have one method called as physical inventory system. So you went and saw there, you counted. When you counted, what was returned also was there, you took the closing stock. But for the sales return, you didn't pass entry in the books. So closing stock will not get modified. Only sales return entry has to be passed. Is this clear? So now, sales return, what you will do? Minus from sales. And then what will you do? Minus from, what is the entry for sales return? Sales return account debited to debtors. So minus from sales and minus from debtors. Is this clear? Are you following this? Yes. Purchase includes furniture purchased on 1st January 2022 for 10,000. Why did they tell you that furniture is purchased on 1/1/2022? So when you are calculating depreciation on furniture 10%, you have to calculate for this according to time. Clear? Now furniture, if you see over here, 1/4/2021, 9,000. Can you see furniture there, 9,000? Clear? Now they are telling purchase includes furniture. They did not include the furniture in furniture. They included the furniture in purchase. So now what happens? This we have done in the previous question also. Minus from purchases and you have to add it to furniture. You have to add it to furniture. But when you are calculating depreciation, 10,000 will be into 10% into 3 divided by 12. That makes it 250. But 9,000 will be into 10%. That is basically 9,000. So depreciation should be 9,200. 900. So depreciation should be 1,150. Is this clear? So 1,150 will be your depreciation, which will be shown in the P&L. Okay. Now, loan account of Dena Bank in the books of Ganguly appears as follows. They gave the ledger of Dena Bank loan. If you go to the question, can you find one loan? Loan from Dena Bank, 1 lakh. And there only they gave you 12%. If they would not give you that ledger, no, you would have naturally calculated 1 lakh into 12% and told me, sir, I have to pay 12,000 interest, sir, on loan. Correct? But they told over here the information of loan. 1/4/2021 balance brought down is there. And 31st of March 2021 by bank is there. That means 50,000 was a loan which you had borrowed last year. It's still there. 50,000 is the loan which you have borrowed on the last day of the year. 31st of March 2022 is the last day of the year. On this, there is no interest. On this, there is no interest. Only on this 50,000, there is interest. On this also, there will be interest. But when will it be? In the next accounting period. Is this clear? If they would not give you the ledger, you would have calculated interest on full 1 lakh. Now they have given you the ledger. This has come on 1/4/2021 itself. And this is coming at the end of the year. So what will you do? 50,000 into 12%, right? Into 6 divided by 12. Sorry. Into 12% only, no 6 divided by 12 and all. How much? 6,000. Now see this. Okay. Now 6,000. Can you see interest paid is showing 4,500? Now there is one more adjustment for interest paid. Interest paid includes 3,000 paid to Dena Bank. Interest paid includes 3,000 paid to Dena Bank. Now you have over there, it is showing 4,500, correct? In the question, is it showing 4,500 interest? That means only 3,000 is paid to Dena Bank. 1,500 is paid to somebody else, but it's interest paid, expense only. So now what will you do in the P&L? 3,000 plus 3,000. Dena Bank interest should be 6,000 and outstanding interest will be shown as 1,000. Sorry, outstanding interest will be shown as 3,000 and this interest is also interest only, no? So total interest in the P&L should be 7,500. Total interest should be 7,500. Clear? Are you following this? They said interest paid is 4,500. In that 4,500, only 3,000 is Dena Bank. But Dena Bank interest was 6,000. So 3,000 is outstanding. Add it to interest and show it in the balance sheet as liability. And 1,500 they paid to somebody, which is interest only. We don't know for what.
So if you pay somebody, there should be a liability.
It could have been borrowed and repaid during the year. Okay, it need not be at the end of the year. They would have borrowed during the year and they would have repaid also. So for that interest they would have paid. Okay, or maybe when they were paying the creditor amount, they paid the amount late to the creditor. So creditor charge interest. That can also happen. Okay, but totally our interest will be 7,500 and 3,000 will be shown as outstanding. Is this interest adjustment clear? Now, debtor includes 20,000 due from Robert and Sunday creditors includes 10,000 due to him. If I have to pay you 100 rupees and you have to pay me 30 rupees, will I pay you 100, then take 30 from you? We will just set off this. This 30 is the common thing, no? So we will set off and only 70 I will pay you, correct? Here, debtors include 20,000 due from Robert and creditors include 10,000 due to him. So 10,000 you will remove from debtor also, you will remove from creditor also. Clear? You will minus 10,000 from debtor and you will minus 10,000 from creditor as well. Is this clear? Now, after that, interest received represents 1,000 from sundry debtors due to delay on their part and balance on investment and deposit. They are telling interest received 1,000 is from sundry debtors, remaining everything is on our investment and deposit. In the question, can you see investment is there over here, 25,000? 25,000, 5% will become 1250. 1250. We have an investment here. That becomes 15,000. Can you see this? 15,000. So this 1250 plus 15,000 is actually an interest of 16,250. 16,250. Okay. But they have told over here interest received. Yeah, interest received is 7250. Okay. Interest received is 7250, but out of that 1,000 is from debtors and 6250 is from deposit and investment. But how much I am supposed to get? 16,250. I got how much? 6,250. That means 10,000 is what? Interest receivable. It will also be shown as asset in the balance sheet. Now I have a question for you. How much interest will you show as income in the P&L?
16,250 plus 1,000.
16,250 plus 1,000. You will show 17,000 250. Is this clear? Because 16,250 is only from investment and deposit. 1,000 is from debtors. Are you clear with this? Okay. Now, let's go further. Provide for interest payable to Dena Bank and also for interest receivable from investment and deposit. We have already discussed that. Make provision for doubtful debts at the rate of 5% on the balance under sundry debtors. No such provision need to be made for deposits. Now, debtors have to be careful. First, you have to tell me, is there any provision for doubtful debt already in the question? They asked you to make provision, but is there an existing provision?
No, sir.
It's not there. In this question, it's not there. But what is the debtor balance? 1,20,000. Debtor is 1,20,000. Do we have any adjustments related to debtors?
Yes.
Which is that adjustment?
First one sale and debtors.
That sales return is not included at all, not recorded at all. Minus 15,000. So 15,000 will go. Do we have any other adjustment related to debtor? Do we have? Yes, we do. What is that? No, that will not impact debtor. They paid late, they give interest. Interest is income directly. But this 10,000 due to Robert. Robert's is 10,000, common item. You have to remove no from debtors. So 10,000 will go. How much remains now?
95.
95,000. How much provision did they ask you to create?
5%. 4,750.
4,750 will be the provision that you're going to create. Is this clear? Directly, if you calculate on 1,20,000, 100% we are going to be wrong. Okay. Now, we'll discuss key areas. Can you see that furniture is removed from purchase? The 10,000. Okay. Returns and all, you know, I'm not going to discuss that. Returns are going to be anyways there. Okay. Now, provision for doubtful debt. Can you see 4750? We just did the calculation, 4750. Okay. Interest, can you see it is 17,250, not 16,250? Because 16,250 is only on investment and deposit. Okay. Interest paid, can you see it is 7,500 and not 6,500? Do you know, remember the breakup of this? It is basically 6,000 and 1,500, some other interest. 3,000 plus 3,000 it was. So, if you look at the balance sheet, can you see outstanding interest here 3,000? And can you see interest receivable 10,000, which we did the calculation for? Clear? Yes. Provision is 4750. I think rest of the items are simple. You don't have to worry about it. Loan from Dena Bank or direct you will put it. Now, if you go back into the question and just quickly discuss the things once again. Ganguly's capital account is capital. Stock is opening stock. Sales is sales. Sales return will be minus. Purchase will go to trading account. Purchase return will be minus. Carriage inward will be trading account. Rent, P&L expense, salary, expense, sundry debtors, asset, creditors, liability, loan from Dena Bank, liability, interest paid, expense. We know what to do. We already saw that. Printing and stationery expense, advertisement expense, interest received.
Income.
Cash with traders bank, whichever bank, no problem. It is asset, discount received, income, investment is asset, furniture is asset. You have already seen the depreciation calculation. Discount allowed is expense, general expense, expense, audit fees, expense, fire insurance premium, expense, no prepaid, nothing, don't worry. Traveling expense, expense, postage and telegram, expense, cash in hand, asset, deposit is asset. I am not a bank. I am the customer. Okay. So drawings is minus from capital. For
Just normal deposit.
Arey, Ganguly has deposited money. For Ganguly it is asset, no. For bank it is liability, no, because they have to give interest on that. And anyways, on that deposit interest we took it as income, no. If it was liability, we would have taken that interest as expense. Clear? If it's a loan, on that interest is payable, it would have been expense. This is asset, on that interest is receivable, which is income. Okay, that should be it, guys. Now,
Yes.
I want to solve one by one. RTPs.
So if you deposit it in the bank, the interest accrued, the value of the deposit should be increased, right?
Depends. Sometimes what happens, interest is not given to you. It is just added to the FD only. So it becomes interest on interest in future. But otherwise, they just put the interest into your SB account, savings bank account. We show it separately. Better. Okay. Because unless you tell, it doesn't, you're talking, if you do like that, it becomes compounding. Okay. Compounding doesn't happen usually for FD. Okay. When they renew or annually, they'll just transfer the interest to you. Okay. If you give first only standing instruction that I don't want to withdraw, keep making new FD every time, then they'll make it. But examination perspective, we'll just put it into income side. Okay. And in balance sheet, we'll show separately as receivable only. Final accounts. We'll go into RTP May 2024. Okay. Samuel is sitting over here. Now, we'll go into adjustments only. The major thing is adjustments, right? Yes. Stock of raw material and finished goods at the end of the year was 5 lakh and 4,37,500. They asked, yeah, when you see raw material, automatically you should know that there is manufacturing account over here. You are required to prepare manufacturing account, trading account, P&L account and balance sheet. Nothing they left missing. Everything that covered over here. But what you should understand, stock of raw material will go to raw material consumed in manufacturing account, and then this will go into trading account credit side, and both will go to balance sheet as asset. Both will be taken as asset in the balance sheet. Is it clear? A provision for doubtful debts at 5% on sundry debtors. We don't know about bad debts, no. We have to see bad debt is 0, 15,000 over here. Do we have provision? Existing provision is not there at all. Do we have existing provision? Yes, provision for bad debt is 25,000. So now what happens? From 25,000, you will remove the bad debt. Bad debt is 15,000. So now you get 10,000 existing provision. And what is your debtor balance? Debtor, 3,75,000. They asked you to create provision of 5%. So you will do 3,75,000 into 5%. How much is that? 18,750 is the provision that is required. But how much is the provision that you have? 10,000. That means 8,750 is the provision that you're going to create. Battery is going into power saving mode. You're asking question or telling the answer? You understood? It will not go to P&L. That is your question. Battery will not go to P&L.
I was about to ask debtors minus bad debt minus from debtors. No, I understood.
No, because it's in the trial balance. Yes. Now, I have one question before we go further. In P&L, provision for bad debts, how much will you show? Very good. 8,750 is the answer. Yes. 8,750 is the provision that is created. In balance sheet, what will you reduce? 18,750. Very good. 10,000. Everybody is in power saving mode. Okay. Provision, you told. Yes. Provision created will be debited to P&L. Total provision will be subtracted. Clear? Okay. Depreciate building by 10%, plant and machinery 15%, furniture and fixtures by 10%. If there is no rectification, this doesn't become a tricky adjustment at all. Okay. 1 month factory rent is outstanding. Very good. Go and check the factory rent. Factory rent is 77,000. 77,000 divided by 11. That makes it 7,000. That means 1 month rent outstanding is 7,000. Now you tell me, how much will you show as rent in the P&L?
77,000 plus 7,000.
Yes, you will show 84,000 as rent in the P&L and 7,000 will go to balance sheet as liability. Clear? Yes. After that, interest has accrued on investment and rate of interest is 10% per annum. Now you have to find the investment. How much is the investment? 2,50,000. 10% of that is 25,000. Is there any interest received anywhere? No interest received. That means 25,000 will be shown as income and you will show it as asset. Yes, receivable, asset. Is it clear? Next. Interest on loan from Mr. Sahil is payable at 12% and the loan was taken on 1/10/2023. Find the loan from Sahil. Where is Sahil? Appa. Loan from Sahil. 4 lakhs. 4 lakh into, what is the percentage? 12%. 4 lakh into 12% into 6 divided by 12 gives you 24,000 is the interest on loan. But have they spoken about any interest anywhere? Interest. How are you telling no without even looking at it? Okay. OD, but they didn't tell the interest rate, no. Okay. So 24,000 will be taken as interest in the P&L and 24,000 will also be taken as outstanding interest in the balance sheet liability side. Clear? This shouldn't be a problem. Now manufacturing account, you have to understand. Tell me one thing. Capital will go to balance sheet as liability. Sundry creditors will go to liability. Purchase return will be minus from purchases. Loan from sale will be liability. But minus from purchase where? Trading account. No, manufacturing account, because purchase will go to manufacturing account. You'll subtract it from purchases. Where will purchase go in the manufacturing account? Cost of material consumed. Opening stock plus purchases is there you'll subtract it. Provision for doubtful debt, we have already discussed it. Okay, sales, it's a regular thing. Manufacturing, it will go to trading account. Okay, bank OD will go to liability side of the balance sheet. Opening stock, raw material will go to manufacturing account. Finished goods will go to trading account. In manufacturing account, you are going to do opening stock plus purchases minus closing stock. Closing stock is outside. Clear? Purchase of raw material, manufacturing, land, asset, building, asset, loose tools, asset, plant and machinery, asset, investment, asset, cash in hand, asset, cash at bank, asset, furniture and fixture, asset, debtors, asset, minus from capital. Don't continue the trend. Okay, minus from capital. If you would have told asset also, it's still correct because drawing is asset only. Okay, minus from capital. Salary will be expense. Coal and fuel. Manufacturing account. Expense only but manufacturing account. Factory rent. Manufacturing account. General expenses. P&L. Expense. Sales return minus from sales. Bad debt we have already discussed. It will not be there only. It will be reduced from provision itself. Direct wages. Manufacturing. Power. Manufacturing. Interest paid on bank OD. This is not the interest on sales loan. Okay. This will be taken as expense in the P&L. Carriage inward. Manufacturing outward. P&L. Yes, expense. That should be it with this question. This was RTP May 2024. Let's go further, guys. Your journey has not completed. RTP.
Finished goods trading with
Opening stock, Alva. 2 opening stock. Closing stock by closing stock. Trading. Yes. RTP September 2024. Let's continue. RTP September 2024. Okay, guys. Shh. Only 5:30. Okay. Stock on 31st March 2024. I saw that clock. I saw that and decided everything. Now let's continue. Stock on 31st March 2024 was valued at 1 lakh. Closing stock, no need to discuss. Twice we have discussed it already. Hello. Yes. Depreciation is to be provided at 10% per annum on fixed assets purchased during the year. So if you have any purchase fixed asset also, you will calculate 10% only. I think your question is answered. Okay, no need to worry about date and all. Now, a scrutiny of the books of accounts revealed the following. 20,000 drawn from bank was debited to drawings account. But out of this amount withdrawn, 12,000 was used in the business for day-to-day expense. So now what will happen? 20,000 drawn from bank. Okay. You have taken it as what? 12,000 is used for business only, no? That means 8,000 only will be taken as drawings. 8,000 only will be taken as drawings. Clear? Purchase of goods worth rupees 16,000 was not recorded in the books of account up to 31st March 2022, but the goods were included in stock. So you have to pass the entry. What entry will you pass? Purchase account debited. So purchase 16,000 to creditor 16,000. Okay? Because you cannot remove from cash unless they tell you. Okay, purchase account debited to creditor. Purchase return of 1,000 was recorded in sales return journal and amount was correctly posted to the party's account to the correct side. So what we have to record now? Remove sales return minus sales return and then you have to take it as purchase return. You have to take it as purchase return. Is this clear? Purchase return of 1,000 was recorded in sales return journal. Purchase return, what is entry? Purchase return has to be credited. Clear? Sales return, what is entry? Sales return is debited. So remove from sales return. So if you're thinking of the rectification entry, this will actually be sales return. Okay, sales return will be credited. Correct? Purchase return will also be credited. Purchase return will also be credited. They said party's account is correctly posted. So that means you have to go and check. Okay, is there a suspense account? Yes. You're getting a one-sided error. 100% there should be suspense account. No. Others from where? One-sided error is coming. And can you see that error is 1000? So 1000, 1000. Debit will be to suspense account 2000. Automatically suspense which is showing credit over here. When you debit it, this suspense is gone. This suspense is gone. Are you getting it? There could have been other errors. In previous questions also we had errors. But previous question the errors were how? Instead of purchase, you put into furniture. Or instead of furniture, you put into purchase. That means two-sided errors. Two-sided errors cannot cause suspense account only. That's why we didn't see suspense account. This is a one-sided error. So 100% there should have been suspense. If suspense is not there, it's not possible only. Is this clear? Okay. Next. Expense includes 6,000 in respect of the period after 31st March 2024. After means it is prepaid or outstanding? Prepaid. So you will remove 6,000 from expense and you will show 6,000 as prepaid expense in the balance sheet. Is this clear? So major adjustment is this one. So again you understand rectification ka importance. Okay, rectification can be merged with final accounts. Okay. Now give necessary journal entries in respect of 1 to 4 and prepare final accounts. They said first do the rectification, then prepare final accounts. Is this clear? This is RTP. This is RTP. So there is no marks. It's RTP, right? But any adjustment of this can be there in the exam. That's it. Okay. Next, RTP Jan 2025. Final accounts again. Let's continue. Okay, the following additional information is available. Stock on 31st March 2024. They have given you raw material, finished goods and work in progress. That means they have asked you manufacturing account, trading account and P&L account for the year end. Balance sheet they have not asked. So this will go into manufacturing, this will go into trading and this will go to manufacturing. Clear? Salary and wages unpaid for the year ended were respectively 27,000 and 60,000. Now salary will go to P&L and wages will go to manufacturing. Manufacturing. Is this clear? And outstanding everything will be liability only. There is no problem over there. Machinery is to be depreciated by 10%, office furniture by 7.5%. Clear? What will you do? Machinery depreciation will go to manufacturing, office furniture depreciation will go to P&L. Do you remember the notes which we saw? Okay. A provision for doubtful debts is to be created at 1% of sales. If I'm not wrong, this question is there in the study material of manufacturing concern. Same 1% of sales only, that adjustment is there. 1% of sales. Now, some students know they make suddenly one error. Just because they have told 1% of sales, that doesn't mean provision has to be reduced from sales. Provision has to be reduced from debtors only. Are you following this? Provision, how you are going to compute it? 1% of sales, you take it as provision. But are we going to reduce it from provision? I mean, are you going to reduce it from sales? No, you are going to reduce from debtors itself. Clear? In the balance sheet, you will show it from debtors itself. Only calculation, they said calculate like this.
After we minus sales return.
Yeah, after we minus sales return. Now, rent is to be charged as 3/4 to factory. Whatever rent you find, 3/4 you put it to factory, that means it is manufacturing. And 1/4 you put it to office, that means it is P&L. Lighting is to be charged 2/3 to factory, 2/3 you put it to manufacturing, and 1/3 to office, so 1/3 you put into P&L. Prepare manufacturing account, trading account, and P&L. Is this clear? Any doubts with this? No. But there are a lot of items here. Okay. Raw material, manufacturing, work in progress, manufacturing, finished goods, trading account, debtors, asset. Now, do we have provision for doubtful debt? Yes, 49,500. Do we have bad debt anywhere? No, there is no bad debt that is there. So what is the sales? Do we have sales return? No, sales return is also not there. How much is the sale? Sale is 50 lakh 16,000. So 50 lakh 16,000 into 1%.
5 lakh. Sale of scrap 600.
Huh?
5 lakh 600.
Sale of scrap will not create this thing. Only normal sales. It is basically 50,000 160. This is the provision that is required. Correct? But we already have provision of 49,500 and there is no bad debt. So what is the difference? 660. Now tell me, how much will be debited to P&L?
660.
660 will be debited to P&L. How much will be reduced from debtor in the balance sheet? 50,160. Is this clear? Total provision gets reduced and the provision that is created will be debited to P&L account. Carriage on purchase will go to manufacturing. Bills receivable is asset. Wages will go to manufacturing, but there is outstanding wages. We have to add that also. Salary will go to trading account. Salary will go to P&L account, but there also there is outstanding salary which we have to add. Telephone and internet charges, expense. Repairs to office furniture, it will go to expense P&L. Cash at bank asset, office furniture asset. Repairs to plant, it will go to manufacturing. Purchases, manufacturing, there you calculate cost of material consumed, opening stock plus purchases minus closing stock. Plant and machinery asset, rent is expense, lighting, rent we have to divide it. They have already told how to divide it. Lighting also you have to divide it. And general expense will go to P&L.
Sir, this side, sir.
Then, this side also. Sundry creditors, liability, bills payable, liability, sale of scrap. Remember, byproduct sale in the manufacturing account. So, manufacturing account will be credited for this sale of scrap. Commission received is income. Provision for doubtful debt, we have already discussed that. Capital account, you know, balance sheet only, liability side. Sales, 50-60 only.
Trading account.
Is it 50-16 only? Then,
Yes, sir. Yes, sir. 50-60.
isn't it 50-16 minus 50,160?
No, sir.
No, I told you, it's only computation. Don't remove provision for bad debts from sales. It is only computation. Compute 1% of that. Provision for bad debt computation you do, but treatment is same. Is this clear? And then finally you have bank coding. Liability side of the balance sheet. That is done. Let's go into RTP May 2025. Sales return. You will subtract it, then calculate provision. Because sales return means what? Already goods came back. That means there cannot be bad debt. Are you getting this? Listen everyone. If at all there was sales return in this question, you will subtract the sales return, then you will calculate the provision. Why? If sales return happens, then already goods have come back. That means no need to worry about bad debt. Okay guys, okay. Final accounts. Next question. One beautiful question is there in this study material. Now first you go to the end of the question and see what they have asked. Prepare trading account, P&L account and balance sheet as on that day. Okay. Now basically, listen. Even though it is written final accounts over here, this is almost incomplete records. So we'll discuss this with incomplete records. Why it's incomplete records? Because trial balance is not there. They are telling from starting. Charu started business of fashion garments. From there they have started the story. So it is not going to bother us today. Tomorrow it will bother us. Now exam we will see. June 2024. Did they ask anything from final accounts? The bigger questions were not final accounts, right? Depreciation. Then we have incomplete records was there, NPO, resolution. Now everyone knows the strategy of ICAA. That they are asking incomplete records or final accounts. One. Inventory. Manufacturing. See, manufacturing was asked. Manufacturing was asked for 5 marks. You are required to prepare manufacturing account. Okay, now I'm only discussing whether it's going to be on the debit side or credit side. Opening work in progress. Debit side of manufacturing account. Closing work in progress. Credit side of manufacturing account. Opening inventory of raw material. It is basically going to be this opening stock plus purchases minus closing stock. And whatever you get over here, take it in the debit side. Purchases minus return, and then you take the item in the debit side. So if you are calculating, it is going to be 5,85,000 plus what is the purchase? 18,74,000, but remove 95,000 from that. 95. 17 lakh. 17,79,000. 17,79,000. Okay, minus closing stock of raw material 4,70,000. Whatever you get over here, this will be your cost of material consumed. Is this clear? So purchase less returns, that purchase only you have to add. Now, indirect material. Manufacturing only. That confusion is not there. Why? Therefore, details are obtained about his manufacturing expense. Now you can't go and put it to P&L. They told it is related to his manufacturing. Are you getting my point? So this will be debit, direct wages, debit, indirect wages, debit, power and electricity, debit, repair and maintenance. Huh? Byproduct. No, we are not selling anything. Indirect materials we are using. For example, some packing material and all we'll use. No. Repair and maintenance, debit. Depreciation of factory shed, debit. This also debit. Sale of scrap, credit. Clear? 5 mark question they have asked. You are supposed to calculate only, prepare only manufacturing account. That was June. Let's see September. September, did they ask you anything? Obviously, they asked. Final accounts. Now I'll show you what has happened over here. See over here. Closing stock, any doubt about this one? During the year, plant and machinery was purchased for 3 lakh, but it was debited to purchase account. Can you see directly from Gavaskar question it is coming this adjustment? Okay. 3 months factory rent is due but not paid. 3,000. They gave you. You don't go and now calculate divided by 9 and all. Don't do it. They told you the rent what is due is 3,000. If you want, you can go and check the factory rent. It's 8,000. Doesn't matter. You just have to add 3,000 now and show the rent as outstanding. Provide depreciation 5% on furniture. Directly can I calculate? Yes. But plant can I calculate directly? No. You have to do this rectification, then calculate. Motor van, directly you can calculate, no problem. Further bad debt is 7,000. That means there is already bad debt in the trial balance 25,000. Okay. And provision for doubtful debts is to be increased to 30,000 at the year end. Provision for discount on debtors also 2% they have asked you to make. Now listen. Okay, what is the debtor balance? 4,57,000. Is there any rectification which is happening which is related to debtors? Shh. Okay, is there any rectification which is happening related to debtor? Any rectification? No. Okay, now is there bad debt in the question? 25,000. Am I going to minus that 25,000? No, it is already there in the trial balance. But there is further bad debt, only that I will reduce. How much is the further bad debt? 7,000. Only this I will reduce because it is sitting outside. So now I get debtor as 4,50,000. Clear? Into provision for bad debt. Provision for bad debt, what percentage they said? Provision for bad debt is going to be nothing. Who told you 5%? They said 30,000. Already there is something. Okay, but provision for bad debt should be 30,000. So I am going to remove 30,000. Guys, what provision? Total provision you have to remove 30,000. So now this becomes 4,20,000. And they said provision for discount at the rate of 2%. 8,400. Clear? Remove that. This is how debtor will look in the balance sheet. Okay, 4,57,000 was there in the trial balance. Further bad debt, remove it. Then remove the provision. Okay, then you remove 8,400 as well. Now, my question to you is what will happen to P&L impact? I think in this entire question, this only is the major adjustment. P&L impact. Now, do you have bad debt already over here, 25,000? Yes, it is there 25,000. Okay. Do you have provision for bad doubtful debts already? 25,000. 25. That got adjusted. Your bad debt is 25,000 and you have provision for bad debt of 25,000. That got adjusted 0. Clear? But the further bad debt, for that you don't have a provision. So, further bad debt which is there, 7,000, it will be debited to P&L and provision for bad debt will be 30,000. You are seeing starting of the question, 25-30 ka difference, you are telling me 5,000. But the 25,000 became empty, no? 25,000 is the bad debt and provision for bad debt was 25. 25, that provision became 0. Then you had further bad debt. For that you didn't have provision. You had to take from P&L. After that you need 30,000 of provision. They only told you that provision should be 30,000. For that what you will do? You will have to debit P&L only. Full 30,000. Is this clear? Okay, this is the thing. Okay, and you also have to debit provision for discount on debtors 8,400. Clear? So bad debt will be first subtracted from provision. After provision gets over, even if after that also you have bad debt, debit it to P&L. Clear? Once you have already emptied the provision, if you require provision, full you have to create now. Are you getting this? Yes, that should be it with that particular question. I don't think there is any other problem there. Jan 2025, did we have final accounts? Everyone remembers. Easy, question was very easy. What?
Which we solved from ICO method, exactly same. Just using.
Is it?
Only number change.
Final accounts. Okay, now. What?
First and second mixture.
Basically, this is Gavaskar and Ganguly question. The value of stock is 7,65,000. This includes goods returned by customer. Okay, did you have the same adjustment over there? It will not change your stock. It will only create sales return. So that means you have to take it as sales return and you have to minus from debtors also. So later when you are calculating provision for doubtful debt, remember debtor has changed. Purchase includes one furniture item purchased on 1st January for 10,000. Same number and same date also was there. Depreciation. 1 month's rent is outstanding. Divide by 11. And 12,000 is payable towards salary, outstanding salary. Clear? Interest paid includes 9,000 paid against bank loan. Dena Bank, remember Dena Bank? Okay, and interest received pertains to investment and deposit. So go and calculate and see how much is the interest receivable. Okay, difference will be the different receivable which will go to balance sheet. And Dena Bank, go and see what is the loan, calculate the interest. Here they did not give you the loan ledger to tell which came when. So full amount you are going to calculate the interest. Provide for interest payable on bank loan and interest receivable on interest and investment and deposit. Make provision for doubtful debt at the rate of 5% on the balance under sundry debtors. Blindly you can't go and make the provision. Why? Because you have to subtract this 25,000 which is there over here. Insurance premium includes 18,000 paid towards proprietor's life insurance policy. Remove it and show it as drawings. No prepaid or anything, nothing is there. Okay, that should be it with final accounts. Okay, with that we are done with day 1. Day 1 we are done. Let's meet tomorrow, day 2. We are starting with partnership. See you guys. See you tomorrow. Bye-bye. Okay guys, let's start. Day 2 begins. Okay. Partnership. We'll start only with partnership. We don't want to keep that pending for later. I know it's your favorite chapter, so morning we should do your favorite chapter itself. Okay, partnership. How important is it? Can we skip it? Huh? Yes, if we skip, sometimes ICA may skip us only. Okay, do not skip partnership. ICA also knows that you're going to skip partnership. Look at the questions from last few attempts which are asked from partnership. Damn easy questions. Straightforward. There are no adjustments at all. There are no tricky things at all. According to me, only in June 2023, there was one partnership question, death of a partner, which was very, very tricky. Other than that, they have not asked any tricky question at all. Straightforward. Admission, only admission. Retirement, only retirement. Okay, death, only death. Okay, they have not made it complicated. Actually, there are more complicated questions in the study material itself. There are tricky questions in the study material. They are not asking those in the exam. They also know you are skipping it. Now, that means if this is coming easy, that means some other chapters questions are getting tricky. Are you getting my point? So, when ICA, usually the chapters which students skip at inter level, at foundation level, at final level, those chapters they will surely ask, and they'll ask simple questions. Okay, do not skip partnership. It's very easy actually. Okay, you just need to get that complete idea of it. Then after that you can solve anything. Admission, retirement, death, 90% is same. Small variation will happen here and there. Okay, let's start with partnership now. We'll go to the questions of partnership only when we finish everything. Full discussion of partnership. That is till dissolution. Then we'll go into questions, complete questions. Okay. So today's strategy, what we'll follow is after partnership, we have to complete everything obviously. Okay. After partnership, we'll go into NPO. After NPO, then we'll go into company accounts. After company accounts, we'll go into incomplete records. Then last we'll do inventory. Okay. No, NPO we don't want. We don't want you to go. No. Yes. Partnership. Let's start with partnership. NPO is even easier than partnership actually. NPO is even easier than entire NPO is only about outstanding and prepaid. That's it. You know what to add, what to minus, finished. Your NPO is finished. Okay. Now let's start with partnership, guys. Introduction of partnership. What does partnership mean? Meaning, somewhere in 11th and 12th only we have learned this. Two or more people coming together to conduct business with an intention to earn profits. That is partnership. Okay. Partnership agreement. What is partnership agreement? Obviously, when there are partners, there will be fights. So, mutually agreed terms and conditions between the partners. When partnership agreement is registered, it becomes partnership deed. Go to the registrar of firms and register the partnership firm, partnership deed, agreement, it becomes partnership deed. Why do we need to register? Yeah, but with agreement we can't sue. Arnav and Chetan, they entered into partnership. Okay. And then they got one stamp paper and prepared one partnership agreement. And they called Mohit. Okay, they called Mohit. And they called one more person. Okay. Chirag. With long hair. Okay. They got Chirag. These two people, they are going to sign as witness. These two people are going to sign as partners in the partnership agreement. Done. Everything is done. Later on, there was some fight. Okay. Chetan told, I don't know only about this partnership agreement. Okay. They have forged my signature and they have signed. I am not aware of it at all. Now what to do? How to prove it? It's not possible, right? So, if you register it, that time, you will have to go in front of the registrar. Okay. He'll call all of them. Come here. In front of me, sign. Okay. Now it is signed in front of him. He will tell registered. Clear? Now can Chetan tell my signature was forged? No. In the office of the registrar, there will be on CCTV camera showing that Chetan is signing nicely. Are you getting my point? Okay. Just that legally it becomes easy to enforce things. That's why partnership deed is preferable. Now, if not mentioned in the partnership deed, there are certain things which will not be possible only. One, profit sharing ratio to be equal. So for us in the question, if they don't tell profit sharing ratio, we are always going to take profit sharing ratio to be equal. No interest on capital. No interest to be charged on drawings. No salary or remuneration to partners. Interest on loan given by partner to be 6%. Understand this. Interest on loan given by partner 6%. Don't get into the confusion that, oh, if it is not told in the partnership deed, if I go to HDFC Bank and take loan, they are telling me to pay 11% interest, but I will pay only 6% interest because my partnership deed is not allowing me. No, only internal things, not external things. Only internal policy it is. External, no. There you will sign on the bank agreement. No, that is the policy over there. Clear? Yes. These are the things that you have to remember if it is not mentioned in the partnership deed. You can get 5 mark question based on this. Is this clear? Where they ask you to prepare P&L appropriation account. Now, note, interest on capital and salary to partners to be paid only if there is profits unless mentioned otherwise in the partnership deed. In the partnership deed, they told we have to give interest on capital and we have to pay salary to partners. They have told this, clear, but they did not tell whether we should give it at all times. They just told you should give this. That means only if there is profit, we will give it. If there is no profit, we will not give it. Are you getting my point? Interest on capital. Now imagine I have only 500 rupees with me. Interest on capital is coming up to 600. Does it make sense for me to give interest on capital when there is 500? How will you give? That means obviously you have to do some borrowing and you have to give, right? Profit is not sufficient. And if they borrow also, who is supposed to pay that money back? Partner only. It's like you're taking loan and giving money to yourself, but then later on you're only repaying that loan. That's why they said interest on capital and salary, you will give only if there is profit. If there is no profit, you will not give it. But if the partnership agreement or deed tells that you have to pay at all times, then you will pay it. Is this clear? Okay. If there is inadequate profit, what is inadequate profit? Not sufficient profit. Then profit profit should be distributed in capital ratio. They are not talking about distribution of profit. We are still talking about interest on capital. So when there is inadequate profit, okay, interest on capital you will distribute in capital ratio. Why? Interest on capital is given on capital only, no? So you don't have sufficient profit. So imagine over here, we have partner A, B and C. Partner A has 10,000 capital and this fellow has 50,000 and this fellow has 60,000 and the rate of interest is 10%. Okay, now the the profit that is there is 15,000. Do you have sufficient profit to give money to everybody? Why not? That is capital. Calculate 10% of that. You need only 12,000. Okay, you have 15,000 over here. Correct? Do you have sufficient money to give interest on capital to everyone? Yes. So give the interest on capital, which is 12,000, and then balance 3,000 you will distribute in profit sharing ratio. You will distribute in profit sharing ratio. Clear? But in case the profit is only 10,000, is it sufficient to give the interest to all these people? It is not sufficient. That time what you will do? You will distribute this 10,000 itself in capital ratio. What is a capital ratio? 1:5:6. When the capital is given in one arrangement, you cannot distribute this as interest on capital in profit sharing ratio, no? Are you getting my point? So if you don't have sufficient profit, always you will distribute whatever is there in capital ratio to partners. That means we are telling the partners, we are not able to give you 100% of what you are supposed to get, but whatever is there, we will give it to you in your capital ratio. Is this clear? Now, capital account maintenance system. Capital account maintenance system. Here we have two methods, fixed capital method, fluctuating capital method. Fixed capital method means what? Capital will always be fixed. That means only capital introduced and capital withdrawn to be entered in the capital account. Capital introduced, capital taken away, only that will be there in the capital account. All other transactions will be entered in the current account. Clear? Now what are the other transactions? Interest on capital, interest on drawings, salary to partners, profit or loss share to be entered in partners current account. Is this clear? If they tell fixed capital, then you have to keep two ledgers, that is partners capital account, partners current account. If they don't tell also, if you see in the balance sheet that is given in the question, there is capital account ABC, current account ABC. That means you know that they are following fixed capital method. So you will have to open current account also. Is this clear? Now, fluctuating capital method means what? One ledger, that is capital account. All transactions related to partners to be entered in the partners capital account itself. What are the transactions? These transactions. Everything will be there in the partners capital account itself. Is this clear? Additional capital also, everything. Capital introduced will be in capital account only. capital withdrawn will be in capital account only. All other things in current account. Okay, additional capital first time, second time, third time. Whenever they introduce capital, it will be there in capital account. After that, it will go all of the transactions will be in current account. Is this clear? Now, note, if question is silent, then it is fluctuating capital method. If they don't tell you anything, then all the transactions you put it in capital account only. Don't go to prepare a current account on your own. Unless they tell you, don't prepare current account. Is this clear? Next, difference between drawings and capital withdrawn. I think we had discussed this at the beginning in the basics. We have already seen it. Interest on capital. Interest on capital. Now, how to calculate capital into interest rate into time duration? Whatever the time duration is there, you are going to calculate interest on capital. Example, if interest rate is 10% and partner A has capital of 1 lakh, on 1/1/2022, capital introduced 50,000, and on 1/4/2022, then what will you do? This 1 lakh was already introduced on 1/1, right? So what will you do? 1 lakh into 10% into 12/12. But this was introduced on what? 1/4, right? So 50,000 into 10% into 9/12. So you'll take the time duration and you'll calculate the capital for capital introduced. If there was capital withdrawn, then you would have removed it. You would not give interest for that particular capital. Now, interest on drawings. We have 4 areas over here in interest on drawings. 1. Drawings on different dates and different amount. They have told drawings on different dates. Okay, no pattern or anything. Different dates and different amounts. Example, you see interest rate is 10%. 20,000 I have taken on 1/1 and 30,000 I have taken on 1/7. Okay. So what you will do for that 20,000, you will calculate interest for the entire year, and for the 30,000 you will calculate interest only for 6 months. Is this clear? Now, second situation, what can happen is same amount every month at the beginning of the month. Same amount. This pattern should be there. Then only you can use the formula. Same amount every month at the beginning of the month. If any month the amount changes, you can't use the formula. You have to calculate separately. If any month the date changes also, you cannot use the formula. You have to calculate separately. If every month it is at the beginning of the month and it's the same amount, then it will be total drawings into interest rate into 6.5 divided by 12. Clear? Now, example. Interest rate is 10%. Imagine 1,000 per month. Now, are you going to do 1,000 into the interest? No. 1,000 into 12. Can you see total drawings? 1,000 into 12 will give you total drawings of 12,000 into 10% into 6.5 by 12. You will get 650. Is this clear? Otherwise, you have to do every month. No. First, you will do 1,000 into 10% into 12 by 12. 1,000 into 10% into 11 by 12. 1,000 into 10% into 9 by 10 by 12. 9 by 12. You will keep on doing every month. Instead of that, you can just use the formula. Clear? But to use the formula, amount should be same, date should be same, and every month it should be there. Next, what if same amount every month at the middle of the month? If it's at the middle of the month, then it will be total drawings into interest rate into 6 divided by 12. Clear? So there it will become 12,000 into 10% into 6 divided by 12. If it is total amount which is drawn is at the end of every month, then instead of 6 divided by 12, you will use 5.5 divided by 12. You can use these formulas for saving time in the exam if they give the drawings. But pattern should be there. 3 things, that is amount should be same every month. Okay, date should be same every month. If you miss even 1 month in this, formula is gone. Imagine every month I have taken 1,000, but in March I have not taken 1,000. You can't use the formula that time. Is this clear? Yes. Now, if they just tell total drawings mentioned in the question, date of drawings is not mentioned at all, then what you are doing? Total drawings into rate into 6 divided by 12. Why? We can't just do total drawings into rate. If you do total drawings, imagine they tell you in the question, total drawings 50,000. Now if you do 50,000 into 10%, that's it. That means you will calculate interest of 5,000. That means you are telling that this fellow has taken 50,000 at the starting of the year itself. Are you getting my point? If at all you just do this much, that means you are telling he has taken 50,000 on the first day of the year. That's why you are charging interest for the entire year. Okay. 6 by 12 you have to do. That time you will get 2500. That means assumption that you are going to take is the amount is withdrawn evenly during the year. It is evenly during the year. If they just tell you total drawings, that time you will always use this formula. Yes.
Previous end of the
End of the month. What happened? Oh, 1000 per month at the end of each month.
What if they ask for
There also you can make a formula, but it's only 4, so you can quickly calculate also, no issues. If they ask for quarters also, there is a formula for that. But it will be too many formulas to remember. Yeah, you can do that. Yes. Usually they don't ask for quarters. Okay. First of all, they will give you dates because they want you to calculate in a difficult manner, right? They don't want you to easily get the number. Okay. And 90% of the time, they will just tell total drawings. They'll just tell total drawings. And trust me, 90% of the time, people are just stopping over here and making mistake in the exam. Everything will be correct. They just miss this 6 by 12. Are you getting my point? They just given the question, okay, they just tell in the question, drawings of X, 5000. Drawings of X, 5000. Now, interest on drawings when you're calculating, you have to do 6 by 12. If you stop over here, that means you are telling that this person has taken at the starting of the year. They have not told that. So, you have to assume that it is evenly taken during the year. Is this clear? Now, not only partnership, even in incomplete records, they might just tell sole proprietor is having some drawings and interest charge is this much. So, there also you have to do 6 by 12 only. Clear? Yes. With that, we are done. Now, we'll go into minimum guaranteed profit. Okay, minimum guaranteed profit. We have 3 people here, Akarsh, Manju and Narayan Murthy. Okay, imagine Akarsh and Manju started business, okay, of software. They thought we'll do software business and they took Narayan Murthy as the partner. Okay, Narayan Murthy they told. Do you think Narayan Murthy will be ready to bear losses now, becoming partner with these 2 people? No. So he said, I need a minimum guaranteed profit of 5 lakhs. 5 lakhs I should get, more than that, no problem. Okay, but whatever happens, I should get 5 lakhs. Now, there can be 3 things here. Guarantee is given by firm. Guarantee is given by the firm. Just understand this. If guarantee is given by the firm, first you give the profit to Narayan Murthy, then you distribute the profit to others. Clear? Profit sharing ratio is 3:2:1. Profit is 10 lakhs. Narayan Murthy will directly get 5 lakh guaranteed profit. Okay, understand this. Balance profit which is there 5 lakh. No, it will be shared between Akarsh and Manju. Clear? When the guarantee is given by a firm, first you give to that partner, then remaining profit you share between other partners. Clear? But if guarantee is given by partner, then what? Then one partner is giving, Akarsh is giving the guarantee. Then other partners are not involved on this, no. So what you do that time, first you distribute the profit. That time first you distribute the profit. Can you see shortage over here? Okay. Take from the partner who gave the guarantee. Take from the partner who gave the guarantee. That time this fellow will get the guaranteed profit. He will lose. But in this, middle person is not affected at all. So understand this. If guarantee is given by the firm, don't distribute the profit. First you give to that partner. Then you distribute to others in their ratio. If guarantee is given by the partner, one partner, then distribute the profit. See if there is shortage. If there is shortage, take from this fellow and give it to that fellow. Clear? If guarantee is given by partners in the ratio of 2:1, profit sharing ratio is something else only. But guarantee they told we will give it to you in this ratio. What is 3 by 6? No. 3 by 5. 3:2:1 is a profit sharing ratio. Remove this guy. Remove this guy. You already paid him. Why 3 by 6?
So if we do it the consideration is we will get less than 5 lakhs or we will, in the beginning, the starting only we will give to you, right? 5 lakhs. If you follow 3:2:1, we will get less than 5 lakhs for the share of Narayan. So that's why partner firm give guarantee. So first we will give to Narayan. After that remaining we will follow this.
Yes. What is the doubt in that? Their doubt is something else. Yes. You're asking me why you are not taking 3 by 6 and why you are taking 3 by 5. That's your doubt. Sit.
ratio 1/6 ratio ಕೊಡ್ತಿದೀವಿ ಅಂತ ಹೇಳಿದ್ರೆ then ಆಕಾಶ ಮತ್ತೆ ಮಂಜಿಗೆ ಏನು ರೇಷಿಯೋ ಕೊಟ್ಟಿರಲ್ಲ. So how do we distribute
Okay. Profit sharing ratio, if they tell you that it is 1/6 for the new partner, then using this 1/6, you have to find the new profit sharing ratio. You have to find the new profit sharing ratio. New profit sharing ratio we know, right? 1/6 if it is given to new partner, that means 5 by 6 is remaining for the old partners. This 5 by 6 will be shared by old partners in their old ratio. Whatever the old ratio is there. Old ratio mentioned what is the equal? What capital ratio? When things are not mentioned in the partnership deed. Old ratio, if it is not mentioned, equal. Equally will distribute. What you will distribute equally? 5 by 6. So it will become 5 by 6 into 1 by 2. 5 by 6 into 1 by 2. Basically it will become 5 by 12. 5 by 12 each. Okay. If they don't tell you, then you have to calculate new profit sharing ratio. Okay, new profit sharing ratio has to be computed. Now, understand this. Yeah, and one more question is why I am taking 3 by 5 and 2 by 5? 3:2:1 is the ratio for 3 partners. Already you paid Narayan Murthy, no? Done, no? Narayan Murthy given, no? Now you have to share between only 2 people. Only 3:2. Only 2 partners. Did you have a doubt? What?
Partnership earns less than, example, take it as 2 lakh. We gave us 5 lakh guarantee to pay.
Then those people bring money and give it to this guy. Yeah, they'll bring money and give it to this guy. Minimum guaranteed profit. That's all.
If a company goes to loss also, we should bring that.
Company, no partnership. We should give. We should. That is a deal. No minimum guaranteed profit. You have to give. And partnership unlimited liability. No, you will bring money. Okay, that is the thing. Or if the thing gets very bad, then you will tell him, please retire. We are not able to pay you in future. Instead of staying here and filing case and all, retire. So that over end of the story. Yes. Now that's what. If guarantee is given by a firm, what do you have to understand? First, you have to distribute give the profit only to the guaranteed partner. Remaining profit distribute between the remaining partners. If guarantee is given by a partner, distribute the profit. Then whatever shortage is there, it will be given. If guarantee is given by partners in a different ratio, first you distribute the profits. Then whatever shortage is there, distribute that in the agreed ratio. The agreed ratio here is 2:1. Close the door, but yes. Now let's go further. Goodwill. You can study everything in partnership, but if you don't study goodwill, then you can forget about partnership only. Are you getting my point? Okay, you can study everything in partnership. Sir, I studied everything, sir, in partnership. All the problems I have studied, sir. Only goodwill topic I have skipped, sir. That means it is better to skip partnership itself. Why? Because almost everywhere, until you reach dissolution, everywhere goodwill is there. Now, what is goodwill? What is goodwill? Reputation of the business. Factors affecting goodwill. What affects goodwill? Location. Imagine one person is there, Soyam, okay, having ice cream business. And there is Bambani also, having ice cream business. Now tell me one thing. If this fellow has ice cream business next to school, and this fellow has ice cream business somewhere random place, same ice cream, who will have better goodwill, better reputation? Just because of the location. Imagine this guy also comes to the same location. Now it's neutralized. Correct? Now, Bambani, if you give him 30 rupees note, 30 rupees note is not there. If you give him 50 rupees note and 30 rupees is the ice cream cost, 20 rupees change also he will not give. He will shout at you for change. Soyam, if you give him 500 rupees note, also he will smile and give you. Now, whom will you go to? Obvious. You have had this situation, no? Some shopkeeper is there. Okay, always talking to you nicely, you will always go to that shopkeeper only. Correct? So customer satisfaction. Same ice cream, customer satisfaction. Clear? Now, so what Bambani did, he also started smiling. He also started smiling. Neutralized. Correct? Now, what did Soyam do now? He went to Baskin Robbins. Okay, from there, the main chef or the person who is preparing, he got that guy as partner. He got that guy as partner. Now what happens? Reputation of owner. Reputation of owner. Just because you know, ice cream is still same. Ice cream is still same. Just because you know that, oh, that Baskin Robbins fellow is there over here, you will go to this guy. Okay. Now just like what do you say, Virat Kohli's hotel, which is there, restaurant which is there over here in Bangalore. Correct? We don't know how the food is, but it's always crowded, right? People will go just because it is Virat Kohli's hotel. Are you getting my point? Food might be normal only. You might get better food in CTR. Okay. Oh, CTR food is horrible. Anyways, that's a different thing. Okay. Now, reputation of owner. Next, uniqueness of product. Imagine Soyam has some ice cream which nobody has. Okay. And that ice cream is patented. Nobody can make that ice cream also. So now can you see, just because of that, everybody will come to that fellow. Are you getting my point? He has an ice cream which will not melt for 1 hour. He makes an ice cream which will not melt for 1 hour. Okay, nobody can make that ice cream. So don't you think people will go to Soyam now just for that unique product? Nowadays it's fancy, no. It does not have to taste well. It just has to be fancy. People will go and buy. Are you getting my point? Okay, some ice cream with below there is one small toy, Pokemon toy. Okay, people will go and buy just to collect that Pokemon toy over there. Are you getting my point? Okay, it does not have to be tasty. It just has to be fancy. That's all. Okay, so these are the factors which are affecting the goodwill. Clear? Now, computation of goodwill. First, we need to know the methods. First method is average profit method. We are talking about simple average. What is the formula for goodwill? Average profit into number of years of purchase. Okay. Average profit, how will you find out? Total profit divided by number of years. Okay. Number of years of purchase will be given in question only. Sir, I have one doubt, sir. This number of years, this number of years, same. This is past. This is future. This is past. This is future. This is the past profit based on which we are doing the calculation. This is the future for how many years we are planning to or we are expecting to maintain this profit. Okay. We are telling with our reputation, we will have the same profit for next 2-3 years. Okay. That is number of years of purchase. Clear? Need not be same. Need not be same. Clear? Sometimes it will be 3 years. They gave 2020, 21, 22 and they told number of years of purchase is 3. So that time here also 3, here also 3. Is that clear? Okay, but this has to be given in the question itself. Weighted average profit. Goodwill is equal to weighted average profit into number of years of purchase. Again, it will be given in the question. How to calculate weighted average profit? Total product divided by total weights. Total product divided by total weights. Product is basically what? How will you get the product? Profit into weightage. Okay, profit into weightage. Okay, highest weightage will be given to the most recent year. Okay, used when there is trend in profits. What is trend? Either the profit is going increasing or the profit is going decreasing. Now, if I tell you 2020, 2021, 2022, if I tell you the profits, okay, 40,000, 50,000 and 60,000, or let's make it 80,000. Okay, can you see a trend? Is it increasing? Now, why I change that number from 60 to 80 is because you will think that trend means every time 10,000 increase. You will think that trend means every time 10,000 increase. No, trend means just increasing. That's all. They did not go to ask you to make any research on that trend and all. Okay, just increasing, that is the trend. Decreasing, that is the trend. Okay, so now, weightage, how will you give weightage? 1, 2 and 3. Why 3 I gave for 2022? Because it's the most recent year. Now you will calculate product. This will become 40,000 and this will become 1 lakh and this will become 2 lakh 40,000. 3,80,000 and this will become 6. So 3,80,000 divided by 6.
Sir, 63,333.
63,333 and this 63,333 will be there. No, this is your weighted average profit. Into whatever number of years of purchase, you will get the goodwill. Okay, now listen. Listen. Now, if at all I tell you the profits over here are 80,000, 60,000 and 50,000, what will be the weightage that time? Decreasing trend. What will be the trend? What will be the weightage that time? Same. It will not be 3-1. Trend has no connection. Weightage has no connection with whether profit is increasing or decreasing. What did I tell you? Weightage, highest weightage should be given for the most recent year. That's the end of the story. Whether it is increasing or decreasing, highest weightage you will give for the most recent year. That's all. These are the kind of mistakes you are making, right? Okay, now listen. Why? Why highest weightage for the most recent year?
Recent one is highest chances.
Recently what happens, the chances of that repeating is more. That is why the recent profit you are giving more weightage. Yesterday you studied. Today also you are studying, chances is more. Okay, 1 week back you had studied. After that you didn't study. Today you are studying, chances is less. Are you getting my point? Did you understand, Chetan? Why are you laughing, man? I just asked. Yes. Is this clear? Weighted average profit. Now, actually weighted average profit is supposed to be used whenever there is a trend. But ICI, everywhere there is trend, they are not using. Some places randomly they are using simple average profit. Some places where there is trend, they are using weighted average profit. So it is better in the exam, you wait for ICA to tell you that weighted average profit has to be computed. Otherwise, just use simple average only. Okay, before I should tell that you should use weighted average profit whenever there is trend. That's actually the rule. But ICA is not doing it. What they're doing, when they tell only they are using weighted average profit. Otherwise, if there is trend also, they are not using weighted average profit. Is that clear? So use simple average. If told, then you use weighted average profit. Imagine there is no trend only. Increase, decrease, decrease, increase. Okay, there is no trend. But ICA told in the exam, weighted average profit to be computed. Will you give a note? Because there is no trend, I will calculate under simple average only. Then ICA will tell, I will give you marks that I feel only. Are you getting my point? Okay, so don't do that when they have told. Even you know that it's actually not right practically, you still follow it. Clear? Give weighted average profit itself. Huh? How what? Oh, you're telling okay like that. You're telling if it is 60,000, 80,000 and 50,000. Is it like that? Okay. What how? 1, 2, 3 only. Gube, I already told you. Highest weightage has to be given to the most recent year. I told you highest weightage has to be given to the most recent year. What profits are there? It's irrelevant. I'm telling you from that time it's irrelevant. Whether it is increasing or decreasing doesn't matter. It has to be 1, 2, 3. Because recent year it's more important. The chances of it repeating is more. So give more importance to that. So multiply into 3. Little less importance 2. Very least importance 1. That is the purpose of giving weights. Is this clear? Any profit, increasing trend, decreasing trend, profit is irrelevant. Again I'm telling you. Okay? Weightage will be 1, 2, 3. Whatever profit number you want to put, you put. Yes. Shall we continue? Yes. Okay. Super profit method, most logical method this is. Super profit method is the most logical. This and all is irrelevant only. Okay, stupid methods there. What are they telling? They are like, I have profit 50,000. I will expect to get profit. Next 3 years also I'll get 50,000 only. This is my reputation. This is my reputation. Tell me one thing. Reputation is your total profit or that extra that you make compared to others? The extra that you make compared to others is reputation, no? So that is why super profit method is more relevant than others or more logical than others. There you are telling your full profit is because of your reputation. No. Imagine you have one amazing brand of hotel. In front of that hotel, one random guy keeps one table and sells one food item. Even he'll make profit. Are you getting my point? You have the top hotel in the country. In front of that, opposite that road only, if somebody keeps just one table and sells one product, even he'll make some profit. But what you make extra compared to him, that is your reputation. Clear? So super profit method, goodwill is equal to super profit into number of years of purchase. Number of years of purchase will be given in the question itself. Clear? Now, super profit is equal to average profit minus normal profit. Average profit we already learnt. Normal profit. Capital employed into NRR. Both have to be given in the question. Otherwise you can't do. Capital employed will be given in the question. No, partners A, B, C. You will see what is their capital. That is capital employed. Okay. NRR is normal rate of return. What is this normal rate of return? That means anybody starts business in this industry. Normally, what are they supposed to earn? Let's say 10%. That means 10% return. Okay. Already somebody is doing software business. If I go and start software business, normally in this industry, what is the rate of return? Let's say 20%. That means I should make 20%. Are you getting this? So, if at all, average profit is 20,000, but normal profit is 15,000. That means you are earning more. Okay, you are earning more compared to others. 5,000 is your super profit and that will become considered for goodwill computation. Clear? Next, capitalization method. Capitalization method. Normal value of business minus actual capital employed will be given in the question only. Actual capital employed will be given in the question itself. Okay, so how are you going to calculate normal value of business? Average profit divided by NRR into 100. Okay, when you do this, if you get normal value of business is 6,50,000, but your capital is only 5 lakh, that means what? You are having the difference here 1,50,000. That means normally somebody else to make this profit, they have to invest 6,50,000, but you invested only 5 lakh and you are making the same profit. That means extra is whatever is there over there is goodwill. Okay. Apart from this, there is also one more thing which will come in the questions, which is called as hidden goodwill. Okay, hidden goodwill. What are you going to do? Hidden goodwill. How are you going to calculate that? How are you going to calculate? New partner will be there, will 50,000. You will take his share and you will calculate what is the total capital. Okay, then you will see what is the existing capital. Total capital minus existing capital, whatever difference you get, that is called as hidden goodwill. Is this clear? Now, goodwill is one thing, computing. Okay, accounting is the most important thing. Now, accounting for goodwill. Till now you got only the value, no? You're like, okay, sir, this much is the goodwill, this much is the goodwill, this much is the goodwill. Now, what we are going to do? We are going to do the accounting for goodwill. Okay, now, sacrificing partner will to be compensated by gaining partner. This you have to remember irrespective of anything. Just remember always sacrificing partner will pay the gaining partner. Gaining partner will pay the sacrificing partner always. Okay, and that will be done in this ratio, sacrificing ratio, old ratio minus new ratio. I do not teach gain ratio at all. I am not going to teach gain ratio at all because it will become two formulas to remember and you will just mess up where to apply which one. Always use this formula only, old ratio minus new ratio. Let it be admission, let it be retirement, let it be death, no problem. You will still use this ratio only. Clear? In this ratio, when you are calculating, answer is positive. That means it is sacrifice. Answer is negative. That means it is gain. This is clear? Answer is positive. That means it is sacrifice. Answer is negative. That means it is gain. 100% there will be somebody who is sacrificing, somebody who is gaining. Clear? There cannot be a situation that nobody is sacrificing, nobody is gaining. In admission, retirement and death, somebody will sacrifice, somebody will gain. But there might be some partner who will not sacrifice or not gain also. Clear? So, why I am telling you this is, just because it is admission, don't always think that only one person is gaining. There can be some old partner also gaining. Clear? So, sacrificing ratio will be old ratio minus new ratio. Now, note, when computing profits for computation of goodwill, profit or loss not expected in future must be eliminated. What is this? abnormal profits will be eliminated. So basically what is goodwill? Keeping the past as the base, we are telling the future. Correct? Something that has happened in the past, we are not expecting that to happen in the future. So we don't consider that in the profit calculation. Is this clear? In goodwill chapter, when we go there, there are some study material questions where there are these things, abnormal items happened in the past. Now, for example, in the last 3 years, once there was one fire accident, loss by fire 10,000. Do you think that loss will happen again in the future? No. So that loss should not be considered when you are calculating goodwill, because you are predicting future, right? You are predicting future, right? So you are not expecting some loss to happen in the future, so you will not consider it at all. Is this clear? So when you are taking profits for computation of goodwill, remember this very, very important point. Profit or loss not expected in future must be eliminated. They will only tell you what are those. One more very, very important point. What is this? Rectification. Profits, if there are errors, first you rectify it, please, then you calculate goodwill. So you have to study rectification of errors. Clear? We saw rectification of errors trouble us in final accounts. It can also trouble us in partnership. So you skipped one thing thinking that it will come for 10 marks, but later your 40 marks are gone in the exam. Possible? Yes. 10 marks direct rectification question. For 15 marks, final account you are not able to complete because there was rectification there. In the trial balance suspense account is there, you don't know what to do. In partnership, they asked one more 15 mark question. There again, profits have to be rectified. Do not skip anything. You thought I will tell do not skip rectification? No, do not skip anything. That is how you are going to clear. Okay. Now, accounting for goodwill in different circumstances. Different circumstances. If it is admission, okay, new partner brings in money for capital and goodwill. They will tell no, new partner is admitted D. He brings in 25,000 for capital and 10,000 for goodwill. He brought both. Okay. Bank account debited to new partner's capital account is the entry for capital and goodwill together. First let him bring the money. Don't start sharing before he comes in only. First let him bring the money. Then gaining partner's capital account debited to sacrificing partner's capital. Sir, you made a mistake here, sir. You should have written, sir, new partner's capital account debited to old partner's capital account. No. In old partner, there can be somebody who is not gaining or sacrificing. Are you getting my point? Never it is going to be like that. You have to calculate sacrificing ratio irrespective of what has happened. Clear? You have A, B and C old partners. D is the new partner. D is gaining for sure. D is gaining for sure. But there is no guarantee that A, B, C are sacrificing. In that C might not be sacrificing or C also might be gaining. Are you getting my point? Basically, if no admission, no retirement, no death happens, you only change the profit sharing ratio. There also somebody will be sacrificing and gaining. Are you getting my point? Yesterday we bought 10 dosas. We all shared it equally. Clear? Today we bought 10 dosas. I am going to take 2. Then you are going to share it equally. Now, are we having extra people? No. Are we having retirement? No. But still, we just change the profit sharing ratio. Somebody is sacrificing, somebody is gaining. Are you getting my point? So, admission, retirement, death, don't come to any conclusion. Always it is gaining partner's capital account debited to sacrificing partner's capital account. Clear? Now, new partner brings in money only for capital. New partner brought only capital. Bank account debited to new partner's capital account only. Now what will happen? Gaining partner's capital account debited to sacrificing partner's capital account. If he brings or does not bring, doesn't matter. We will still take. From where? From his capital. So if he does not bring, what he brought as capital, that will get reduced. Clear? Now, amount of share of goodwill of sacrificing partner if withdrawn by the partner. Partner's capital account debited to bank. Something fell into your capital account. You say, oh, new thing. Very happy. What we will do? We'll take and use for a personal purpose. Partner's capital account debited to bank. Removing. Withdrawal. This, will it be considered as drawings? Will it be considered as drawings? No, it is capital withdrawn. Okay, your money you're taking. Drawings is when you take firm's money for personal purpose. Is this clear? Okay, it is not considered as drawings. If new partner pays sacrificing partner's share of goodwill privately, now for example, Chetan, okay, is the new partner and there are old partners over here. Okay, Chetan is the new partner. They told Chetan, you have to bring in money for goodwill. Chetan told, we'll do one thing. I will give you privately. Okay, I'll come to your house and I will make you sit like this and I will give you one nice head massage. Okay, Chetan is giving one nice head massage. Okay, 30 minutes. After that, hair starts growing. Okay, so that time what happens? Privately, something has happened. Okay, Chetan has done something. Okay, no entry. No entry. Are you getting my point? Old partners, they will sit quietly. No, they will not tell no that we have to pass the entry because already the reputation, whatever they have earned, Chetan has compensated. Imagine Chetan goes and gives one Bitcoin. One Bitcoin he gives to old partners, one. Okay, that I'm over, no, done, no, privately something has happened, no, no entry. What is the value now? One Bitcoin. Goodwill is? No. It has to be compensated in the firm or privately. Yes. Accounting for goodwill in different circumstances. Now, retirement, death, change in profit sharing ratio. If you have retirement, death, change in profit sharing ratio, gaining partners capital account debited to, sacrificing partners capital account, adjustment of goodwill has to happen. Now tell me one thing. This goodwill distribution will be done in what ratio? Sacrificing ratio. Where else will you use sacrificing ratio? Where else will you use sacrificing ratio? For goodwill distribution you are using sacrificing ratio. Now for what other distribution you will use sacrificing ratio? Share of profit. When we are getting profit, we will use sacrificing ratio. Then why profit sharing ratio is mentioned? What? For what? You just answer my question. Where will we use sacrificing ratio? Other places. Where else will we use sacrificing ratio? Only guys. Huh?
What if this is the for that distribution?
Question is, other than goodwill distribution, where else? For that answer cannot be goodwill distribution. To compute profit sharing ratio, no. You know where we will use? Nowhere. You will use nowhere. Sacrificing ratio is used only in goodwill distribution. We are not going to use it in any other place. Clear? Only in goodwill distribution sacrificing ratio is used. Other than that, old profit sharing ratio is there, new profit sharing ratio is there, capital ratio is there in some places, but nowhere sacrificing ratio. Is this clear? Okay. And for this you can't use any other ratio. It has to be sacrificing ratio only. Now let's go further. Admission of a partner. What does it mean? Somebody is at the door. What does that the meaning? Nobody. Okay, nobody is literally at the door. Okay, admission of a partner means new partners being admitted into an existing partnership firm. Clear? Now, what steps you are going to follow? Obviously, you need to compute the new profit sharing ratio. If you don't have new profit sharing ratio, you need to compute it. Then you need to compute the sacrificing ratio, old ratio minus new ratio. Compute the goodwill, average profit, super profit, whichever method they have told, compute goodwill. Then revaluation of assets and liabilities. This is a new thing. Okay, 100% you know. Okay, that increase, decrease, what to do and all that. But why? Why? Why revaluation?
To know the what is the appreciate and depreciate of the
Value of
Liability on the current.
current day. Okay.
to know the what are the assets appreciated, depreciated, and what is the correct value of.
Yeah, that is what she told.
Transfer to the old partner.
Sir, before only I started getting.
Okay.
The value should be transferred to the old partner.
Value should be transferred to old partners. Okay. But why?
Because they
the new partner can
enjoy the benefit.
New partner should not enjoy the benefit which has happened before he came. Correct? Now imagine you have one land. Okay, in Nelmangla. In Ilmangla, you have a land, you have purchased that land at 5 lakh rupees. Okay, at 5 lakh rupees, you have purchased the land. Okay, now that land value has become 50 lakhs. Clear? If you don't revalue the land, when the new partner enters, what is the value of the land now? 50 lakhs. And after the new partner enters, immediately you have a fight and you dissolve the partnership firm. When you sell the land, how much will you get? 50 lakhs. Profit is how much? 45 lakhs. Who will share it? All partners. All partners. All partners. Because you let that person come in. He has joined. You have not done revaluation. After he has joined, he is also a partner. If you sell, whatever profit comes, he is also a share of it. Clear? Now, that is why when you have the land at 5 lakh, he is still at the door. You increase that land value to 50 lakhs in the books. Whatever profit you get, share between old partners. Now when he enters, he sees the land at what value? 50 lakhs only. Now if at all we fight immediately and if we sell the land at 50 lakhs, what will we get? Nothing. Correct? But imagine we fight after 1 week and we sell it at 51 lakhs. 1 lakh profit, it will be shared between old partners or all partners? All partners. But he is also part of this 1 lakh, no? The increase happened after he came. Clear? So, understand this. We have worked hard and our assets have gone up. Okay? That value we don't want to share with the new person. Clear? That is why it is revaluation of assets and liabilities. If asset value has gone down, he will not be ready to enter till you change the asset value. Why? Otherwise he has to enter and bear the loss. So it's a two-way thing. I don't want to share the profit, but I would have been happy to share the loss. But he will not be ready to share the loss. Are you getting my point? Okay. Now, increase in assets. Assets should be debited. Revaluation is credited. Decrease in assets. Revaluation account debited to asset account. Increase in liabilities. Revaluation account debited to liabilities. Decrease in liabilities. Liabilities account debited to revaluation. You can think of this from modern approach or you can think of it from another angle as well. Modern approach, what happens? Increase in asset debited, decrease in asset credited, increase in liabilities credited, decrease in liabilities debited. Correct? That is modern approach. Or you think of it from another angle also in the exam if you are not able to understand whether it should debit or credit. Increase in asset is good for you. Profit credited to revaluation account. Decrease in asset is bad for you. Loss debit to revaluation account. Increase in liability very bad. Revaluation account debited. Decrease in liability very good. Revaluation account credited. So you can also think from whether you are gaining or losing things and based on that also you can pass the entries. Clear? Revaluation profit will be transferred to partners capital account in old profit sharing ratio. That means only old partners. Revaluation profit revaluation loss, this should be okay. Revaluation loss, partners capital account debited to revaluation account in old profit sharing ratio. That means profit or loss will be shared between old partners in old profit sharing ratio. Before letting him enter the door, you will do all this. Clear? Now, note, if assets and liabilities are to be shown at original values after revaluation, they might tell in the question, 5 points they might tell in the question about revaluation. Then 6th point they might tell, partners decided to show original value in the books. Why did you tell this 5 points then? That means should we do revaluation or not? We should do and then reverse. We should do the revaluation, share the profit or loss among old partners and reverse everything and share the profit or loss among all partners. This is called as memorandum revaluation account to be prepared. Clear? They will not tell you directly memorandum revaluation account to be prepared. They will tell you if assets and liabilities to be shown at original values. Now, because of this one sentence now, students make mistake. You know what mistake they make? They will tell 3 points about revaluation and then they will tell apart from the other assets are to be shown at original values. Is it memorandum revaluation? They have told land to be appreciated by 5%, building to be depreciated by 10%, plant and machinery to be depreciated by 2%, other assets to be taken at original values after admission. Is it memorandum revaluation? No. They said these 3 will get revalued. Other assets which are there, that will be shown at original value only. If they tell all the assets and liabilities are to be taken at original value. After revaluing, it will increase or decrease. No. How can I show it at original value? Then I have to prepare memorandum revaluation account. Simple. Whatever evaluation you do the opposite again. Reverse it. Clear? All revaluations done to be reversed and profit or loss to be shared between all the partners, including new partner in new profit sharing ratio. Is this clear? Are you following this? Yes. Now, reserves. Now, first understand this. When I did the revaluation, I got profit. It will be shared between old partners in old profit sharing ratio. If I reverse this, I will 100% get loss. This will be shared between all partners in new profit sharing ratio. I hope it's clear. Okay. Next, reserves. What is reserves? In the past, I was careful and I have saved some money. I have saved some profit, kept it for the future. Do I want somebody randomly walking in and enjoying that profit? No, right? So distribute among old partners. Distribute among old partners. Reserves account debited to partners capital account. Old partners in old profit sharing ratio. Is it clear? Yes. Admission of a partner. New partner comes in. Bank account debited to new partners capital account. Amount brought by new partner. We have already discussed this. This can be only capital or this can be capital plus goodwill. Whatever he brings, we are going to distribute. I mean, we are going to put it into his capital account. Now, goodwill distribution. Okay, goodwill distribution. Now, understand this. Gaining partners capital account debited to sacrificing partners capital account. Same, it's going to be same. Never new partner to old partner. It has to be gaining partner to sacrificing partner in sacrificing ratio. So you have to calculate sacrificing ratio, then you will get to know who has to give to whom. Make capital proportionate if they tell. Sometimes they'll tell, make capital proportionate if mentioned in question only. Now, there are three types there. They will only tell, make capital proportionate keeping new partner's capital as the base. So what you will do that time? You will keep new partner's capital as the base. You will get the total capital. Then you distribute. You will know how much capital should be there. Go to capital account and find the balancing figure. That is the existing capital. If there is more, make them take it. If there is less, make them bring money. Clear? Now, if they don't tell anything, sometimes they'll tell make capital proportionate. That's it. Then you have to use asset is equal to liability plus capital formula. Asset is equal to liability plus capital. That time you will get the capital, total capital. Assets you know because you only did the revaluation. Liabilities you know because you only did the revaluation. So the balancing figure should be capital. You know the total capital. Make it compute what is required. You will get the amounts. Go to capital account and find the balancing figure in the capital account. That time you will get the existing capital. Difference should be brought or difference should be taken. Clear? Now, new capital is given already. They'll tell, after admission, the capital of the firm must be 3 lakhs. That amount you will do. Divide that 3 lakhs in the profit sharing ratio. See what is there now. Difference should be brought or difference should be taken. There is, I think, one question somewhere in the study material where they have told, make capital proportionate, but difference has to be adjusted through partner's current account. It has to be adjusted through partner's current account. Now, if at all, in this case, I am telling that somebody has to bring money, what entry I will pass? I will pass bank account debited to partner's capital account. Correct? If they are telling adjusted through partner's current account, bank will not happen. Partner's current account debited to partner's capital account. If somebody has to take money, what I will do? Partner's capital account debited to bank account. But if they tell adjusted through partner's current account, no bank, then you'll just put it to partner's current account. Is this clear? That should be it, I think, with admission. Let's go into retirement. Oh, we finished 1 hour of just partnership discussions. Imagine how many questions we have to see. Little. Okay, retirement of a partner. Let's go further. Hey, there is that one guy, no? Where is that guy? ICU batch. Where is he? Oh, he's going to temple. Very good. God should make us pass. By the way, should we pray when we are studying for exams and all? Should we pray? Should we pray? Do you guys believe in prayers? Huh? Efforts are there, we should pray. Yeah. God will give what we can. God will give you water, but you have to drink it. Deep spiritual thoughts, morning. Okay. I believe in not praying on one day. Okay, I believe in God. Okay. So I believe in not praying on one day. You know what day that is? Result day. On result day, you should not pray at all. Yeah, they have already uploaded the marks from the previous day. Result day morning, if you go to all temples, what God can do? He is also looking from top and telling, what can I do? Already marks are uploaded. Yesterday evening, if you would pray, at least that uploading person, instead of 36, I would have made him upload as 63. Are you getting my point? But today even I cannot do. It's already on the server. They have to just make it, they have to, give the access to you. Clear? So if you're praying, no, when you're studying, you should pray. But first you should study. Okay, so that praying gives you some mental peace and it gives you positivity, and whatever you study, let's pray that it remains in our memory and will be calm in the exam hall. Going to the exam, maybe you can pray that time. After the exam, that time you should pray very much. Okay, it is like I have written the capital of India as Bengaluru. So before the results, please change India's capital to Bengaluru. Okay, so that we will get the marks. Okay, so that time you should pray. Result day, I don't believe at all. Okay, I don't think it makes sense on result day because God can't do anything that day. But all of us usually remember God on result day only. Before we won't remember God. It's there, no, like when we are in trouble only we'll remember God. When we are happy, we'll not remember. Okay, so if you are praying, please pray when you are studying. But first you study. First you study, then you pray. Prayer should be a part of this thing, your routine. But studying should be a part of your routine anyways. That I don't need to tell you. Without you studying at all, going to the exam hall, every day praying for 5 hours. Meditation you're doing. Okay, God will not come and put partnership into your head in the exam hall, no. So first you study so that partnership doesn't go out of your head. First you put it into your head and pray to God, telling that let it be in my head only. Clear? Yes. Retirement of partner. PG? Is it? Okay, we'll take a break at 9:30. 9:30 we'll take a break. Okay, 12 minutes are there. We'll take a break. We'll try to finish concept of partnership as much as possible. Okay. Retirement of partner, guys. Retirement of partner. What does it mean? Existing partner leaving the partnership firm voluntarily. Existing partner leaving the partnership firm voluntarily. Clear? Now, steps to be followed. Voluntarily, that means he is only going. Steps to be followed. New profit sharing ratio usually given in the question. Okay. Now, if they tell old profit sharing ratio is 3:2:1 between A, B, C. C is retiring. And they don't tell you what is the new profit sharing ratio. Then it is 3:2 automatically. Now you don't even have to calculate sacrificing gaining ratio. It will also be 3:2 only. Are you getting my point? If you do it old ratio minus new ratio also, you'll get 3:2 only. Clear? Now, new profit sharing ratio usually given in question. Compute sacrificing or gaining ratio, old profit sharing ratio minus new profit sharing ratio. Prepare revaluation account. Obviously, revaluation account, why we are doing now? One person wants to go. But before we do revaluation, he will not go out of that door at all. He will not. He'll be like, I worked so many years. Asset value increased. I know. I need that share. Clear? So, profit or loss, share between all partners, including the retiring partner. Again, old profit sharing ratio only. Okay? Their new partner was near the door. We didn't allow him to enter. Here, old partner is inside the room. We are not allowing him to go. Even if we are allowing, he will not go. Clear? Reserves. From so many years, we have not put profit into our pocket and we have shared. Do you think the retiring partner will be ready to go? No. Share between all partners, again in old profit sharing ratio. Goodwill computation, again. So many years, even he has put in hard work to build reputation for this partnership firm. So we have to give him his share of goodwill and send him. Clear? Goodwill distribution. Sir, goodwill distribution, retiring partner, I'll tell you, sir, it should be remaining partners will give it to the retiring partner. No, gaining partner will give to sacrificing partner. It remains constant everywhere. Clear? In remaining partner, there might be somebody gaining as well. We don't know. So gaining partner to sacrificing partner. Okay, new terminology which we are going to learn is joint life policy and separate life policy. What is joint life policy? Life insurance policy taken on the life of all the partners. Clear? Life insurance policy taken by firm on the life of partners jointly. Taken by whom? Very important. Taken by whom? Firm. If partner has life insurance policy and he is paying the premium, we are not bothered only about it. But policy is on the life of the partner, but taken by the firm. That means premium is paid by whom? Premium is paid by the firm. That means all the partners have a share in this. So, understand this. Whenever you get any amount from joint life policy, what amount we are going to get, we'll discuss that. But whenever you get any amount, it will be shared by all partners. It will be shared by all partners. Don't come to conclusion. A, B, C were there. C died. So we got 1 lakh rupees from joint life policy. Okay, we'll give it to C. No, it will be shared by all partners. Why? Because for this policy, whenever we paid premium, it was paid by A, B, C. Premium was paid by firm. So A has contributed, B has contributed, C has contributed for that premium. So whenever money comes, it will be shared by all the partners. Is this clear? No. Separate life policy means what? Life insurance policy taken by firm on the life of an individual partner. That means there are 3 partners. Okay, Chetan, Mohit and Chirag. They feel that Chetan is very important for this partnership firm. So on Chetan's life, separately they have taken one more policy. This is called a separate life policy. In case, God forbid, if in case something happens to Chetan, okay, that time the amount will be given to whom? Amount will be given to whom? All partners. Nothing you are going to tell where you are going to tell only one partner. Whatever might happen to any partner, joint life policy and separate life policy amounts will be shared by all partners. Is this clear? Yes. Now,
Premium paid for separate life policy also will be.
yeah, it will be paid by firm only. See, life insurance policy taken by firm. If Chetan takes LIC policy on him, on his life, on his own, then it will not come into partnership books only, no. It is taken by firm. That means everybody is losing money. Okay. Next, policy amount received. If partner dies, policy amount is received. If partner retires, then surrender value is received. Are you getting this? If partner dies, what you will get? Policy amount. Even in joint life policy, even in separate life policy. But if partner retires, what you will get? You will get surrender value only. Is this clear? Now, what is surrender value? We just want to close the policy because ABC were there. Policy is on ABC. Now C is going. So we will cancel this policy and we'll take a fresh policy on A and B. Clear? When you surrender, obviously you will not make profit and all. You will get some amount. That some amount will be shared between the partners. All the partners. Clear? Now, amount received. Amount received. Shared between all partners in old profit sharing ratio. Here, old profit sharing ratio. Accounting for JLP. Accounting for JLP, I think your question number 8 and question number 9 in retirement study material. Okay, they have given some 2 questions. Okay, that also can be asked in exam for 4 marks. Not asked for a very long time, but it can be asked. Now understand this. If premium is paid by firm, if or always, always premium is paid by firm only. 2 things. Either you treat it as expense or you treat it as asset. If it is treated as expense, you will pass the entry JLP premium account debited to bank account. Premium is an expense, you only told me. So P&L account debited to JLP premium. Clear? If premium is treated as an asset, then JLP account debited to bank account. It is an asset, so it will remain in the balance sheet. But assets in the balance sheet should show the real position. It cannot show some random position. So end of the year, JLP account must match with the surrender value. Imagine you paid 3,000 rupees premium. Surrender value is 500 rupees. So you will decrease the asset and bring it to 500. So whenever amount is received, what you will do? bank account debited to JLP account, whatever amount is received, distribute to all partners. Distribute to all partners. Now, one more thing I want to tell you. If at all, in the balance sheet that is given in the question, if you see JLP as 50,000, that means it was treated as expense or it was treated as asset. Asset. Now they tell you JLP amount received is 60,000. That means how much is the profit you're going to make? 10,000. Already 50,000 is there in the balance sheet. 10,000 is the profit. It will be shared by all partners. If in the balance sheet that they have given you, there is no JLP at all, and they tell you amount received is 60,000. Now what will you do? Full 60,000 will be shared between partners. Is this clear? Okay. Huh?
Go to P&L.
No, it will go to partners.
Yes, sir. Through P&L.
What through P&L?
It's income, right?
Bank account debited to JLP account. JLP account debited to partners capital account. Alternative solution is only one thing. Some people put it to revaluation account. That is the only alternative. You can put it to revaluation account, no problem. From revaluation, it will go to partners only. It will never go to P&L. What is this? Now, making capital proportionate, we have already seen in admission. What is the same thing? Okay. Settlement of retiring partner. We are going to settle the retiring partner. If they don't tell anything in the question, then it is going to be treated as loan. You don't take the decision to give the money. They will take the decision to give the money. If they don't tell you, it will be taken as loan. So after doing all this, in the partner's capital account, whatever balancing figure is there for that retiring partner, okay, if they tell pay it immediately, retiring partner's capital account debited to bank. If they don't tell you, transfer to loan account. The entry will be retiring partner's capital account debited to retiring partner's loan account. Is this clear? Now, do we have time to do death of a partner also? Rest in peace, partner. Well, at least his books are finally settled. He is gone. Yes, I think we'll do death of a partner after the break. Take your breakfast break. Too early it is actually. But take your break and come back. Now, let's begin. Let's start. Death of a partner. Okay, till retirement of partner we have already finished. We'll go into death of a partner now. Okay, death of a partner. What does death of a partner mean? Partner leaving the firm due to death. Okay, obvious. That means partner wanted to continue. He is leaving the earth. Okay. Amount payable to deceased partner to be paid to his legal heirs who are called as executors. Amount which is payable to the partner is going to be paid to the legal heirs who are called as executors. Now, computation of amount payable to executors. What and all we are supposed to pay to the executor? 1. Capital account balance. It's off. Turn it on. That one. Yes. No, it got turned on. Yes. Computation of amount payable to executors. Capital account balance, whatever is there, we are obviously supposed to give them. Current account balance, whatever is there, I have written positive and negative. Why positive and negative? If it is a credit balance, we have to give them. If it's a debit balance, we have to take from them. Clear? Interest on capital which is pending, that has to be given. Remuneration, if anything is pending, that has to be given. Profit share till the date of death has to be given. This is a new point. Profit share till the date of retirement is not there, but profit share till the date of death is there. Because retirement is voluntary, this is involuntary. Correct? That fellow could have waited for the end of the year, taken the profit and then left. So, profit share till the date of death, whenever this is there, you are going to pass an entry. What is the entry going to be? P&L, suspense account debited to partner's capital account or current account. So, if you are preparing balance sheet after death of a partner, this P&L suspense will be there in the balance sheet on the asset side. On the asset side. Clear? Now, profit share till the date of death. And drawings. If there are drawings, will the capital increase or decrease? Decrease. Minus. Interest on drawings again reduce. Goodwill share. Add it. Add the goodwill share. Then JLP or SLP share. Add it. Reserve share. Add it. Revaluation share, profit or loss, profit add, loss subtract. When you do all this, this is the amount that is payable to the executor. Clear? Now, amount payable to executor, again same logic, pay it immediately or transfer to executor's loan account. If you transfer to executor's loan account, that is actually as per Partnership Act, the executor has the option to choose two options. One of the two options. First one, pay 6% interest per annum. Just take 6% interest, done. Okay, second one, share in profit. Share in profit how, sir? The partner went, after that the partners are someone else and they have a profit sharing ratio among themselves. This executor is not a partner. So how share in profit? Like this. Profit earned into amount payable to executor divided by capital of remaining partner plus executor's balance. So executor's balance also is considered as capital, and in that ratio the share in profit is going to be given. Clear? In your study material, there is only one example for this point. There is only one example question where they are talking about this point. There is no illustration. But if they want to, they can ask this question. Clear? Now, as if at all you are in the position of an executor, what will you choose? Share in profit or interest? Whichever is higher, whichever is beneficial to you, at the option of the executor. Clear? Yes. Rest in peace, partner. Done. Now, dissolution of partnership firm. Dissolution of partnership firm. Okay. Understand this. What is dissolution? Shutting down the partnership firm. Is it always only because of loss? No. We just lost interest in the partnership. We don't want to do business at all. We just want to settle down, retire. Okay. That also can be the point. See this. I get the left half. Okay, fine. But I am taking the coffee machine. Remember, in dissolution you have seen some asset is taken by the partner. Clear? Dog is also worried. What is happening? What? Which lady?
Not most of at last.
Oh, that I never noticed. I don't know what this lady is doing here. Yes. Everyone is like in panic mode when it's dissolution. Accounting for dissolution. Okay, we have to learn the accounting for dissolution. In dissolution, there are two parts. What are the two parts? First, no. First part is accounting. Second part is piecemeal distribution. First is when they ask you to prepare realization account, partners capital account and all that. Second part is piecemeal distribution. Can they ask balance sheet in dissolution? They can ask, but you prepare like this and keep empty. Because everything becomes zero. There won't be balance. So there can be nothing in balance sheet. Is this clear? Okay, now understand this. When we are talking about accounting, no, there is one extra point that we have to know. Garner versus Murray. Garner versus Murray. Not Murari. Okay, Garner versus Murray. What is Garner versus Murray rule? What is Garner versus Murray rule? If a partner is insolvent, his loss will be borne by other solvent partners in capital ratio. Other solvent partners in capital ratio. Now, first we'll go into accounting. First step, transfer assets and liabilities except cash and bank. Do not transfer cash and bank because cash and bank you will require later for making some payment or for receiving some money. So transfer assets and liabilities except cash and bank to realization account. At what value? Sale value or book value? Book value. Why book value? We are trying to make it zero. We are trying to make it zero. So what is there in the book? Take it and put it to realization account. So realization account debited to asset account. Asset has to go right. So asset has to be credited. Liability has to go right. So liability has to be debited. Clear? Next. Asset taken over by partner. If partner is taking the asset at agreed value, 10,000 is the book value, yes. But partner is going to take this asset at 12,000. So what will you do? Partner's capital account debited. Sir, why sir partner's capital account is debited? If partner is going to take, that means partner's balance has to reduce. So partner's capital account debited to realization account. All assets are now sitting in realization. So if it is sold also, that will go to realization. If partner takes also, it will go to realization. Liability taken over by partner. That means partner was walking on the road. Okay, partner was just walking on the road and going home. That time one fellow who had given loan, he stopped him in the middle of the road and told, pay the loan. He's like, entity concept, boss. I am the partner. The firm took the loan. Here, I don't care. You pay the money now and get out. Otherwise, I will not let you go only. Is it possible? When they get to know that it is dissolution, they might stop you anywhere and collect their money. Now, who paid the money? Partner. But partner, when he comes back to firm, entity concept is there in accounting. Correct. Partner paid the money when firm was supposed to pay the money. So what will you do now? Realization account debited to partner's capital account. That means
Partnership entity cost.
then why drawings is there? Then why you are showing capital on the liability side of the balance sheet? Entity concept is there in business. I never told it's there in sole proprietorship. I told it's in business. Why you are showing capital on the liability side of the balance sheet? Capital is asset for you. If there is no entity concept, I invested money. Are you getting my point? For partner, it is asset. We are preparing the books of A, B, C and Co. We are preparing books of X, Y, Z. We are preparing books of partnership firm. We are not preparing partner. In business, there is entity concept. Whichever form of business you want to do, you do. No problem. Is this clear? Yes. Liabilities taken over by partner at agreed value. Okay. Realization account debited to partner's capital account. Partner paid. We are supposed to pay the partner. So his account is credited. Sale of assets. If you sell the asset, what will happen? What will you get? Money. Bank account debited to realization account. Clear? Entire amount. No need to calculate profit, loss and all on sale. Entire sale value put it to realization account. Because in realization account, you have already put the asset at book value. When you put the sale value, automatic profit loss will get calculated at the end. Clear? Liability settled at the value paid, not the book value, at the value paid. Realization account debited to bank account. Okay, realization expense is paid. Realization expense paid. What will you do? Realization account debited to bank account. Clear? Close the realization account. If there is profit, transfer the profit to partner's capital account in old profit sharing ratio. There isn't any new profit sharing ratio because there is dissolution. Only one ratio is there. Then loss also transfer it to partner's capital account in the old profit sharing ratio itself. Is this clear? Next, settlement of partners. Settlement of partners. Partner's capital account debited to bank. If partner has credit balance, when you finish everything, money will be remaining, partner's capital account will be remaining. Okay. If partner has credit balance, that means we have to give the money to partner. So partner's capital account debited to bank. If partner has debit balance, that means partner has to give us money. So bank account debited to partner's capital account. Is this clear? Now, insolvency of a partner. Not of if. Okay, if partner is unable to pay the debit balance in his capital or current account due to insolvency. Debit balance means partner has to give us money, but he is unable to pay because he is insolvent. His loss will be borne by other solvent partners in capital ratio. It will be borne by other solvent partners in what ratio? Capital ratio. This is because of Ghana versus Murray. This is because of Ghana versus Murray. Correct? Now, note. In questions related to insolvency, solvent partner should bring money for their share of realization loss. Now, if at all realization there is a loss, what is the entry you pass? Partner's capital account debited, correct, to realization. Immediately you will pass an automatic reflex entry, that is bank account debited to partner's capital account. Whoever solvent partners are there, they will bring the money for their share of realization loss. Whenever you would have seen dissolution question, automatically that realization amount which is there on the debit side of the partner's capital account, you would have found on the credit side also, same amount. It would have been written by bank. Why? Realization loss means what? We don't have enough assets to pay the liabilities. That means somebody has to bring money. Who will bring money? Solvent partners. In real life, it won't happen. Real life, it won't happen. At the end, we will do, no, I have to pay you 80, you have to give me 20. We will not pay 80 and take 20. 60 will be settled. In real life, that will happen. But in books, realization loss, partner will bring money. Okay. Only which partner will bring money? Only the solvent partners. Now, note. Non-applicability of Ghana versus Murray. When is Ghana versus Murray not applicable? If all partners are insolvent, then what Ghana versus Murray will you do? Clear? if insolvent partner has credit balance in his capital account, insolvent partner has credit balance. That means what? That means what? What?
So you have took more money. So creditor will go into creditor.
He has
Actually, it's insolvent, but it's not capital.
That's it. If he has credit balance in his capital account, that means he has given money to the firm. There is balance in his capital account. Now, if I have to pay you, okay, if I have to pay you and I'm insolvent, then I can't pay you. Correct? But if you have to pay me and I am insolvent, what difference it makes? I'll get the amount. No. You have to pay me. I am insolvent. Okay, I'm insolvent. So what? I'm not supposed to pay you. No, you are supposed to pay me. So if insolvent partner has credit balance in his capital account, why will we bother about Garner vs. Murray? What did Garner vs. Murray tell? If partner is unable to pay the debit balance in his capital account, current account due to insolvency. He has money in his capital account. He'll take it and go because he's already insolvent. Okay, if he has no money in his capital account and he has to bring money, then there is a problem. Then there is a problem. Are you getting this? Okay. Then if a solvent partner has debit balance in his capital account, has loss to be borne in capital ratio. Garner vs. Murray, they told me it should be borne in capital ratio. I am solvent only, but my balance is debit balance. It's written 2 balance brought down. Now capital ratio is over here, no credit balance. Are you getting my point? In the study material, there is a question A, B, C, D. 4 partners. One partner becomes insolvent. Other one has debit balance. The people who have credit balance, they only will be they will only be bearing the loss. Clear? So basically, Garner vs. Murray's loophole, you see. Partner who has done good, he will be bearing the loss. Partner who has done bad, he will escape from the loss. Partner who has done very bad, that means insolvent. He's gone now anyways. Partner who has done little bad, that means he has debit balance in his capital account. He also escapes. Partner who is honest, he has credit balance in his capital account, bear this fellow's loss also. That is why unlimited liability is spoken about in Partnership Act. Are you getting my point? The feature of partnership is only unlimited liability. Anything can fall on your head. Okay. Piecemeal distribution. Very, very important. What does it mean? I gave one pizza to Chirag. That you're holding lollipop.
In left hand, sir.
Huh? That is his preference. Why are you worried about his preferences? Whichever hand. Okay, now Chirag is holding on lollipop. Somebody gave him one pizza. You think he will eat that entire pizza at once? He ate piece by piece, right? Part by part he'll eat, right? That's why the name piecemeal distribution came. That is how piecemeal distribution came. That means whenever you're dissolving, it is not possible. If this classroom is getting dissolved, it is not possible for us to sell all the assets at once. We'll sell the assets part by part. As we sell the assets, we'll keep paying the liabilities part by part. Clear? Now, if in dissolution, when amount is received in parts, distribution to be done in parts. One method we know is maximum loss method. Maximum loss method means you are one fully negative person. You don't have hope in life only. You are one full negative person. Every time you get the amount, you are thinking this is the last amount. Every time you get amount, no, you are thinking this is the last amount. You are not going to get amount at all. If I don't get amount at all, then we will have loss. Then each installment is considered as last installment. Distribute maximum loss to partners in profit sharing ratio. Maximum loss is amount payable to partner minus amount available. Today I have 500 rupees with me, but I have to pay partner 5,000. 4,500 is the loss. Distribute to partners. Is this clear? Okay. In case of deficit of any partner, follow Garner vs. Murray. Negative, no. Moment it goes into negative, if at all there is deficit, that means you're like, okay, this fellow is insolvent. Follow Garner vs. Murray. This is maximum loss method. Now tell me one thing. I have to pay my creditor and bank loan and I got money. Will I follow maximum loss method or higher relative capital method? I will not follow any method. I will just give the money to them. Can I tell the bank, I'm following maximum loss method, so I'll give you only this much? Are you getting my point? All these methods are there only when you're distributing money to partners. When you're distributing money to your liabilities or liability holders, no method. Money came, he'll stand at your door. You follow whichever method. I want money, that's all. Are you getting this? These methods are there when we are distributing money to partners. Okay. Next method is higher relative capital method. What is higher relative capital method? Whoever has higher capital, he should be paid first. For that, we have a methodology which we follow. Okay, step 1, divide the partner's capital by profit sharing ratio. You'll get some values. Okay, keeping the partner's capital, whoever got the least resultant figure, keeping that as the base, calculate the required capital. Once you get required capital, you will only be able to find the, higher relative capital. With this methodology, we will discuss when we see that higher relative question. Otherwise, it doesn't make sense. These steps don't make sense at all. Okay, when we see the question, we will discuss that. Now, the last thing is, if all partners are insolvent, very bad. For whom? Creditors. If all partners are insolvent, very bad. For whom? Imagine partnership firm. You have seen no examples. Partnership firm was there, very beautiful looking. Okay, next day morning when they come, the shutter is pulled, no board also is there. All partners have run away. Correct? Very bad. For whom? People who are standing outside. People who are inside, they already ran away. Correct? If all partners are insolvent, do not transfer creditors to realization account. Why? Because they are not going to realize. They are not going to realize anything. So, prepare creditors account separately. Deficiency account to be prepared. Deficiency account to be prepared. Usually what used to happen, if partner has deficit, partner will bring money. Now what will happen, who will bear the loss? Partner will not bear the loss. The creditor will bear the loss. Whatever money is there, creditor will get it. Other than that, nothing creditor will get. Creditor will lose the money. Clear? This happens only if all partners are insolvent. Because if even one partner by mistake got trapped inside, then when the shutter is pulled forcefully by the creditor, okay, that's it, that fellow, gone. They will sell his kidney also. Clear? So therefore, even if one partner is there, we are not talking about that situation where you are selling your kidney and buying iPhone. Not that. This is different. Okay, if one partner is there also, it is not applicable. This note is not applicable. That is it. The next one is company accounts. Now we have to look at few questions. We spent so much time on just the concepts of partnership. Now we'll see the questions. Partnership. That was final accounts. Yeah, from here it starts. Okay. In partnership at any cost, please do not skip the practical questions. Illustrations are easy actually. Practical questions only are asked in the exam. Now, intro, from partnership intro, we'll go to SM practice question number 1. Okay, SM practice question number 1. I'm only taking the tricky questions of partnership, okay? Practice question number 1. Let's go into that. Unit 6. Intro they did last. Everything else they did first. When I'm telling intro, he's asking which unit, what I should tell. Last they did intro. After death of a partner. Sirs. Yes. Partnership intro. This question is important. It can be asked anywhere. Okay. It can be asked anywhere. This, what you learn in this question can also be part of an admission or retirement or a death question also. Now, look at this question. Weak, able and lazy. Who are you, Chetan? Able. Okay. Are in a partnership sharing profits and losses in the ratio of 2:1:1. It is agreed that interest on capital will be allowed at 10% per annum and interest on drawings will be charged at 8% per annum. No interest will be charged or allowed on current account. In current account, if you have some balance, for that there is no interest and we are not going to charge also. Following is the particulars of capital and drawing. Have they given you the information of capital and current account on 1/1/2022? That means it is the starting of the year. Clear? Then drawings, they have given the information of drawings also. Now the question takes a beautiful turn. See here, draft accounts of 2022 showed a net profit of 60,000. You should be very happy that already net profit is calculated. We are just going to distribute that net profit before taking into account interest on capital. Okay, we know how to calculate interest on capital, and also interest on drawings. We know how to calculate that also, and subject to following rectification of errors. Oh, that we didn't know. Subject to following rectification of errors. Can you see how rectification of errors can be asked in partnership again? Yes. Life insurance premium of week amounting to 750 paid by the firm on 30th June has been charged to miscellaneous expense account. Whose premium you paid? Partners, right? Who? Which partner? Week. Okay. So it should be taken as drawings, no? It is not joint life policy and all. It's personal. We have paid over here. It should be taken as drawings. So week, drawings of week cannot be 15,000. It should be 15,000 plus 750. This will become 15,750. But what they had done, they had charged it to miscellaneous expense. So when we remove it from miscellaneous expense, what will happen? Profit will increase. So you have to add 750 to the profit. 60,000 which is there, you have to add 750 to the profit. Repairs of machinery amounting to 10,000 has been debited to plant account and depreciation thereon charged at 20%. What did they do? Is it impacting any partner here? Repair was there, but they debited to plant. When you remove the plant, okay, the extra depreciation also has to be removed. So what will happen over here? See, entry is simple. You have to pass the entry now. Repairs account debited. Okay. 10,000 to plant and machinery 8,000, because already 2,000 they only removed, to depreciation 2,000. Clear? Now repair, what will happen to repair? It will decrease the profit. And what will happen to depreciation? When it is credited, it will increase the profit. So now what happens? You have to add 8,000 to profit. Sorry. We have to less 8,000 from profit. Is it clear? Now, I am not giving separate entries. Separate entry would have been repair account debited to cash is the entry. Correct entry. Wrong entry is machinery account debited to cash and depreciation account debited to machinery. Now, rectification entry would be repair account debited to machinery. Then depreciation is not required. So, machinery account debited to depreciation. It would have been the reversal. So net effect is what? Repair is not done, do it. Okay. Plant and machinery is not 10,000 right now. It is only 8,000 because they already reduced depreciation. So 8,000 remove from plant and machinery, and 2,000 you have to remove from depreciation. Depreciation is an expense. When you remove expense, what will happen? Automatically it's a profit. Okay. 10,000 expense, 2,000 income. So net is what? 8,000 expense. Is this clear? Are you following this? Now, traveling expense of 3,000 of Able. Who are you? Able. For a pleasure trip to UK. Okay, paid by the firm on 30th June. Okay, has been debited to traveling expense account. Who took the money? Able. Partner. Who took the... No, not for company purpose. It is pleasure trip. What company purpose? He went for pleasure trip to UK. Okay. And in 3,000 rupees he went. That is very important. 3,000 rupees till airport also the taxi will cost more, I think. Okay. 3,000 rupees he went to UK. Now listen. It should be taken as drawings. So Able, his drawings is not 10,000. His drawings has to become 13,000. Clear? And it was debited to traveling expense. When you remove the expense, what will happen? It will get added to profit. 3,000 will get added to profit. Clear? You are required to prepare P&L appropriation account, current account and all that. What? 55,750. Okay. Later you have to calculate interest on capital, interest on drawings and all. But listen, interest on capital will be calculated directly on 75,000, 40,000 and 30,000. Interest on drawings will be calculated on 15,750, 10,000, and 13,000. Is this clear? Are you following this? Now, question number 1. Okay, just have a look at this. Can you see 55,750? The corrected profit after rectification. Now, interest on capital directly you will calculate. Interest on drawing, see adjusted profit, we have done all this. See 750 add, 3,000 add, and 8,000 minus 55,750. Interest on drawings, be careful. How will you calculate? How will you calculate? Always 6 months. Whenever total is given. When dates are given, okay. But when total is given, see, interest for 6 months only. If you directly take 15,750 and calculate 8%, you will go wrong. It's only for 6 months, 6 by 12. We are assuming that it is drawings are evenly drawn during the year. Is this clear? Yes. That's it, partners current account you are going to prepare. What will happen in partners current account? The interest on capital will come here, share of profit will come here, and drawings will be debited. Okay, life insurance premium, can you see it is debited over here? Why? Because that is also drawings, no? Okay, drawings either directly write 15,750, they have written separately. Directly write 13,000, they have written separately. Is this clear? Okay, then interest on drawings will be debited to current account and balance will just go to balance sheet. Some people have debit balance, some people have credit balance. Did they ask you to prepare balance sheet? No. Clear? That is it with that question. I hope. Can you see even from intro, there is something that is having the potential to be asked in the exam. Even from intro, it's the introduction of partnership. Potential is there to be asked in exams. Clear? Next. This is done. Intro also one more is there. SM practice question number 2. SM practice question number 2. This also I want to address. All the tricky questions of partnership we are going to address in class itself. Okay. Now, listen. Shh. Yes, Ram and Rahim are in partnership sharing profits and losses in the ratio of 3:2. As Ram, on account of his advancing years, that means Ram is getting older and older. Okay, feels he cannot work as hard as before. He is not retiring. Okay, the chief clerk of the firm, Ratan, is admitted as a partner with effect from 1st January. What we are doing? We are taking Ratan as partner. Okay, and becomes entitled to 1/10 of the net profits, nothing else, but mutual ratio between Ram and Rahim remains unaltered. Ram and Rahim will have the same ratio, but Ratan will get 1/10. So how do we calculate in such cases? What is the old ratio? 3:2. So what will be the new profit sharing ratio? Ram, Rahim and Ratan. Ram, Rahim and Ratan. Ratan is going to get 1/10. That means who is going to share the 9/10? Ram and Rahim will share the 9/10. So this will be 9/10 into 3/5 and 9/10 into 2/5. So this is going to become basically 27:18:5. 27:18:5. This is going to be the new profit sharing ratio. Is this clear? Okay. Now what they are telling that this fellow will get 1/10. Now you are like, sir, it became 5 years there, 1/10. 5/50 is equal to 1/10 only. Clear? Now, before becoming a partner, see the history. Before becoming a partner, Ratan was getting a salary of 500 per month, together with the commission of 4% on the net profit after deducting his salary and commission. Clear? He was getting salary, he was getting commission. Now, it is provided in the partnership deed that share of Ratan's profit as a partner in excess of the amount which he would have been entitled if he had continued as a chief clerk should be taken out of Ram's share of profit. Oh. When he was clerk, that fellow was getting something, no? Now he'll get something. If he gets something more, no? That something more has to go from Ram's share only. It should go from Ram's share. Rahim will not put even 1 rupee. Rahim, what he was getting before, he has to get even the same amount now. Are you getting this? Okay. Net profit for the year is 1,10,000. Show the distribution of net profit among the partners. Now tell me one thing. What were you getting before? 1,10,000. Clear? Who is the clerk here? Ratan is the clerk. What was Ratan getting? Ratan was getting salary 500 per month. Okay. 400 per month. 500 into 12, Ratan was getting 6,000 as salary. If you give 6,000 to Ratan salary, what profit will remain? 1,04,000 will remain. 1,04,000 will remain. Correct? If 1,04,000 remain, Ratan is supposed to get commission also. How much is the commission? 4% on net profit after charging. So that will become 1,04,000 into 4 divided by 104. So you are going to give him 4,000 commission. That means Ratan was getting earlier 10,000 rupees. Clear? Which one? Commission. It is after charging commission. Whenever they tell before charging commission, you would have done 4 by 100. That means what is there now, on that I will give you commission. After charging commission means after I give you commission, what will remain? On that I will give you commission. Guys, you have to watch this in regular class. Okay. Now, listen. How much is there here? 1,04,000. Correct? In this, salary is already removed. Correct? Is commission also removed? No. That means commission is included in this. You have to remove the commission. They told what? Not what is there now. After removing commission, what will be there? On that, you have to give 4%. So now, in this, if I take profit as 100, then commission is 4. That means basically this is equivalent to 104 now. 104. If I remove the 4, then the profit will remain, that is 100. So 4 out of 104 is how much? 4,000. Now for your understanding, when you remove that, what are you getting? 1 lakh, correct? After charging commission, can you see 1 lakh is remaining? 4% of 1 lakh is 4,000. After charging, what is remaining is 4,000, what you're paying. If at all they would tell before charging, then directly out of 1,04,000 you would have taken 4%. That means before giving commission, today what is there, give 4% on that. They are telling what today what is there, no. What will be there after that, on that you give 4%. Is this clear? So you have to be careful with the words there again. Now, Ratan was getting 10,000. Clear? Ratan was getting 10,000. Tell me one thing. If I take Ratan as partner, my profit will be 1,10,000 or 1 lakh?
1,10,000.
1,10,000 or 1 lakh? 1,10,000 because you don't have to pay salary, you don't have to pay commission. Okay? So profit will be 1,10,000. Now, when there is 1 lakh profit, Ram and Rahim, they were sharing the profit, no? In the ratio of 3:2, no? So 60,000 and 40,000, no? Now what they told? Rahim has to get 40,000 only. You are not going to change Rahim's share. Rahim will still get 40,000 only. If you have 1,10,000. Okay, what is Ratan's share in that? Ratan's share is 1 by 10 or 5 by 50. That is basically 11,000. Can you see you are giving Ratan something extra?
1,000.
You are giving extra to Ratan. How much extra you are giving? 1,000 rupees extra. Remove from Ram. Ram will get 59,000. Rahim will still get 40,000. And Ratan will get 11,000. Is this clear? This is the question. Okay, I can just show you the presentation. See? 6,000 plus 4,000, 10,000. And I'm sorry, what is that person? Ratan. Ratan's share is 11,000. So extra profit is 1,000. Can you see the profit distribution in the P&L appropriation? 59, 40 and 11,000. Clear? This is very, very important. Okay. P&L appropriation. This is the next question. Forget it. Okay. Did you understand that? What we are seeing, what was he getting before? What is he going to get now? Extra will be paid by Ram. Rahim will still get the same thing. Okay. Commission calculation is one thing you have to see. That should be it, guys. Next we go into goodwill. Introduction done. We'll see the goodwill question. Again, goodwill question, I don't think it is regular. Oh, illustration. Illustration question number 11. Question number 11 in illustrations. One beautiful question is there. Okay, CU and AU. Okay, CU and AU. Wherein, what is CU? What is AU? Huh? We don't know that. That's why we are in commerce.
Partners.
Partners. Yes, that's the spirit. CU and AU are actually some chemical components. What is copper and silver? I don't know that. That's why I did CA. Huh? Gold and silver. We are not talking about the goldsmith shop. Periodic table we are talking about. Arnav is selling copper and silver. Science background, who is there? Yes, what is CU and AU? Both of you are wrong. Shabash. AG is silver, that will come later. Both of you. You can't go to grocery shop and tell gold. Yes. We are trusting him now. Imagine if he is also wrong. Huh? You got good marks in chemistry. How do you know? Huh? You are also science student. Schoolmate. Huh? You cleared JE. So you actually got a seat for IIT. What are you talking? What? In IIT there is correspondence. Oh, is it? So exams and all will happen where? Oh, in Chennai. Oh, IIT Chennai. Madras was once upon a time Gube. It's Chennai now. Oh, you're from Chennai. Okay. So you go to Chennai, write the semester exams. That's it. But who will teach you all those concepts? Online classes. But what are you doing here then? What combination is this? You are in the ICU batch. IIT Chennai, ICU batch, CA Foundation. Which year of engineer? It's engineering, right? First year. But why CA then? That's in? Why did you go there then? Mother is a chemistry teacher. So you went to IIT. Dad's an auditor. So you are doing CA. My life was simpler. I didn't understand science, so I took commerce. Simple. I did not understand science, so I took commerce. Okay, I've told the story in regular class. Okay. It was very simple for me. I knew that if I would take science, 11th standard only I would fail. Not 12th and all. 11th standard only I would fail. Because 10th standard science only was going over my head like this. 8th standard only it was going over my head. I was not understanding at all. Yellow you are wearing and go back, you CSK. Yes, so that's it. It was a very simple decision for me. It was try something new or fail. Okay, because I like maths. Okay, numbers were not a problem. So I thought someone told me that commerce will all be numbers only. Okay, and I believed them, and I took it, and it was and they were actually true. Is it? No. For me, they saw my marks. It was all in 60s and all. Maths I used to get in 90s. They're like, okay, you take commerce. Commerce, everything numbers only. You'll be enjoying it. So I'm like, okay. Then I took commerce. When I went to 11th and 12th, it was only numbers. Because I had accounts, maths, stats. Business studies was whatever you write, they'll give marks. Okay. So I took that. So I was like, okay, very good. Only numbers are there. No theory at all in this course. Then I took CA. Then law came. Okay. Arts means daily you have to do drawing. Actually that is there in science. If you take architecture, it's actually not there in arts. It's like how Greenland is not green and Iceland is not ice. It's like that. But this is like a crazy combination. Like I've never seen this. What are you more interested in? Obviously, no. It's like me asking him, father is your favorite or mother is favorite. So he has to tell the answer. Both only. You wrote the previous attempt of Singapore Foundation. How much did you get? No, total.
120.
That means you failed in accounts only. Accounts, eh? Law shouldn't have been a problem. You're a science student. They like mugging up. Okay, there we don't want to go. Okay. But this combination is crazy. I have never seen this combination ever. It's like if I came here because I had a cousin brother, okay, who has cleared IIT. This thing JEE has cleared. He could have gone into any IIT college, but he also cleared AIMS. All India. What's the full form? All India Institute of Medical Science. Yes, All India Institute of Medical Science. He cleared AIMS also. Then he did medical in AIMS Chennai. He could have been in IIT Chennai also. AIMS Chennai is there. Yes, AIMS Chennai is there. He has done medical over there. So that guy did in AIMS Chennai. So I was not sure of getting into both. Forget about one. I would be sure of 100%. They would not allow me inside the IIT and exams where it's happening also. Forget about writing it. Okay, that was my situation in science. I studied, I have by-hearted one diagram and went to 10th standard board exams. Okay. By-hearted, like properly memorized everything, every part and all, AC motor. Because I saw every exam they are asking AC motor. In the exam they asked DC motor. First time in 10 years they asked DC motor. I still knew only one thing, I drew AC motor only. Time was there. I had a lot of time in exam only. Because I hardly knew things. Okay, so that was the miracle how I cleared. Okay, miracle with some other people's support also. But, okay. Now, let's go into illustration number 11. CU and AU are partners. Okay, not anything else. Okay. Now, AU were in partnership sharing profits and losses in the ratio 5:3 on 1st April 2022. They decided to admit AG as the partner. Okay, AG will bring 2 lakh as capital for 1/4 share. Did they tell anywhere that AG is going to bring a share of goodwill also? No, they did not tell that they are going to get the share of goodwill. New profit sharing ratio will be 2:1:1. Clear? CU, AU and AG. What happened? What did you tell? He told gold and silver right that time. You don't know your own answer. Yes. CU was entitled to a salary of 2,000 per month. It was revised to 3,000 per month from 1st October 2020. Clear? Interest on capital is 8% per annum. Capitals as on 31st March 2022 were CU 4 lakh, AU 3 lakhs, which had remained unchanged since the last 4 years. Last 4 years we have not changed the capital at all. It is same. Goodwill was to be valued on the basis of 3 years purchase of the average adjusted weighted average profit. Why did they tell adjusted? That means profit is not what they gave you. Profit is going to change. You have to make some changes. The profit of previous 4 years before charging interest and salary to CU were as follows. They have given the profits. Okay. They said weighted average. Can you see there is no trend? But after doing the adjustment, trend will get formed. After doing the adjustment, trend will get formed. Don't worry about it. These profits were subject to following rectification. Very, very good. Rectification is very, very good thing. We should always be happy about it. We want others to make mistakes so that we rectify it. Clear? A machine costing 40,000 purchased on 1st October 2020 was wrongly charged to revenue. That means what? Machine was taken as an expense. Charged to revenue means what? It was taken as expense. Machinery was depreciated at 20% per annum on written down value method. Now, let's understand this. See over here. Profits are taken already, which is given in the question. Then, remove the salary of AU. AU is to get a salary of what? 2,000 per month. Here and here it is 2,000 per month only. Then they have changed the salary. They have changed the salary from what date? 1st October 2020. That means in 2021, 6 months he will get 2,000 per month. After that 6 months he will get 3,000 per month. That's why you are seeing the salary over here as 30,000. But in 21-22, he will get full year same salary. No, it will be 3,000 per month into 12. Is this clear? Did you understand the salary part? Okay. Interest on capital. They said no, since last 4 years capital was same. So take the capital. Capital is basically 7 lakhs. 4 and 3 lakhs, it is 7 lakhs. And interest on capital they have given in the question itself 8% per annum. So this is nothing but 7 lakhs into 8%. Every year it is 56, 56, 56. Is this clear till here? Now the adjustment starts. Machine was taken as expense. So when you take it as machine, what will happen to profit? Increase. Why? Expense will go, so profit will increase. But machine was machine in the books. That time they have taken depreciation. They have not taken depreciation on machine. Because for us machine was not there, no, in the books. It's like I'm using this calculator. Oh, very nice, very nice. Using the calculator. But in books that calculator is not there. Will there be depreciation?
Yes.
Will the calculator get depreciated? Yes. But in books is there depreciation? No. Okay. So understand this. Depreciation will be what? First year they have taken 4%, but 4,000. But actually depreciation is what? 20%. 20% on WDV. But when did you take this machine? On 1st October. Only 6 months. So what will happen here? 40,000 into 20% into 6 divided by 12. That's why you're getting 4,000. When you remove that 4,000, machine value has automatically become 36,000. So next year it is only 7,200 because full year's depreciation. Is this clear? So a point of depreciation chapter is also fit into this particular question. Clear? Next. After this, stock on 31st March 2020 was overvalued. If you took more stock, that means you took more profit. Now if you reduce the stock, that means profit will reduce. So can you see over here 20,000 reduced. Okay, but 1 year's closing stock is next year's opening stock. If you reduce opening stock, profit will increase. So here you have reduced the closing stock and here you have reduced the opening stock. Yeah, they did that. They already did increase. Stock was overvalued. Now we are doing rectification. So we are reducing the stock. So when I reduced closing stock, profit reduced. When that same thing, that mistake would have been carried forward. No, it went to next year also. No. So now I'm going to reduce the opening stock of next year. That time profit increased. Clear? Next, there was a loss by fire amounting to 10,000 in 1819, which was not considered in trading account but correctly debited in P&L. Okay, they have taken the loss. Loss, are you expecting the loss to happen again and again, again and again? Fire. Unless you are only giving the fire, then it will not happen. Clear? 10,000. So now 10,000 loss by fire added back. That loss will not happen again. Remember when I discussed the goodwill concept, last one note was there. Whatever things are there which have happened in the past, which will not affect the profit in future, we have to reverse it. So this loss has happened, but it will not happen in the future, or we are not at least expecting it to be happening in future. Clear? Then last they said debtors on 31st March included bad debts of 5,800. So we should remove the bad debts. Bad debt, what is the entry? Bad debt account debited to debtor. Bad debt is a loss. So minus 5,800. Can you see when you do all these rectifications, you are getting 140, 160, 180, 2 lakh. Clear? It's automatically a trend is created. They have given weightage of 1, 2, 3, 4. They have given weightage of 1, 2, 3, 4 because it is increasing trend. No, because it is recent year. Clear? 21-22 is the recent year. That's why they have given 1, 2, 3, 4. Even if it was something else also, it would still be 1, 2, 3, 4. Multiply, you'll get product, you'll get goodwill. Done. Finished. Okay, you'll get goodwill. When you get the goodwill, you have to see whose share? AG. AG is the new partner, no? He is coming for 1/4 share, no? His share of goodwill will be 1,35,000. And goodwill will be shared by whom? Sacrificing partner will get the goodwill from gaining partner. Can you see? Bank account debited 1,35,000 to CU to AU. Actually, the entry should have been bank account debited to AG, then AG account debited to CU and AU. That should have been the entry. Clear? Yes, sacrificing ratio and all they have calculated. That's it. Now, one more question is there from goodwill, which we cannot miss, which is goodwill SM practice question number 1. Practice question number 1. Let's go further. Practical question number 1. Okay, one more important question from goodwill. We cannot skip at all. Just these questions of partnership, if you do properly and go also, no, that's more than enough for exams. Because all the tricky ones we are seeing, which will cover the basic concepts. The point is, you are doing this mistake. What you're doing basic questions. When you come to practical question, you're turning the page and going to next chapter. But like, okay, done this much I did. No, 10 illustrations I did. Why these 2 practice questions? Skip it. You know what? Illustrations, they're only teaching you concepts. They're teaching you concepts. In the practical question, they're testing your concepts. So if you do the practical questions properly and go, okay, now it's revision time. I'm not telling for someone who is starting the CA foundation journey. Revision time, I'm telling. If you do the practical questions and go, that's enough. It covers everything. Okay. Now, let's go further. In fact, for partnership and all, know what questions we will discuss in marathon. If you do the same questions, that's more than enough. Because we are going to discuss everything. Almost. Okay. Now, wise, clever and dull. Yes, Chetan, who are you? Dull. Okay. We're trading in partnership, sharing profits and losses in the ratio of 4:3:3, respectively. The accounts of the firm are made up to 31st December every year. That means they are following calendar year. Partnership provided inter alia that on death of a partner, if death of a partner happens, what should we do? On death of a partner, the goodwill was to be valued at 3 years purchase of average profit of the last 3 years up to the date of death. Up to the date of death. This becomes a very important point in goodwill, which can also be asked in death of a partner. And the same point I told you, the tough question of June 2023, death of a partner, this point was there. People were like, this was out of syllabus question, sir. In death of a partner, this point is not there only. Death of a partner, all study material and illustration questions I saw. It was not there. Did you do the practical questions of goodwill? It was there here. Are you getting my point? I'll show you again in December 2023. Same thing is there. Okay. Not December, June. After deducting interest at the rate of 8% on capital employed and a fair remuneration to each partner. So you have to calculate goodwill. For goodwill, you need profit. That profit you have to calculate till the date of death. But when you're calculating profit, remove interest and remove the salary also of partners. Profits are assumed to be earned evenly throughout the year. Okay. On 30th June, Weiss died. Okay, and it was agreed that on his death to adjust goodwill in the capital accounts without showing any amount of goodwill in the balance sheet. What difference it makes? If they tell us show goodwill in the balance sheet also, we will still show it through partners capital account. There is no concept only of showing goodwill in the balance sheet. That is not because of this. That is because of something that you're going to learn in future. AS 26. Intangible assets. There, they have told only purchased goodwill should be shown in the books. This is not purchased goodwill. It is just a random number. Using some method, I got one random number. Are you getting my point? Now you did know super profit method, average profit and all. You got one goodwill. Is there any guarantee that this is only the value of your reputation? Next day, government put a case on you. Your reputation has come to 0. Not even 0. It has gone to negative. Are you getting my point? Random methods trying to get a close valuation. That's all. Clear? Now, it was agreed for the purpose of valuation of goodwill that fair remuneration for work done by each partner would be 15,000 per month. Each partner's salary will be 15,000 per month. That means 1,80,000 for the year. Clear? And that capital employed would be 1,56,000. Capital, why did they give you capital employed? To calculate the interest on capital. Clever and dull way to continue the profits, partnership sharing profits and losses equally. So their new ratio is 1:1. Following amounts of profits of earlier years before charging interest on capital employed. See the profits. You are required to compute the goodwill and show the adjustment thereof in the books of the firm. Now my question is, they asked you goodwill, average profit of how many years?
3 years.
3 years. Why did they give you 4 years profit?
What's the question? Like there is no link between, sir. Like number of purchase here and
No. Number of years of purchase, yes, I agree. Will be valued at 3 years purchase, but on the basis of average profit of 3 years.
sir,
Death
because,
is-
half year.
Death is in the between. No. When did this person die? 30th June. We have to calculate profit till 30th June. So if our profit calculation is till 30th June, in 2022, I need only half year profit. 2021, full year profit. 2020, full year profit. How many years profit you got? 2.5. So here you will take half year profit. Here you will take half year profit. Is this clear? This is how you will get the 3 years profit till 30th June. Basically, every year, it is 1st July to 30th June, 1st July to 30th June, 1st July to 30th June for 3 years. Is it clear? Are you following this? Do we have rectifications in this? No. Now, listen. Half of 2019, half of 2020 becomes 1. Half of 2020, half of 2021 becomes 1. Half of 2021, half of 2022 becomes 1. Clear? Did you see how they calculate the profit? You get the total profit. Now you have to calculate the average profit. Average profit that they calculated, okay, they got 70,800. 70,800. But this average profit was before what? What was the average profit?
Before salary.
It was before salary and remuneration, correct? Salary and what is the other thing? Interest on capital. Okay, now see over here. Interest on capital 8% on capital employed. What is the capital employed? Random number, huh? No, they have given the capital employed. How much is the capital employed? 1,56,000. 1,56,000 into 8%. Huh? 480. Sorry, I made a mistake that time. It was not 15,000 per month. It is 15,000 per annum only. Okay, it is not 15,000 per month, 15,000 per annum. So now what happens? The salary is 45,000. Why? Because we have 3 partners. 15,000 into 3 partners. Now you are getting, after removing that, you are getting the average profit after salary, after interest. Average salary, average profit after salary, after interest. Multiply into number of years of purchase, you will get the goodwill. You will get the goodwill. Goodwill is 39,960. Who will give to whom? Gaining partner will give to sacrificing partner. Calculate the sacrificing ratio. That I am not doing. Calculate the sacrificing ratio. See, clever and dull debited 2 Ys. Clever and dull debited 2 Ys. That means looking at this, they got the ratio as 1:1. You know why they got 1:1? Because, no, not new. Because old was 4:3:3. Who died? Wise died. Now clever and dull, before also it was 3:3, 1:1 only. That's why when you calculate, you're getting 1:1. You are like, oh sir, in future, no sir, they are going to continue profit sharing ratio in 1:1. That's why this also became 1:1. No. Old was 1:1, new is 1:1. Obviously the gain or loss also will be 1:1 only, no? Are you getting this? Yes, this should be it. Okay, with goodwill. We are done with goodwill. We are still in partnership. Let's go further. Admission. SM. Directly. Practice question number 2. SM practice question number 2. What? Obviously. We should finish partnership by lunch. That's the target. Let it be there. Yes. Gopal and Govind. We will still be finishing. You don't worry about it. Okay. Gopal and Govind are partners sharing profits and losses in the ratio of 60-40. 60-40 is nothing but 3:2. The firm's balance sheet as on 31st March 2022 was as follows. Now, understand this. Regular items, they have given the capital and they have given long-term loan liabilities and all, and regular assets only are there. Clear? Now, due to financial difficulties, they have decided to admit Guru as partner in the firm from 1/4/2022 on the following terms. Okay, who are they taking? They are taking Guru. Guru will be paid 40% of the profits. Can I take it as 2/5 in fractions? 2/5 is 40% only. Okay. Now, you can take, see 40%, first thing which will come to your mind is 4/10. 4/10 is 40%. Simplify, you will get 2/5. Simplify, you will get 2/5. Clear? Now, Guru will bring in cash of 1 lakh as capital. Did they tell that he's going to bring goodwill also? No. It is agreed that goodwill of the firm will be valued at 2 years purchase of 3 years normal average profit of the firm, and Guru will bring in cash for his share of goodwill. Guru is like, you tell me my share of goodwill, I'll bring it. But you only don't know what is the share of goodwill. So you compute it and tell me, I will bring that share of goodwill. Clear? It was also decided that partners will not withdraw their share of goodwill, nor will the goodwill appear in the books of accounts. That means it is just share, it is adjusted in capital account only. Partner is not going to withdraw any money. Partner has the option, but partner is not going to withdraw any money. The profits of the previous 3 years were as follows. See over here. 31st March 2020, profit is 20,000, includes insurance claim received of 40,000. Abnormal item. 20,000 is a profit, but it is including something that is received of 40,000. That means without the abnormal item, what is the profit? 20,000 loss. Are you getting this? I have 20,000 profit after getting some claim, but if I remove that claim, my profit has gone into negative 20,000 loss. Here, the loss is 80,000, but includes voluntary retirement compensation of 1,10,000. Voluntary retirement won't happen again and again. Okay, so now if you remove that loss, your profit is 30,000. 30,000 profit. Clear? And here you have profit of 1,05,000, includes profit of 25,000 on sale of asset. So now if you remove that abnormal item, that time you will get 80,000. These are your corrected profits. These are your corrected profits. Here 20,000 profit, but there was an abnormal item. When you removed that, it became loss. Here it was 80,000 loss. When you removed the abnormal item, it became profit. Here it was profit only. When you removed the abnormal item, the profit reduced. Clear? It was decided to revalue the assets and liabilities as follows. Okay, fixed asset will go up. Investment will become 0. How much is the fixed asset? 3 lakh. That means it is increasing. So 1 lakh will be your revaluation profit. How much is investment? 50,000. It is becoming 0. That means 50,000 will be your revaluation loss. How much is your current asset? 2 lakhs. It is becoming 1 lakh 80. That means 20,000 is your revaluation loss. Loans and advance. How much is it? 1 lakh. It is going to remain at 1 lakh only. The new profit sharing ratio of the after admission of Guru is 35:25:40. They only have given you. Basically, it is 7:5:8. 7:5:8. Now, if you see 8 by 20 is nothing but 2 by 5 only. I told you Guru's share is going to be 2 by 5. This is the new profit sharing ratio. Past journal entries on admission, show goodwill calculation and prepare revaluation account, partners capital account and balance sheet. Now, it was second one, no? Now, see over here. 20, 30, 80. Did I show you that calculation? After doing all that? Okay. Average profit you got. 2 years purchase, they said you'll get goodwill. Goodwill to be brought by Guru. Guru's share is how much? 40%. 40% is nothing but 2 by 5. So 60,000 into 40% when you see goodwill of goodwill share of Guru will be 24,000. Guru is going to bring 1 lakh as capital, no? And now we'll bring 24,000 for goodwill also. So total amount that Guru is going to bring is 1,24,000. Is this clear? Now the 24,000 will be shared by Gopal and Govind. In what ratio? 5:3. How did they get that 5:3? By preparing sacrificing ratio. Calculate sacrificing ratio. See, they have calculated over here. They got 5:3 as a sacrificing ratio. Do not come to any conclusion. You have to calculate sacrificing ratio and check. Is this clear? Now, after that, what do we have? Passing journal entry. See the first entry. Guru brought money. Bank account debited to Guru's capital account. We are taking money from Guru and distributing to others. Distribution of capital. Pass your phone. Come to me on the result day. Yes. What will you do about it? What will you do about it? Nothing. You'll get your parents. Later you can talk to him at home. Okay. Now, revaluation account debited because investment and current assets have gone down. And revaluation account is credited because fixed asset has gone up. Clear? Increased. Now, revaluation account, whatever profit or loss is distributed only between old partners in old profit sharing ratio. There shouldn't be any problem. Revaluation account also is there. That's it. Okay. Further, you know how to prepare partners capital account. Everything you will put over there. Was there any reserves in the question? There was no reserves also. If reserve was there, that also has to be distributed. Clear? Going into the next question. 26. Admission, December 2021 question. Okay, December 2021 question. I just want to show you that question because of what do you say? That capital proportionate point. December 2021. When did you get an iPhone? Why do you need an iPhone? Do you deserve an iPhone? No, you don't. Already you wasted time. Now you're wasting more time on iPhone. Yes, you don't need an iPhone. Why do you need an iPhone? You're supposed to study. Just because your father gave you an iPhone, you think that the money came easy and you're sitting and wasting time over here. Already I gave you the same speech in the previous marathon. Why? What is the code? Tell me. What is the password? Fast. Don't waste time. Tell. What's the password?
Why do you want to check my chat?
See, your phone is your private thing. I am not breaching into your privacy, but you are breaching into my class. So now your phone becomes mine. Tell me what's the code? Fast. Tell me the code.
No, sir,
I want to see whether you are texting your dad. Fast, tell me the code. Let's see who the daddy is. Six nine 3789. Okay. WhatsApp? Where is WhatsApp? So many apps you have. Six
693789.
693789. Huh?
That is that, no?
Bro. First of all, dad addresses you as bro. Okay. Does he? I told you, let's see who your daddy is. Okay, bro. Could you please share the... Should I continue reading? 67 what? I want to see once more. 698739. What was it? 693789. What? Is it your birthday today? Huh?
It's not.
It's your birthday.
No, it's not.
Because from dad, there is one message which you have not even opened. And other messages and all. Huh?
Notification was coming.
But you weren't messaging your dad, right? Dad has sent you a message, happy birthday, God bless you with lots of wisdom. You are sharing that wisdom on WhatsApp with someone else in class. Is it your birthday today? Why? Then why would your dad wish you happy birthday? Huh?
So, Ugadi itself, so.
Okay, do they tell? They say they tell happy new year.
They don't have to check the dad's chat.
It's very sad what you're doing. I just have to tell you that much. I don't want to read it out to the class, but it's very sad what you're doing. You have to. I told you. Your thing is yours. But when moment you start using phone in my class, your phone becomes mine. I don't care about your privacy. But seriously, you have to rethink about what you're talking to your dad. Okay? Because first of all, you're using an iPhone. Did you earn it? Did you earn it? Yes or no? No. Then think about it, what you're doing. Okay. Arey, you know, in Kannada, no, there is one gade, okay, it's called Konana Munde Tamburi Barisidage. Okay. You know that gade? Kona is a bull for the Tamil Nadu students. Okay. And for other state students who are not, Kona means bull. In front of bull, a beautiful instrument you play. You keep playing that instrument beautifully. The bull will still be looking at you like this. Correct? That means it doesn't mean that anyone is a bull or an instrument. It just means that it doesn't make any damn difference to the bull. Clear? I have told you in regular class. I have told you in the previous marathon. Still you are like this. So I feel that I am that wonderful instrument player and you are the bull who is just chewing the grass which was eaten 3 hours ago. You know, cows and bulls, they have this ability. They can eat fast, and then they can keep chewing. They'll be just like this. You play anything, they'll just be eating it. Same 1 second, many times it happened. No, many seconds only it accumulates. Huh?
Not like the old man.
But you used your phone. Doesn't matter. You used your phone. Same thing applies to everybody who is using their phone. There might be some people who are using their phone. I might have ignored it because I want to finish the marathon. Okay, but that doesn't mean that I'm letting you go. Yes. Question number 27. What a coincidence. Do well. LLP. Okay, do well LLP with partners Mr. A, B and C are sharing profits and losses in the ratio of 10:6:4. Can you just simplify this? It is 5:3:2. 5:3:2. Oh wait, did we miss one examination question? Yes, December 2021. December 2021 examination question. A and B are partners. We'll just have a quick look at that. Where is that? Income and expenditure again. Did I miss it? No, it's not. It's here, it's here. This one, right? Yes, this one. A and B are partners sharing profits and losses in the proportion of 3/4 and 1/4, that is 3:1. As at 31st March 2021, following is the balance sheet of A and B. Okay, they have given the balance. Can you see general reserve is there? That means it has to be distributed. And then regular assets and liabilities assets are there. Okay, they agreed to take C as the partner on 1st April 2021 on the following terms. Goodwill is valued at 2 lakhs. They only told you the goodwill. Now, is C share of goodwill 2 lakhs? No, C share of goodwill is not 2 lakh. Total goodwill is 2 lakhs. C is unable to bring cash for his share of goodwill. So it was decided that due credit for goodwill will be given to A and B for their sacrifice in favor of C through C's current account. Very, very specific reason I have taken this question. They said goodwill will be given to A and B for the sacrifice in favor of C through C's current account. Okay, 1/5 is the share in the future profits. Now, have a look at this. Have a look at this. Okay, revaluation account I'm not explaining only. You know how to prepare revaluation account. Okay, and profit will go to old partners. Now see over here. This is the capital account. Okay, goodwill was some amount. What was the goodwill amount? Total was 2 lakh. 2 lakh into 1/5 will give you 40,000. The share of total goodwill is 40,000. Now, when we are doing 40,000 over there, now can we do one small modification? Usually what we do, we write gaining partners capital account debited. It would have been C's capital account debited to A and B. But here what has happened? It is to C's current account. Okay, sorry, by C's current account But you have put it into, many people have come and asked this question, sir, they are putting it into capital account, sir, but they said it is current account. C is going to give through his current account, but A and B will get it into their capital account only. Are you getting this? C is going to give through his current account, but A and B will get it into their capital account only. That was one small different thing that they have done in this particular question. Is this clear? Current account they have not asked. Okay, so there is no current account here to show you. But if at all there was a current account, it would look like this. 2A, 2B. Is this clear? Are you following this? Any doubt with this? No. Next. Let's go further. Then they have told C pays 1,40,000 as his capital. Okay, bank account debited to capital account, and then you are going to take money. But in his capital account, if you notice, 1,40,000 only will be the balance. Why? Because goodwill share didn't go from capital. Goodwill share went from current account. Are you getting this? Capital will remain 1,40,000. If at all that point was not there, this capital would have become 1 lakh. If that point was not there, the capital would have become 1 lakh. Is this clear? How important that point is? Now you are following step-based marking system. If you have missed that one step, it creates a chain reaction of errors. Clear? Okay, next. Let's go further, guys. Stock and furniture to be reduced, provision to be created, land and building to be appreciated. I'm not discussing revaluation points. You know how to do it already, and transfer the revaluation profit to the partner's capital account. Capital account of partners to be readjusted. One of the reasons this question was taken was for this thing. Readjusted on the basis of their profit sharing arrangement, and any excess or deficiencies to be transferred to their current accounts. Making capital proportionate on the basis of their profit sharing arrangement. New partner is there. His capital cannot change, no, because he has already brought in money. Now you cannot tell I'm making capital proportionate, give me more money. He already bought. That means we are keeping that person's capital as the base. 1,40,000 is the capital. Have they shown the working note for that? We'll just have a look quickly. Yes. See over here. 1,40,000 is the capital. 1,40,000 is basically 1 by 5. How much is 1? That means total capital. That comes up to 7 lakhs. And 7 lakhs has to be distributed between the three partners. Who are the three partners? A, B and C. What is their new ratio? Have they given the new ratio? No, we have to calculate. Okay, how to calculate new ratio also? You know, 1 by 5 is given to that guy. So 4 by 5 will be distributed to others. So new ratio, I think they are getting 3:1:1. So 3:1:1, if you distribute this, it will become 140, 140, and the first one is 420. Correct? Now, next, what are we going to do after that? 4,20,000, 1,40,000 and 1,40,000. That is the capital that is required. Now you are going to do simple thing. I told you, if at all any person's capital account has less, okay, they have to bring money. If somebody's capital account has more, they have to take money. Can you see A over here? By A's current account. Why? For that also they have told that point. Can you see the point they have told? Excess or deficiency is to be treated to their current account. Usually excess or deficiency will be going through the bank account. Excess means they will take the money. Shortage means they will give money. But here if it is excess, it will be transferred to his current account. If it is shortage, it will be brought in through the current account. Are you getting this? So therefore, you can see over here, there was shortage in A's capital account, so 44,250 by A's current account. Okay, there was excess in B's capital account, so that is transferred to B's current account. If at all that point was not there, this calculation would still be same, but here you would have written by bank, and here you would have written to bank. You would have written by bank and to bank. Is this clear? Sorry?
Make partners current account.
They will prepare, but they didn't ask. That's why that they have not shown over here. See, they have only asked you to prepare revaluation account and partners capital account. If they would ask partners current account, we'll prepare. And if they would ask balance sheet, the current account balance will also go to balance sheet. Are you getting my point? Because capital proportionate takes time and goodwill calculation takes time. Okay, that's why they have not asked even balance sheet, and it's asked only for 10 marks in the exam. Is this clear, guys? Did you understand this? Making capital proportionate. Whenever they tell you making capital proportionate, find the required capital, then see the existing capital. Existing capital is nothing but the balancing figure in the capital account. See the existing capital. Required is more. That means partner has to bring money. Go to partner's capital account and write by bank because money has to come in. Bank account debited to capital account. Required is less. Then partner has to take money. Then go to partner's capital account and write to bank. That means partner has to take money. Capital account debited to bank account. But here they have told it is routed through the current account. So instead of writing by bank and to bank, you have written current account over there. Is this clear? Yes, that should be it with that one. December 2021, done. Then we are going into retirement. Retirement is actually simple. Okay, how can they make retirement complicated? How can they make retirement complicated? They will add what? Yeah, retirement they can do, and they can also have admission. And how can they make it even more complicated? JLP is anyways there. That will not make it complicated. They can make father and son relationship. They can make father and son relationship. Then it becomes really complicated. Correct? Now what they can tell, father retired and he transfers his half balance over here and half balance is going to take. All that can happen. We'll see this question number 5 from retirement. Admission, I'm closing admission. Any doubts on admission, guys? No, we'll go into retirement. Question number 5. Shall we proceed to question number 5? Yes. Do well, yes. You have to do well in life. Okay, do well LLP with partners A, B and C are sharing profits and losses in the ratio of 10:6:4. If you want to simplify, you can simplify 5:3:2. Okay, the balance sheet of the firm as of 31st March 2022 is as under. Okay, balance sheet is given. It is as under. Now, you can see the balance sheet here. Capital. Reserves. Reserves. What is reserves? Unappropriated profit. Unappropriated profit. Okay, long-term debt, bank OD, trade payable. Then they have told land and building and all these assets. Reserves has to be distributed. No, that we already know. Between whom? Old partners are, all partners are, new partner are. Old partners. Okay. It was mutually agreed that B will retire from the partnership and in his place, D will be admitted. Yeah. All partners means old partners. All partner will make even the new partner come in. Yeah. Here even admission is there. That's why I said old partners. All partners only. All old partners. Okay. Mr. D will be admitted as partner with effect from 1st April 2022. For this purpose, the following adjustments are to be made. Are we coming to conclusion that B and D are father and son? No. Unless they tell you, don't build any relationship. Next. Goodwill is to be valued at 1 lakh, but the same will not appear as an asset in the books of the reconstituted firm. That means what? You have to find the goodwill share of the retiring partner and you have to find the goodwill share of the new partner. New partner has to bring goodwill share. Old partner has to take the goodwill share. Clear? Now, this entire paragraph I am not going to discuss at all. It's about revaluation. In the reconstituted firm, the total capital will be 2 lakhs. Did I tell you when making capital proportionate? Okay, did I tell you that time when making capital proportionate? Okay, there are 3 situations. See over here. 3 situations. First one we just saw in the question. Okay. Second one we have not come across. Third one, new capital is given. You just make it, you just keep it in that ratio. That's all. New capital is given. So this becomes, see, 2 lakhs. It should be in the ratio of 2:1:1. That means 80. Sorry, 2:2:1. It becomes 80 and 40,000. Is this clear? The surplus funds, if any, will be used for paying bank overdraft. Amount due to retiring partner shall be transferred to his loan account. Revaluation account they have asked, partners capital account they have asked, bank account and balance sheet. Now, if you notice, revaluation account, no problem at all. Okay. Partners capital account they have done separately. You don't do like this. Okay. Chances of making error is very, very high. You prepare like this only. Now, someone had asked me a question in the break. Okay. Now, sir, when I'm preparing partners capital account, becomes too stuffed and I'm not able to write the numbers properly. It becomes very irritating and I only mess up the numbers. Imagine the person correcting, they will also mess up. They are not able to identify. So if you have a situation like that, write it like this. This is your page. This is your page. Debit side, credit side. So properly you have space to write properly. Even columns can be big enough so that numbers can be very clear. But please don't do this mistake. Sir, in this page my answer got over, sir. And here I am starting my admission question, sir. So this is my debit side, sir. Next page, that side is my credit side, sir. So imagine the person who is correcting. He has to see this side, turn, see this side, again turn, see this side. Unnecessarily you are putting that fellow into stress. If you put him into stress, he will take that stress on your paper only. Are you getting my point? Don't do all that. Just so that if you want to keep it clean, you can do it like this. Don't do horizontal also. I wouldn't suggest horizontal. Tilting the page like this and preparing partners capital account, I wouldn't suggest. Don't do that. Okay, keep it like this. Debit side on one side, credit side on another side. So it's very clear. Yes. Now, the calculations we have to discuss. Okay. Can you see the calculation here? Can you see the calculation here? C is capital account debited, D is capital account debited to A to B. What is happening over here? A, B and C were old partners, no? D was the new partner, no? Who is the retiring partner here? C is the retiring partner. B is the retiring partner. What is their old ratio? What was their old ratio? 5:3:2 and the new ratio is 2:2:1. Clear? So 5/10, 3/10, 2/10 and 0 for D because D was not there at all. Minus what is the new ratio? 2:2:1. 2/5, 2/5, sorry, 2/5, 0, 2/5 and 1/5. Can you see this? When you do this, this becomes 1/10. This becomes 3/10. Clear? That means this fellow is sacrificing. This fellow is also sacrificing. This becomes minus 2/10. So this fellow is gaining. Minus 1/5 is nothing but minus 2/10. So this fellow is also gaining. Clear? What was the goodwill? 1 lakh. Goodwill was 1 lakh. What is A's sacrifice? 1/10. That means A has to get 10,000. What is B's sacrifice? 3/10. That means B has to get 30,000. What is C's gain? 2/10. That means C has to give 20,000. What is D's gain? 2/10. That means D also has to give 20,000. Can you see in this question, C is not a partner who is going or coming. C is not a new partner. C is not a retiring partner also. Can you see C? But still C is gaining. Still C is gaining. Okay, still C is gaining. That is why I told do not come to any conclusion looking at partnership. If at all you would not follow the instruction that I am telling you, anybody would have thought no. New partner is gaining. Old partner who is retiring is sacrificing. Who is the new partner? D. He is gaining for sure. Who is the retiring partner? B. He is sacrificing for sure. But C is not a new partner, not a retiring partner, but still C is gaining over here. Are you getting my point? So you always have to calculate sacrificing ratio and see who is gaining, who is sacrificing. You will get the entry. This entry you will get. If you don't get this entry, what will happen? You can't get the correct capital balance and your balance sheet will also be wrong because of that. So multiple steps will go wrong. Is this clear? Any doubt with this? Other than this, there is nothing in this question which I wanted to discuss. Okay. Next. 27. Retirement practice question number 1. Go to the first practice question in retirement. Yes. Now, first question, practical question number 1. Ram, Rahul and Rohit sharing profits and losses in the proportion of their capital They are sharing profits and losses in what proportion? Capital. But their capital is 3 is to 2 is to 1. Clear? This is their old profit sharing ratio. Now on 31st of March, Ram desired to retire from the firm and remaining partners decided to carry on. There is no admission. It was agreed to revalue the assets and liabilities on the date on the following basis. Clear? Now, land is revalued, machinery is revalued, closing stock to be revalued, provision for bad debts to be created. Okay. Old creditor balance to be revalued. These things I'm not discussing only. It's fully revaluation point. Clear? You know what happens. Profit or loss will be there and that has to be distributed between Ram, Rahul and Rohit. Clear? Joint life policy of the partners surrendered and cash obtained is 60,000. Now, listen. This I wanted to show it to you. Where is it? Revaluation account. I told you that time. Two side, yes. Now 60,000 has to be added to the cash and bank because money came. But the thing was, you could have treated it in two ways. One, there are areas or there are questions in study material where ICI actually puts that directly to partners capital account only. Okay. And there are some areas where they have put into revaluation account also. Doesn't matter. If you put to revaluation account, this gets shared between partners and that profit comes to partners only. If you put directly to partners capital account also, it comes to partners only. So any treatment if you give in the exam, no problem. Is this clear? Okay, because ICAs also are not stuck to one treatment. There are some areas directly by JLP, they'll put one amount over there. Okay, but one thing you have to remember, this 60,000 has to be added to your bank balance when you're preparing your closing balance sheet. That you have to not forget. Okay, if you see cash and bank account, okay, they have prepared cash and bank account only. Can you see 60,000 over here? Clear? Usually cash and bank account you don't prepare in the exam. You're supposed to prepare revaluation account, partners capital account and balance sheet. That time don't forget to put this 60,000. Is this clear? Are you following this? Yes. Now next, let's go further in that question. Goodwill of the entire firm is to be valued at 1,80,000. Did they only give you the goodwill? Yes. And Ram's share of goodwill is to be adjusted in the accounts of Rahul and Rohit who share future profits equally. Old ratio was given, new ratio is given. You're supposed to find the sacrificing ratio. No goodwill account to be raised. Okay, no problem. Okay, who is retiring now? Who is retiring? Ram is retiring. 1,80,000 into 3 by 6. That means Ram's share of goodwill is 90,000. Ram's share of goodwill is 90,000. Whatever the sacrificing ratio is going to be, in that ratio it has to be distributed. Okay. Now, it's better to have a look. I think sacrificing ratio they would have already done. See, gain ratio it's coming in the ratio 1:2. What was the old ratio? 3:2:1. So you have no clue. You cannot come into conclusion just by looking. Clear? 3:2:1 and 1:1. When you do that, you are getting 1:2 as the gain. Okay. If you would have used the ratio, old ratio minus new ratio, you would have gotten negative. Anybody negative means gain. Anybody positive means sacrifice. Clear? Yes. Total firm goodwill of the firm is 90,000. Can you see this 90,000 is shared in the ratio of 1:2 only? 30,000 and 60,000. Okay. That should be it. Apart from that, do we have anything in that question which is tricky? Amount, total capital of the firm is to be taken as same as before retirement. Individual capital to be in profit sharing ratio. Did they tell you to make capital proportionate? Did they tell you to make capital proportionate? Capital should be in their profit sharing ratio. And they said capital should be same as what it was before. What was the capital before? We want the same capital even now. Okay. Now if you look, capital is how much? 321. That means capital is 6 lakhs. Okay, capital still has to be 6 lakh. Let Ram go, no problem. But still we want capital to be 6 lakhs. And it should be there in the profit sharing ratio. Profit sharing ratio is 1:1, no? So this becomes 3 lakh and 3 lakh. This becomes 3 lakh and 3 lakh. Is it clear? So now what we are going to do? The capital has to be 3 lakh and 3 lakh. Automatically, you will have some shortage. Can you see, if you see partners capital account, balance is 3 lakh and 3 lakh. Both the partners had shortage. They wrote by, sir. That time you wrote current account, sir. Here you are writing cash and bank. There they mentioned it should be routed through current account, excess or deficiency. Here they didn't tell anything like that. So both of them are having shortage. So it will be by bank, by bank. Clear? So if you are not preparing bank account, when you're preparing your balance sheet, this 110 and this 250 also will get added. This 110 and this 250 also will get added. Ram, we are not making any payment to Ram. It is just transferred to his loan account. Can you see whatever balance is there in Ram's account is just transferred to his loan account. Okay, that was the last point that they had mentioned in the question. They told amount due to Ram is to be settled as 50%. Oh, they are paying. Okay, sorry. They are paying 50% on retirement and balance 50% within a year. I think Ram's balance is 4,20,000. So 50% they are going to pay. That is going to be 2,10,000. 2,10,000 is going to be paid and remaining is going to be paid after 1 year. We are preparing books of accounts right now. So after 1 year payment, we don't need to show. We'll just show it as loan in the balance sheet. Is this clear? Revaluation account, capital account of partners, and also balance sheet. If you look at balance sheet, you will find that loan. Can you see the loan 2,10,000 in the balance sheet? Can you see in Ram's capital account? Sorry. Ram's loan account, they have calculated 2,10,000. Now partners capital account, they have not Ram at all. I don't know from where they got the calculator. Ram's capital account they have done separately. Sorry. Ram's capital account separately. See, Ram's capital balance, revaluation profit, goodwill share which he got from two people. Okay. Half amount is paid, half amount is loan. Clear? I don't think there should be any other confusion in this question. That should be it. Revises many concepts of retirement. 28. That is done. Now, practical question number 2. Retirement. Practical question number 2. See, small, sweet and beautiful question. A, B, C were in partnership sharing profits and losses in the ratio of 3:2:1. Balance sheet of the firm as on 31st December 2022 was as under. Capital is given 150, 1 lakh and 50,000. Okay. And there is also assets. There is also assets which are given. A, on account of ill health, gave notice that he wished to retire from the firm. Who is retiring? A is retiring. A retirement agreement was therefore entered as on 31st of March 2022. Clear? The terms of which were as follows. This somewhere else also in exam also they have asked this same question. Profit and loss account for the year ended 31st March 2022, which showed a net profit of 42,000, was to be reopened. Means what? Profit is already distributed. Now you have to bring that profit back. So we have to prepare P&L adjustment account. Appropriation they have done already. They have prepared P&L appropriation, distributed the profit. That was wrong. Some mistake was there. So when you bring it back, you open a P&L adjustment account. Is this clear? Now, how much was the profit? 42,000. How much was the profit? 42,000. Now, this one we have to understand. What was the old profit sharing ratio? 3:2:1. Tell me, 42,000 in the ratio of 3:2:1. It's 21,000, 14,000 and 7,000. Is that correct? Yes. 21,000, 14,000 and 7,000. We brought the profit back. That means this is going to be by partners capital account. We removed the profit which was distributed to partner and we brought it back. Why? Because B was to be credited with 6,000 as bonus. So you'll write 2B's capital account. 6,000 has to go. Clear? Then, which had devolved upon him during the year, the profit sharing basis was to be revised and the revised ratio is going to be 2:3:1 as from 1st April 2021. We are on what date? 31st March 2022. We should have changed the profit sharing ratio, but we did not. That's why we brought the profit back. And now the remaining profit, what is there? 42 minus 6 is 36,000 profit. It will be distributed in the new ratio, which is 2:3:1.
12,000. 12,000.
18.
And 6,000. Is this clear? This is something that is not there in other places, other questions. Now, let's quickly see that P&L adjustment. They have asked journal entries. Where is it? Okay, they have done journal entries only. Can you see? A is capital, B is capital, C is capital, to P&L adjustment, same numbers. P&L adjustment to B is capital, the bonus, okay, or salary, whatever it is. Then P&L adjustment to A is capital, B is capital. Can you see it's in the new ratio? Is this clear? This is something that is new. Okay, it was not there in any of the other questions. So P&L was already prepared. P&L appropriation was already prepared. Profit was already distributed, but in a different ratio. So bring that profit back in the mistaken ratio only. Then give the bonus. Then redistribute the profit in the correct ratio. So if you see the partner's capital account, okay, can you see 21, 14 and 7 got debited, and 12, 18 and 6 got credited, and B got credited with 6,000 bonus. B got credited with 6,000 bonus because he had done extra work. Is this clear? Yes, that should be it with that particular point. Let's go into the next point over there. Goodwill was to be valued at 2 years purchase of simple average profit for 5 years. Profit for 5 years are given. Simple average you're just going to take. Total it divided by 2. Divided by 5, sorry. It's okay, but they told simple average. That's why I told you. Until and unless they tell you weighted average, don't do it. How much you're getting?
Point it was mentioned that 6,000 to be given to the B, right? Then the 40,000 to be redeemed.
Yeah, it will become 36,000. See, this profit will change. It will not be 42,000 because we did the rectification. Oh, you took on 42 only. Yeah. Wait. Don't calculate. Just understand it. I'll show you. Now see, ICA has made the mistake here. It is not 42. No. ICA has made mistake. They have taken 42 only. They have calculated goodwill nicely. 56,000. They have told goodwill. Is it going to be 56,000? Actually, 42 is not 42. No. 6,000 we have given. No. Are you getting my point? Now, both alternatives are correct. Both alternatives are correct. This profit is net profit. If you think like that, before distribution to partner, even bonus is given to partner only. If this profit is amount distributed to partners, then this is wrong. Okay, we are usually considering net profit, right? Net profit. Because bonus is also distributed to partner only and profit share is also distributed to partner only. So, from our activities, how much profit I got? 42,000. B is not an outsider, he is an insider only. From our activities, we got 42,000. So, there are authors who take 36, there are people who take it as 42. But I feel we follow ICA. Okay, we follow ICA. Actually, net profit. We are seeing goodwill is what? Anything that is earned out of my reputation. Out of my reputation, I earned 42 only. I did not earn 36. After that, I gave little to my partner. Then I distributed to my partners. So we should see the profit which is there in the P&L. We should not see the profit which is there in the P&L appropriation. Are you getting this? We should see the profit which is net profit over here. We are not seeing the profit which is distributed over here. Is this clear? For goodwill calculation only. I am not telling for balance sheet preparation and all. For goodwill calculation only. So you got the goodwill. Okay, it will be adjusted through partner's capital account. You have to calculate sacrifice ratio. Some people are gaining, some people are sacrificing. Okay, that should be it. I don't think there is any other problem there. I think after that revaluation only they are going to talk about. Fixtures are to be revalued. Provision is to be made 2% for the doubtful debts and remaining assets are to be taken over at book value. Oh sir, we have to prepare memorandum revaluation account, sir. No, remaining assets are to be taken at their book value. Not all, remaining. The amount payable to A shall be paid by B. Okay, so amount payable to A shall be paid by B. So A's capital account will be debited and it will be transferred to B's capital. A's capital account has to go, but who is paying? B is paying. Who was supposed to pay? Firm was supposed to pay. So B paid. So now firm is supposed to pay to B. So transfer to B's capital account. Is this clear? Okay. Now, B and C agreed as between themselves to continue the business sharing profits and losses in the ratio of 3:1. New profit sharing ratio is 3:1 and decided to retain the fixtures in the books at revised value and increase the provision for doubtful debt to 6%. Can you see this? What was the provision for doubtful debt you have done already in revaluation stage? 2%. How much was the debtor amount which was given in the question? 90,000. So 90,000 into 4%.
3,600.
Why 4%? 2% is already done. 6% is what we need. So 4% is what we are going to do. 4% is what we are going to do. That is 3,600. If you create provision for doubtful debt, is it a profit or is it a loss?
Liability.
Liability, yes, but for P&L, is it a profit or a loss? Loss, because P&L account debited to PDD is the entry. So now we are not going to prepare P&L, no. We are only treating admission situation over, a retirement situation over here. So what will happen to this 3,600? It will be borne by whom?
Partners.
Which partners? Continuing partners only. Why? Already the person went over here. The person went over here. After the person went, then we did this. After the person went, we increase the provision to 6%. Okay, so this will be borne only by the continuing partners. Continuing partners are B and C in their ratio of 3:1. 3:1. So that is going to be 2,700 and 900. Now, what is the impact of that? I'll show you in partners capital account. See over here. Can you see over here 2,700 and 900? Their capital account is debited directly to provision for doubtful debts. What is the entry? P&L account debited to provision for doubtful debts. And after that, what happens? P&L debited. That means loss. No, loss will be borne by whom? Partners only, B and C. Is that clear? Very important point. That's a very important point. See, these people, they have messed up the solution. Okay. ICA in this, they have messed up the solution. Can you see? By fixtures, it seems. By fixtures. They didn't prepare evaluation account. Fixtures, profit should have gone to revaluation account. Then that profit should have come over here. Are you getting this? Okay. And what about the provision for doubtful debts? I think they have passed entry. See. Fixtures account debited. 2 provision for doubtful debt. 2 A's capital, B's capital, C's capital. Don't do all that circus. Prepare evaluation account. You will get this profit only. Prepare evaluation account. You will get this profit only. Now your question should be, sir, after they went, again we increase the provision, no sir. There, why are we not creating revaluation account? There also, if you want, you can create. But there is only one entry. And that's why directly, this can be put directly. Is that clear? Are you following this? ICAI has not made revaluation account at all. Actually, what should be the entry for fixtures? Fixtures account debited to revaluation account. Correct? What should be the entry for provision? Revaluation account debited to provision for doubtful debts. Then what should be the entry for profit? Revaluation account debited to partners capital account. Compounded and passed one journal entry. Is that clear? Don't do it in the exam. You will only confuse yourself. So don't do that. Okay. Pass 3 entries. You will get this profit only. Is this clear? But did you understand this 2,700 and 900 part? Extra provision after retirement. So it will be borne only by the remaining partners in their new profit sharing ratio. Yes, it's correct. Okay. Then after that, they also asked you to make the capital proportionate, right? Yes, tell me.
Revaluation can be created in any state. Or not, sir.
Memorandum revaluation can be created, yes, but what is the connection here? No, any stage, even retirement also. Even retirement, death also you can create, no issues. In retirement, what will happen? All partners will share the profit or loss. Wait, I'm giving break in 5 minutes. That's it. All partners will share the profit or loss. Then you will reverse it between continuing partners. In admission, all partners will share, and old partners will share, and then it will be shared between new partners. That's it. Okay, total capital of the firm will be valued at 3 lakhs as before to be maintained in the new profit sharing ratio between B and C. 3 lakh. B and C. 3:1 is the ratio. So it's going to be 2,25,000 and 75,000. It should be shared. Not getting it. Yeah, 3:1, no. So 225 and 75,000. Whatever excess or shortage is there, that has to be transferred. Not to current account, through bank account. Okay, that's the last point that I wanted to discuss. Just see this. Okay, can you see 225 and 75 is going to be the point? Okay. Can you see they have written by cash? Maybe there is shortage of 30,234. And here can you see 2 cash because there is
More.
excess. Excess. Clear? What is this 2A's capital account? Goodwill. This is all goodwill distribution. Okay, and here by B and C's capital account 18,667. Goodwill we calculated, but distribution has to be done in what ratio? In the sacrificing ratio only. You calculate the sacrificing ratio. Other than that, there shouldn't be a problem. Only thing is, please prepare revaluation account. You will just confuse yourself. Prepare revaluation account. 2 entries are there. Do it. With that, we are done with retirement. There is one December 23 question. I just want to discuss this with you. Okay, so can you see entire sum payable to Y should be brought by X and Z in such a way to make their capital proportionate to new profit sharing ratio. This we will discuss after the break. This is asset is equal to liability plus capital point. Okay, take a small break for 10 minutes. Then we'll continue. Okay, we'll go to the next question, guys. Question number 30 here, and this is from December 23 exam. For a purpose only, we have taken that particular question, December 23. Okay. Check it. What was the question? Peter, Paul, and sorry, not that one. It is X, Y, and Z. Correct. Let's just quickly look at that particular question. Very important it is for us to understand it. Who is that? 2 times I can't repeat the speech. Then Chirag will get bored. He has heard that speech so many times. Yes. Let's go to question number 5. X, Y, and Z were partners sharing profits and losses in the ratio 5:3:2. This is their old profit sharing ratio. Their balance sheet is given. Okay, no problem with the balance sheet. General reserves are there. Good, you should distribute it to the partners. Y retired from business on 1st April on the following terms. Appreciate building, depreciate machinery. Okay, good, very good. Okay. Provision for bad debts is to be created. Okay. Goodwill of the firm is valued at 1,60,000. Goodwill is not to be raised in the books of the firm. Who is retiring? Y is retiring. Okay. What is Y's share? Y's share is middle one. That is, it is 3/10. What is the goodwill? 1,60,000 into 3/10. That is 48,000 is Y's share of goodwill. It will be given to who? Given by whom? X and Z in their sacrificing ratio. New ratio is 5:3. Old ratio you see, calculate sacrificing ratio, and they will get negative because it's gain, and then you'll distribute this over there. Okay. Entire sum payable to Y should be brought by X and Z in such a way to make their capital according to the new profit sharing ratio. Balance of Y will be paid immediately. What are they telling? We have to pay money to Y. Is that right? Yes. Bring money in such a way that after you bring money, your capital should also become proportionate. Are you getting my point? That means bring money in such a way that your capital should also become proportionate. Very hard to understand this. Correct? Can I tell how much I should get now? So what you should do, reverse calculation. What is reverse calculation? Asset is equal to liability plus capital. You don't know only capital, no. You know asset, no. You only did the revaluation just now. You know the liability, no. So what you should find? Capital. You should find the capital. Asset is equal to liability plus capital. Right now, we have, okay, if you see, I think in study material, there is one more question where they are telling you should make capital proportionate and bank balance should be 30,000 or something like that. So you should bring extra money to make the bank balance also more. So just use this formula. Asset is equal to liability plus capital. So now if you see over here, revaluation account and all, you should be able to do on your own. Now if you see over here, they haven't done no? The calculation. Okay. See, balance sheet after retirement, they have done. Asset is equal to liability plus capital. Assets and all we know. From where we are getting these numbers? Revaluation account. Bank account, before it was 25, now also 25. They didn't tell anything. It should be same. Liability is trade payable. Correct? Now you will get the capital. Capital is coming to 848. It should be in the ratio of 5:3. It should be in the ratio of 5:3. So when you go to capital account, what will happen when you go to capital account? There will be some shortage for X and Z. When there is shortage for X and Z, what will you do? You will write buy bank. You will write buy bank. Is it clear? Because they are going to bring money. then only their capital will become 530 and 318. Is it clear? And old partner, what we are doing? We are not transferring it to loan account. It is going to be paid. Are you following this? So, three types of making capital proportionate also we have seen. First, keeping somebody's capital as the base. Second is this, when they don't tell you how much, but they said capital should be proportionate. Asset is equal to liability plus capital. Third one, directly they tell you that 3 lakh should be the capital. Question only they will give. Is this clear? Yes, that was December 23 question which we have to discuss. Let's go further. The most interesting part of partnership is death of a partner. Why death of a partner? Because here, usually they don't test you much on revaluation account, partner's capital account and all. Here they'll ask you, do you know how to calculate the amount payable to executor? So, this is the death practice question, Peter, Paul and Prince. There is one question at the end which is Peter, Paul and Prince. Do we have that? Question number... Practical question 2, right? Okay. This becomes very important question. Peter, Paul and Prince were partners sharing profits and losses in the ratio of 2:1:1. It was provided in the partnership deed that in the event of retirement or death of a partner, he or his legal representatives would be paid. What will they be paid? Balance in the capital account. If it is there in the capital account, you have to give only, no? Okay. His share of goodwill of the firm valued at 2 years purchase of normal average. That means it is simple average. Okay. After charging interest on fixed capital for the last 3 years. Okay. To 31st December preceding the retirement or death. So if you have died any time, no problem. But it will be calculated till the last year end. We had one question. No, the person died. We calculated till the date of death. Okay. His share of profit from the beginning of the accounting year to the date of retirement or death, which shall be taken on proportionate basis of profits of the previous years, has increased by 25%. Whatever is last year's profit, we'll increase that by 25%. That will be taken as this year's profit and will give the profit share till the date of death. Clear? Okay. Interest on fixed capital 10% though payable to the partners will not be payable in the year of death or retirement. Good, very good. Okay, we are not going to pay any interest in the year of death or in the year of retirement. Okay. To whom? Only the partner who died. Other partners will still get it. Clear? All assets are to be revalued on the date of retirement or death and the profit or loss to be debited or credited to capital account in the profit sharing ratio. This we know, the evaluation point. Peter died on 30th June 2022. The books of accounts are closed on calendar year basis on 1st January to 31st December. Now go to the end of the question. What did they ask you? They asked you, prepare an account showing the amount due to Peter's legal representatives on 30th September 2022 along with necessary workings. Only executor's account we have to prepare. Now, if you notice over here, till now we don't know what is there in their capital account, nothing. They just told you all the things. Now, balance in the fixed capital account as on 1st January was Peter 10,000, Paul 5,000 and Prince 5,000. So 10,000 should be given to the executors. Do you agree? Now, if you see the executors account, which they have done, where is the executors account? Okay, direct one ledger only they have done and they have closed everything. Now can you see this balance which is there? Okay, balance which is there, 10,000. Where will it go? It will go to executors. Can you see here it is written to executors. I don't prefer doing two ledgers like this. I prefer doing one ledger, that is executors account. Okay, one ledger executors account. There what you are going to put? You are going to put the amount directly. Okay, by Peter's capital account 10,000. So you keep on putting everything into the executors account. Finally, you will get the balance that is supposed to be paid to Peter. Okay. So do you agree that 10,000 is to be paid to Peter? Okay. 10,000 is to be paid to Peter by his capital balance 10,000. Next, the balance in the current account on 1st January. Peter's balance was 20,000, Paul 10,000 and Prince 7,000. Should we give Peter something else also? What is that? We have to give 20,000 again to Peter because in his current account there was 20,000. Clear? Drawings of Peter till 30th September were 10,000. So should we take money? Yes. Minus 10,000 from what we are supposed to pay to Peter. The profits of the firm before charging interest on capital for the calendar year was 19, 20 and 21. They have given 1 lakh, 1 lakh 20 and 1 lakh 50,000 respectively. Profits included the following abnormal items. Profits included following abnormal items. Profit on sale of asset. What should we do? Plus or minus?
Yes.
Minus, because plus is already done. They have added the profit. Now you have to remove it. Insurance claim received. Plus or minus? Minus. You have to remove that. That time you will get the correct profits. Correct? Is this clear? Wait. Okay. Firm has taken out a joint life policy of 1 lakh. Somebody died. Did somebody die?
Yes.
Somebody died. Yes, Peter died. 1 lakh. That means what is Peter's share? Peter's profit share is 2:1:1. That means 2 by 4. That means Peter has to get 50,000 out of that. Joint life policy also he is supposed to get 50,000. Besides, the partners had separately insured their lives for 50,000 each. And the premium in respect of thereof is charged to the P&L. That means premium is paid by whom? It is paid by firm. The surrender value of the policies were 30% of the face value. Now 3 more policies are there which are 50, 50 and 50. The policy which is there on the life of Peter, will you get 50,000 or surrender value? 50,000. You will get one more. Okay. The policy which is there on the life of Paul, will you get 50,000?
1.5.
You will get only 15,000. But in that 15,000, what is this guy's share? 7,500. Wait. Everything will get shared. This 50,000 also will be only 25,000 you'll get. And the policy which is there on the life of Prince, that will not be, you will not receive the entire amount. You will receive only the surrender value. Again, you will get 15,000, but you will give only 7,500 to Peter. Clear? So if you see over here, 75, almost 90,000 is going to be given to Peter. Just from this policy. How 90,000? 1 lakh, 50,000, 15,000, 15,000. Total is 180. 180 half is 90,000. Clear? 1 lakh you will get from joint life policy. 50,000 you will get from separate life policy. 15,000 you will get from surrendering one policy. 15,000 you will get from surrendering another policy. 1,80,000. Half of that you will give to Peter, which is 90,000. Is this clear? Yes. Now, on 30th June, the firm received a notice that the insurance company that insurance premium in respect of fire policy had been undercharged to the extent of 6,000 in the year 2021. In 2021, what did you do? One insurance premium you have not charged. So what will happen?
-3.
Minus
3,000.
3,000.
why 3,000?
Sir, from this from gold
Hmm?
plus 3,000, right?
On 30th June 2020, the firm received a notice that the premium is not charged to the extent of 6,000 in the year 2021.
Extent of
Yeah, but for each share of in that.
no.
Okay, you're talking about his share. Yeah. From profit, when you're calculating goodwill and all, 6,000 will go. But his share is 3,000. Yeah, that is correct. His share is 3,000. So from his account, we have to remove 3,000. Okay. And the firm has to pay immediately. Immediately we are going to pay that, no problem. Revaluation of assets indicates an upward revaluation in the value of assets. Asset value has gone up. So his share of profit is 10,000. Prepare an account showing executor's account. Okay. What is there remaining? Only 2 things. All the things we have written over here. Only two things we have not written. What is that? One is goodwill calculation. Another one is profit calculation till the date of death. We'll discuss that from here itself. Now, Peter's share of profit. We'll do that later. First, we'll do goodwill. Can you see goodwill over here? 1 lakh, 120 and 150 was given in the question only. Okay, profits were given in the question itself. Okay, less interest on capital. Interest on capital 2,000, 2,000, 2,000. How?
10% into 2 by.
Capital is I think 10,000, no? For Peter. Other person 5,000, other person 5,000. Total capital is 20,000. 10% of the capital is 2,000. Is this clear? We are calculating total. Don't calculate only for Peter. We are calculating the goodwill of the firm. Clear? Now, profit on sale of asset and insurance claim. Did we remove it? Profit on sale of asset and insurance claim received. I wrote over there minus. And that insurance premium also we have to minus 6,000. That time you will get the profit. 90, 1,11,000, 111 and 120. Profit for the 3 years you total. Divided by 3, you got the average profit. Number of years of purchase, they said 2. So you get the goodwill. Okay, you get the goodwill. Peter's share is half of that. So Peter's share of goodwill is 1,07,000. Rest of the things we have already discussed. Peter's share of goodwill. Now what is Peter's share of profit? This is another important calculation where you can go wrong. Can you see the third year the profit was 150? Okay. 150 minus 6. It was 150 before the rectification. After rectification the profit is 144. Correct? Sir, this rectification is not done in goodwill, sir. It is done, sir. Minus 6,000 we have done over here. Okay. So now minus 6, 144. They told no, this year's profit will be 25% more. So add the 25%, you will get 180. When you add 25%, you will get 180 as the profit. Now, remember, interest on capital you have to remove. Sir, in the year of death, they said there is no interest on capital. Yes, for whom? The person who died. But Peter died. Paul and Prince are still there. And their capital is 5,000 and 5,000. That means their total capital is 10,000. On that, their interest is 10%. So it will be 1,000. 10% no interest on capital. What was that? See, since Peter is not entitled to interest on capital in the year of death, interest is payable only to the remaining partners. So now you are going to remove 1,000. You will get 1,79,000. 1,79,000 till 30th September you calculate the profit. Okay, and on that you give half. Are you following this? This is the total profit that is calculated. This fellow died on 30th September. So this will be only till 30th September and 2 by 4 is taken. So 67,125. Clear? Any doubt with this? See, revaluation profit. Did you see Peter's share was 10,000, 20,000 profit. Insurance premium, Peter's share is 3,000. Share of policy, do you remember Peter's share is 90,000? We had done all the calculations over there. Then current account and all you will prepare. Everything will just get transferred to the executor's account. Very, very important question that is. Okay. Any doubt in this one? Next. Okay. Next question is directly June 2023. We don't have anything else in death of a partner. June 2023 is a very nice and small question. Okay. Stupid question it is. June 23. It's not difficult, don't worry. June 23 question is not difficult at all. Huh? Only that much.
5 minutes work.
Huh? 5 minutes work. It will be done, yes. Where is the trial balance? Only thing is they have done some twists. See, this is the question.
Sir, in the May attempt, they asked 20 marks question from a short question. Should we attempt or not attempt? And the starting it's like, in the starting it's
Nothing starting no on the top.
You should do that analysis. If I would have attempted it.
in the beginning.
Yeah. Because I will be like, I'll get 20 marks. It's like guaranteed. But you analyze the question and see. If it was this question, I wouldn't have attempted it. If it was this question which I'm going to discuss now, I wouldn't have attempted it. Clear? Because this question, see over here. Question started over here and ended over here. 20 marks. 3 pages. Here it is in 2 pages, yes, but in the exam it will be 3 pages. Exam, you see the paper size is smaller, font size is bigger. It is 3 pages in the exam. Okay, but this was the only question which was actually little tricky, which has come from partnership in the last few years. Otherwise, all are simple, straightforward they are. Okay. Now, let's go into question number 5. A, B, and C were trading in partnership, sharing profits and losses in the proportion of 4:3:3. The balance in the books of the firm on 31st December 2022 subject to final adjustment, whereas under which year? Lot of dates are there. You have to be careful with the dates over here. Now tell me, 4:3:3, they said they have given you the trial balance. You are not used to seeing this. You are used to seeing balance sheet. You are not used to seeing trial balance. They always give you balance sheet. Now, trial balance on that day was how much? What was the balance? They have given on 31st December. Did anybody die till now? No. Now, capital account of ABC, current account of ABC. Sir, capital account is showing credit balance, current account is showing debit balance. What does it mean?
Fixed capital.
That means it is fixed capital and we have to pay the firm. Current account is having debit balance means we have to pay the firm. Clear? Land and building, furniture and fixtures, stock, debtors, bank. Profit for the year before charging interest. This year's profit before interest, this year's profit is 234. Creditors. Now, the fun starts now. Goodwill may be recorded separately instead of through revaluation account. That we never do anyways. C died on 30th June 2022. Which year's trial balance they gave you? 31st December 2022. When did C die? Exactly middle of the year. Partnership deed provided following things. Now, interest was credited on capital account of partners at 12% per annum on the balance at the beginning of the year. Whatever is there at the beginning of the year, we are supposed to give 12% interest. Okay? Clear? Simple? No problem? Okay. On death of a partner, whatever we are going to read now is only in case of death of a partner. Death of a partner, goodwill was to be valued at 3 years purchase of average annual profits up to the date of death. Up to the date of death point was there in that intro, not an intro, goodwill practice question. Up to the date of death, you have to do half. Okay. After deducting interest on capital employed at the rate of 10% per annum. What is this, sir? What is this, sir? 12% they told, no, sir, here. Normally, I will give you 12%. But for goodwill calculation, when I am taking interest on capital, I am supposed to take 10% per annum. Are you getting this? And a fair remuneration to for each of the partners. For goodwill calculation, when I am calculating profit, remove the remuneration. Normally, I don't give remuneration at all. But for goodwill calculation, I will remove remuneration. Normally, I will give 12% interest. But for goodwill calculation, I will take 10% interest. Did you understand this point? Okay. Fixed assets were to be revalued by an independent valuer and all other assets and liabilities are to be taken over at book value. No problem. Whenever necessary, profits or loss should be apportioned on time basis. That means 2 by 12, 3 by 12, wherever you require, do it. You ascertain that profit for 3 years before charging partners interest were 19, 20 and 21. And we are in 22. So this will be half, this will be full, this will be full. And 2022 profit will also be half, not half, full, it is half. After, yeah, we have to charge interest. This is before charging interest. You can see, listen, you can take average before also, you can take average after also. Because interest is same every year, no, anyways. So if you take average, remove interest or remove interest and then take average. Anything you can do. Clear? Now, independent valuation of the on the date of death was revealed that land and building, plant and machinery. Land and building, what was the value in the books? 1,80,000. Can you see you are getting a 45,000, which is profit, correct? Furniture and fixtures, what was the value in the books? 33,750. That means it is going down. 11,250 loss. Is that correct? Yes, 11,250. This is the loss. So net amount will be shared by partners as revaluation profit or loss. For valuation of goodwill, a fair remuneration for each partner would be 56,250 per annum, and the capital employed in the business is to be taken at 5,85,000. Just for valuation of goodwill, you will take the capital as 585. Just for valuation of goodwill, and 56,250 you will take remuneration when you are computing goodwill. Are you getting all these points for goodwill? What are the extra points? Profit will be taken till the date of death. Interest on capital will be taken as 10%. And remuneration will be taken as 56,250. And the capital will be taken as 585 when you are going to calculate the interest. Is this clear? It was agreed between the partners that goodwill was not to be shown as an asset in the books of the firm. Adjustment. This we anyways don't bother about it. Unnecessary point. Amount due to C's estate was to remain as loan. Okay, we are not paying the money to C. It will remain as loan, with the firm carrying interest at 12% per annum. Okay, 6 months, because that fellow died exactly middle of the year, so 6 months interest will be there, which we have to pay. A and B would share profits equally from the date of death of C. 1:1 is the ratio. Sacrificing ratio you calculate. Depreciation on revised value of assets would be ignored. Thank you very much for doing that. Otherwise, we have to calculate depreciation also from 30th June till 31st December. Luckily, they said, don't worry. Prepare partners capital account, current account, balance sheet of the firm. Okay, working should be done correct to the nearest rupee. Why did they tell that? In the exam hall, please don't fight over paise. Round it off to the nearest rupee. 0.75, 0.8 and all. Please don't fight over that over there. Okay. Now, first we will do the goodwill calculation. Can you see? 2019 half, 20 full, 21 full and 22 half. Okay. When you divide it, you will get average profit, but average profit is before interest. Interest will be, for goodwill calculation, interest will be 10%. Correct? And for goodwill calculation, capital will not be the capital which is shown over here. Can you see one capital account ABC? Something is there over here. I am not taking this for goodwill calculation. For goodwill calculation, they told me that my capital should be 5,85,000. So 58,500. Capital is also different for goodwill calculation. Interest rate is also different for goodwill calculation. It is not 12%. Did you get this? So 58,500. Remuneration they have told 56,250 for one partner. For three partners it is coming to this value. Clear? When you remove that, you will get the average adjusted profit. Okay, goodwill 3 years purchase they said. You got the goodwill. Whose share you want? C share of goodwill. 3 by 10 when you do, you will get 34,425. Okay, you should give 34,425. In what ratio? In what ratio? What ratio? Sacrificing ratio. Clear? 34,425 is there over here. Can you see C's capital account? They should have put into current account actually, because it's fixed capital. They have put into capital account only. Actually doesn't matter. You know why it doesn't matter? Ultimately it will be removed and it will be transferred to executor. Can you see A and B have given in their sacrificing ratio? A and B they have removed and they have transferred it to C. Goodwill calculation done. Clear? Now, the very important point is, after goodwill is gain ratio also they have calculated here. Journal entry also they have written. They have prepared one P&L appropriation. Why P&L appropriation? To find the share of profit. You're like, sir, we already know the profit, sir. We already know the profit. Sir, can you see over here? They have given already this year's profit is 2,34,000. Huh? This year's profit is 2,34,000. But 2,34,000 is for, 2,34,000 is for the full year 2022. 22, no? Full year 2022. But in this, C was there only for half year. C was there only for half year. And after that, we have to give interest also for the other half year. So, understand this P&L appropriation. Okay, very, very important. They have done it into two parts. 2,34,000, first half it is 117, second half it is 117. Sir, how can you do it, sir? How do you know? First half profit might be more, second half profit might be less. They only told, take time proportionate wherever required. All your fights are avoided by ICA itself.
P&L suspense.
Why?
Before
Death of the in middle of the
when we death happened, then we will create P&L suspense.
I didn't understand your question actually. The entry you are telling is P&L suspense. Now they are not doing, yeah, what you told is correct. That guy died on 30th June. But I am preparing everything on 31st December. Because my year got over. See the trial balance that they have given to us in the question. The trial balance is not on 30th June. It's on 31st December. The person already died. All other death questions, this balance sheet would have been 31st December 2021. And then they would tell, keeping last year's profit as the base, increase 25% and calculate this year's profit. Because this year still year did not get over. Here, person died on 30th June, but still we continued the business till the end of the year. And end of the year we are doing all these calculations. Are you getting this? Yes. Now, 1,17,000 is the profit. Okay, two halves. First half, second half. Now see, interest on capital. Sir, there was one different percentage, sir. 5,85,000 capital. That is only for goodwill calculation. Can you see? Now you are calculating interest on their respective capital. Their capital was 2,25,000. Interest rate was supposed to be 12%. For half year it is 6%. The capital was 1,12,500. For half year it is 6%. For this person 1,35,000. Half year it is 6%. I think ICA missed one number here.
no key.
That fellow died. Is that clear? That fellow died. ICA did not miss the number. This fellow will not get interest over here. Clear? Huh? What?
He only was.
He only missed. Yes. Now what happens? After you do everything for the first half, okay, you have to finish first half and you have to transfer the profit to all the three partners in their ratio. Whatever profit sharing ratio is there, you have to give it in that ratio. When you transfer it to their capital account, okay, when you transfer it to their capital account, that time what happens is, okay, you can close the first half. First half you can close. When you close first half, C is gone. When C is gone, that time you will get to know how much is the balance that is going to be transferred to executor's account. 1,60,245. Are you getting this? What and all we are giving C? We are giving C his current interest, we are giving 8,100, which we saw over there. We are giving C his profit. Okay. A and B you don't put, because A and B will get second half information also. A and B will get information of second half also. Only C you focus. C is gone, no. So 8,100 you put, give the profit to C, and then revaluation profit also you give to C. Revaluation, they said two things got revalued, no. Okay. And then C's capital account. Okay, C's capital account. This gets transferred to C's capital account, and from there everything gets transferred to executor's account. Did you understand how we calculated executor's account? What and all C got? C got his share of goodwill. C got interest on capital. C got the profit or loss share, and C got the revaluation profit share. After that, this whatever balance was there, that got adjusted 54,000. Remaining balancing figure in C's account is 1,60,245. Is this clear? 162.45 we are going to give to C. Okay, but it was on 30th June. So now C is executor is supposed to get interest for the next 6 months. And they said interest to executor will be at the rate of 12%. So now what they have done in the P&L appropriation, you can see over here 160 into 6%. Clear? After removing this interest, whatever remains, that will be shared by these two people in the ratio of 1:1. Obviously, one person is getting 1 rupee more. Don't fight over that in the exam hall. Is that clear? They said convert wherever you want, you round it off. Now, did you understand this? This is, see, only two things are confusing. One is goodwill. Goodwill, why it is confusing? Because first line they said interest on capital is to be at the rate of 12%. Then they said in the event of death, goodwill will be calculated. Okay, and for goodwill purpose, the interest on capital will be at the rate of 10%. In the trial balance, capital is something else. But for goodwill purpose, the capital is going to be taken as 5,85,000. Is that clear? And the profit is to be calculated till the date of death. So you have to do half. Every year half you should do. So basically you should get 3 years. Clear? And very important point is profit calculation. Profit calculation, what happens? First half, all are there. Second half, only A and B are there. So first half, you should give interest to all. Not on 5,85,000, on their actual capital. Not at the rate of 10%, at the rate of 12%, but it is half year, so 6%. Clear? Then distribute the first half profit to everyone. But you don't distribute to everyone, you just go and put it to C. Close C's account. When you close C's account, automatically you will get the balance. That balance is 1,60,245. Clear? 6% when you calculate this will get shared between two people. Is that clear? Are you following this? Now this profit will, this plus this, whatever profit is there, it will go to A, B, and only this profit will go to C. Okay? You will be able to close the capital account of A, B and C. A, B and C, when you close, what you will get? You will get balance carried on. That's all. You will get balance carried on for A and B. And this balance carried on will go straight into the balance sheet as current account. And whatever is there in their capital account will go straight into their balance sheet as capital account. Any doubt to this one? Are you following this? Okay, rest of the things you see. C is executor. Do you remember that 162.45? It's still there. You didn't pay the amount. C is interest on executor. Did you pay that interest? No, outstanding interest. It will be there in the balance sheet. Clear? Then here revaluation happened, so increase. Here revaluation happened, so decrease. They didn't tell depreciation. So that's why directly we have put stock, debtors and bank. Done. That's all. Is this clear? Anybody has any doubt? Very, very important question. You have to see this and go for two reasons. How they have calculated goodwill and how they have calculated profit. Why there is no P&L suspense in the balance sheet? I told that time, no. Whenever we give profit share till the date of death, you have to calculate profit share till the date of death. So you have to pass the entry P&L suspense account debited to partners capital account, and that P&L suspense will come to the asset side of the balance sheet. Did I tell all this? Yes. But why am I not putting it here?
This is the end of the year.
Because even though this fellow died on 30th June, we are doing all the calculations on 31st December. 31st December, we will not prepare P&L suspense, we will prepare P&L appropriation. Here, if I would have to calculate, I'll prepare P&L suspense. Your question is answered. Yes. Is this clear? Now, that was that particular question. June 2023. We'll have a look at the material. Yeah, death of a question, death of a partner done. Then next we go into dissolution. Okay, dissolution. Practice question number 3. Only one question I want to see for dissolution, and after that, one for Ghana versus More, and then piecemeal. Then we go straight into piecemeal. Clear? Dissolution is actually the easier part of partnership. It's actually the easier part of partnership. Okay, it's not the tougher part of partnership, it's easier part of partnership. Maybe piecemeal distribution is new to you, so you're getting irritated with it. Okay, now let's continue. What? I didn't hear you. 1 o'clock, right? 5 minutes we have. We can finish one question. Okay, dissolution, practice question number 3. Yes. Is it tricky? No. So we can finish it off. Are you hungry, guys? No, okay. Are you hungry? No, okay. Okay, question number 3. Why I chose that is because there is no Ghana versus More in that. Okay, but the questions which are there without Ghana versus More, that is the most tricky one. If Ghana versus More is not there, nothing is there. No, actually in dissolution. But in this, there are a lot of calculations. Okay, so now understand this. Prepare realization account, bank account, and partners capital account in the books of the partnership firm. Now, first what you will do. Okay, they were sharing profits and loss in the ratio of 2:2:1. Capital account is given. Where will this capital account go? We are dissolving. We have to close everything. Where will this capital account go? 55,200, 55,200. I don't need this. It will go to partners capital account. Okay, if you see, third question, right, that was. Okay, if you see the partners capital account, can you see partners capital account over here? 55,200, 55,200. Whatever is their general reserve, what should we do with that? Whatever is their general reserve, what should we do with that? That also has to be distributed in their ratio. Can you see by general reserve? Yes. Now, if you notice the continuation of the question after that, okay, general reserve is gone. Can you see Kumar's loan is there? Kumar is Kumar a partner? Amit, Sumit and Kumar. So Kumar's loan amount also has to go to partners capital account only. 15,000. Okay, Kumar's loan is they didn't tell loan is repaid now, so it is going to be adjusted late with him with this capital 15,000. Any problem till here? No. I'm only focusing on the liability side first. Okay. After that you have loan from D. Do you know D? Insider or outsider? Outsider. So loan from D, trade creditors, bills payable, outstanding salary. Where will it go? Realization account. All of that should go to realization account. Can you see loan from D, trade creditors, bills payable and outstanding salary. Provision I have not seen yet, so I have not marked it. Okay, can you see this? First job in dissolution is always emptying the balance sheet. Whatever is there in the balance sheet, empty it. Some things will go to realization account, some things will remain in cash account, and some things will go into partners capital account. All assets and liabilities are transferred. No. Next, after that, we have finished the liability side. We'll go into the asset side. Land and building, plant and machinery, furniture, investments will go to realization account. Correct? Book debts is what? Debtors, how much should go? 60,000. This should be treated as on the liability side. Okay, 6,000. Then stock also will go, and this 32,400, where should it be? It is capital withdrawn. So in the capital account, there should be to balance brought down. To balance brought down. And this bank, where should it go? You have to open bank account and write to balance brought down. Is this clear? Bank ledger you have to prepare and you have to write to balance brought down. Do you remember I told transfer all assets and liabilities except cash and bank? Okay. So now you can see provision for bad debt is transferred to realization account. Land and building, plant and machinery, furniture, investment and book debts at 60,000 and stock all are transferred to this thing. And Kumar's capital account, can you see over here to balance brought down 32,400? Can you see bank account has a balance brought down of 13,500? Are you following this? Clear? Now, one by one, we have to understand the payment. Okay, what if you look at the solution, you might get really irritated because they have put all like this. All the payments at once only they have entered. Okay, but the detail they have given here in the realization account, they have given the detail. In bank account, they have not provided the detail. Clear? Now, understand this. Very, very important. Realization expenses amounted to 18,000, out of which 3,000 was borne by Amit. Very good. Amit is going to pay some expense from his pocket, but firm has to give the money to Amit. How much is the realization expense? 18,000. Okay, 3,000 is going to be paid by whom? Amit. So what should be the entry for this? Realization account debited 15,000. Amit's capital account debited. Okay, 3,000 to bank. Is that right? Correct? But Amit has paid money, no? Why are we debiting his account?
We can credit by the.
Because he paid from his funds.
Okay, so we are removing his capital here also. He paid something from his money, so we should have given him, but we are removing from here also. Are you getting this? My question. See, don't make such mistakes, guys. See, realization account debited for 18. Not Amit's capital account debited. Amit has paid the money. Which firm had to pay? Amit has paid the money. So realization account debited for 18. To bank 15. Okay, to bank 15. Bank they have put together, so I cannot show item by item. So I'm just marking over here. To bank 15. 3,000 who paid? Amit paid. So can you see Amit's account 3,000? If Amit has paid money from his pocket and in the books we are reducing his capital account, that doesn't make sense, no. If Amit is taking money from us, then we will reduce his capital account. Amit is actually giving money from pocket. Then we should give him, no. We should put into his capital account. Is that realization point clear? Okay. Then next. The next point is very, very important again. A creditor agreed to take over furniture at a book value of 12,000 at 10,800. The rest of the creditors were paid off at a discount of 6.25%. How much is the creditor? How much is the creditor? 30,000. Creditor is how much? 30,000. Okay. What is the creditor taking? He is taking the furniture. But furniture he is taking, book value is 12,000, but he is taking it at what value? 10,800. Remove 10,800. That will give you 19,200. Should we pass any entry for this 10,800? No. Because the entry would be realization account debited to realization account. Asset is also in realization account. Liability is also in realization account. They are taking one asset and against one liability. So realization account debited to realization, contra entry. You can ignore it if you want. You can write it also. But it will be having no effect on the realization account. Clear? 19,800 is still payable to the creditor. Are we going to pay that? Yes. We are going to pay after giving discount of 6.25%. So minus 6.25%. How much are you getting? You are getting 18,000. Everyone is getting different number, but I trust on my calculations. Okay, 18,000. How can you make mistakes on this? See, calculation error only, you are losing marks in the exam. You should not make calculation error. If you don't know the concept and if you don't attempt the question, you will not feel bad because you didn't study. You studied, and if you are making calculation mistake, that time you will feel bad. No, because coming out of the exam hall, you thought that everything was correct. Are you getting my point? Okay, so don't make these calculation mistakes. 18,000 we have to pay. Understand this. Creditor, can you see? Entry is realization account debited to bank. You are paying someone, realization account debited to bank. Creditor 18,000, and in bank also you can spot that 18,000. Clear? Every item they have put calculation here. That's why this question we have picked over here. Now, after creditor, next. Assets realized as follows. Remaining taken over by Kumar at 90% of the book value. How much is the furniture? 25,500. Okay, 25,500 is the furniture, correct? Remaining, wait, don't calculate 80%, 90% now. Remaining. Did somebody take your furniture? Did somebody take furniture? Yes. Furniture of book value 12,000 was taken at 10,800. Will I remove 12,000 or will I remove 10,800? 12,000. When I remove 12,000, 13,500 is remaining. This is taken by whom? One of the partners. At what value? At 90%. 12,000? 150. 12,150. What should be the entry for this? Taken by partner. What should be the entry? Partner's capital account debited to realization. Can you see? Furniture is already sitting in realization. So don't write partner's capital to furniture. Partner's capital account debited to realization account. Now see, now he took furniture. You are reducing his capital. That time he paid money. That time you were reducing. That was not right. Clear? So 12,150, you have to spot that. Okay. Now, can you see 12,150 here? And can you see in the partner's capital account 12,150? Kumar? This is different. That is investment taken over. Don't get confused with the two numbers. 12,150. Okay. Next, after that, what are they taking after that? Stock. Realize 120% of book value. How much was the book value of the stock? Stock was showing 36,000. You got more value. So 36,000 into 120%. 43,200. 43,200. So now what you will do? You will go to the question. What is the entry? What is the entry? Fast. What is the entry? Bank account debited to realization account. Can you see? By bank 43,200 and here assets realized total only they have put in the bank account. You can take the total from here itself. Clear? Total only they have put into bank account. Now next, after that, after this question only we'll take break. Okay. Next, book debts. 12,000 of debts proved bad. What to do? We need to subtract. That's all. No entry and all for bad debt. Remove it. Realization account. Only what you realize will be there. What you don't realize will not be there. Okay. Remaining were fully realized. What is your debtors? Will you take 54,000 or 60,000? Correct. You will take 60,000. You will take 60,000 because your debtors are not 54. Your debtors are 60. Your debtors are 60. You already had doubt on 6. But now the doubt went wrong. It is actually 12. Are you getting my point? Your debtors are 60. You made provision for only 6. Okay, now 60,000 minus 12,000, 48,000. You are going to get money or not getting money? Get money. What should be the entry? Bank account debited to realization account. Bank account debited to realization account. Can you spot this 48,000 here? Bank, they have put the total only. So I cannot show it to you over there. Okay, bank account debited to realization account. Next, after that. Next. Land and building realized 1,65,000. What should be the entry? Bank account debited to realization account. Can you see 1,65,000 over here as well? And the total, whatever you realized, 256,200 is there in the bank account. 256,200 is there in the bank account. Clear? Next, after that, few more points are there. Investment taken over by Amit at 15% discount. How much is the investment? 15,000. So 15,000 minus 15% gives you 12,750. That means they have taken the investment at 12,750. What should be the entry? Amit is taking the investment. Amit's capital account debited to realization account. Amit's capital account debited to realization. Can you see realization 12,750? And can you see in Amit's capital account 12,750? Is this clear? Are you following this? Next, after that, for half of his loan, D accepted plant and machinery and 7,500 cash. Half of his loan. Now, how much was D's loan? 1,20,000. Now, understand this. 1,20,000. Half of the loan is 60,000 and remaining half of the loan is 60,000. Here for this, he has taken what? Plant and machinery. We don't bother about it. Because if he takes plant and machinery, entry will be realization account debited to realization account. Clear? Because loan is also in realization account, plant and machinery is also in realization account. But he's taking 7,500 cash. For 7,500 cash, I have to pass the entry. And remaining amount was paid at a discount of 10%. So if you remove 10%, it will become 54,000. That means total amount what I am paying him, 61,500. Is this clear? Half the loan, I am going to give machinery and then give cash. Remaining half loan, I am going to pay it at discount. 61,500. Entry. Entry. Paying these loan. What is entry? Realization account debited to bank account. So you should find this 61,500. Without finding, we are not going anywhere. 61,500, and you can spot it here also. Here they have, see, here they wrote 61,500. Okay, D's loan. Here they wrote separate. 7,500, 54,000. Okay, just ICA things. Just things which ICA can do. Okay, next. After that, what do we have? Bills payable were due on average basis of 1 month after 31st March. But they were paid immediately on 31st March at 8% discount. What is this according to the knowledge of bills of exchange? Rebate. And this is actually retirement of bill. It is actually due 1 month later. But we are paying today. Why are we paying today? Because today I am closing my firm itself. Okay. So how much is the bills payable? 12,000. So 12,000 into, what is the rebate? 6%. Into 1 divided by 12. 60 rupees. That means 12,000 minus 60, 11,940 rupees I am supposed to pay. What should be the entry? What should be the entry? Realization account debited to bank account 11,940, and in bank account you can find 11,940. Is this clear? Now, what did they tell after that? That's it. Okay, that is it. No. What was the one more thing? One more thing is this. Salary. Somewhere we saw one outstanding salary, right? Outstanding salary. Now, outstanding salary is there. We cannot go and distribute money to partner now. Why? Employee spending amount is there. First pay that. So, whenever you have that outstanding salary, see, trade creditors, they spoke about it. Bills payable, they spoke about it. Loan from D, they spoke about it. Kumar's loan also, it was transferred to his account. Now, what about this outstanding salary? They did not speak. If they don't speak, does it mean that it is not paid? It is supposed to be paid. Before paying that, you cannot distribute money to partner. Clear? When you pay the 7,500, what should be the entry? Realization account debited to bank account. And in realization, you can see over here, salary 7,500 and bank one number was missing, that is 7,500. After this, what you do? In partner's capital account, nothing. You do nothing. What do? Just put the realization profit or loss. Okay, it is profit in this case. So it is transferred over here. Finally, every partner's capital account, you are going to see the balancing figure. Here, the credit side is more. That means you have to pay money. So what you will do? To bank. Here also credit side is more. That means we have to pay money. So what you will do? To bank. Here debit side is more. That means we have to get money. Nobody is insolvent. So you are going to write by bank. Clear? If there was insolvency situation, then Ghana versus Murray and all would have come into picture. But there is no insolvency over here. Is it clear? Yes. That is it with that particular question of dissolution. We have to see, I think, what more we have. Piecemeal distribution we have, right? Yes. We have one more question. This thing, Ghana versus Murray. Piecemeal, we have one question, and piecemeal, one more question. 3 questions we have. With that, we'll be done with partnership. That also we have to see. Okay, with that, we are done with partnership. That's it, guys. See you after 1 hour of lunch break. Bye-bye. Okay, guys, let's go to the next question. Okay, dissolution. Practice question number 2. Let's go to the practice question number 2. Okay, we had solved one question just before this. Okay. Question number 2. Let's go into question number 2 fast. Thin, short and fat were in partnership sharing profits and losses in the ratio of 2:2:1. On 30th September, their balance sheet was as follows. Okay, you can see the capital account of thin, short and fat is there. Current account is there over here. Can you see fat as a debit balance there? Okay, negative. They have put negative because debit balance when it comes to credit side, it becomes negative. Then you have Sunday creditors and you have bank OD. Then you have assets. Thin decides to retire on 30th September and Fat appears to be short of private asset. Short decides that he does not wish to take over Thin's share of partnership. Oh, what is happening? Who decides to retire? Thin. Fat appears to be short of private assets. And Short decides that he does not wish to take over Thin's share of profits. Basically, all three partners decided to dissolve the partnership with effect from 30th September. It then transpires that Fat has no private assets whatsoever. That means if at all Fat is supposed to give you money, Fat has no private assets whatsoever. Clear? The premises sold for 60,000, plant is sold for 1,07,500, fixtures realized 20,000 and stock is acquired by another firm at a book value less 5%. Debtors realized 45,900. Realization expenses amounted to 4,500. Okay, these things shouldn't be a problem. Bank overdraft is discharged and the creditors are also paid in full. Now, you are required to write the following ledger accounts in the partnership books following the rules of Garner versus Murray. Clear? 90% of the question is same like what we did in the previous question. But only thing that I have to discuss with you is over here. Debit balance. See, realization account and all, we are not going to discuss again. Okay, see partner's current account. What happened to partner's current account? Who is the partner who is retiring? Doesn't matter. Why? Because we are going to dissolve the partnership firm. Everybody is retiring only now. We are dissolving the partnership firm itself. Can you see over here? There is a partner. Okay. Can you see over here? There is a partner, Thin, Short and Fat. Okay. These are their balances. Is somebody going into negative? Can you see? Somebody is going into negative. Who is going into negative? Fat is going into negative. Can you see Fat? Here it is 20,000. Here it is 21,608. 1608 is going to be shared by these two partners, Thin and Short. In what ratio they are going to share that? Garner versus Murray. It's going to be shared in capital ratio 8:5. So this 1608. Can you see debit balance 1608? Okay, 1608. Okay, will be shared between the partners in the ratio of 8:5. So from Thin's capital account and Short's capital account, some amount is going to go and that will be adjusted against the loss. Is this clear? This is Garner versus Murray. Very, very important. Okay, realization. That time I told you, right? Okay, can you see realization? There is a loss. Can you see the loss here? Realization account. Immediately the partners will bring money for that loss. Which partners will bring the money? Only solvent partners. So can you see only Thin and Short you can see here by bank. Only Thin and Short you can see by bank. It is not there for Fat. Because Fat is already insolvent. Fat is not able to bring in any money. Nothing. It will be borne by others. That is why no, it will be borne by other partners. Because you put 7108 over here. That's why his loss increased, no? If he is not bringing money, that means loss will be there. If loss is there, he has to bring money. If he is insolvent, that loss will be borne by other partners in capital ratio. Is this clear? Are you following this? Yes. Any doubts with this? Clear? Okay. Now, we go into that last part of partnership, which is piecemeal distribution. Okay. One question each. Okay. One is for higher relative and one is for maximum loss. Question number 7 and question number 8 from your illustrations. You didn't take a phone here? It's here only. Okay. Huh? There was high demand in the break. The people were coming and asking me, what is that message, sir? So I told, ask him. If he gives permission, then I will tell it. Sensitive information and all, we don't share like that. 7 and 8. Okay, we'll go to 7 first. Okay. And here we are following maximum loss method. Now listen. Maximum loss method is basically every time you get money, you are thinking that you are not going to get money anymore. Clear? That means, understand this, in maximum loss method, or higher relative capital method, the method gets activated only after you finish paying all outsiders. When you are paying money to partners, that time you will talk about maximum loss method. Okay, now see over here. Okay, you have cash of 500. Clear? You have to prepare. In piecemeal distribution, you have to prepare one statement showing distribution of cash. Expenses of realization were expected to be 500, but ultimately amounted to 400 only. Expenses of realization is how much? 500, but ultimately it became only 400. Show how at each stage the cash received should be distributed between partners. They share profits in the ratio of 2:2:1. Okay. Now, first, can you see one point over here? They have put one number over here. That means they are telling that the difference is added over there. We kept 500 aside for expense, but we spent only 400. So 100 rupees is there in the last installment. Okay. Now, see over here. Statement showing distribution of cash. Who are we supposed to pay? Who are we supposed to pay? Creditors. And we also have A's loan. Okay. Then we go into partners. Now tell me one thing. First, whom will you pay? You will pay outsider. First time, how much money did you get? 1,000. But out of that 1,000, what did you do? Where is that? Okay, they have just put the summary only. First time you got 1,000. When you got 1,000, what did you do? Okay, plus 500. You got 1,000 plus already you had 500 with you. Cash balance. So 1,500 you have right now. How much did you keep for the expenses? 500. That means how much you have now? 1,000. Will you give creditor or will you give A's loan? You will give creditor. Can you see creditor is paid 1,000 in the first installment. Second installment, how much you got? 3,000. What will you do now? You will give 1,000 to creditor and you'll give 2,000 to A's loan. Third installment, how much did you get? 3,900. So creditor is fully gone. A partner's loan still there is 3,000 rupees. You will give 3,000 rupees. All the liabilities are settled now. Now you have to pay partner. Out of 3,900, you paid 3,000. That means still you have 900 rupees. Okay. Now when you have 900 rupees, you are going to assume that this is the last 900 in your life. You are not going to get 900 any more money at all. That means everything is going to be lost for the partners. So see over here. What is the amount you are supposed to pay to partner is written over here. How much do you have? 900. Correct? If you are supposed to pay 15, 18 and 9, you are supposed to pay 42,000. If you have to pay 42,000, but you have only 900, that means 41,100 is the loss. Correct? 41,100 is the loss of the partners. Now whatever loss is there, 41,100, it has to be distributed to. It has to be distributed to all partners in their profit sharing ratio. When you distribute that, okay, you can see that A is going into negative. A is going into negative. So what did I tell you when we okay, we did not discuss that time, no, properly. See here. Did we discuss this that time? Maximum loss method? We did. Only higher relative we didn't discuss. What no? Okay. Maximum loss method, I told you. Each installment is considered as last installment. Distribute maximum loss to partners in profit sharing ratio. Maximum loss is amount payable, this which is 42,000 in this question, minus amount available. And in case of deficit of any partner, follow Ghana versus Murray. Clear? Can you see we got a deficit of one partner there? Did we see deficit for one partner? Yes. So what we are doing, this deficit is not shared in profit sharing ratio. What is the profit sharing ratio of the partners? 2:2:1. We are sharing it in what ratio? Capital ratio. What is their capital? 15 and 18 and 9. 18 and 9, these two, it is in the ratio of 2:1. Clear? Which is Ghana versus Murray. 18 and 9,000. Can you see 18,000 and 9,000? In this ratio, this 1440 is distributed. That time, when you remove this loss, you will get 600 and 300. How much did you have money with you?
900.
900. Can you see 600 and 300 is 900 only? 600 and 300 is 900. Can you see how you have distributed? After giving 600 and 300, okay, now the balances are 15,000, 17,400, 8,700. Okay, earlier what was the balance? 15,000. Did you give anything to A? Nothing. So still 15,000. 18,000. Did you give anything to B? 600. So it is 17,400. 9,000. Did you give anything to C? 300. Yes. So it is 8,700. Now what you're going to do? Okay. Second, after that you got one more installment which is 6,000. When you got 6,000, how much you are supposed to pay to the partner? 41,100. But you got 6,000. That means 35,100 is the maximum loss. Distribute that maximum loss in their profit sharing ratio. That time you will get resultant figure. That means each person will get 960, 3360 and 1680. Did you understand how 6,000 is distributed? Clear? Now when you give that, the reduced balance of their capital is this. Next time in the next installment, you got 20,100. You got 20,100. How much you are supposed to pay now? 35,100. 35,100, if you have 20,100 with you, 15,000 is still the maximum loss. Distribute the maximum loss in their profit sharing ratio. Now whatever you get resultant figure, this is the amount that you have distributed. Do you have any more installments to come? Any more installments? No. That means finally remaining everything is their loss. Can you see? Last installment, you thought this is the maximum loss and that is actually the maximum loss. That is actually the maximum loss of the partners. Every time you thought, if you don't get money again, what will be the loss of the partners? We distributed. But we got money again. That time we thought, what if we don't get money again? We distributed the loss. Last time when we got installment, we did not get money after that. So maximum loss only is their actual loss. Can you see maximum loss itself is their actual loss. Is this clear? Now, higher relative capital method, you have to first calculate higher relative capital. Okay, question number 8. Higher relative capital. How are you going to calculate higher relative capital? Now we will discuss that with the illustration, with the steps which I had written over there. I had not discussed those steps, no. I told we'll not discuss those steps now because just the steps doesn't make sense at all. Bill of exchange we don't need. Okay, now have a look at this. What is the first thing that I have written here? High relative capital. Step 1. Divide the partner's capital by profit sharing ratio. Okay. What is the partner's capital in this question? 76, 48 and 36. Correct. What is the profit sharing ratio in this question? Have they given the profit sharing ratio? 2:2:1. Wait. Before you divide, wait. Okay, distribution of cash. No, you have to understand the higher relative capital. Now see over here. 76,000, 48,000 and 36,000. What is step 1? Divide the capital by profit sharing ratio. So I write 2, 2 and 1 over here. 76,000 you will divide by 2, not 2 by 5. You will divide by 2, 48,000 by 2 and 36,000 by 1. Clear? You got some resultant figure that time? Did you get some resultant figure? That is the end of step 1 till here. Clear? Now, see step 2. Keeping the capital of the partner who has the least resultant figure as the base, calculate the required capital. Keeping the capital of the partner who has the least resultant figure. In this, who has the least resultant figure? B has the least resultant figure. So you have to keep B's capital as the base. What is B's capital? 48,000. Keeping that as the base, if you calculate capital, you will actually do 48,000 is basically 2 by 5. How much is 1? How much? One lakh 20,000. So the capital what you are getting is 1,20,000. That when you okay. Now what you have to do? Keeping the capital, you have to calculate the capital, correct? Keeping that person's capital as base, you have to calculate the capital. Did you get 1,20,000? Yes. Now, step 3, distribute the required capital in PSR. Okay, distribute the required capital. That time you got 48, 48 and 24. Is this clear? Now, higher relative capital is equal to existing capital minus required capital. How much was the capital of A? How much is required? 48,000. Correct? Can you see difference is higher relative capital? How much is the capital of B? How much is required? 0. No higher relative capital. How much is the capital of C? How much is required? So what is higher capital? 12,000. Is this clear? Are you following this? Okay. Now, A and C have given extra amount compared to B. So A and C has to be paid first. But if I get money, who will I pay first in A and C? We don't know. Whoever has more capital. So again we have to prepare the steps. Again we have to repeat the steps. What was step 1? Divided by profit sharing ratio. Can you see A and C 2:1? Divide by 2, you will get 14,000. Divide by 1, you will get 12,000. Clear? What is step 2? Keep the person's whoever has base. Who has less here? B. Sorry, C. C has less, 12,000. 2:1 is the ratio. So 12,000 is 1 by 3. How much is 1? 36,000. Divide 36,000 in the ratio of 2:1. Are you getting 24,000 and 12,000 here? 36,000 in the ratio of 2:1, 24,000 and 12,000. How much is there over here? 28. How much is required? 24. That means 4,000 is excess. How much is there over here? 12. How much is required? 12. That means nothing is excess. That means the first rupee that comes in will go to A because A has higher capital of 4,000. So first you are going to give 4,000 to A. First 4,000, whatever money comes will just keep going to A. After 4,000, whatever money comes, it will go to A and C in the ratio of 2:1. Clear? But how much you have to give A and C? 24,000 and 12,000. Sir, 28 is written over there, sir. But out of 28, already 4,000 you have given here, no? Clear? So now see, 3 partners were there. In that, we got to know that A and C have given extra of 28 and 12. Now in these 2 who have given extra, who is extra in compared to these 2? A has given 4,000 extra. Are you getting my point? So first you give 4,000 to A. Now these 2 have given extra. Clear their extra. All will come to same level. Distribute in profit sharing ratio. Distribute in profit sharing ratio. Okay. See this. Okay. First 8,400 you will give to creditors. Obviously outsider you will pay first. Then first money that comes in you will give it to A 4,000. Then you will give it to A and C 24,000 and 12,000. All the excess is gone. Balance whatever is there you will distribute in the profit sharing ratio of 2:1. Is this clear? Higher relative capital is actually easier than maximum loss method. Maximum loss method every time you have to calculate and see over there. Here once you prepare the table of higher relative capital and see how much you are giving and to whom you are giving and when you are giving, that is end of the story. Is this clear? Now if you see the statement showing distribution of cash. See the statement showing distribution of cash. After creditor is gone and B's loan is gone. See. After that what happens? Okay. Whenever there is a situation like this, how you are going to calculate? Whatever money is there, 81,400 is there. Tell me. Understand this. 81,400 is there with this. Correct? First whom I am supposed to give? A will get 1,000. Okay. I'll write it. 81,400 is there. First A will get not 1,000, 4,000. Then what I will do? I'll give 24,000 to A and I'll give 12,000 to C. I'll give it to C. Now 4,000 plus 24,000 plus 12,000. Till now 40,000 I have given, right? Out of 81,400, if you remove 40,000, you'll get 41,400. That has to be distributed to all the partners now because higher capitals are given. Distribute to all the partners in the ratio of 2:1. Into 2 by 5. How much are you getting? 16,000. Oh, sorry, 1 second. We should have actually not done this one. It is this one, no? Here, see. After this becomes 0, second installment 60,000. Okay, but in that 60,000, see, there is a working note which shows the installment. See, first installment 8,400 came, fully went to creditor. Second, then after that 4,000 came, that went to A. Okay, then next 36,000 went. Then this is the distribution of the second installment. Second installment was 60,000. First you gave 8,400, then 4,000, then 36,000. Remaining money only got distributed in the ratio of 2:1. Did we get third installment? No. Did we get third installment? Is there a third installment? No. Second installment only. Are you getting this? Is this clear? First you have to pay B's loan. No, this is the 8,400 that they're talking about. First time you got money. Can you see first installment? Full amount you have paid to creditor and you have paid to B's loan. Second installment when you got, after paying B's loan also, money was there. So that money is distributed first to A, then to A and C. Then you have given full amount to A, B, C in the ratio of 2:1. Any doubt with this one? Very, very important. Don't skip. Last attempt they didn't ask. Before that attempt they didn't ask. But before that attempt they asked. Okay, I think in June 2024 they have asked. Maximum loss method they have asked. Okay, that should be it with the partnership. 10 marks they asked. Yes, with that we are done with partnership. Finally, let's go into NPO. Oh, RTP-MTP is also there. I think we have solved too many questions on partnership. Okay, RTP-MTP you should be able to handle. Huh? No. Last time also at the same time we were doing company and you were putting your head down and meditating, remember?
No, I was just.
It was around same time, 2:45. We don't want to do deja vu. Okay, let's continue with NPO. We'll do NPO. Company is actually easier. That is why we are doing NPO first. Company is actually easier. Company accounts is vast.
We can finish it.
Huh?
We can finish it. Company. Now we start.
NPO. What? I'm doing NPO. Huh? That's why I didn't pass last time. Yeah. Like this, like how accounts had NPO. Maybe other subjects had those chapters which you skipped. How do you get aggregate? By scoring more in all subjects, right? What does it mean? I didn't pass. I passed. I mean, I did not pass because of aggregate. How do you get aggregate? By scoring more. NPO came for 12 marks. Was it 12 marks? Yes. You guys are actually fools. You NPO is scoring. If you're skipping NPO, you're a fool because NPO is scoring. I am telling you, NPO is not difficult. It is scoring. It is entire NPO stands on outstanding, prepaid, received in advance, and accrued. That's all. Finished. Which to add, which to minus. If you know, done. Job done. Okay. You don't want to start with NPO. Okay. If you tell no, also I would start the NPO. Yes. NPO. Not for profit organization or non-profit organization. Clear? Now, Rotary Club, Lions Club, Sports Club, Alumni Club, and educational institution and hospitals all are NPOs only. Clear? Now, accounting wise, we have to discuss what are we going to prepare. Receipt and payment account, income and expenditure account, and balance sheet. You have to understand the nature of each of them. If you understand the nature of each of them, then there is no problem at all. You will never get confused. Receipt and payment account is nothing but cash book. Nothing but cash book. In cash book, when you put something, if you receive, you'll just enter it. No, you'll not think twice at all. Okay, income and expenditure account is like P&L, but we can't call it as P&L because I already called my heading as NPO. When I call myself as NPO and I prepare profit and loss account, that doesn't make sense, no. So you are preparing profit and loss account only, but you're going to call it as income and expenditure account. Are you getting my point? Okay. Now I am telling a non-profit organization, then I cannot tell profit. I'll call it as surplus. I cannot tell loss. I'll call it as deficit. Balance sheet. I cannot tell capital. Capital means what? Amount invested by owner. Who is investing? There is no owner only here. Clear? So you're going to call it as capital fund. That means amount accumulated from everybody, which we are going to use for service. Is this clear? Okay. Now, receipt and payment account and income and expenditure account, you have to understand. I told it's cash book, right? That means I can't follow accrual concept. Accrual concept is not followed. Cash book, I can't follow accrual concept. If I receive, if I pay, I will enter. Otherwise, I will not enter. Okay. All receipts and payments are to be recorded. Capital plus revenue. Why did I write that? If I buy machinery also, I will show it as receipt. But if I buy machinery, I will not show it in income and expenditure account. Clear? Sale of asset, purchase of asset also will be shown. Clear? related to any year to be recorded. What is that? Last year's salary I paid. Should I show it in receipt and payment account? Yes. 10 years ago, ka salary was pending. That I paid now. Everything. Next 10 years salary I paid to my employees so that they don't go anywhere. Should I show it? Yes. We don't have concept of accrual. We don't have concept of periodicity. There is no concepts of accrual and periodicity in cash book. Whichever years, if I paid, I will show it. If I received, I'll show it. Clear? Okay. Now, income and expenditure, I told you it's like P&L only. We prepared final accounts yesterday. Okay, so what we have to understand, record transactions only related to current year, only revenue transactions. Record transactions only related to current year, only revenue transactions. Clear? Even if it is not paid or received, you are going to show it. Accrual concept. That is accrual concept. Clear? Did you get this? Okay. Now, if receipt and payment account is given, then you are supposed to prepare income and expenditure account. Okay. Record only things which are related to current year, even if it is not paid or received. Now, understand this. What is your starting point? Receipt and payment account. What are you going to prepare? Income and expenditure account. Expense is paid. It's given in receipt and payment account. Now, outstanding of last year. Outstanding of last year. Is last year's expense? Minus. Outstanding of current year. Is this year's expense? But you have not paid. But still you will add because you are following accrual concept in income and expenditure account. Prepaid of last year. Prepaid of last year. Already paid. But it is related to this year. So you will add it. Prepaid of this year. You have paid it, but it is related to next year, so you will subtract it. Is this clear? This is when you are preparing related to expense. What if you are preparing related to income? Income, one of your major one here is subscription. Okay, income received is given in the receipt and payment account. Clear? Now, last year it was receivable. That means it is received this year, but it is related to last year. Minus. This year it is receivable. That means it is not received, but it will be received in the next year. But it is related to this year. So you are going to add it. Last year it is received already in advance, but it is related to this year. Add. This year it is received in advance. It is related to next year. Subtract. Clear? That time you will get income for the year, which will show it in income and expenditure account. Okay. Now my question is, if we switch, if they give you income and expenditure account and ask you to prepare receipt and payment account, can they do it?
Yes.
100%. Correct. Expense for the current year is given. Your starting point is income and expenditure account. That means what is given to you? Expense for the year. Not expense paid. Expense for the year. Whether it is paid or not, it is expense for the year. In P&L, what you see, that is the thing. Same way in income and expenditure account. Now, last year's outstanding. Now we are not thinking, is it related to this year? We are thinking, did we pay it? Now we are not thinking, is it related to this year? Now we are thinking, did we pay it? Last year's outstanding, that means last year it was not paid. It is paid in this year. Add. This year's outstanding, that means it is not paid in this year. It will be paid only next year. Minus. Last year prepaid, that means already paid last year. Minus. This year prepaid. It is related to next year, yes, but we have paid it. Add. Because we are preparing cash book, we are only worried about what is paid, whichever year it might be. Clear? Now, record whatever is received or paid in current year. If I am talking about income for the year, okay, is given in income and expenditure account. Last year it was receivable. That means they have not received last year. That means it is received this year. So add. Where is it? Previous year. Here, add. This year it is receivable. That means we have not received this year. We will receive next year. So minus. Last year received in advance. Related to this year only, but already received last year. So minus. This year received in advance. Related to next year, but we have received this year. Add. Can you see how the ideology changes when we are preparing income and expenditure account and receipt and payment account? Okay. If you are preparing receipt and payment account, you are only going to think, did we receive it? Did we pay it? Let it be any years. If you are preparing income and expenditure account, we are thinking, is it related to this year or not? Is this clear? Okay. Now, alternative also is there, ledger. They might ask you to prepare expense account or they might ask you to prepare income account. Now, you have to tell me one thing. You have to tell me one thing. What is the entry when you pay expense? Expense account debited to cash or bank. Can you see here expense account debited to cash or bank? Okay. This year there is something outstanding. What is the entry? Expense account debited to outstanding expense. Can you see expense account debited to outstanding expense? Last year also they would have passed the same entry for outstanding. Last year outstanding is not outstanding anymore. So you have to reverse it. Outstanding expense to expense. Can you see it just got reversed? Clear? What plus minus is happening in ledger also. This year prepaid expense. What is the entry for prepaid expense? Prepaid expense account debited to expense. Can you see by prepaid? Can you see by prepaid here? Last year also they would have passed an entry for last year's prepaid. Last year's prepaid is not prepaid this year. Expense to prepaid. Can you see expense account debited to prepaid? Can you see it getting reversed? Ultimately, whatever balance is there, it goes to income and expenditure account. Okay, it goes to income and expenditure account. What happens to balance of expense? Expense, when it goes to income and expenditure account, you always tell no, P&L debited to expense. Instead of P&L, income and expenditure account debited to expense. Clear? Yes, what's your doubt?
Cash.
No. Prepaid expense, the entry is prepaid expense account debited to expense, not cash. You know why? Because the person paying does not know prepaid and all. He just made the payment. For example, Correct, very correct. Okay, I took my phone, went to the insurance company, used the scanner and made a payment. What is the entry?
Expense account to cash.
Correct. Later I got to know I paid for next year also. Now what is the entry?
Prepaid expense account to expense.
That's my point. Person who pays will not know. They will not do all this calculation. Oh, is it related to this year? All this is done in finalization of accounts. Are you getting my point? When you pay, you'll tell one person in your firm or whatever it is, NPO, company, anywhere. You'll tell, bill came, make the payment. Bill came. But in this bill, okay, it is there till April 30th. So now he made the payment. You're doing the finalization. That time what you will see, oh, 1 month is falling into next year. Now you will reverse the expense. Are you getting this? So that's why always the entry for prepaid is expense account debited, prepaid expense account debited to expense account. So did you understand what we did in plus minus is happening in this ledger also? Yes, income account. Now, income account, tell me when you receive income, yes, tell me IIT, when you receive income, what is the entry? Yes. Income is credited. What will it have been? Cash or bank account debited to income account. Okay. Now everyone tell me, when there is income receivable, what is the entry? Income is receivable. Income receivable account debited to income account. Can you see here by income receivable? This is of current year. Last year what is receivable is not receivable this year. So you have to reverse it. What is the entry? Income account debited to income receivable. Plus minus is happening in ledger also. But when they ask you income and expenditure account or receipt and payment account, we cannot sit and prepare ledger. So there also you need to know plus minus what to do. Income received in advance. What is the entry? This year. Income account debited to income received in advance because it's a liability. Last year's received in advance is this year's income. No. So you have to reverse it. Income received in advance account debited to income account. Are you following this? Balance of income obviously goes to income and expenditure account. Clear? Next, there are some special items. We'll discuss that. Entrance fees. What is entrance fees? Can it happen again and again? It happens only one. Capitalized. Capitalized. Always added to capital fund. If they tell something else in the question, follow that. Are you getting my point? Entrance fees, if they don't tell anything, add it to capital fund. If they tell something in the question, then you follow. They will tell sometimes 3/4 of the entrance fees is capitalized. That means 1/4 is not capitalized. 1/4 will go to income and expenditure account. Okay. Life membership fees. Can you pay many times life membership fees? Can you die then get born again? You can do it. If you're undertaker, you can do it. Okay, you know there is some wrestler called as Undertaker. Many times he'll be dead and then he'll be born again. Okay, but you can't do it. You're not Undertaker now. You're not John Cena also. Okay, you know John Cena. Yes. Recently he turned heel. There was one big, huh? No. It's his last year in WWE. Yeah. Going to? How do you know going to die? Yes. Capitalized. Added to capital fund. You don't know John Cena. Can you see him? That's why. Yes. Annual membership fees. Tell me, annual membership fees, what will happen? Annual. That means you are going to pay yearly. It is going to be taken as income. Donations. You have two types of donation. One is specific donation, one is general donation. Specific donation means it's given for a specific purpose. So it has to be used for that purpose only. So in the balance sheet it will be shown as liability or it will be added to capital fund. Clear? General donation, that means it's given for general purpose for your day-to-day expenses. So it will be taken as income in the income and expenditure account. If nothing is mentioned, it's always going to be taken as general donation. You don't assume, they just told donation. You don't tell building fund and you'll write over there. Are you getting my point? If it is specific, they will tell you. If they don't tell you, it is general. So compared to it's your phone only, man. You're looking like, oh, someone's phone is ringing. Yes. I looked at him when his phone was ringing. He's like, yes, sir, someone's phone is ringing. He's giving me that look. Then I'm like, it is your phone. Okay, entrance fees, if nothing is mentioned, capitalized. Donation, if nothing is mentioned, income and expenditure account. Clear? Entrance fees, to come to income and expenditure account, they have to mention. Donation, for it to go to balance sheet, they have to mention. Clear? Honorarium. Okay, what it is and all, we'll not discuss now. Okay, just someone has come and given some service, you are giving some money to honor their services, that's all. Okay, expense. Legacy. Amount received due to will on the death of a person. Okay, one person was there. That fellow told he was not happy with these kids at all. He told, when I die, entire amount should go to NPO. Is it possible? Yes. Now, what?
Yes, sir.
What did you tell?
Yes, sir.
Before that, what you told?
Yeah, sir.
Okay. Now, no, I heard something else. Okay, so now understand this. This will just get added to capital fund because only once that person can die. So whatever comes, it's a one-time activity, non-recurring item. So directly it will get added to capital fund. Endowment fund. What is endowment fund? It is a donation which should not be used. It is a donation which should not be used. Specific donation which should not be used. Must be invested. Return received used for purpose. You have seen something like prize fund. Okay, in the study material there are questions where prize fund is there. Imagine I have a prize fund of 2 lakhs. I will go and invest this 2 lakhs. So this will be an investment as well. Okay, investment gave it 10,000 rupees. So I'll add 10,000 to the prize fund. Now I have 2 lakh 10,000 with me. The cost of giving prize this year came to 8,000. What will happen? I'll remove 8,000 and this will be 2 lakh 2,000. But the cost of giving the prize came to 13,000. What will I do that time? I will take only 10,000. 3,000 will be taken as expense. 3,000 will be taken as expense. This is just like your bad debt and provision for bad debt. You have provision, you can take from there. If you don't have, you have to take from P&L. Same way, if you have the availability in the fund, you can take from the fund. Now you're like, sir, this 2 lakh is there. No, that you are not going to touch. The 2 lakh is there. No, that you are not going to touch. 2 lakh will be like that. Now imagine 2 lakh becomes 2 lakh 10,000. Okay, that time 10,000 only you can utilize. Over and about 10,000, if there is price expenses, you have to take it from income and expenditure account. Clear? Now, example you see, price fund is 2 lakh. Balance sheet you have price fund 2 lakh and you got cash 2 lakh. How did you get cash 2 lakh? Somebody gave you money, no? That's why no cash account debited to price fund. Then invested. So now what happened? Price fund 2 lakh, cash went because you invested. Now price fund investment. Price fund investment. Then you got return of 10%. When you get return of 10%, what happened? Cash came 20,000. Investment is still there 2 lakhs. And the 20,000 instead of going to income and expenditure account, it got added to the fund itself in the liability side of the balance sheet. Expenses are 19,000. What will you do now? From 2 lakh 20, you will remove 19,000 and 2 lakh 1,000 will be there. When you pay the expenses, cash also goes and cash also 1,000 will be there. Now, if price expense is 22,000, then what will you do? You will take From the fund only 20,000 you will take, and from income and expenditure you will take extra 2,000. Okay, is this clear? Yes.
The next year, again, we get more money.
Fund. It will get added to the fund and you'll go and invest it.
This year, it came, the expense was more, so we just spent our money, NPU. We just put in the income and expenditure. Next year, the amount became more, the expense was less. So can we just adjust this?
Previous years, no, you can't do it. That's over. Already you took from income and expenditure account. You are not going to do it.
No, sir, that time we can, the amount which we spent last year, can we do that to income sales?
No, you can't do it. No. You can't do it. What shortage is there, that year only you resolve. If at all it goes to next year, it's a fresh transaction. Okay, that is it. With the concepts, guys, let's go into problem solving of NPO. Yes.
Example, for knowledge purpose, like we received example degree as a 5 lakh as a building donation.
Go on, I'm hearing.
Okay. Building donation is like building completed within a 4.5 lakh.
Okay.
Remaining 50,000 whatever it is. And it will be there in the balance sheet.
Yeah, it will be there. If future, if they want to extend the building or repair the building and all, they might use it for that.
They won't capitalize, otherwise they won't take it as a general donation. So the remaining 50,000.
No, they will not.
They won't convert it as a
No, it will not get converted as general donation. No. They will not add it to
capital fund. The remaining
leftover. It can be added to capital fund, but if you take it as general donation, it will come to this thing, no? It will come into your income and expenditure, no? It can get added to capital fund. That time building fund will close and it will go into capital fund. Yes, see in NPO what I usually do is I only solve a few questions. Okay, December 23 exam, June 23 exam, December 22 exam, June 22 exam. That's it. Only 4 questions. You know why I take those 4 questions? Those are already like they are going to cover all the concepts. Okay. And to be honest, those 4 questions are from study material. To be honest, if you have studied the study material questions, you will recognize the questions now when we are solving. They are from study material itself. Okay. So just let me get those questions. December 23, right? Where are you? December 23. Yes, here you are. Who is whistling? Is it a beach? Are you Chirag? Is it a beach? Are you Chirag? Like Chirag usually whistles in the beach at other girls. Chetan has already whistled. If you know, you know. Huh? You don't know how to whistle. What do you know then? You don't know how to whistle, huh?
yes, sir.
How can that be possible? Are you sure? Okay, we have this question. ABC Sports Club had the following income and expenditure account. Okay, I want to discuss this question with you. Listen. ABC Sports Club had the following income and expenditure account for the year ended 31st December 2022. Okay. Now, income and expenditure account for the year ended they have given. Now, salary, you tell me, what is it? They have given income and expenditure account. I know that it is expense. I am seeing it. Okay. They have given me income and expenditure account and I am asking what is salary? You are telling expense. Okay. They have given income and expenditure. So we have to prepare receipt and payment. Okay, what is it? It is payment. Stationery expense, payment. Rent and tax, payment. Insurance, payment. Office expense, payment. Depreciation, not a payment. What will you pay for? It's a non-cash item. Clear? Depreciation is not a payment. On building, furniture, sports equipment, whatever it might be, it is not a payment. Clear? Now, subscription. Receipt. Income, that I can see. It's receipt. Okay, interest, receipt. Donation, receipt. Miscellaneous receipt. Oh, sir, donation, sir. Now, how to decide, sir, whether it is specific donation or general donation? It is general donation. How? Not mentioned. That is not the reason. You know what is the reason? It's there in income and expenditure account already. We are given income and expenditure account. It's already there in income and expenditure account. That means it is general only. Are you getting this? Yes. You have to know the concepts. Okay. Now, additional information. Okay. 31st December 2021, 31st December 2022. 2 years they have given information about. Okay. Why do they give this information? Why do they give this information? To ascertain the opening cash balance. Capital fund. Cash is already there. Where is it there? Not there over there. They have given cash in hand and cash at bank on 31st December 2021 was 1,08,000. 31st December 2021 is starting of the year. Starting of the year balance they have given. Sir, ending of the year balance they have not given, sir. How to find out? When you prepare receipt and payment account, you will get the closing balance. When you prepare receipt and payment account, you will get the closing balance. You are required to prepare receipt and payment account. Is this clear? Now. Sorry, I didn't get you.
After the depreciation. Why it being in the remaining expenses?
No, it is not after depreciation. It is depreciation on building, depreciation on furniture, depreciation on sports equipment. Yeah. It's not after depreciation. Okay. Now, listen. First, what we have to prepare? Receipt and payment account. But we always need even the opening balance sheet. No, receipt and payment account is the solution actually. But don't you need opening balance sheet? Balance sheet as on 31st December 2021. Where are you going to get it? From that table only. Government securities, subscription, outstanding, furniture, land and buildings, sports equipment, stationery, cash. Cash was not given in the table. It was outside the table. 1,08,000. Advance subscription, salary outstanding, everything. You get the balancing figure as capital fund. Capital fund. Okay. Don't listen to ICAI. Write capital fund only. Opening capital it seems. NPO it is. Okay. Capital fund. Write capital fund. Okay. Then again see opening capital. They have not made those mistakes everywhere, but some places they made. Okay. Suggested answer is just suggested. Remember that. Okay. Now again see government securities asset. Subscription outstanding. Don't get fooled by the word outstanding. Subscription is income. Income receivable it is. It is asset. Subscription received in advance. Liability. Salary unpaid. Liability. Furniture. Asset. Land and building. Asset. Sports equipment. Asset. Stock of stationery. Asset. Clear? Do you have anything related to stationery in your... can you see stationery expenses? Okay. When you have stock of stationery, one thing I want to understand. Stock of stationery is 3,000. And opening stock, closing stock is there. Whenever you have something like the stationery, medicine and all that, you have to take consumed. You have to take consumed. Okay, so what is there over here is actually stationery expense. That means stationery consumed. Okay, what is the formula for stationery consumed? Opening stock plus purchases minus closing stock. Consumed they already told 30,000. 30,000 is equal to, what is the opening stock of stationery? 3,000 plus purchases we don't know minus closing stock is how much? 5,500. So what is the purchases? 32,500. Should I find this in the receipt and payment account? Is it a payment or a receipt? Payment. Receipt and payment account 32,500. If you put 30 over there, gone. Your balance sheet won't tally. That's all. You will not realize from where the difference came, but your balance sheet won't tally. Whenever you see stationery, if there is stock, that means everything is not used. So you have to find out consumed. Now you are coming from income and expenditure to receipt and payment. So you have to put in receipt and payment account, you will put only purchased because you will pay for what you purchased. But in income and expenditure account, you will take only what you used. Are you getting my point? This also will be there for medicine supply and all other things. Clear? Now, understand this one. Next. Salary. 2,35,000. Do we have outstanding? Can you see salary outstanding? Am I going from income and expenditure to receipt and payment or receipt and payment to income and expenditure? Income and expenditure to receipt and payment. So, 2,35,000 in your calculator. Everyone. 2,35,000. This 10,000. Last year's outstanding. What should I do? Last year's outstanding plus, because you are going to pay it this year, plus, and this year's outstanding minus. How much did you get? 2,30,000. Are you getting this? Yes. Next, after that, you have rent and taxes. Any outstanding for rent and taxes? Nothing. Go and put that as it is 5,000. Go and put it as it is 5,000. Next, you have insurance. Do you have any prepaid and all? No. Yes, sir.
No, sir.
Then, as it is, go and put it over there 2,000. Next, after that, office expense 8,000. Office expense 8,000. Do you have anything prepaid and all? No. Directly go and put 8,000 as payment. Clear? Now you're like, sir, one doubt I have, sir. Okay, suddenly it struck me. Income and expenditure account, left side is expense, right side is income. But in receipt and payment account, left side is receipt, right side is payment, sir. Why?
Cash flow. Because of cash flow format.
Because there it is a nominal account, here it is an asset account. It's a nominal account there. Expense, debit side will be expense. Okay. And in income, in asset account, debit side will be when asset increases. Credit side will be when asset decreases. Done. Okay. Depreciation all I'm not going to bother only. But what we have to bother is, see my land and building. 20 lakh. 20 lakh. How much is the depreciation on the building? 37,500. How much is the depreciation on the building? 37,500. So it should be 19,62,500. Correct? Are you getting 19,62,500? Yes. What a skill. Oh, what a skill. Madam, I like your skill. Even in sleep, she is pressing the calculator. Yes, that is a dedication we require. Middle, she dozed off, okay? She pressed the calculator. She got up and 19,62,500 she got. Yes, happens. This course is not easy. It is tough. But end of the day, when you clear, it'll be worth it. It is not easy. I'm not going to come and tell you that CA is an easy course. It is tough. Because it is tough, there is value. Are you getting my point? Just stay in it, you'll clear, and that time value will be there. Okay, now, and see, things are getting easier for you guys. CA final 3 attempts in a year. Things are getting easier. People used to fail CA final, no, they have to wait for 6 months. One attempt you fail, if you fail, gone 6 months. When you fail 2 attempts, you won't even realize that 1 year is gone. Okay, and CA final, it will be like you have spent so much time in this course and then, time is passing by. So 3 attempts is very good actually. Okay, it's a big advantage. So you are actually in a good phase of doing CA. 3 attempts in foundation, 3 attempts in a year in inter also, 3 attempts in a year for final also, and 2 years articleship also. It was 3 years articleship. Once upon a time, it was 3.5 also. Yes. I'm not too sure if 2 years articleship is good. Okay, but at least you can finish the course faster. Yes. Huh? For ICA it is revenue, yeah. See, actually ICA doesn't need more revenue. See, I shouldn't be telling this. Okay, let's continue, guys. People are watching YouTube, no, they don't know what happened in middle. Actually, they don't know that there is a middle also. From here, okay, we are continuing. We are in the same question. Yes, okay, let's continue. Now, one more thing. See over here. What I was telling you was, opening balance was 20 lakhs. Remove the depreciation, you are getting the closing balance. Now, see this one, furniture. Okay, opening balance of furniture is 35,000. Remove the depreciation, what are you getting? 33,800. But the closing balance is 39,000. How did it increase? That means you have purchased. So, 33,800 and 39,000. 5,200. I am awake. 5,000. Yeah, 200, correct. Are you finding this 5,200 on the payment side? Hey, did I make a mistake? What did we do?
1,200.
Okay, I usually you're supposed to prepare ledger, okay, but now we can't sit and prepare ledger and all, so I'm just showing you the calculation. How much was, I was doing sports equipment. Sports equipment is 35,000 and depreciation on sports equipment is 1,000, so it has become 34,000, but closing balance is 39,000. Increase of 5,000 is purchase of sports equipment. Okay, furniture, Opening balance of furniture is 20,000. 1,200 is the depreciation, so it becomes 18,800. But closing balance of furniture is 19,800. Increase of 1,000 will be purchase of furniture. All this we didn't find in income and expenditure account because income and expenditure account takes only revenue transactions. Now, going into the income side. First thing, subscription 250. Take your calculator. Subscription 250. Clear? Okay. Last year's receivable, what will you do? Add, because you would have received it this year. This year's receivable, what will you do? Minus, because it will be received in the next year. Last year received in advance, what will you do? Minus, already received in the last year. This year's received in advance, what will you do? Add, what are you getting? 2,24,000. Receipt payment account 2 balance brought down is the opening balance. Correct? Okay. Next, after that, interest 90,000. Any outstanding and all for interest? Nothing. Directly go and put 90,000 over here. Donation directly 40,000 over here. Okay. And miscellaneous receipts were also there 3,000. No adjustments at all. Directly put 3,000 over here. Is your receipt and payment done? Closing balance was not given. This is your balancing figure. Where will this closing balance go?
To the balance sheet.
To the balance sheet. This will be the bank balance in the balance sheet. Can you see 181,500? It was given in the question. Cash in hand on 31st of December 2021. Opening balance. It was given in the question. Okay. Now, rest of the things what you're going to do. Opening capital we found no. Opening capital fund. Add the surplus. Sir, from where we got, sir? 63,600. Given in the question. Income and expenditure was in the question. Surplus 63,300. Okay. Advance. Received in advance is liability. Salary outstanding is liability. Government securities. Subscription receivable is asset. Clear? Furniture, land and building, sports equipment, all the balances were there in that table itself, and this will be your balance sheet. Is this clear? Shouldn't be any problem. Okay, simple question it is. Next, let's go further. Question number 51. Question number 51. Okay, following is the receipt and payment account of Pune Medical Aid Society for the year ended 31st December 2022. Clear? Now, understand this. Pune Medical Aid Society, what did they give you? Okay, so that means receipt and payment is given. So what can they ask you? Income and expenditure account. Okay, to opening cash in hand. Opening cash in hand. Where will it go? It will go to opening balance sheet. It will go to opening balance sheet. Subscription. Income or expense? Income. Donation. They didn't tell anything. So it will be taken as general donation. Income. Unless we read something further later. Okay. Interest on investment. Wait, one second. June 23. No, we'll keep the June 23 paper. So we can discuss the solution. All 10-12 mark questions, okay? Nothing is less than 10-12. Everything is 10-12 mark questions only. Medical aid. Sir, we already need medicine now. Fast you do. Chirag is already feeling sleepy. Yes. Now, where will this is what? Opening balance sheet. Subscription is income. Donation is income. Interest on investment. Interest on investment is also income. Charity show collection, income. But what you can do is charity show expense is there. You can merge these two and show the net amount. Medicine supply. It will not be expense. You have to calculate the medicine consumed. Okay. This one is important. You have to calculate the medicine consumed. You can't put 35,000 directly. Honorarium to doctor, expense. Salary, expense. Sundry, expense. Purchase of medical equipment, it is an asset. Charity show, we already discussed. This 13,800 will go to closing balance sheet. Clear? Now, we'll see what the additional information is. Can you see 15 marks? Okay. They have given all this information opening and they have given all this information closing. Is this clear? All this information opening and all this information closing. So what we are going to do? Subscription due. Subscription due. Tell me, what should it be? Income or expense? Subscription due, income or expense? Income. Okay. Now, tell me one thing. This what income, man? I was also thinking. It is asset. Subscription received in advance. Liability. Stock of medicine. Liability. Sorry. Asset. Amount due for medicine supply. Liability. Both of these are assets. Now, the biggest adjustment in this is stock. Biggest thing is stock. How much you are going to take as stock consumed? Okay. What is the formula for consumed? Opening stock plus purchase minus closing stock. Okay. What is the opening stock of medicine? 12,500. Okay. What is the closing stock of medicine? 17,250. Okay. What is the purchase of medicine? What is the purchase of medicine?
35.
No. That is the point. 35,000 is not the purchase. It is the payment made. When you have creditor, purchase and payment is not the same. When you have a creditor, purchase and payment is not the same. So you actually have to prepare the creditor's account. Do we know the balance? By balance, what is the balance? Amount due for medicine supply, 12,000. And to balance, amount due for medicine supply, 16,500. What is the payment that you have made? 35,000. What is the payment that you have made? To bank. That's why you are finding it in the receipt and payment account. To bank, 35,000. What is the balancing figure here? By purchases, 38,500. So that means what you purchased is 38,500. Now tell me what is consumed. 39,000 is consumed. 39,500 is what is consumed. Clear? This should be found in the income and expenditure account. This is what you are supposed to put in the income and expenditure account. Oh, you told this is 39. What is this? 39,500. So what is the consumed? 34,750. Medicine consumed. 34,750. Are you getting my point? What are the mistakes you can make? Many. What are the mistakes you can make? Directly. First mistake is you saw this 35,000. Directly you put it on the expense side. That is first mistake. Second mistake is you considered that this is the purchase and you put 35,000 over here and you calculated consumed. That is the second mistake. Now see, purchase and payment will be same if you don't have creditor. If you have creditor, purchase and payment cannot be same because you have not paid everything. Are you getting my point? Purchase and payment cannot be same because you have not paid everything. Okay. So because there is creditor over here, amount due for medicine supply. So what you have to understand? First you have to understand how much is the purchase. Then you have to bring that purchase over here and you have to find out how much is consumed. Is this clear? Any doubt with this consumption point? No. So 34,750 is what we are going to bother about this one. Now, next, subscription 65,000. How are we going to calculate? We are going to prepare income and expenditure account. So 65,000 subscription due. What are we going to do? Last year's outstanding, last year's receivable minus, because we are preparing income and expenditure account. Then this year's receivable plus, then last year's received in advance related to current year, plus this year's received in advance minus, what are you getting? 66,000 you should find subscription. Bingo. Clear? Next, after that, donation. What did we tell? Anything, any information about donation and all? Nothing. Directly go and put that as general donation. Next, after that, interest on investment, directly 10,000. In the balance sheet, yes, 10,000. And then 16,500, you are going to show the net. Have they shown the net? Yes, they also have shown the net. Clear? Honorarium to doctor is a direct amount. Salary, do you have outstanding salary here? Can you spot? So that is also a direct amount. Sundry expenses, direct amount. Depreciation, you have to calculate. They have not told. Sir, I didn't find the depreciation in receipt and payment account. You will not find also. Clear? So now, depreciation, how will you find it? Did they give you the rate? You will be very happy if you find the rate, no? Value of equipment is how much? 21,500. Did you purchase any equipment? Yes, 25,000. So 21,500 plus 25,000. That makes it 46,500. Correct? Okay. Then it has reduced to 37,200. That means, what is the difference? What is it? Depreciation. Asset value went down. So that has to be depreciation of 9,300. Sir, how can you tell, sir? Asset value can go down when they sell also. If they would sell, no, it would have been there in receipt side. It would have been there in receipt. Sir, what if it is sold for credit, sir? If it is sold for creditor, credit, no, then in the information that they have given, there should be a creditor. Sorry, there should be a debtor. Do we have that information? That means it is not sold for credit. It is not sold for cash. It is not sold only. That means asset value went down because of depreciation. Now, building, 65,000 is the balance. How much? Did you purchase anything? No. Did you sell anything? But what is the closing balance? 61,750. That means 3,250 is the depreciation. Is this clear? Are you following this? Now, in this question, one more mistake you can make. You know what is a mistake? You will go and prepare opening balance sheet. When you're preparing opening balance sheet, you got all these numbers. You got all these numbers, correct? Asset liability. You're very happy. Now, like, one more thing is there cash, sir. I should not forget that. Is there in receipt and payment account? Opening balance. You got that, and you'll calculate capital fund wrong. Why? Interest on investment is 10%. That means investment is 1 lakh. Sir, what if this investment was purchased in this year, sir? Then it would be there on payment side, sir. Are you getting my point? Are you getting this? That means it is not purchased this year, sir. It is purchased last year only. So it should be there in the opening balance sheet. If you miss this 1 lakh, 1 lakh will be less in your capital fund. Okay. You can see the opening balance sheet. Yes. Can you see? They calculated investment. Otherwise, it will not be 199,700. It will be only 99,700. Okay. Should this investment be there in the closing balance sheet also? Yes, because we did not sell the investment. How do we know that? It is not there in the receipt side. Okay. So can you see that investment is again there for 1 lakh? Other than that, in the closing balance sheet, where are the things coming from? From that table. Outside the table, is anything coming to the closing balance sheet? Yes. One, investment. Another, cash in hand. Other than that, everything from the table. Third thing that is coming into the closing balance sheet is surplus. Surplus, where will we get? When we prepare income and expenditure account, you will get the final balance as surplus. Is this clear? Any doubt with this? No. So consumed is a very important point. Okay, don't forget that. Sports material consumed is also same. When you are opening stock, sports material. If they would see in a sports club, two things: sports material, sports equipment. Equipment is asset. Imagine you have a badminton court. Okay. Badminton court, the badminton rackets and all are there, no, those are assets. The net and all which you have constructed, no, that is an asset. Sports equipment it is. But the shuttle you will be using every day, no, that's a material, sports material. You bought 10 boxes of shuttle and kept over there. This year they used only 2 boxes. So what is consumed only should be taken, no. So opening stock of material plus purchase of material minus closing stock of material will give you the consumed. Clear? Consumed only will go to income and expenditure account, and purchase will not go. Purchase should go to payment side only if there is no creditor. If there is no creditor, purchase means you have paid everything. If there is creditor, you have to prepare creditor's ledger and find out the purchases. Stock, closing stock, closing that they will give you. Closing stock they will give you, like how they give for stationery. Okay, let's go further, guys. Next. NPO, December 2022 exam. Okay, young boys club. This is there in the exam in the study material called youth club or something. Youth club, very important question. December 2022. Do you remember Chirag? Will make Chirag popular in YouTube. They should go and search, and suddenly you should have full followers, new followers on Instagram. I should have told this by pausing the video so that you don't get the followers and get distracted again on your iPhone. Messaging your dad. But I like my skills. I'm very happy about my skills. No, I'm not talking about teaching and all. My general skills. Like, I was so confident that it was not his dad. Huh? That on the face it is visible somewhere. See, my confidence level went even more higher when he didn't give me the password when I asked first time. Then I was 100% sure it is not that. Huh? Curiosity. No, I started this rule in my regular class. If you're using phone, I'm going to take your phone. First day only I tell them, I'm going to take your phone and you're supposed to give your phone with the password. And some of the sensitive information, very, very sensitive, I don't read. But some of the things I just read it to the class. Literally, I go to YouTube and see their YouTube search history. And I read things to the class. Weird things will be there, what they have searched. Huh? Google Chrome history and all I don't go to see. History? Oh, that and all, they won't think so much. Now they will start thinking, like, once I started seizing the phones, no. Then they started new things. Okay, they started locking their chats. Important chats and all, they're locking it now. They don't want it to be disclosed.
So in YouTube history, how to make chakali?
How to make?
Chakali.
There are many. Whenever I seize phones, people staying in PG will always search different paneer recipes. Different something. They will search for so many cooking videos will be there. Okay, people who are staying in PG and all. How to make chakuli and all I didn't see. But really some amazing YouTube searches. Like one girl in Coimbatore, she had searched for how to politely tell someone that they are dumb. Okay. One more was how to politely get out of a conversation. All these things people are searching. Like I would have just called Chirag dumb. You're dumb, man. Chirag also would have just called his friend, hey dumb. He used to sit here and one more friend, Stoner, was sitting, hey, what are you doing? Chirag used to shout at Stoner and one more guy was there. Likith. Goldman. Yes, but there are some next level searches are there. Like really weird things. People just search left, right and center everything on YouTube these days. Huh? What's the weirdest thing now? This only was weird for me actually. There are some sensitive things also. Some really sensitive things I just read on my own and I just don't read it to the class. But there, for example, I was telling you that skill. I seized one girl's phone, okay? And I went to WhatsApp. There were so many messages, but I picked only one. And that was the one which had important information. You know how? I was just scrolling like this. And the last message will be seen. No, it was there. This contact has been blocked. I entered that. Oh, here something is there. I entered that. Then I saw 4 messages. Blocked, unblocked, blocked, unblocked. Then I understood in this, it is very, very important. Then I scrolled up. There was some crazy fight going on, then blocked. Then again, love appeared, unblocked. Then blocked. Okay. All these things you will find. Yes, let's go further, guys. If at all it was regular class, I would have seen more information from your phone. And I would have decoded a lot of things. Should I read that message loudly? Income and expenditure account of Young Boys Club for the year 2022 is as follows. Okay, guys, let's continue. Young Boys Club, it is there. Okay. Now, what did they give you? Income and expenditure account. So, tell me, what is salary? Payment. General expense, payment. Audit fees, payment. Secretary's honorarium, payment. Stationery and printing, payment. Annual dinner expense. Sir, annual contribution for annual dinner is there here. Sir, can I do set off? No, sir, you cannot do set off. Why? You're preparing receipt and payment account. Receipt and payment account is cash book. Cash book, the transactions are entered when they happen. Contribution for annual dinner and the annual dinner won't happen at the same time. So in cash book, you're not going to do the set off, but in income and expenditure account, you can do it. They have not done because they want you to show separately in the receipt and payment. Clear? This will be payment, interest and bank charges, payment, depreciation, non-cash, subscription, receipt, entrance fees. Sir, what to do, sir? Entrance fees. I should put it in balance sheet. Huh? It is already there in income and expenditure, so 100% it will be a receipt. Contribution will be receipt. Annual sports meet receipt will be obviously receipt only. Clear? Next, the account has been prepared after the following adjustment. Subscription, all your 4 friends are there. Received in advance, everything is there. How much is the subscription here? 8,500, correct? We are preparing what? Receipt and payment account. So last year's outstanding, add last year's received in advance minus this year's received in advance, add this year's outstanding minus 8,270. 8,270. Where are you? Yes, subscription 8,270. Is this clear? Next, we go further. Salary outstanding at the beginning of the year and end of the year were respectively 600 and 150. How much is the salary? Can you see the salary here? 3750. So what you're going to do? 3750. Okay. Beginning of the year. So plus 600 and minus 150. 4,200. What did we do? Last year's outstanding we added because it would be paid this year, and this year's outstanding we have subtracted. 4,200. Can you see 4,200? Hey, what did we go wrong in? 3,900. Wait. What did we not read? Salary outstanding at the beginning and at the end was 600 and is it not 3,750? Outstanding at the beginning. Is it correct what you gave? 4,200? Outstanding at the beginning means it is paid this year, right? What income?
Expense.
Yeah, expense only. Hey, no. This is payment side, receipt and payment account. Receipt and payment account. Wait, they have shown working notice. We'll see what they have missed or what we have missed. 3,750. Outstanding of 2021 minus 3,900. Did I see some wrong number? I told 150 instead of? Oh, question they gave 150. Yeah. And here it is how much actually? Oh, okay. Question it should have been 450 only. Okay. I hope you understood this. Suggested answers, just suggested. Just a suggestion. Okay. Did you understand that mistake? Okay. Here they have typed it as 150. That's why you are not getting that number. Okay. General expenses include insurance prepaid to the extent of 150. How much is the general expense? 1,500. Okay, so what we are going to do? Minus 150. So you'll get 1,350. Yeah. Where is the general expense now? Sorry, add. We are preparing receipt and payment account. Add 1,150. That time it becomes 1,650. Okay, and this 150 will also be shown in balance sheet as asset. Clear? Are you getting my point? Include, yes, but we are preparing receipt and payment account. Receipt and payment account, even the prepaid also we should add and we should show it over here. This year's prepaid means this year received, so we are going to add it. Clear? Next, after that you have audit fees for 2022 is still unpaid. Audit fees for 2022 is still unpaid. During 2022, audit fees of 2021 was paid amounting to 200. How much is the audit fees in this over here? 250. Is this 2022 ka or 2021? This is 2022 because in income and expenditure account, even if you don't pay, you will show it as expense only, no. So this is related to 2022 itself. So 250, what will happen? Okay, you will not show it in receipt and payment account. You will show in receipt and payment account only 200. Why? 250, yeah, last year, see. For example, 250. This year's outstanding, 250. So minus last year's outstanding, 200. So plus, that's why what is paid is 200. What is paid is 200. And in the balance sheet, no balance sheet, huh? Yeah. In the balance sheet, can you see? Sorry, I'm looking at some partnership question and all. Okay. In the balance sheet, outstanding audit fees is 250 this year. And if they have prepared last year's balance sheet, outstanding audit fees is 200. Is this clear? Are you following this? See, in income and expenditure account, they showed 250. That means income and expenditure, and they told audit fees is outstanding. That means this 250 is not paid at all. Last year's 200 is paid this year. So 200 will be shown in the receipt and payment account because last year's 200 is paid. This year's 250 is not paid. So it will be shown in the income and expenditure account and it will go to balance sheet. Clear? Are you following this? Yes. Now let's go further. Club owned a freehold lease of ground valued at 20,000. Where will this ground go? Balance sheet. Which balance sheet? Opening as well as closing. Why? They said owned. They didn't purchase it this year. Owned. If it was purchased, it would have been there in the receipt and payment account. Not there. Okay. I mean, it would have been there in the payment side, but it's we are preparing the payment side anyways. Okay. Club had sports equipment on 1st January of 2,600. At the end of the year, not sports material, it is sports equipment. End of the year, after depreciation, the balance of the equipment is 3,600. Oh ho ho. See the income and expenditure account. Do you have depreciation? What was the opening balance? 2,600. Remove the depreciation. It should become 2,800. 2,200. But what is the closing balance? 3,600. That means payment. Yeah, purchase of sports equipment. You have to put it no. You are preparing receipt and payment no. 1,400. 1,400 is the sports equipment. Is this clear? Purchased. So 2,600 became 2,200, but the closing balance is 3,600. That means 1,400 is the purchase of the sports equipment. Clear? You are preparing receipt and payment. Doesn't matter if it is asset or not. You will put everything. Every payment you will put. Next. In 2021, is it this year? Previous year. Club raised a bank loan of 5,000. So it should be there in the opening balance sheet. This was outstanding throughout 2022. That means it should be there in closing balance sheet also. Last year you took a loan, it's there in the balance sheet. This year you didn't repay the loan, that's why it will be there in the balance sheet. On 31st December 2022, cash in hand amounted to 1,600. 31st December 2022 is closing balance of cash, 1,600. You know what will happen? When you prepare your receipt and payment account, closing is given, okay? Interest, bank charges, annual dinner expense, stationery, honorarium, all direct it is coming. Clear? Even entrance fees, contribution for annual dinner, annual sports meet, everything directly it came, no adjustment at all. This is the opening balance, which is the balancing figure. So in this question, if you first start preparing no opening balance sheet to find the capital fund, you will not find it or you'll find the wrong amount. If you forget that cash you didn't put, you will get one capital fund. But when you get this balancing figure, then you can go and put it into the opening balance sheet. Then only you will get the capital fund. Clear? Now can you see? Ground is there last year also. Loan is there last year also. Ground is there this year also. Loan is there this year also. Are you getting this? Sports equipment and all closing balance was already given. Received in advance and outstanding and all, it was already given. See here also they are taking 450 only. So question, it should not have been 150, it should have been 450 itself. Clear? Yes, that should be it guys with this particular question. See, prepaid also came into the balance sheet as asset. Let's go into the next question. June 2022 exam. Mumbai Club. After this, we don't have one more. This is the last. Wait. Yeah, Young Boys Club we finished. Now this is the last question. June 2023 exam. Then only we can go into company accounts. Company accounts is very easy. Just like partnership. Okay, guys. Okay, 53rd question, which is Mumbai Club, June 2022. We'll check for Mumbai Club. Pune Medical Aid Society. Yeah. Oh, I took June 23. Sorry. Let's check if I already have June 22. Not there. Okay, let's go further, guys. Okay, let's start. Last question from NPO, guys. Okay, last question from NPO. Question, guys. Yeah,
3 more chapters.
we will. You don't know the end time, right? Do you? Yes, it's only 2 o'clock. Resident payment account, okay, of Mumbai Club for the year ended 31st March 2021. Okay, listen. Resident payment account of Mumbai Club they have given. Mumbai Club. Okay. What are we going to prepare? Income and expenditure account. Now you have to tell me one thing. Cash in hand, where will it go? It will go to opening balance sheet. Balance as per bank, passbook, savings account, current account, both will go to opening balance sheet. Bank interest, what is it? Bank interest, what is it? You have a tendency to tell that it is expense, but it is on the receipt side. So it has to be income. Donation and subscription, income. Entrance fees, one never knows. One never knows. We don't know. Right now we are going to write balance sheet. But if at all they tell 3/4, 1/4, all that, then we will do the adjustment. Contribution to club night. Income. Balance sheet. Club night means what? We are not constructing the club. We had one club night where we had fun. Okay. For that, we took contribution 10,000. See here, club night expense 38,000. We took contribution 10,000, but ended up spending 38,000 on the club night. 28,000 will be shown as net figure in the income and expenditure account. What we did in the club night, please don't ask that. Okay. Sale of equipment. Sale of equipment, what are we going to do? It's an asset, right? It will not go to income and expenditure account. Then, bar room receipts. Okay. Bar room receipts. What are you going to take it as? Income. Okay. Do we have bar room expense? No. Only we received money. Proceeds from club night. Income. Can you see club night? Actually, there is. Actually, you can club all this. Club all the things of club night. These two you can club. Contribution and proceeds from club night. And club night expense you can subtract and you can show net amount in the income and expenditure account. Okay, next. Groundsman's fees. Expense. We are already on the payment side. Thank you very much. Yes. Purchase of equipment is asset. Rent of ground is expense. Club night expense we already know. Printing and office expense. Expense. Repairs to equipment. Expense. Honorarium to secretary, 1920 boss. We are, which year this is? 2021. They have paid honorarium to secretary of 1920. That means it is last year's. It will not be taken as expense. It will be there in the opening balance sheet as outstanding, as a liability. Clear? Okay. Balance at bank as per passbook. All this will go to the closing balance sheet. Clear? Now you are given additional information. Subscription due. Do we have subscription received in advance written over here anywhere? No, only subscription due is there. That means receivable. Are you preparing resident payment account or are you preparing income and expenditure account? You are preparing income and expenditure account. So can you see the subscriptions over here? 2,50,000. 2,50,000. Last year's receivable should be subtracted. This year's receivable should be added. 2,45,000. 2,45,000. You can find 2,45,000 donation and subscription. Clear? Now, amount due for printing. Amount due for printing. Okay. Now 10,000 and 8,000 is there. What to do? We don't know. Do we have printing somewhere? Printing and office expenses. Okay. 30,000. So what you are doing? Amount due for printing? 30,000. Okay. Last year's outstanding minus this year's outstanding plus, that automatically becomes 28,000. Clear? 28,000 printing should be there. That is something else. Here, printing and office expenses 28,000. Is this clear? Are you following this? Okay. Next, after printing, see, checks unpresented being payment for repair. Checks unpresented. What can we do? First, we will consider the repair part. Where is the repairs to equipment? 50,000. So what we will do now? 50,000 minus plus. Why? Last year's outstanding, this year's outstanding. So what are you getting that time? 45,000. And wait, I'll tell you, there is more to it. Don't get confused. Repair is done. But now, this unpresented check in the balance sheet. I did not give you this explanation for subscription and for printing and all, because you know, outstanding should be shown on the liability side. Unpresented check. What should we do? Unpresented check, if you show on liability side, also it is the same effect, but what you're actually supposed to do is, can you find anywhere unpresented check over here? Outstanding printing you're finding, but can you find anywhere unpresented check? Subscription receivable you're finding. Unpresented check, can you find it? No. It will be adjusted with the balance, bank balance. Now, understand this. What is your bank balance? What is the balance here? 1,93,000 and 60,000. Can you see? What is the unpresented check? What is the unpresented check? Again, this is not a bouncer question. It's there in study material. Maybe it's the first question only of NPO in study material. Illustration 8. It's there in the study material. Same question is there. Okay, 30,000 you're going to remove from the bank balance. How much is the bank balance here? 1,93,000 plus 60. 193 plus 60 minus 30 should give you 2,23,000. If you check the opening balance sheet, where is it? They have, okay, 193 instead of 60. Can you see 30 here? They have removed that 30,000 unpresented check. Okay. Now when we go to the closing balance sheet, understand this. Closing balance sheet, what is the current account? 20 and 2,04,000 over here. But what is the unpresented check amount? Unpresented check is 25,000. Okay, 25,000. So in the balance sheet, okay, closing balance sheet, can you see what has happened? Bank OD. Bank OD. Are you getting this? We are 20,000. When they present that check, our balance will go into OD. Checks unpresented, no. We gave the check, it is not presented. When they present that check, balance will go into OD. Is it clear? So, checks unpresented if you see. Now you see for what it is. Repair. Here it is repair. Okay. First when you are taking the repair expense, you treat it like outstanding only. Add last year's, so add this year's and subtract last year's. But when you prepare balance sheet, don't show it as outstanding. Unpresented check, you subtract it from the bank balance. Then you show the net bank balance. Is this clear? Same, pick from study material only. They have not done anything extra. Okay, now interest not yet entered in the passbook. Last year nothing, this year it is there 2000. What should we do? Interest not yet entered in the passbook. First you tell me in income and expenditure account, what should I do? Did I have any interest here? Bank interest. Can you see 5000? This year something is there not yet entered in the passbook. So what should I do? I should take it as receivable and show the interest as 7000. And in the balance sheet, I should show interest due as 2000. Asset, correct? Apart from that, what do we have? Estimated value of machinery and equipment 80,000, 1,75,000. How much is the equipment? 80,000. Did you purchase any equipment? Did you purchase any equipment? Yes. How much equipment did you purchase? 1,55,000. Oh. 80,000 plus 1,55,000. That makes it 2,35,000. Okay. Minus. Did we sell any equipment? Yes. 8,000. Okay. We sold one equipment. Minus 8,000. It should become 2,27,000. It should become 2,27,000. But the closing balance is showing 1,75,000. That means 52,000 is depreciation. Is it correct? Yes. 52,000 is depreciation. Okay, in the exam, if you can't get this plus minus, no, just prepare an asset account. You know depreciation chapter. Prepare asset account. You'll get the balancing figure, whatever is missing. Okay. Now, honorarium, we'll get to that. Zero. Don't do it. Don't. All the circus and all, I don't entertain only. Don't do it at all without working note. Why? In the first page of your question paper only, they have written all working note should form part of your answer. Again and again, every question they don't need to tell you. Don't do all the circus. Without working note, studying for 80 marks, 60 marks and all, don't do that. 100 marks, you go and attempt properly how ICA expects you to do it. Okay? Nothing. Don't ask only those questions. I will not give you answer what you are looking for. Good. They will also in memory calculation, they'll tell your marks, but you won't be able to see it. Okay? You do memory calculation, they will also in memory only, they'll tell, okay, this is the marks. You won't be able to see it, but in the marks card. Do you want to see it in the marks card? Yes. Then you also show the question, so working note to them. Okay? Don't do it in your memory. Can they enter your memory and see it? No. Elon Musk is working on that, but it's not final yet. Okay? He's doing that. He's putting some bug in the brain and all, which will, calcium memory, you do one thing. After you do it in calcium memory, no. It should be in that MRC only. Okay. Send it in very, very fast courier to ICI Delhi. Okay. So that they can press MRC and see that and then they can correct your paper. Okay. You do that. Yes. For the year ended 31st March 2021, the honorarium to secretary is to be increased by a total of 20,000. Last year's honorarium was paid this year. But this year we are going to increase it by 20,000. How much was last year's honorarium? 40,000. Please tell me how much should be shown as honorarium in the income and expenditure account? 60,000. I'll show you. 60,000. Last year's honorarium was 40. This year we are increasing to 20. 60,000 will be shown as expense in the income and expenditure account. Did you pay anything? Nothing.
Yes.
Did you pay? No. This 60,000, did you pay anything? Nothing. What you paid was last year's spending. This will be paid next year. So tell me one thing. Should you find it in the balance sheet also? Outstanding honorarium. Can you see this year's balance sheet? Outstanding honorarium is 60. But last year's balance sheet, outstanding honorarium is 40. Is this clear? This they have increased. Okay. Next. That was the point of honorarium which you had to understand. Groundman is to receive a bonus of 20,000. Income or expense? Expense. Very good. Let's find the 20. Did you find the 20? Expense. Okay. Did you pay it? Did you pay it? If you had paid, you would have found where? In the receipt and payment account. You did not pay. In fact, they only told groundman is to receive. They didn't tell groundman received the bonus. They said groundman is to receive. So 20,000 where will you find? In the balance sheet as outstanding. Not the opening balance sheet, closing. Outstanding 20,000. Printing and all, we have already discussed. Outstanding printing is there. Clear? Next, after that, I don't think anything is there. Prepare income and expenditure account and balance sheet. Now, in this income and expenditure account, everything was whatever had an adjustment, we have discussed that. Rent of ground, groundsman's fees, then club night expense. See, they have done all this. Club night expense minus contribution. They have shown net amount over there. Okay. Receipt from bar room. All those were direct. Proceeds from club night. All those were direct things. Okay. All the three you could have clubbed and written also. No problem. Okay. See, alternatively, profit from club night can be shown this. I told you, all three you can club. They have shown two by clubbing and one separately. Okay. That is fine. And balance sheet, rest of the things, machinery, equipment and all, balance was given only directly. Okay, so major adjustment in this is what? That unpresented check. You have to be very careful about that. Unpresented check for repair, what you should do? For repair, you should add and minus based on the dates, and then you should subtract it from the bank balance. And the bank balance can go into OD in one of the year, but still you have to subtract and show it as OD. Okay, yes, that should be it, guys, with the NPO. Let's go further. What is the next one we have? Company accounts. Next, what are we moving into? Company accounts. Very small chapter. Okay, with small weightage of 25 marks. Very small chapter. I think this time they didn't ask for 25, right? They asked for 20. But usually they ask around 20 to 25 marks. Okay. And I think this time there was one question which was easy, but it was little mistake they made, ICA, by giving authorized capital which is less and all. Okay. Now, company accounts. Let's start with company accounts, guys. What is equity share capital? What is preference share capital? All that you are supposed to know. Directly, we'll start with issue and forfeiture of shares. Issue and forfeiture of shares. Now, what is share here? Very beautiful definition is there. Share is a share in the share capital. Oh ho ho ho. It's like me talking to me, within me. Correct? Nityananda. Okay, share is a share in the share capital. Basically, share capital is what? The total amount invested by owner, right? Or shareholders. In that, a small portion is called as share. Okay. Types of shares we have: preference shares. Okay, shares that have preferential right. What preferential right we have? Dividend and repayment of capital in case of winding up. If the company is wound up, repayment of capital will happen first to preference shareholder. Oh, okay, sir. Now, when company is winding up, we can do one thing, sir. We'll be the preference shareholder. When company is winding up, no, creditor and all we will not pay because we have preferential right. First, we'll pay ourselves. Is it right? No, preferential right is only between the shareholders. Among the shareholders, first preference is to preference shareholder. Outsider will always be top ranked. Clear? Next, equity share. Any share other than preference share. Okay, very good. Different stages of share capital. Authorized capital. Maximum capital that can be raised by the company. Doesn't apply in Jan 2025 exams, but other than that, it applies everywhere. Okay, there they give authorized capital which is less than the issued capital. Maximum capital that can be raised by the company. Issued capital. Shares issued to public out of the authorized capital. Everything we might not issue on one day. So today how much we have issued to public, that is issued capital. What we have issued to public, it is not necessary that public should show interest for all that shares subscribed by public out of the shares issued. Okay, I might have authorized capital of 1 lakh shares. I might have right now issued only 50,000 shares. But public might have shown interest for only 48,000 shares. Is this clear? Okay. Called up capital. If there are 48,000 shares, I will not ask you to pay full 10 rupees today only. I will tell you to pay little by little. How much I have asked you to pay, amount asked by the company out of subscribed capital is called as called up capital. Whatever I have asked you to pay, did you pay everything? No. Whatever you have paid is called as paid up capital. Is this clear? Now, let's go further. Accounting for issue of shares. Shares issued at par or face value. Okay. Now, many of you are like, sir, this is very easy, sir. 8 entries are there. Okay. This is very easy, sir. In 11th and 12th, I studied 8 entries fixed by heart. I went on by hearting 8 entries, then I will get the answers. First, I wrote the entries many times, then later I did fill in the blanks and fill the numbers. Okay. Please don't do all that over here because pro rata, all those things will come into picture and then you will be in trouble. Now, application stage. Application stage. Date of receipt of application amount. Okay, I mean, when you are receiving the application amount, you will pass the entry. What is the first entry? Bank account debited to equity share application account. Then what is the next entry? Equity share application account debited to equity share capital account. Now, when you are writing journal entries, you will be requiring the date also. For this, what is the date? The receipt of application amount, that date. But for this, what is the date? Allotment date. Okay, when you decide to allot the shares, that day you will remove from application and you transfer to allotment. Then you will ask the allotment money also. Are you getting my point? You will remove from share application and transfer to share capital. Then you will ask the allotment money also. Clear? Chetan, do you want to sit in the first bench? No. Okay. Then you know what to do. Allotment stage. Next, due entry. Due entry, allotment stage. Equity share allotment account debited to equity share capital, and receipt entry is bank account debited to equity share allotment. Sir, here transfer to capital happened first, but here transfer to capital happened second. Why, sir? Because here you get the money first. Okay, then you allot the shares to them. Here, you know that these are the shareholders. You ask them the money, they'll pay the money. Clear? Receipt entry will be bank account debited to equity share allotment. Call stage, what is the due entry? Equity share call account debited to equity share capital account. What is the receipt entry? Bank account debited to equity share call account. Clear? These are the 8 entries which used to have. You used to have 2 more. That is second and final call. Same thing it is. Shares issued at premium. Now you have to be careful. Premium means what? Issued at lower rate or higher rate? Higher. Issued at higher than face value. If premium is collected at application stage, then first entry is there no of application. There only you will write bank account debited equity share application including the premium amount. Then equity share application account debited to equity share capital, only the face value. Extra amount will go to securities premium. Clear? Now, if at all the premium is at the allotment stage or call stage, then when you make the due entry, when you pass the due entry, equity share allotment account or call account debited to equity share capital to securities premium. Clear? Then bank account debited to equity share allotment or equity share call account. Clear? So, whenever you transfer money to share capital, if there is premium, transfer that extra amount to securities premium over there. Clear? Did you understand what happens if it is application stage and what happens if it is at allotment stage? Any doubts with this? No. Next, shares issued at discount. Prohibited. You cannot issue, hey sir, what are you talking? In reissue, no sir, shares are issued at 9 rupees, 8 rupees and all. Okay, that is not at discount. That is at face value only. Why? Previous person gave something, next person gave something. These two somethings are more than face value actually. Okay, or at least equal to face value. Never shares are issued at discount. Are you getting my point? I am issuing share to you, you did not pay. You paid 3 rupees. I took the share back from you. Same share is there over here. I am issuing to the next person at 7. Now it might look like discount, but previous person already paid 3. So actually 10 rupees, it is already covering. So it is prohibited except for sweat equity shares. We don't have sweat equity shares in our syllabus, so let's not worry about it now. Sweat equity shares are shares issued to employees. You will study at a later stage. Clear? Under subscription means what? Less than the shares issued. I issued 50,000 shares. I got application only for 49,000 shares. This is called as under subscription. If it is below the minimum subscription, what is minimum subscription? 90%. If it is below the minimum subscription, whatever application money you got, quietly refund everything. So equity share application account debited to bank. When you got the money, you pass the entry bank account debited to equity share application. Now you will reverse and you will pass the entry equity share application to bank. Is this clear? Now, over subscription. What is over subscription? Shares subscribed more than the shares issued. I issued 50,000 shares, but people have shown interest for 80,000 shares. 80,000 applications I got. This is called as over subscription. Whenever there is over subscription, you have 3 options. 1. Reject and refund the excess applications. Excess applications are there, reject and refund it. Equity share application account debited to bank account. Clear? Pro rata allotment. What is pro rata allotment? Give shares to everyone. But you cannot give shares to everyone how much they asked. You give how much is possible. So in the ratio. Clear? Shares are issued to everyone, but not how much is asked by the shareholders. Excess application money can be adjusted with allotment or call. Usually we don't adjust with call, you adjust only with allotment. Balance to be refunded. If you have more money, refund it. Clear? Then, can you do partly reject and partly pro rata? Some you directly rejected and remaining you are doing pro rata allotment. What is pro rata? Imagine I have applied for, okay, I have issued 1 lakh. 1 lakh shares. I got applications for 1,50,000 shares. I got applications for 1,50,000 shares. Can I give 1,50,000 shares now? No. Why? Because of company law. Because of company law. In company law, there is something called as prospectus. What is prospectus? Invitation given to shareholders for subscribing for shares. In prospectus, I already told, I want 1 lakh. I want 1 lakh into 10 lakh rupees. I'm issuing 1 lakh shares because I want 10 lakh rupees. Why I want 10 lakh rupees? Because I want to construct one building. Okay, I want to construct one building. Suddenly, because you got 1,50,000 applications, can I tell, okay, I'm going to construct one more floor? No, because you already promised over there what you're taking the money for and how it is going to be used. So, if at all you get extra applications now, you cannot give 1,50,000 shares. What you can do, you can issue in the ratio of 3:2. 3:2 means what? For every 3 applications, you will give 2 shares. For every 3 applications, you will give 2 shares. This is called as pro rata application, pro rata allotment. Clear? Now, let's go further, guys. Okay, shares are issued to everyone, but not how much is asked by the shareholders. Okay, now balance should be refunded. We have discussed this. Calls in arrears. What is calls in arrears? I asked you to pay the money, but you did not pay the money. So for us, it is an asset. It is an asset. Amount unpaid by the shareholder after call is made by the company. This is called as calls in arrears. Okay, interest can we have on calls in arrears? Yes. Are we going to pay the interest? Are we going to get the interest? We are going to get the interest. Maximum is 10%. Maximum is 10%. So, whenever there is interest you are going to get, is it income or expense? Income. So, who is going to give you this interest? Shareholder. Equity shareholder account debited to interest on calls in arrears. This is an income. This is a receivable. Clear? When they give you bank account debited to equity shareholder account, then interest is an income. You only told me it's an income. Income is transferred to P&L. Clear? Interest to be charged from the date of payment till the payment is actually made. Okay. Now see, I made the call over here. This is the date of call. I made the call over here. But the due date for payment was this. I gave them some 15 days time. Due date for payment was this. But that person actually made the payment over here. So for this duration, you will have to pay interest. Okay. For this duration, that person will have to pay interest. Clear? Calls in advance is what? Liability. What is calls in advance? I did not even ask you the first call, but you already made the payment. I did not even ask you the second call. You already made the payment. Clear? Now, amount paid by the shareholder before call is made. Even before the call is made, the shareholder has already made the payment. Okay. Now, interest on calls in advance, maximum is 12%. I'm going to give 12% interest, maximum. Now, interest on calls in advance, expense or income? Expense. So we should debit. To whom should I give this? Shareholder. So shareholder is credited. When I pay, what will happen? Equity shareholder account debited to bank account. Then P&L account debited. Why? Because expenses are always debited to P&L, to interest on calls in advance account. Is this clear till here? Now, interest to be paid from the date amount is received till the date call is actually made. Interest is to be paid from where to where? From the date amount is received, okay, till the date call is made. Okay. See over here. Amount is received over here. I made the call over here in future. So till then interest is supposed to be paid to that person who gave the calls in advance. Clear? Now, forfeiture of shares. What is it? I called. They did not pay at all. They finally blocked my number. Then I told you get out. Okay, I'll remove him from shareholder list only. He blocked my number, I'll remove him from shareholder list itself. Is it possible? Company, can they do it? Now, we had Chirag as the shareholder. Okay, Chirag is the shareholder. Okay, yes. Now, 10 rupees is the face value of the shares. He has paid 10 rupees. Now, I don't like Chirag at all. So, can I cancel his shares?
No, sir.
No, why?
He's a owner. It's a shareholder. He's a shareholder and he's paying his installments.
I'm getting beautiful. What is your answer?
Shareholder, he's paying now.
Paying now, you already paid. What is your answer?
For personal issue, they cannot because he's a
No. What you told that time? Owner. Then we would not have the concept only called forfeiture of shares. No. He's shareholder. Yeah, shareholder is owner of the company. I agree. Then why are we cancelling?
But you told like that 10 is a face value and he paid 10.
He paid 10. Owner is not the point. Fully paid up is the point. It is fully paid up. Are you getting my point? Limited liability concept. Do you know limited liability? Company law? Okay. What does it tell? Not limited liability partnership. In company law, one of the features of company is limited liability. What does limited liability tell us? Shareholders' liability is limited to the extent of unpaid amount on the share. Whatever is unpaid, that much only is your liability. If 10 rupees share you have paid 10 rupees, I cannot even ask you 1 paise. Correct? That means I cannot throw you out. Are you getting my point? 10 rupees share, if you have paid 6 rupees, still I cannot throw you out. I have to make the call. And you have to fail to pay. Then only I can throw you out. Are you getting my point? I cannot tell, oh, you didn't pay 4 rupees, I will throw you out. Where is the call? Did you make the call? You make the call, I'll make the payment. Done. Even if you don't like the person, you can't throw them out as shareholder. Is this clear? If you have a board of directors, you don't like the director, others can vote you out. But if you are a shareholder, you will be a shareholder only as long as you don't sell the shares. Is this clear? Okay. Forfeiture of shares means cancellation of shares for non-payment of amount called. Non-payment of amount called. If shares were issued at par. Okay. Very important. Forfeiture is very, very important in share issue. Equity share capital is debited. Why? I am cancelling the share, so I have to remove the share capital. Equity share capital is debited. For what value? Face value? No. Amount called up. Amount called up. Okay. Usually it will be face value equal to face value only. 10 rupees. Imagine application amount is 2 rupees. Allotment amount is 3 rupees. Okay. Call amount is 5 rupees. You did not pay allotment. Can I cancel immediately or should I make the call also? No. As soon as you don't pay allotment, I can cancel your share. As soon as you don't pay allotment, you can cancel the share. It is not necessary that allotment you didn't pay, still I made the first call, that also you didn't pay, then I cancel. I can cancel immediately. Are you getting my point? Application, allotment, first call, final call. Clear? Application done. Allotment done. First call you did not pay. Can I cancel now or should I wait for the final call? I can cancel now only. That's why here it is written amount called up. Whatever amount is called up, that will be debited to equity share capital. Because when you called, you passed the entry, no. Allotment account debited to capital. Already you transferred. Before amount comes only, you already transferred the amount balance to share capital. Clear? Amount called up. Then to share forfeiture account. Amount received. Are you going to give the amount back? Whatever you received? Somebody paid the allotment amount. Are you going to give the amount back? No. So amount received will be credited. Clear? 2. Equity share allotment or call account or calls in arrears account. Sir, which one to use, sir? If the calls in arrears account is open, then you will credit calls in arrears account. If calls in arrears account is not open, then you will credit equity share allotment or call account. Whichever is not paid, that one. This is the amount unpaid. Amount received is already there in share forfeiture account. Is this clear? This you have to understand. Then only we will be able to go to premium part. Now, see the premium. If shares were issued at premium, here you have to remember one thing, very important. If shares are issued at premium and if it is forfeited, Is the premium amount received?
Yes.
Ignore the premium then. Is the premium amount received? No. Then you reverse the premium. Clear? Now tell me one thing. Application amount was not received. Can I forfeit the shares? That means there is no concept that application amount is not received and forfeiture will happen. When they pay the application amount only, they come into this story. Then if they don't pay something, we can forfeit the shares. So forfeiture can happen only for non-payment of allotment or non-payment of call. Is this clear? Okay. Allotment, what is the first entry?
Allotment to capital.
Allotment to capital. If there is premium, what is the entry? Allotment to capital to premium, correct? Did you get the allotment money yet? Next entry is only the receipt. No, bank account debited to allotment. Without getting, you already transferred to premium. No. So if premium is not received, remove from premium. You have already put into premium. Premium is not received, remove it from premium. Okay. If premium amount is received, it is sitting there. No. Don't go to remove it. Let it be there only. Ignore premium. Ignore premium and only focus on the face value. Only focus on the face value. Is this clear? Yes. Now, understand this. The entry. Equity share capital account debited. Okay. If at all premium amount is received. We'll talk about premium amount is received. Premium amount not received I have shown separately here. Premium amount is received. Equity share capital account debited. Okay. For what amount called up? Which amount? Only face value. Only face value. Premium amount is received. Correct? Ignore that. Only face value you remove. Clear? To share forfeiture. Amount received. Only face value. And to equity share allotment account or calls in arrears account for the unpaid amount. Is this clear? Now, if calls in arrears account is not open, then it will be this. Otherwise, it will be calls in arrears. Clear? Now, if premium amount is not received, if premium amount is not received, now what will happen? Premium amount is not received, equity share capital debited, only the amount called up. Clear? This is only the face value. Securities premium debited for the premium. For the premium which is not received. So, we are removing from securities premium. To share forfeiture, amount received, then to equity share allotment or to calls in arrears account. Is this clear? Are you following this? Yes. This is your share forfeiture entry. So, if premium is received, ignore the premium, focus only on face value and pass the journal entry for forfeiture. If premium amount is not received, reverse the premium, remove from securities premium. So, securities premium will be debited. Clear? Reissue of forfeited shares. Is it compulsory that we have to always reissue the shares? No. Optional. Company can resolve to not reissue shares also. I cancelled the old person shares. I will not reissue to anybody. Okay. Minimum amount at which the shares must be reissued. What is the minimum amount? What last person did not pay, that is the minimum amount for the next person. 10 rupees share, Chirag paid 3 rupees. Chirag paid 3 rupees. So next person should minimum pay me 7 rupees. If next person pays 6 rupees, I am going against the Companies Act. That means I am issuing the share at 9, which is at discount, which is not allowed. Okay, minimum amount is amount unpaid by the previous shareholder. Okay, example, face value is 10, share forfeited for non-payment of first call of 4. Okay, that means non-payment of second call of 2. Therefore, minimum reissue price is 4 plus 2, 6 rupees at least next person should pay me. Okay, now, what is the entry for reissue? When you reissue, what will you get? When you reissue, what will you get? You will get money, bank account debited, amount received. Amount received. Clear? If at all you issue this at less than face value, okay, 10 rupees share, you have reissued it at 8 rupees. 2 rupees is the loss, right? Share forfeiture account debited. Face value minus amount received. Okay. To equity share capital, always face value. Always face value. If you reissue it at 8 also, if you reissue it at 15 also, equity share capital you will transfer only face value. To securities premium account, if share is issued at higher than face value. Can we have share forfeiture and securities premium both? No. You can have only one of them. Why? Because you can either issue it at lower than face value or you can issue it at higher than face value. You cannot issue it at lower and higher. Can you do that? It's not possible. So if it is lower, share forfeiture account debited. If it is higher, securities premium account credited. Is this clear? Yes. If shares are forfeited and reissued, If shares are forfeited and reissued and balance is still there in forfeiture account, it must be transferred to capital reserve. Now, this is very important point. Students are making mistakes over here. Okay. Now see, 500 shares I forfeited. I reissued only 300 shares. Now when you're talking about capital reserve, now you focus only on 300. 500 shares are forfeited. I reissued only 300 shares. Now don't check, oh, 500 shares, this much amount was there. 300 shares, this much amount went. Balance, no. 300 shares, how much went to forfeiture? Minus 300 shares, how much you have removed during reissue. So balance will be cancelled, calculated only for the shares which are forfeited and reissued. If shares which are forfeited but not yet reissued, that balance will not go to capital reserve.
Then for the 200 shares, we should not pay.
For 200 shares, it will not go to capital reserve. It will be there in the balance sheet as share forfeiture only. In share capital, it will be shown as share forfeiture. Okay. Until it is reissued. Shares which are forfeited and reissued, balance if it is there, transfer to capital reserve. Shares which are forfeited but not reissued, do not transfer the balance to capital reserve. Is this clear? Yes. Share issued for consideration other than cash. Share issued for consideration other than cash. What are you getting? Asset you might get. Asset account debited to equity share capital. Extra if it is there, if it is issued at higher value to securities premium. If they ask you number of shares to be issued, how to calculate? Asset value you take divided by issue price, not the face value. Divided by the issue price. Okay. For example, the land value is 10 lakhs and the issue price is let's say 20. Then don't divide by 10. If you do 10 divided by 10, you will issue 1 lakh shares. But if you do 10 divided by 20, you will issue only 50,000 shares. And that is what we require. 50,000 shares are issued. Is this clear? Next. Issue of debentures. Next we will discuss about issue of debentures. Very small area. Okay. People used to skip it. Issue of debentures, they won't ask anything. Why to worry about it? Now you know what is happening. Redemption of debenture is also in your syllabus. So they can ask a question, issue and redemption together. They can ask, no, they have asked in the last 3 attempts, once they have asked issue of debentures and redemption of debentures in the same question. 1 year they issued, 2-3 years later they redeemed. Clear? So issue of debentures becomes very, very important. Okay. Now, what is this liability in books of the company? Debenture means what? It is a debt instrument. That means you borrowed money from somebody. Company borrowing funds from debenture holders who is nothing but public, outsiders. Long-term borrowing. It's a long-term borrowing. Now, rule for issue of debentures. Just remember this rule. If there is a current profit, how can I have current profit? How can I have profit today? That means I have issued the debenture at higher price. Debenture issued at premium. Record it. Today you had the profit. No. Record it. Face value 100 issued at 120. If there is current loss, that means 100 rupee debenture is issued at 90. That means debenture is issued at discount. Sir, discount was prohibited. No, only for shares. Only for shares. Debentures can be issued at discount. So record it. If I have future profit, that means in future debenture is going to be redeemed at discount. That means future I am going to pay the amount back to the debenture holder at discount. So do not record it. Why? Because we follow the concept of conservatism or prudence. Future profit should not be recorded. In future you are going to get profit. Record it when it happens. Clear? Future loss is there. Future loss. What is future loss? Debenture is redeemable at premium. In future you know that you have to give more money. Record it today only. Face value 100, redeemable at 110. Now tell me one thing. What is current loss? I issued at higher value or lower value? Lower value. Because if I issue at lower value, I'll get less money. So this is called as issued at discount. What is current profit? Issued at higher value. That means it is issued at premium. Both should be recorded. Clear? If what is future profit? That means I'm going to redeem it at lesser value. That means it is going to be redeemed at discount. Do not record it today. Don't worry about it today. If it is redeemable at let's say premium, that means in future I have to pay more money. It's a future loss. What will you do? You will record it today itself. You will record it today itself. Clear? Now journal entries. Just understand the journal entry. Let's say face value is 100 for all the examples. Okay, understand these examples. Everything is covered here. Debenture is issued at par, redeemable also at par. Okay, that means it is issued at 100, it is redeemable at 100. Okay, entry will be bank account debited 100 to debenture application and allotment account. Then application and allotment account debited to debenture. Issued at 100, redeemable at 100, no profit, no loss anywhere. If debenture is issued at 100 par, redeemable at discount, that means future profit or future loss? Future profit, same as one. Same as what we did, we are going to ignore the future profit and pass the same entry. Clear? Debenture issued at par, redeemable at premium, that means future there is going to be a loss. Should we record it? Yes. But first, what is the entry for issue? Bank account debited to debenture application and allotment account 100. Then debenture application and allotment account debited, to debenture will be there. But future there is a loss. We should record that. So tell me one thing. What is the entry for salary that is not paid? Salary account debited to outstanding salary. This is a premium that is not paid. So it is loss on issue of debenture to premium on redemption of debenture. You're like, sir, this should be actually loss on redemption of debenture. No, sir. No, it is loss on issue of debenture only. This is the promise that I made when I issued the debenture. So today only I know this is the loss. That's why loss on issue of debenture. Did I pay this money? No, I am going to pay in future. So it's going to be premium on redemption of debenture. Whenever debenture is issued at premium, okay, what we should do? These two things should be inserted into the entry. Okay, loss on issue of debenture debited to premium on redemption of debentures. Is this clear? Now, 4. Debenture is issued at premium. Today, do you have a profit or loss? You have profit. You have issued it at premium. How will you have loss? Redeemable at par. Clear? 110 rupees you have issued when the face value is 100 and you are going to redeem it at par. That means today there is profit, future there is no profit, no loss. Clear? Bank account debited to... One second. Yes. Bank account debited to debenture application and allotment account 110. Then debenture application and allotment 110. To transfer only face value to debentures and to securities premium 10. Can you see extra amount goes into securities premium? Clear? Debenture is issued at premium just like the previous case, but it is redeemable at discount. Future there is what? Profit. Ignore that future profit. Therefore, the same entry will be passed as the situation number 4. Debenture issued at premium. Today, do you have profit or loss? Today, you have profit because you are issuing it at premium. Okay, redeemable at premium. Do you have loss? Yes. Future, do you have loss? Yes. So now what you are going to do? Issued at 110, redeemable at 105. Now, all this profit and premium and all, no, it is comparison with face value. Don't think that, sir, I issued at 110, sir, but I have to pay only 105. Actually, I am going to redeem at a lower value. No. Comparison is with only face value. 100 rupee debenture issued at 110. Okay. Premium. 100 rupee debenture is going to be redeemed at 105. Clear? What is the entry for this? Bank account debited to debenture application and allotment 110. You got 110 today? Okay. Debenture application and allotment account debited to debenture only face value to securities premium 10 rupees. Clear? Issue is recorded already. I already told you. Whenever it is redeemable at a premium, insert two things into your entry. Loss on issue of debenture debited 5 to premium on redemption of debenture 5. Is that clear? So, whenever debentures are going to be redeemable at a premium, those two things you'll insert into the entry. Clear? Next, 7. Debentures issued at discount. Today, do you have profit or loss? Correct. You have loss. Finally, we are on the same page. Okay. Debentures are issued at a discount. That means it is a loss. 100 rupee debenture I am giving to somebody at 95. I am getting only 95 rupees. Okay. Redeemable at par. Future I have to pay 100. Today is there a loss? Yes. Future is there a profit or loss? Future do we have a profit or loss? Yes. Nothing I have. Par. Yes. You have nothing. Because you are comparing 95 to 100 and telling the answer. Your company should compare 100 to 100, 100 to 95. Okay. Whenever it is redeemable at par, there is no profit, no loss. Yes. Bank account debited to debenture application allotment 95. Is that clear? Yes. Okay. Now, debenture application allotment account debited. If at all I issue debenture at lesser value, it is good for me or bad for me? Bad for me. If it is bad, it should always be debited. It's a loss. Discount on issue of debenture account debited to debenture account. Whatever happens, debenture will be shown at face value. Whatever happens, debenture will be shown at face value. Is this clear? Yes. Now, debentures issued at discount. Debentures issued at discount. Same. Redeemable at discount. Today I issued at 95. Future I am going to issue at 98. I am not going to bother about this. Okay. Same as the situation number 7. Situation number 9. Debenture issued at discount. Today do we have profit or loss? Loss. Redeemable at premium. Do we have loss in future also? Loss. Loss. Are you getting my point? You are going to pay higher amount. Redeemable means you are going to pay higher amount. Now, issued at 95, redeemable at 103. Correct? How much is today's loss? 5 rupees. How much is future loss? Not 8. Okay, don't think of 8. It is 3 rupees. Comparison is with 100. Today, how much you got? Bank account debited to debenture application allotment 95. Then, debenture application and allotment account debited 95 to discount on issue of debentures 5. Then 2 debentures 100. Did you finish the issue? Issue is only this much, no? Extra 3 rupees is the redemption premium. What we are going to do? Insert loss on issue of debentures 2, premium on redemption of debentures. Clear? So when you're passing entry, always first focus on issue and finish the issue part. If at all there is future loss, insert this thing into your journal entry. Clear? That is it. If debenture is issued as collateral security, you can get it in true or false. That's it. Otherwise, they cannot ask a 8-mark question on this. Okay. Debenture issued as collateral security. What is that? You have a company and there is a bank.
Debenture suspense updated to
That is if you want to pass entry. Yes. Company and there is a bank. Okay. What did you do? You took loan from the bank. Bank is asking for security. So what did you issue? Hello. You should be in Tare Zameen Par mode. Yes. Not fully down. Issued debentures as collateral security. I like the fear in that fellow's eyes. Okay. He didn't know whom I was calling hello for. So he also got up suddenly. So everyone is like suddenly alert except Siral. Yes. Now, loan is borrowed and issued debentures as collateral security. How will you do the accounting? Is there a debenture today? No, it is just a dummy thing. Future, if I don't pay the loan, that time debenture will get activated. Correct? So, no entry, just mention a note under long-term borrowings in the balance sheet. If you want to pass entry, it's a dummy entry. Debenture suspense account debited to debenture account. Clear? Small area on 2 marks can be asked. Discount on issue of debentures or loss on issue of debentures. What to do with that? There is one question in the study material, 2 questions in the study material on discount on issue of debenture and loss on issue of debenture. What to do? If now you have to decide how is debenture going to be redeemed. If debenture is redeemable in lump sum at the end of the life of the debenture, lump sum means what? At once. Imagine 100 rupee debenture I have issued at 80. How much is the discount? 20. And I have issued 1000 debentures. What is the total discount? 20,000. What is the total discount? 20,000. Now what should I do with this 20,000? It should go to P&L. No. Imagine I'm going to pay the debenture holder back at once in 5 years. After 5 years at once, lump sum I'm going to pay. So I will do over here 20,000 divided by 5 years. That is 4,000 per year. Every year equal amount will be transferred to P&L. Clear? But if at all debentures are redeemable in installment, every year I'm going to pay 1 lakh, 1 lakh, 1 lakh, 1 lakh. That means the outstanding debenture, whatever is there, debenture redeemable in installment in ratio of outstanding debenture. Imagine if at all debentures are redeemable in installment, then first year my debenture was 5 lakh, then it became 4 lakh, then it became 3 lakh, then it became 2 lakh, last year it is 1 lakh. Correct? So the loss on issue of debenture or discount on issue of debenture should be transferred to P&L in the ratio of 5:4:3:2:1. Is this clear? So first year, if the loss was 20,000, you will do 20,000 into 5/15 and transfer it to P&L. Question number, I don't remember, but there are 2 questions in the ICA study material just on these 2 topics. Just computation of this. Clear? Yes. Interest on debenture. Is it an expense or income? Is it an expense or income? Expense. Correct? Interest computed on face value. Interest is computed on face value. Always. Always. Okay. Then what you have to focus on? Due entry. What should be the due entry? Interest you are going to pay. Expense you told me. Interest on debentures account debited. To whom I should give this interest? I should give it to the debenture holders. So to debenture holders, only 90% and remaining will go to something called as TDS payable. That is deducted and it's supposed to be paid to government. Payment entry, debenture holder account debited, TDS payable also debited to bank. To bank. Is this clear? You're going to pay debenture holder the 90% of the amount and 10% of the amount you're going to pay to government. Clear? Next, bonus issue. Very, very easy topic. Okay. Bonus issue. What is bonus issue? I'm giving salary to my employees, extra bonus. That issuing shares. Shares issued to existing shareholders for no consideration is called as bonus issue. That means you are issuing it for free. Major reason is excessive profits. What is the main reason? You have excess profits. Instead of giving, if I have extra profit, what can I do? I have extra profit. How to give to the shareholder? If I have extra profit, I have to give dividend. No, distribute in cash. That is dividend. I don't want to give it in cash. What will I do? Convert it into shares. That becomes bonus issue. That money will be in the company only. So, what's your plan? Yes.
Company is like it will be no inside.
Yes. Inside this. Don't think of taking outside in company. It will not happen. Okay. Some scam is planning. Yes. Distribution in cash, okay, is called as dividend and converted into shares is called as bonus issue. Now, bonus, there are two types. One is called as bonus issue, other one is called as bonus call. Okay. What is bonus issue? Shares are issued to existing shareholders for free, no consideration. What is bonus call? I am not giving you shares at all, but you have partly paid up shares. I will only put money and convert your partly paid up shares into fully paid up shares. This is called as bonus call. Is this clear? What is bonus issue? I am giving you extra shares. Take. You have 2 shares, now I will give you 1 more share. Now what is bonus call? You will have 2 shares only. Okay, you will have 2 shares only. Okay, but what I will do? Those 2 shares you had paid only 6 rupees. So now that 4 rupees you are supposed to pay, right? From the profit I will take and put it over here and make it 10 rupees. Clear? Are you getting my point? I would have given you the dividend anyways. Instead of that, I will cover your payment and make this fully paid up. This is called as bonus call. Only if, this should be only if shares are fully paid up. You can give bonus shares only if the shares are fully paid up. If it is partly paid up and all, you cannot give bonus shares. Not allowed at all. Clear? Now, journal entries for bonus issue. Bonus issue due entry. What can you utilize for giving bonus? First, CRR. What is CRR? Capital Redemption Reserve. Okay, why I took first CRR only?
We created for that purpose.
We didn't create for that purpose, but CRR can be used only for that purpose. Okay, CRR was created because share capital went down when redemption of preference shares happened. Okay, CRR can be used only for one purpose. That's why we use it for first. Securities premium can be used only for 5 purposes. So we have limited usage. We'll use securities premium. General reserve and P&L can be used for anything. That's why you are using it last. But why still I put general reserve on top of P&L? Because general reserve is older profits. Utilize that. P&L is recent profits. Utilize it later. But if you want, you're like general reserve, let it be, sir. Old profits, old profits. I have some emotion attached to that. Okay. So if I want to interchange that, I can do it. No issues. Both are called as free reserves. Both are called as free reserves. Both can be utilized. Is this clear? So, CRR account debited, securities premium debited, general reserve debited, P&L debited to bonus to equity shareholders. Is this clear? Now, issue entry. What am I giving them? Now, what did I do? I just took the profit and kept it aside. Now, what am I giving them? That profit is converted into share and I'm giving it to the shareholder. Bonus to equity shareholder to equity share capital at face value. Is this clear? Now, what if it's a bonus call? What if it's a bonus call? If I have to adjust your payment, first I have to ask you the payment. If I have to adjust your payment, first I have to ask you the payment. Equity share final call to equity share capital. I asked you the payment. Now I'm telling wait, don't pay. I'm telling you wait, don't pay. I will only put the money. Bonus issue. General reserve or P&L account debited to bonus to equity shareholders. Sir, two people went missing, sir, in this entry. Where is CRR, sir? Where is securities premium? They can be used only for issue of bonus shares. They can be used only for issue of bonus shares. You can't use it for bonus call. Are you getting this? So that's why you can only use free reserves. Free reserves, no restriction. No, you can use it for anything. Okay. General reserve P&L account debited to bonus to equity shareholders. Then what I'm telling? Okay, do not pay. Bonus to equity shareholders account debited to equity share capital. Clear? If bonus was not there, then here the next entry would have been bank account debited to equity share final call. He only has to pay me. Are you getting this? If this was not there, after this entry, it would have been bank account debited to equity share final call. Because there is bonus, I told wait, you don't pay. I will take from profit, keep it aside, convert it and make your share fully paid. Is this clear? Okay. Next, right issue. What does it mean? What is right issue? How much?
Value of that,
Very much correctly, you have answered the wrong question.
that issue of shares outside how much the value and for how much.
Wait. Right issue means issue of shares to existing shareholders for consideration. That's it. That is it. Value of right we have to calculate. Okay. Right issue means shares issued to existing shareholders for a consideration. That's all. That is right issue. Instead of giving it to public, I am giving it to existing people only. I am giving chance to the existing people because I don't want outsiders also coming in and troubling me in voting. Are you getting this? Okay. Bank account debited to equity share capital to securities premium if securities premium is there. Clear? Now, understand this. Only thing that can be asked from right issue is shares are issued. Okay. Shares are issued. We'll pass the entry. What is there? Tell me one thing. 1000 shares are issued as right shares at rupees 12. What should be the entry? Bank account debited 12,000. To equity share capital 10,000. To securities premium 2,000. Equity share capital will be credited always only for face value. That cannot change. That rule cannot change. Is this clear? Now, difference between price per share. Okay, now understand this. What is value of right? You are finding the value of right. That means what you are telling. How did the value of our company share change because of right issue? Clear? Now, the formula is given come right price per share minus X right price per share. What is come right price per share? Actually, it is cumulative. They just put a short form to make Chirag smile. Okay, it is come right price per share. What is X right price per share? It is excluding, right? They wrote X over here to make him feel sad. Okay, by remembering his X. Okay, so this is right price after the right issue. This is price before the right issue. Come right price per share means before right issue. What was the price? X right price per share means price after the right issue. Difference between price per share before right issue and after right issue. 1 4-mark question if they ask, you are very lucky on this. Okay. Now, how to get this? X right price per share. X right price per share means what? After right issue. After right issue we don't know, but before right issue they will give this in the question itself. Clear? After right issue it is number of shares before right issue. Basically formula looks very big, no? Can you see the huge formula that is on the screen? Actually formula is very simple. You know what is the formula? Before plus after divided by after. That's it. Number of shares before right issue into price before right issue. Number of shares from right issue into right issue price divided by total shares after right issue. So value before plus value after divided by the quantity that is there after will give you X right price per share. Is this clear? Are you following this? That is it. Okay, that is it. Right issue is a very small part. If at all you get question, please do not skip that part. 2 marks, 4 marks, whatever is there is bonus only. Okay. Redemption of shares. Redemption of shares. What shares are we talking about when we are talking about redemption of shares? We are talking only about preference shareholders. Paying the money back to preference shareholders. Sir, what about redemption of equity shares? Not possible at all. Equity shares, there is a separate concept called as buyback of equity shares, which is not there in syllabus at this level. It's there later, but buyback of equity shares is something that is similar to redemption of preference shares. Clear? Now, redemption can happen from existing balance, okay, from profits, and by issuing equity shares. Okay, existing you have money already, or from profit, or by issuing equity shares. Clear? Now, very important, due entry for redemption. Redemption means what? Taking money or giving money? Giving money. You are paying the money back. Correct? Due entry will be preference share capital account debited to preference share holders. Clear? The day I am supposed to pay, I will not pay. I know today is the due date. Okay, so today I'll just pass the due entry. Due entry for redemption when it is redeemed at premium. Preference share capital account debited. This will be at face value. But I am going to pay something extra. If I am going to pay something extra, that is a loss. So premium on redemption of preference shares debited to preference shareholders. Is this clear? Are you getting this? Now, payment entry. Whom you are supposed to make the payment to? Preference shareholders. Preference shareholders account debited to bank account. Clear? Now, transfer of premium. Premium is a loss. Loss should go to P&L. P&L account debited to premium on redemption of preference shares. Okay? CRR. You have to create CRR. CRR will always be there when preference shares are redeemed. You are creating it here so that it can be used for bonus issue later. Are you getting this? So that means preference share redemption and bonus issue can be clubbed and asked in the exam. Correct? They'll tell redeem preference shares. You got CRR. Okay, issue bonus shares. If you skip one of the units, then you'll not be able to do it. Are you getting this? Everything is linked in life. Everything is linked in life. Okay, now CRR creation. When there is reduction in preference share capital, we are going to create CRR. Okay, entry for CRR is simple. Remove from free reserve, put it into restricted reserve. That is CRR. P&L or general reserve account debited to CRR account. Is this clear till here? Now, question is not that. Question is, sir, how much CRR I should create, sir? Face value of preference shares redeemed. Face value of preference shares redeemed minus face value of equity shares issued for the purpose of redemption. Clear? Face value of preference shares redeemed minus face value of equity shares issued. Now understand this. My face value of preference shares redeemed was 100. But to redeem the preference shares, I didn't have enough money. So I issued equity shares. Face value of equity shares issued is 80. That means 100 went out of share capital. 80 came into share capital. What is the net balance? 20. Create CRR for 20. Create CRR for 20. Just ensure that share capital doesn't reduce. If share capital reduces, you have to create CRR. Face value of preference shares redeemed is 200. Face value of equity shares issued is 300. What went out? 200. What came in? 300. How much CRR you should create? 0. Only if share capital reduces, create CRR. If share capital increases, be happy. No CRR. Clear? CRR can be used only for issue of bonus shares. Reserves and surplus. Reserves and surplus, you will show general reserve, P&L, securities premium, capital reserve, and CRR, and many other reserves. We will have one more called as DRR also. In debenture redemption. Is this clear? Yes. Now, redemption of debentures, last unit of company accounts. Last unit of company accounts. Okay. Now listen. Repayment to debenture holders. What is redemption of debenture? Repayment to debenture holders. What was redemption of preference shares? Repayment to preference shareholders. Clear? Now, repayment in lump sum. Lump sum means what? Full amount is going to be paid. Full amount is going to be repaid. Correct? Paid in full at the end of the term. Repayment in installments. What does it mean? 5 years time we have. Are we going to pay after 5 years in installments or during 5 years in installments? During 5 years. Paid during the term. Okay. Conversion. What does conversion mean? Converted into shares, equity shares. Okay. Purchase from open market is also there. Not applicable because it's not there in CA Foundation syllabus. This is also a form of debenture redemption. Don't worry about it. You will worry about it in inter. Okay. Accounting. Now, accounting. Debentures are redeemed in lump sum or installments. Debentures are redeemed in par. See, between lump sum and installment, there is no difference at all. If it is lump sum, you will pass the entry what we are going to discuss once. If it is installment, those entries you will pass repeatedly, many times. Clear? Every time there is an installment. Debenture redeemed at par. Tell me preference shares redeemed. What was the entry just now? Due entry for preference share redemption. Preference share capital account debited to preference shareholders.
Percentage debentures notice, right? There will be debentures percentage.
My question was, what was the entry for preference share redemption? Now you got it. Okay, I just wanted to show that entries are similar. Preference share redemption entries, preference share capital to preference shareholders. Debenture redemption entries, debentures account debited to debenture holders. Yes, you are right. Debenture will always have a percentage. Is this clear? There will be a percentage, yes. Don't worry about it. There will be percentage. It will be given in the question. Okay. If debentures are redeemed at premium, wait. If preference shares are redeemed at premium, what should be the entry? Preference share capital debited, premium on redemption debited to preference shareholders. Debentures debited, premium on redemption of debentures debited to debenture holders. Can you see that linking? Okay, payment entry. There, it was preference shareholders to bank. Here, debenture holders to bank. Then, transfer of premium. P&L account debited to premium on redemption of preference shares. Here it is P&L account debited to premium on redemption of debentures. But here if you want, you can use even securities premium also. But there you can't use securities premium. Here you can use securities premium also. Okay, conversion. What are you converting into what? Debentures are converted into shares, correct? Debenture account debited to debenture holders or debenture account debited, premium account debited to debenture holders. The due entry will be same. I am supposed to give. There I am giving cash, but here I am giving shares. So the issue entry will be debenture holders are gone. We are going to issue equity shares, which will be recorded at face value only. Extra amount will go to securities premium. Is this clear? Now, DRR is a very important concept which is there. DRR, debenture redemption reserve. Okay, first we will discuss for whom it is applicable. Listed company, not applicable. Unlisted company, applicable. But in unlisted company, if it is a banking company, not applicable. Okay, if it's NBFC, not applicable. Non-banking financial company. If it is HFC, housing finance company, not applicable. AIFI, all India financial institution, not applicable. So whenever you say debenture question, no, redemption question, they will tell XYZ Limited, unlisted company other than banking company, NBFC, HFC, AIFI. In the question only, in the heading only they will tell like that. For them it is not applicable. For others the concept of DRR is applicable. How much DRR should you create? Minimum 10% of the outstanding debentures must be in DRR. What is this? I issued debenture of 100. That means I got 100 rupees. 10 rupees I have to create DRR and keep. I have to keep a reserve 10 rupees aside. What is this 10 rupees for? It's like showing an security. It's like showing intention that you have intention to pay. You're showing the intention that I have an intention to pay. Are you getting my point? 10 rupees. Sir, 100 rupees you borrowed. 10 rupees only you are showing intention. Huh? You should keep full 100, sir, in DRR. Then why did you borrow, sir? Okay. Why did you borrow? You took 100 rupees and kept 100 rupees aside. You should have stayed without borrowing only, no? Are you getting my point? Remaining 90% from where it will come? You borrowed loan from somebody, 10 rupees you are keeping it reserve, okay? Remaining 90% you should earn it and you should pay it back. Are you getting this? You borrowed loan, no? You'll put it into business, no? It will make profits, no? Cash flow will get generated, no? You'll be able to pay. Clear? Now, DRR creation. You're creating DRR. P&L account debited or general reserve account debited to DRR. Same entry was there for CRR also. Okay. After redemption, if DRR is still there, okay, then what will you do? Release it. DRR account debited to general reserve. Usually these two will commonly happen in debenture redemption. Clear? DRR investment. Oh, what is this? Percentage is 15%. Minimum 15% of debentures maturing during the year must be invested in safe investments by 30th April. Sir, DRR and DR investment same, sir? No. DRR, they said 10% of the outstanding debentures. Whatever debentures you have, 10% should be there in DRR. DRR investment, what they told, whichever debenture is maturing during the year. You know, during the year you have to pay some debenture holders. So starting of the year, before 30th April, invest it and keep 15%. Are you getting my point? Here, only which is maturing during the year, there, total debentures, whatever is there, 10% will be there in DRR. Is this clear? Are you following this? Okay. Make investment. What is the entry for investment? DRR investment account debited to bank. It's an investment entry. Sale of investments, bank account debited to investment. Okay. Profit or loss if you get, transfer it to P&L, just like any other investment sale. Clear? That is it, guys. These are the concepts. 59 minutes. Okay. In 1 hour, we have revised all the concepts of company accounts. Theory. Interest on investment, just like you receive any other interest, bank account debited to interest. Then transfer that interest to P&L. Let's continue. Let's start now our journey of questions. Okay. I'll show you first one. How many questions are there? 37, 38, 39, 40, 41, 42, 43, 44, 45, 46, 47, 48, 49, 49, that's it. 49, that means almost like roughly we have around 12 questions, 12, 13 questions which we have to discuss on full company accounts, to revise entire company accounts. Where are you going? I'm starting, but. Okay, go. Okay, question number 37. You see, come back and see how much basic it is. Okay, question number 37. June 2023 exam, they asked this question. So let's quickly take June 2023 here. Okay. BP Limited is issued. I think it's the same question, right? Yes, BP Limited. Question number 37. So now what I have done is share issue and forfeiture. Some 3-4 questions are there from exam. Okay, which covers all the concepts. Whatever can be asked, it's covered in that. The mistakes which ICA made in recent exam, that is not covered in that. Okay, potential things, everything is covered in that. Now, BP Limited issued a prospectus inviting applications for 1,20,000 equity shares of 10 each at a premium of 2 per share as follows. Application 3, allotment 5, and first and final call 4. Okay, now understand this. How much is this actually? This is actually 3 plus 2. This is actually 3 plus 2. Because 3 rupees is face value part and 2 rupees is premium part. Okay. Now, if you see 3 plus 3 plus 4, that makes it 10. That makes it 10. Clear? Applications were received for 3,60,000 equity shares. Applications for 80,000 shares were rejected and money was refunded. Did you get extra applications? What is this called? Oversubscription. If there is oversubscription, you can do pro rata. You can do pro rata. Clear? Now shares allotted to remaining applications as follows. Whoever has applied for 1,60,000, no, they got only 80,000. That means it is issued in the ratio of 2:1. For every 2 applications, I give 1 share. Whoever issued 1,20,000, okay, no, 4:1. Oh, sorry, what am I talking? 3:1. Okay, 3 applications we are giving 1 share. Is this clear? This is called as pro rata. Excess money received with application was adjusted towards some due on allotment. They didn't tell it is adjusted with call also. It is adjusted with some due on allotment and balance amount returned to the applicants. Clear? After adjusting allotment also, if you have balance, it will be refunded. All calls were made duly received except final call by a shareholder belonging to category 1 who applied for 680 shares. His shares were forfeited. Forfeited shares were also reissued. Okay, pass necessary journal entries. That's it. Open calls in areas account wherever required. Oh, okay, don't forget this. Now listen. Whenever we have pro rata, first you have to make a table. First to understand here what is happening. 3 rupees application, 5 rupees allotment and 4 rupees is call. In allotment it is 3 plus 2. Correct? Now shares applied, shares allotted. Everything is given. Hey, close the door. Okay, next. Now, see this. Always you need to have this table. It makes your job very, very easy. Now, tell me, how many, three categories I have? Shh. Three categories I have. What are the three categories? First category is rejected. Second category was the 2:1 category. Third category was the 3:1 category. See, number of shares that are applied. First category 80,000. Second category 1,60,000. Third category 1,20,000. Whoever had applied for 80,000, I rejected it. That means the number of shares allotted is 0. I didn't give them even one share. Okay. Whoever asked for 160, I gave them 80,000. Whoever asked for 120, I gave them 40,000. Is this clear? I gave them 40,000 shares. Amount received on application. Okay. Now, amount received on application will be based on what they applied or based on what they are allotted. Based on what they applied. Application amount was how much? 3 rupees. They applied for 80,000 shares into 3 rupees, 240. Applied for 160, 480. Applied for 120, 360. This is the total application amount that I have received in the table. Can you see this? But what is the amount required on application? I require 0 because I'm going to reject everything. Okay, but here I am going to issue only 80,000 shares. So 80,000 into 3 I require 2,40,000. I am going to issue only 40,000 shares. So 40,000 into 3, 1,20,000. So even though I have received 10,80,000, I actually require only 3,60,000. Is this clear? Now, amount adjusted on allotment. Amount adjusted on allotment. Okay. How much will I adjust on allotment? I don't have anything extra. I'm going to refund everything. What will I adjust on allotment? Now here, how much will I adjust on allotment? 4,80,000 I got. Can I adjust everything with allotment? No. How much is required for allotment? That much only I should adjust. No. Now, how many shares are there over here? In the second category, how many shares are there? 80,000. 80,000 into allotment amount is 5 rupees. 3 plus 2, 5 rupees. That means I require 4 lakhs for allotment. I require 4 lakhs for allotment. But I have extra money of how much? Only 2,40,000. 480 minus 240, I have 2,40,000 extra. I'll adjust full 2,40,000. Clear? Here 40,000 shares are there. So 40,000 into 5, I need 2 lakh for allotment. But how much extra I have? 3,60,000 minus 1,20,000. I have 2,40,000 extra. When I have 2,40,000 extra, but I require only 2 lakh for allotment, so how much will be adjusted? 2 lakh. And 40,000 will be refunded. Refunded. Is this clear? First category, I am not issuing shares, so full amount is refund. Second category, what I required for allotment was high, but what I had extra was low, so full amount is actually adjusted. Clear? Third category, what I require for allotment is low, what excess application money I have is higher, so I will adjust only what I want for allotment and 40,000 I will refund because they said only with allotment you adjust, remaining you refund. Is this clear? Yes. Now, all these totals are there. Now, whichever is there over here will help you pass your journal entries. If you don't prepare the table, then when you're passing journal entries, it becomes a big, horrible thing. Clear? Now, first entry, bank account debited to equity share application. How much did you get? See, it's there in the table. 10,80,000 you got. So you pass the entry, bank account debited to equity share application. Next, equity share application to equity share capital. Correct? But I'm not issuing shares to everybody. I'm going to refund also. So you should go to the table and see how much is refunded here. 280. How much is adjusted with allotment? 440. How much is actually required? 360. Can you see? Actually required is 360. How much is adjusted with allotment? 440. And how much is refunded? 280. If you see this total, this will be 10,80,000. 10,80,000. So the 10,80,000 which I got, 3,60,000 is required for application. 4,40,000 I'll adjust with allotment and balance amount I will just refund. Clear? See the entry. Okay. Equity share application to equity share capital 360, to share allotment 440 and bank column 2,80,000. From the table directly pick numbers. Allotment entry. Equity share allotment account debited to equity share capital. How many shares am I issuing now? How many shares am I issuing? I had applied for issued how many shares actually? Invited 1,20,000, but I got 3,60,000 and all. But finally, how many will I issue? 1,20,000 only. Allotment will be 1,20,000 into 5. But what will go to share capital? 1,20,000 into 3. What will go to securities premium? 1,20,000 into 2. Is this clear? Did you get the allotment money? Did you get the allotment money? Somebody did not pay something. What did he not pay? Has the all calls are duly received except final call. Okay, he has not paid the call amount. Now understand this. How much you are supposed to get on allotment? 6 lakhs. So usually you directly pass the entry. No, bank account debited to allotment, but you will not get 6 lakhs now because already 4,40,000 was received at application stage only. So 6 lakh minus 4,40,000 only 1,60,000 will be received. I already paid extra application money. Now you're telling me pay again. Will I pay everything? I'll pay only the differential amount. Are you getting this? Okay. Then final call. What is the final call entry? Equity share final call account debited to equity share capital 1,20,000 into 4 rupees. 4 rupees was the final call amount. Clear? Did everybody pay you? No. Somebody did not pay you. Who is that somebody? Will you tell somebody who has 6,80,000, 680 shares? Category 1. He did not have 680 shares. He applied for 680 shares. If he applied for 680 shares, he did not get 680 shares. In category 1, the ratio was 2:1. For every 2 shares, you got 1 share. That means divided by 2, how much you are getting? 340 shares only. Are you getting my point? Some people will pass the forfeiture entry for 680 without noticing that he had applied for 680 shares. Clear? But he did not get 680. He got only 340. Clear? Did he pay the application money? 3. Did he pay the allotment money? Yes. Did he pay the first and final call? No. Forfeiture is happening because he did not pay the first and final call. Whenever there is forfeiture, we have discussed one thing. If it is at premium, we should see whether premium is received or not received. Here is the premium received. Yes, he has paid allotment, so premium is received, so don't bother only about the premium. Okay, now understand this. Okay, bank account debited. How many shares we got the money for? We did not get the money for 340 shares. 340 into 4 rupees is 1360. Calls in areas they told you to open. Clear? Remaining amount you received, that is bank account debited. Remaining amount to equity share first and final call. Equity share first and final call. Is this clear? Okay. Next, after that, forfeiture entry. How many shares we are cancelling? 340. 340 into 10. 340 into 10. How much did he pay? Did he pay application amount of 3 rupees? Did he pay application amount of 3 rupees? Did he pay allotment amount of 3 rupees? Yes, but in allotment there is 2 rupees premium which I am going to ignore because premium is already received. So this will be 340 into 3 plus 3. 340 into 3 plus 3. 3 rupees application, 3 rupees face value part of the allotment. Clear? Oh, they have just interchanged it here. Clear? Okay. Calls in arrears is what he did not pay. Calls in arrears is what he did not pay. 340 into 4 rupees. See, 1360 is over here. Did you get this? So, share forfeiture account, what you have to do? Some people might be like, sir, he paid 3 rupees. He paid 5 rupees allotment also. They will end up doing 340 into 8, which is wrong because we are not talking about the premium. Premium is already received. It is sitting in securities premium. We are only focusing on the amount that is not received. Okay, of the face value part. Now, reissue. Did they reissue this shares? Yes, it is reissued at 13 rupees per share. So what should be the entry? Bank account debited 340 into 13 rupees. Should I transfer everything to share capital? No. 340 into 10 rupees. Remaining amount will go to securities premium 340 into 3 rupees. Is this clear? Are you following this? Yes. Now 340 shares. When I cancelled, okay, when I cancelled the shares, I got 6 rupees profit. No, remember? So did I reissue? When I reissued, did I have any loss? Did I have any loss when I reissued? No, 0. So 340 into 6, entire amount will get transferred to capital reserve. 2040. See over here, 2040. Is this clear? Are you following this? Yes. This is one of very important question that you have to understand when pro rata comes along with forfeiture and reissue also. Yes. We'll go to the next one now. This is done now. BP Limited done. Your BP is already high. Next. Okay. 38. December 2022 exam. December 2022 exam. There is a reason why we end all these things. In this question, what did we revise? In this question, we revised pro rata and we revised share forfeiture and reissue. Now, see this question. PQR Limited issued 2 lakh equity shares of 10 each payable as 3 rupees on application, 5 rupees per share, including 2 rupees on premium. So, application is how much? 3 rupees. Allotment is how much? 3 plus 2. And the call, 4 rupees per share on call. So call is 4 rupees. Can you see 336 plus 4 becomes 10. So basically it is 10 plus 2. Clear? Premium. All these shares were subscribed. So very good. We don't have any oversubscription. We don't have any undersubscription also. Money due on all shares was fully received except Mr. J holding 5,000 shares. Okay. Who failed to pay the allotment and call money. Somebody did not pay allotment and call money. And Mr. K holding 10,000 shares who failed to pay the call money. Somebody did not pay allotment and call money. Somebody did not pay only call money. Okay. All these 15,000 shares were forfeited. All these 15,000 shares were forfeited. Out of the forfeited shares, 10,000 shares were reissued. J's full shares we have reissued and K's only little we have reissued. Were subsequently reissued to Mr. L at a discount of 1 per share. Pass necessary journal entries. Okay. First you tell me how many shares we have. 2 lakh shares. Did everybody pay application? Yes. Did everybody pay allotment? No. One person did not pay the allotment. Who is the person who didn't pay the allotment? J. Did everybody pay the call? No. 2 people did not pay the call. Who are they? J and K. Clear? Now listen. First entry guys. Bank account debited to equity share application. 2 lakh shares into application was 3 rupees. Next entry is equity share application to equity share capital. No problem till here. Next due entry. What is the due entry for allotment? Equity share application, equity share allotment 2 lakh into 5. Then equity share capital will be 2 lakh into 3 and securities premium will be 2 lakh into 2. Clear? 2 lakh into 2. Now, bank account debited to equity share allotment. Oh sir, something went missing sir. Somebody did not pay. See, they have shown both the entries. If you open calls in areas, what will happen? If you don't open calls in areas, what will happen? So, did you get money on all the shares? No, 2 lakh shares. J had 5,000 shares. So, 2 lakh minus 5,000. Okay, 1,95,000 into 2 rupees. Sorry, into 5 rupees. 5 rupees was the amount. 3 rupees plus 2 rupees. Did you get it? No. Okay, did you get it? No. So, what will happen to the calls in areas? If you want, you can open the calls in areas account. Here, they did not tell open calls in areas account. Clear? Now, what about the share call entry? Are we going to forfeit that J shares? Are we going to forfeit the J shares? No, we are going to make final call also. Okay, we are going to make final call also. There also we'll have a hope, but then he didn't pay that also. Okay. Now, 2 lakh shares. Are we going to make the final call for 195 or 2 lakh?
2 lakh.
2 lakh, because even J I have to ask him money. So 2 lakh into 4 rupees. Final call. Equity share final call to equity share capital. And bank account, you are not getting everything. 2 lakh. J did not pay. And looking at J, even K did not pay. Okay, even K did not pay. He also got the idea. We cannot pay. No problem. 1,85,000 into 4 rupees is 7,40,000. Is this clear? Now, if you are opening call scenarios, you will put the difference into call scenarios. Now, share forfeiture. Share forfeiture, very, very important. Did I cancel all the shares? I cancelled all the shares. All means these people who didn't pay. Not full 8 lakh. Okay. Not what is that? What is the number? 8 lakh, no? Yes. Now see, share capital account debited always. Now understand this. Premium amount, if it is received, if it is not received. Premium amount, if it is received, not received. What should we do? If it is received, ignore. If it is not received, reverse. Correct? Now here we have two people, J and K. J did not pay allotment. J did not pay the call also. But K is there who did not pay only the call amount. So now what happens? Here premium is not received. But here premium is received. Are you getting this? So the premium, forfeiture, premium part, both are covered in this question. Clear? Received, not received, both are there. So now understand this. 15,000 shares are cancelled. 15,000 shares. So equity share capital debited 15,000 shares into 10 rupees, 1,50,000. 1,50,000. Is this clear till here? Now, securities premium debited not 15,000, only 5,000 into 2. Why? Only the one which is not received, only J, it is not received. J shares were only 5,000. So 5,000 into 2, only that got reversed. K shares are 10,000. That premium is received. That is not going to be reversed. Clear? To equity share allotment account. Who did not pay allotment? Only J. Only J. Can you see 5,000 into 5? Clear? Who did not pay the call? J and K. So 15,000 into 4. Clear? And share forfeiture account. Share forfeiture account, you have to understand how the 75,000 came. It's balancing figure, yes. Now, tell me one thing. J is having 5,000 shares. No. What did he pay till today? Only application. Application is 3. So J has paid 15,000. Clear? K has 10,000 shares. No. What did he pay till today? He paid application 3, allotment of 3 plus 2, but we are not worrying about the premium. He has paid the premium. So 3 plus 3 for us. Allotment 3 rupees and this is 3 rupees, 60,000. Can you see that is 75,000 over here? Are you getting my point? When premium is received, we are going to ignore the premium. When premium is not received, we are going to reverse the premium. Is this clear? Okay. Now, if at all call scenarios was there, what to do? That entry also is given. Now, reissue. Am I reissuing everybody's shares? No, reissue only 10,000. Can you see? 10,000 shares are reissued, including J shares. J shares, everything is reissued, but K shares, everything is not reissued. So what will be the entry over here now for reissue? Understand this. J, 5,000 cancelled, 5,000 reissued. But K, 10,000 cancelled, only 5,000 is reissued. So reissued at what price? 1 rupee discount, they said. So 10,000 into 9 rupees, 90,000. Are we incurring any loss? Are we incurring any loss? Yes. 10 rupees share I am issuing at 9 rupees. I will incur a loss. No. So that you will remove from forfeited shares account or share forfeiture 10,000 into 1 and everything goes to share capital. Now this one, how are you going to get this 35,000? Remember I told you shares which are forfeited and reissued. Shares which are forfeited and reissued, if there is a balance, it should go to capital reserve. Clear? Is this 5,000 forfeited and reissued?
Yes.
Yes. 5,000 into how much profit when I cancelled it? 3 rupees profit.
Minus 1.
How much loss did I incur? 1 rupee loss. So basically 10,000 is the balance amount which should go to capital reserve. Case, how much did I cancel? 10,000. But how much did I reissue? Only 5,000. 5,000 into, what was the profit that I made that time? 3 plus 3, 6. So 6 minus 1, that makes it 25,000. Total is 35,000. Are you getting this? That's how you're supposed to calculate when you're supposed to calculate the balance. Now, some people have this habit of doing like this. Okay, don't do that, please. I'll tell you how they do it. Share forfeited. Okay, 75,000. Here, remote 10,000, 65,000. 65,000, I'll put it to capital reserve. Wrong. Because then you're taking share forfeiture, entire thing, reissued, only the little part. Clear? So what you have to do? Share forfeited and reissued, if there is a balance, that only you take it to capital reserve. Okay, balance sheet, you can just have a look at it. There is no problem there. Next, after that, what do we have? Do we have more? We have a lot. Okay, let's continue. Question number 39. Okay, June 2022 exam. Question number 39, June 2022 exam. All 15 mark questions. See, first question which we solved, we learnt about pro rata and forfeiture reissue. Second, if there is forfeiture reissue and premium is received, premium is not received, what will you do? Every question teaches you something. Okay, it revises something. It's not going to have any repeated situation here. Now see, A Limited issued 20,000 equity shares of 10 each at a premium of 10%. That means premium is 1 rupee. Payable 2 rupees on application, 4 rupees on allotment including premium. So application is 2 rupees. Allotment is 3 plus 1. First call 2 rupees and balance on final call. What is the final call? 2 plus 3 is 5, 5 plus 2 is 7, 3 rupees. That time it becomes 10 plus 1. 10 plus 1. Is this clear? Now, all the shares were fully subscribed. All the shares were fully subscribed. Okay. Hey, today there's a match, right? IPL. Who is playing? Huh? CSK versus RR. What's the score? What's the score? Nobody knows. Okay, good. That is a trick question. Whether you are seeing the score or not. They lose. Who will lose? Why? There is no day match. SRH and SRH, did you score 300?
No, sir, 163.
Pass your phone. Now you keep it inside. Okay, all the shares were subscribed. Mr. M, who held 2,000 shares, paid full remaining amount on first call itself. What is this concept? Paid full remaining amount at first call itself. Means what? Calls in advance. Very good. That fellow is very nice person. But when there are nice people, there are also bad people. The final call which was made after 4 months from the first call was fully paid except a shareholder having 200 shares and another shareholder having 100 shares. They're like, that fellow paid early. No, we'll pay late. Are you getting my point? Anyways, company got money. No. Now, they paid their due amount after 3 months and 4 months respectively along with interest on calls in arrears. Company also paid interest on calls in advance to Mr. M. The company maintains calls in arrears account and calls in advance account. Give journal entries. Is there any forfeiture? No. What does this teach you? How to pass the interest entry and calls in advance and calls in arrears. Clear? That also is tricky. Forfeiture everyone knows. Now listen, how many shares are there? Let's get that thing very clear. 20,000? Okay. Please tell me what should be the entry for application? 2 rupees, right? So 20,000 into 2. Bank account debited to equity share application, no problem. Next, equity share application to equity share capital. Okay, here also no problem. When does the problem start? Somebody paid what? Okay, Mr. M paid full remaining amount at first call itself. First call itself, that means allotment. Nobody has done anything extra. So, allotment amount is how much? 3 rupees plus 1 rupee premium. So, equity share allotment account debited 20,000 into 4 to equity share capital 20,000 into 3 to securities premium 20,000 into 1. Is this clear? Now bank account debited to allotment. Everybody paid the money. We are very happy. First call was how much? 2 rupees. Equity share first call account debited 20,000 into 2 to equity share capital. Now is there a problem? First call, did somebody not pay you? No, everybody paid. But what did M do? M had 2,000 shares. He paid even final call. Final call is 3 rupees, right? Final call is 3 rupees. So now, basically, bank account will be 20,000 into 2 plus 2,000 into 3. So total amount received is 46,000. Next, to equity share capital account, 20,000 into 2. Extra amount which is paid is called as calls in advance. So calls in advance account debited 6,000. 2000 into 3. Huh? Interest. Remember that timeline? Interest will be later when the call is made. Now he just paid. We'll pay him interest later. Okay. Final call amount. Final call is what? 20,000 into 3. Final call. Due entry. We made the due entry. Okay. Now this one has to be very, very clear. How many shares I have? 20,000. How many shares I have? 20,000. Okay. But some people didn't pay. Who are they? Somebody had 200 shares and one more person had 100 shares. So person who had 200 shares did not pay. Person who had 100 shares did not pay. Person who had 2000 shares also did not pay because he has already paid earlier. Clear? So this will be multiplied into 3 rupees. Are you getting 53,100? 20,000 shares. In that, remove 200, remove 100, remove 2000 into 3. 53,100. Clear? Is this clear? Okay. Calls in advance is debited. That means it's no longer a liability because time has arrived. So now 2000 into 3 gone. 6,000. Calls in arrears is also debited. Why? Because it is an asset today. They did not pay the money. 300 shares into 3, 900 rupees. Is this clear? 2 equity share final call, 60,000. Now, will I pay interest on calls in advance? Okay. But here time, date is not given. Date is not given in the question, but time is given. What is required? See over here. They said, okay, the final call was made 4 months after the first call. Final call was made 4 months after the first call. That means 6,000 into 12% into 4 divided by 12. Are you getting 240? Interest on calls in advance is an expense. If somebody gives you money and you are paying them interest, it is bad. It's an expense. Interest on calls in advance account debited to shareholders. The next entry will be shareholders account debited to bank account. Then next entry will be actually transferring it to P&L. Okay. Now, somebody made the payment. Are they making the payment? These people, calls in arrears people, are they making the payment? One person who is having 200 shares is paying after 3 months and the person who is having 100 shares is paying after 4 months. Now, understand this. Okay. Shareholders account debited to interest on calls in arrears. So, 200 shares into 3 rupees. Correct? 3 rupees into 10% into this. They are paying after how many months? 2 months or 3 months? One person is paying after 3 months, other person after 4 months. Okay, sorry. 3 by 12. What is the value? Are you getting 15? Yes. Now, what is the next entry? You are receiving money. Receiving money. Bank account debited. 615, sir. How 615, sir? 200 into 3 was 600 plus the 15 rupees interest. Okay, 2 calls in arrears was 600 and shareholder gave you 15 rupees extra because of the interest. Is this clear? Then one more shareholder had 100 shares into 3. Okay, this person did not pay but paid after how many months? 4 months into 10% into 4 divided by 12 will be 10. Clear? Then he will give you 100 into 3 plus the 10 rupees interest, 310 to calls in arrears and to shareholders. Is this clear? That should be it. That is a journal entry. What did we learn in this question? How to record calls in advance, calls in arrears, interest on calls in arrears, interest on calls in advance. Forfeiture issue is already discussed in the previous questions. Clear? Exam? Same question. Yes. Same question in the Jain exam. And this is not a examination question. It is there in the study material. Okay, I think it is Ram shares or something. Ram and Sham shares. Now, next. 40. Okay, fashion garments, December 2021 exam. Let's go further, guys. Yes, December 2021. This becomes very, very important. Okay. Now, no break. This becomes very, very important. I'll tell you why it is very important. Hello, sit back. Sit. Just now you went, sit. That guy. Hey, that fellow, it's okay, sit. He's anyway sleeping, sit. When you're sleeping and all, you don't feel like going to washroom. Sit back. Okay. From afternoon, he's only sleeping. What is there? Don't drink little less water. Huh? No need. Okay, you should wash your face with your this thing. What is say dedication? What? Sweater. He's sitting in under the AC. That's why he's nicely sleeping. No, that means you have increased the temperature. Okay, this is the last question from share issue. We'll finish this and then we'll think about anything. Fashion Garments Limited. This question also is going to teach you something new. You know what this question is going to teach you? Here, always forfeiture need not happen at the end only. It can happen each stage. Clear? Now, invited application for issuing 10,000 equity shares of 10 each. Amount was payable as follows. On application 1, allotment 2, call 3, second call 4. Is there any premium? No. Issue was fully subscribed. Good. No prorate also. Ram, to whom 100 shares were allotted, failed to pay allotment money. Ram had 100 shares, did not pay allotment money. Did not pay allotment money. Clear? Then, and his shares were forfeited immediately after the allotment. We didn't wait only. Immediately we cancelled his shares. And Sham, to whom 150 shares were allotted, failed to pay the first call. Sham, we had how many shares? 150 shares. Failed to pay which one? First call. And immediately his shares are also cancelled. Afterwards, the second and final call was made. Mohan, to whom 50 shares were allotted, did not pay the second and final call. Clear? And his shares were also allotted. And all these shares were reissued. Sorry, his shares were also forfeited. And all these shares were reissued at 9 per share. Fully paid up. Clear? So first what happens? Everybody paid application money. How much Ram has? 100 shares. How much Sham has? 150 shares. How much Mohan has? 50 shares. Clear? Now tell me, what should be the journal entry? How many shares are there? 10,000. So application entry will be 10,000 into 1. Bank account debited to equity share application. Then equity share application account debited to equity share capital account. Then next, allotment. Are you going to ask money from everybody? Yes. Equity share allotment account debited to, what is allotment amount? 2 rupees. Allotment amount is 2 rupees. That makes it 20,000. Did everybody pay you 2 rupees? No. Who did not pay? Ram did not pay. Ram had how many shares? 100 shares. So this is going to be 9,900 into 2. 19,800. If you open call scenarios will be debited for 200. Now, are you going to wait and make the first call also? No, immediately you are going to forfeit the shares. Equity share capital account debited. Can you see now you can't write face value? If it was face value, you would have written 100 into 10 here. Clear? Only amount called up. What did we call? We asked the application amount till now. We asked the allotment amount till now. This is 1 plus 2, 3 rupees. Clear? Share forfeiture. He has paid only application amount till now 100 into 1. And he has not paid the allotment amount 100 into 2. Forfeited and gone. Are we going to reissue now? No, we are going to reissue later. Can we go into the first call? First call is 3 rupees. Am I going to write 10,000 into 3 rupees? No, we have right now only 9,900 shares into 3 rupees. Ram went no 100 shares. 9,900 shares into 3 rupees, 29,700. Clear? This is equity share first call account debited to equity share capital. Did everybody pay you? No. Who did not pay this time? This time Sham did not pay, who had 150 shares. So this becomes 9,900 minus 150 into 3 rupees. 9,900 minus 150 into 3 rupees, 29,250. Is this clear? Are you following this? Now, am I going to wait or am I going to cancel his shares? I'm going to cancel his shares, forfeit his shares, correct? Now, how many shares Sham has? 150 into, okay, amount called up, into amount called up, 1 rupee application, 2 rupees allotment, 3 rupees first call. So 150 into 6 becomes 900. 150 into 6 becomes 900. Okay, 2, share forfeiture. Share forfeiture 150. Did he pay 1 rupee? Yes. Did he pay 2 rupees? Yes. So this becomes 450. Did he pay the final call? 150 into 3. So that is equity share final call. Forfeited. Clear? Then, sorry, not final call, first call. Final call is 4 rupees. Now you see over here, 10,000 shares. In that Ram is gone. In that Sham is gone. Okay, how much is remaining? 9,750. 9,750 into How much is the final call? 4 rupees, 39,000. Did everybody pay you final call? No. One more guy, Mohan, did not pay. So that means 9,700 only you got the money into 4 rupees. Oh, wait, it's here. Sorry. 9,700 only you got the money into 4 rupees. 38,000. Clear? Now, are you going to cancel Mohan shares also? Yes, you're going to cancel Mohan shares also. Mohan had 50 shares. Did you call up everything now? 1 plus 2 plus 3 plus 4. Everything is called up into 10,500. Share forfeiture account. 500 into. Did you pay application amount? Did you pay allotment amount? Did you pay the first call? Yes. This is 300. Did you pay the final call? No. Into 4. 200. Is this clear? If calls in areas was there, this would have been calls in areas. You can see the entry over here. Okay. Did you reissue all the shares? Oh, sorry. 50 into 4. Okay. Now, did we reissue all the shares? Ram's 100, Sham's 150, and then Mohan's 50. Totally 300 shares are reissued. It is reissued at 9 rupees per share, 2,700. 1 rupee is loss. So, 300 into 1 rupee. Okay, 300 to equity share capital. Now, here everything is forfeited and reissued. So, directly you will get 550. But I want you to know how to calculate it. How many shares Ram had? Ram had 100 shares. What was the profit when we cancelled Ram shares? Ram paid what? Only application. 1 rupee profit when we cancelled his shares. We reissued at 1 rupee loss. That means here I am not making any profit. Clear, net, nothing is remaining. How many shares did Sham have? 150 shares. Sham, did he pay the application? Did he pay the allotment? So I made a profit of 3 rupees. 3 rupees. He didn't pay first call. We made a profit of 3 rupees. So 1 rupee loss now. So 300 rupees. What about Mohan? 50 shares. Did Mohan pay application? Did he pay allotment? Did he pay first call also? That means I made 6 rupees profit. Minus 1. 250. This is the 550 we are talking about. Is this clear? Why we need to know to calculate for every category? Because sometimes they will tell you everything is not reissued. Then you will be in trouble. You can't do total minus total. Clear? Okay, that is it with that particular question. Done. Done with that particular thing. Let's go into the next question. Now, okay. Okay, this question I just want you to see here only. Okay, there is no big complication. I don't want to look at the solution also for this question. Just see this here. Issue 25,000 shares of 100 each at a premium of 25 per share payable. 50 rupees application, 50 rupees allotment. That means this is 25 plus 25 including premium and balance is on final call. Application was received for 29,000 shares. Application was received for 29,000 shares. Are we going to reject and refund everything? Are we going to reject and refund everything? I want 25,000. Is it pro rate allotment? No. Letter of regret was issued to the applications of 4,000 shares and shares were allotted to all other applicants. Clear? And Mr. A, the holder of 150 shares, failed to pay the allotment and call money. Shares were forfeited. No problem at all. It's a simple question. Okay, no pro rata, nothing. 1% forfeiture. You can manage that on your own. Now you have bonus issue, redemption of preference shares and redemption of debentures to do. Do you need a break? Yes? Okay. Okay, next question, question number 42. Okay, bonus issue, SM practice question number 1. Okay, we have to check the practice question number 1 for bonus. Bonus. Okay, I don't have that material right now, but we'll discuss from here only. Now, listen to this. Following item has appeared in the trial balance. Okay, on 31st March 2022, 4,500 equity shares of 100 each. Securities premium is there, capital redemption reserve is there, general reserve is there, and P&L is there. Now, company decides to issue two equity shareholders bonus shares at the rate of 1 share for every 3 shares held. 1 share for every 3 shares held. 4,500 shares into 1 by 3. That means we are going to issue 1,500 bonus shares. Correct? We are going to issue 1,500 bonus shares. And bonus shares are of what value? 100 rupees. So that makes it 1,50,000. I need 1,50,000 for bonus. First I will take it from CRR. So CRR will be debited for 70,000. Then I will take it from securities premium. So securities premium will be debited for 40,000. Then I will take it from general reserve. Will I take 1,05,000 from general reserve? General reserve will be debited for 40,000. 2. Bonus to equity share holders 1,50,000. Is this clear? Now, next entry will be bonus to equity shareholders to equity share capital. Done, finished. That is it. Company decided that there should be minimum reduction in free reserves. Yes, that's what we are doing. Now, bonus issue. Next one. SM practice question number 2. Now, here what is happening? Company made final call on equity shares of 2 per share. Why are they talking about final call? Because we had discussed that bonus issue is not possible if shares are not fully paid up. Correct? Bonus issue is not possible if shares are not fully paid up. Can you see issued shares here? 10 crore equity shares of 10 each issued, but called up, can you see 10 crore equity shares of 10 each? 8 per share is called up. That means 2 rupees is still pending. Clear? Now you have to make the final call. What is the final call entry? Equity share final call account debited to equity share capital. Then the bank account debited to equity share final call account has to be done. Then entire money was received in the month of April only. First you make the final call due and final call receipt entry. Then on 1st June, company decided to issue equity shareholders bonus at the rate of 2 per share. 2 shares for every 5 per share. So now what we are going to do, how many crores of shares we have? 10 crores into 2 by 5. That means we are going to issue 4 crores of bonus. Correct? 4 crores of bonus shares. Okay, that means basically rupees in lakhs. So that is going to be 400 lakhs. 400 lakhs into 10 rupees. That means 4,000 lakhs I need for bonus. How much will I take from CRR? 1,485 I'll take from CRR. How much will I take from securities premium? 2,000 I'll take from securities premium. This makes it only 3,485. Still I need 515. I'll take 515 from general reserve. Is this clear? Then you'll pass the entry. That's it. Okay. Shouldn't be an issue. You should be able to handle. 44th question. Redemption of preference shares. Okay. 44th question. Redemption of preference shares. Just have a look once. Yes. Redemption of preference shares. Okay, guys. Redemption of preference shares, the question which I want to talk about is question number 8, and then we go into redemption of debentures. Okay, question number 8 from redemption of preference shares. Let's quickly have a look at that. Yes. Now, check this out. Company structure of the company consists of 20,000 equity shares of 10 each fully paid and 1,000 redeemable preference shares of 100 each fully paid. Okay, very good. Undistributed reserves and surplus stood as follows. General reserve, P&L, investment allowance reserve. Usually investment allowance reserve is not a free reserve, but they told over here out of which, okay, 5,000 not free for distribution of dividend. Okay, that means total amount is 10,000, 5,000 is not free. That means how much is free? 5,000 is free. Out of 10,000, 5,000 is not free. That means remaining 5,000 is free. Securities premium 2,000. Cash at bank amounted to 98,000. Preference shares are to be redeemed at a premium of 10%. And for the purpose of redemption, directors are empowered to make fresh issue of equity shares at par after utilizing undistributed reserves, subject to a condition that 20,000 should be retained in general reserve. That means you cannot use everything. You cannot use everything. General reserve has how much? 80. That means you can't use 20. That means you can use only 60,000. Okay. Then investment allowance reserve. There is 10, but you cannot use everything. You can use only 5. Then can you use securities premium for redemption of preference shares? No. Okay. What about P&L? How much is there in P&L? P&L there is 20. Can you take 20 over here? No. Why? Because 1 lakh preference shares are how much? 1 lakh, no. For premium on redemption, 1 lakh into 100, 1 lakh into 10%, I need 10,000. So P&L has only 20,000. 10,000 will be required for premium on redemption. So out of 20,000, I can utilize only 10,000. That means 10,000 I can utilize. So totally I have 75,000. But what is the face value of the preference shares which are redeemed? 1 lakh. The remaining 25,000 from where I should get? By issue of equity shares. By issue of equity shares. Is this clear? 75,000 can be used from reserves. Remaining, you have to issue equity shares. So bank account debited to equity share capital directly. Clear? Now, see, general reserve debited 60,000, P&L debited 10,000, investment allowance reserve debited 5,000 to CRR. Directly they have passed the CRR entry first only. Okay, then preference share redemption. Is it redeemed at par or premium? It is redeemed at premium. So what should be the entry? Preference share capital debited. See, percentage preference share capital account debited 1 lakh. Okay, premium on redemption of preference shares debited 10,000 to preference share holders. Payment entry will be preference share holders account debited to bank account. Then P&L account debited to premium. P&L account debited to premium. CR is not already created. What mistake you can make over here is only one mistake. That is taking P&L over here as 20,000. Then you will be in trouble. You will be in trouble. Is this clear? Because 10,000 is required for the premium on redemption of preferences. That is it with that one. Okay, let's go further. Question number 46. Redemption of debentures. Question number 46 is redemption of debentures. Clear? Now, redemption of debentures, all study material only. I want to discuss study material, redemption of debentures. Let's go. How is the Josh? Very, very high. Correct? Yes. So don't ask such stupid questions now. Okay. Question number 46. Okay. Illustration 1. And then I also want to discuss illustration 2 and also illustration 3. Just for understanding purpose. And also illustration 4. Illustration 1, 2, 3, 4 of redemption of debentures. Okay. I want to discuss that. Because everything is covered in that only. After that, we'll go into incomplete records. After that, we'll go into incomplete records. Clear? Question number 1. Okay, guys, let's begin. Okay, what's the time? 6:39 only. Actually, it is only 4:45. Correct? That clock, it's actually the clock of hope. Seeing that, oh, it's only 4:45. Okay, see. Motivation. Let's display the last attempt marks card on the screen. Last attempt marks card will display on the screen. That will be amazing motivation, right? Nothing more than that. There is a huge word which was printed at the bottom. In that only 2 letters we want to remove. Correct? Huge word was printed at the bottom of your marks card. That is not your phone, that's the remote. Your phone is here. Okay, huge word was printed at the bottom. Only 2 letters we want to remove. That's all. Let that word be like that. What are the 2 letters? U and N. That's it. That we want to remove. That's all. Okay. It might be difficult, but it will be worth it. That's it. It might be difficult, but it will be worth it. You have to generate that energy within you to sit and listen. Okay. Something that you might have listened or some adjustment that we have heard now may be the difference. Okay, it can cause the difference between our next attempt or the next attempt. Are you getting my point? It can be the difference between May and September. We don't want September only, no. So we have to go full throttle for May. Are you getting this? So enough. That much motivation enough. See, what you should have as the desktop wallpaper now in your phone is your last attempt marks card. When you open the phone to go to Instagram, that should hit your face. Oh, you should keep the phone away. When you take your phone to message your dad, then you should keep it back. Are you getting my point? Yes, that should be the motivation. Okay, it's difficult. See, in our in my hometown, no, in Mangalore. There was center, okay, there was one organization that was conducting free crash course for CA inter students. Okay, CA foundation they have not started yet. CA inter students free crash course. You know how it was? It's like 15 days you are there only. Residential, it's free. 15 days you are there only. Stay, food, teaching, everything free. Books also. The notebooks to write also they used to come and give. Water, you don't have a calculator, they'll bring a new calculator and give you. During that 15 days, if somebody has a birthday, they'll bring cake and celebrate your birthday. It's free. It's like a service they were doing it. Okay. And 15 days is for 2 groups. Now it's okay, 6 subjects. Before it was 8 subjects. So roughly around 2 days were allotted for each subject. Okay. That time what used to happen? I used to start class at 7 o'clock in the morning or 7:30 in the morning. And I used to end class at around 12 o'clock in the night. 12 o'clock in the night. Okay, how on earth can I finish something that I take 180, 200 hours in advance accounting in 2 days? Their told time is till 9:30 in the night. Their timetable also was till 9:30 in the night. But I used to take till 12:30 once. I still remember we started class once on 4th of September. Okay, we celebrated Teachers' Day at 12 o'clock in the night. 5th of September is Teachers' Day. Go Bears. I hope you remember that. Okay. Okay, 5th of September, we celebrated Teachers' Day in class only. Because 12 o'clock we were there. 12:30 we left. Okay, but the thing was what, free food, amazing food, okay. Amazing food, free food it was. And everything was very, like, it was not like, just a room for the sake of giving it. It was luxurious room only. Okay, no AC and all, but comfort was there. And the thing was that. Okay, now, the other students, who are attending regular batch, okay, in other centers and all, they're like feeling so jealous. They're like, sir, we also want to go there. I'm like, no, you shouldn't be. Because that was only for repeaters. Are you getting my point? That was only for repeaters. They are not doing that free thing for first timers. You should be able to afford it, right? So they're like, they should do that only for repeaters. Repeaters also, if many applications come, whoever has written more number of times, they should give preference to those people. Okay, like people who are already like on the verge of giving up. So they're trying to make them pass by giving this. So it was like a service. But people who are writing for the first time, I should tell them, your goal should be to never go there. Are you getting my point? Your goal should be to never go there. Did you get my point? Okay, same thing. ICU batch is also like that only, no? ICU batch, your goal should be to get out of ICU batch and never be in another ICU batch ever again. Is this clear? Because what is ICU batch? Basically, you are studying from morning till night, right? Okay, you have to clear and then get into a regular batch. Your next batch that you ever attend should be a regular batch for CA Inter. Are you getting this? We don't want to see another batch of CA Foundation. So you should meet in a CA Inter batch. Okay, let's begin. Enough motivation. That's what. Just put your marks card as the wallpaper of your phone. When you see that, when you press the power button and unlock, no, that should be hitting your face. Then you'll be like, okay, no, I don't want to touch. Okay, I don't want to see the phone. 5 days a week, if you do that enough, 2 days you'll get break. If you know, you know. 5 days of a week, if you control your phone enough, 2 days you'll get break anyways from your phone. Because 2 days you don't have to use phone, no. Person will be sitting next to you only. This is not for everyone, only for Chetan. Chetan is so happy. He's like, oh, sir, once I lost complete hope in life, sir, now I have hope again. Once I was writing big paragraphs, sir, but now I am writing big paragraphs for a different reason. Remember? Yes. Let's continue, Chetan. Luckily, it is not raining in Bangalore. I was talking about RCB matches getting washed out. What did you think? Same thing, okay. Yes. Illustration 1. 4 questions from debenture redemption. Quickly we'll finish it off and then we'll go into incomplete records. Okay. Get out all the energy that is there in yourself and focus. It's a very easy part of company accounts. If at all they ask this, you should be very happy because hardly anything is there. Debentures are redeemed. Due entry, payment entry. Okay. Then interest on debentures you might have to pay. If you have DRR investment, you will get the interest. Now, understand this. Following balance appeared in the books of the company, unlisted company other than AIFI, banking company, NBFC, HFC. Sir, why are they telling the big things in the heading, sir? Because DRR is applicable only to these. Okay, other than these only it is applicable. If it is NBFC or HFC and all, it is not applicable DRR. Okay. As on 31st December 2021, 6% mortgage debentures, 10,000 debentures of 100 each. 10,000 debentures of 100 each is nothing but 10 lakhs. That means you have 10 lakh worth of debentures. See the debenture, by balance brought down 10 lakhs. By balance brought down 10 lakhs. Okay. Now, debenture redemption reserve for redemption of debentures 50,000. Do you already have DRR? DRR balance DRR. Where are you, DRR? Here. No need to create. 50,000 is there. We need to create more. Okay. Always they will not tell you. Remember what is the rule for DRR? 10%. How much is the debentures? 10 lakhs. 10% of that is 1 lakh. 1 lakh DRR should be there. How much is there? 50,000. That means you have to create DRR now. Entry P&L account debited to DRR 50,000. You made it 1 lakh. Your job is done. Clear? When you know that, let's see whether DRR investment is there. Can you see over here? Investment in deposit with a scheduled bank, free from any charge, 1,50,000. Can you see 1,50,000 there? Yes, it is there. DRR investment. Okay, balance brought down 1,50,000. Clear? Is it as per the rule only 15%? Yes, we don't have to worry about that one. Next. 4% is the interest receivable on 31st December every year. Bank balance with the company is 9 lakhs. Do we have 9 lakhs in bank? Bank account, you'll open, balance brought down, 9 lakhs. Clear? Now, everything is told to you on 31st of December. Interest on debentures had been paid up to 31st December. Very good. We are on 31st December, all interests are paid. But on 28th February only, we are realizing the investments and debentures are redeemed at par. I mean, at premium of 101 together with accrued interest. Till 31st December, everything was good, no? But you are doing everything on 28th of March, right? So on your investment, 2 months interest you will get. On your debentures, 2 months interest you have to pay. Then you will redeem the debentures. Okay. Now see, debentures. Okay, debenture interest. Entry for debenture interest, they have not considered TDS and all. Directly they have passed the entry. Debenture interest account debited to bank account. 10,000 debentures you have, 100 rupees, 6% is the rate, 2 by 12. Only for 2 months. Only for 2 months. Debenture interest is expense or income? Expense. So it should be debited to P&L. So from here it goes and gets debited to P&L. Clear? Same way, for 2 months you have to get interest, no? You have to get interest, no? From those investments. I don't think they have prepared the ledger for that one. Okay. Interest which you are supposed to get, is it income or expense? Income. So see over here, 1,50,000 was your investment, 4% into 2 by 12. Okay, 1,000 rupees. Clear? What is the entry for that? Bank account debited because you got money to interest on DRR investment. Interest on DRR investment. Is this clear? Till here everything is fine. Now you got the interest, you paid the interest. Now if you want to redeem debentures, what will you do if you want to redeem debentures? You will sell the investment, then you will redeem the debentures. You will sell the investment. So your DRR investment account, you can see over here by bank. Can you see bank account debited to DRR investment? You got 1,50,000. Once you sell the investment, money is arranged. After arranging money, you will think of redeeming. When you are thinking of redeeming, first it is the due entry. Debenture account debited. Premium on redemption debited. To debenture holder. Okay, debenture account debited for face value. Premium on redemption debited for that 1 rupee extra which you are going to pay. 10,000 debentures redeemed at 101. So 1 rupee is the premium. This is the 10,000 over here. To debenture holders. See the debenture holders. I don't think they have prepared debenture holders account. That's it. Debenture holders. It will be debenture holders account debited to bank account. 10 lakh 10,000. Debenture holders are paid. Clear? Premium is a loss. Okay. Wait. Premium is a loss. It should be debited to P&L. So P&L account debited to premium on redemption of debentures. And DRR is no longer required. So what will you do with DRR? DRR account debited to general reserve. Is this clear? This is the entire process. Question number 2. Again, what did they tell? Following balances appeared in the books of Paradise Limited. Oh, we are already feeling like we are sitting in paradise, sir. Okay, from morning we are sitting here. Unlisted company other than AIFI banking company, all those. Okay, why did they tell that? Because they want to tell you indirectly that DRR is applicable. Now, 12% debentures, 7,50,000. 12% debentures, 7,50,000. Okay, can you see over here, buy balance brought down 7,50,000? Yes. Next, balance of DRR, 25,000. Okay, DRR buy balance brought down 25,000. Is this clear? You are the one who messaged yesterday. Huh? You are the one. You all are of the same group. Okay, you have the number. If you have any doubts, you can contact. Okay. Next, after that, DRR investment is how much? 1,12,500. Okay, represented by 1125 bonds. Okay, go and write DRR investment. They didn't ask you only to prepare. It's there. 1,12,500. Now, check the rule. Check the rule. How much is the rule? 10% should be there in DRR. 10% should be there. 10% of 75,000 is what? 7,50,000 is what? 75,000. Do we have 75,000? No. We have only 25,000. Create 50,000 just like we did in the previous question. Okay. Now it became 75,000. And 7,50,000 into 15% is what? 1,12,500. 1 lakh, yeah, welcome. 1,12,500. So what will you do? 1,12,500 is already there. You will not do anything. Okay. Next, what will you do? Annual contribution. Close the door, okay, when you go. Welcome. Annual contribution to DRR was made. Now, on 31st of March, balance at bank was 7,50,000. Listen, this is the twist over here. All this information was given on 1st of April. All this information was given on 1st of April. This information is given on 31st of March. If they give you bank balance on 1st of April, entire year's bank account, can you prepare? No. So this they gave you at the end of the year only. And the balance was 7,50,000 before receipt of interest. That means payment of interest is done. They're indirectly telling you payment of interest is done, receipt of interest is not done. So now what will happen when receipt of interest is not done? Okay, understand this. Okay, how much is the DRR investment? 1,12,500 into 10%. That makes it 11,250. This we did not get. So we have to pass the entry. When you get interest, what is the entry? Bank account debited to interest on DRR investment. Can you see over here? Bank account debited to interest on DRR investment. Is this clear? Now, after this, what do we have? Investments were realized at par. That means you're selling the investment. When you sell the investment, what is the entry? Bank account debited to DRR investment. Clear? After selling the investment, what will you do? You will redeem the debentures. Are the debentures redeemed at par? They are redeemed at a premium of 10%. What is the entry? Debentures account debited. Face value. Face value. Premium on redemption debited to debenture holders. Can you see 7,50,000 and 75,000? Both are there in debenture holders. Next entry is payment entry. Debenture holders account debited to bank account. Can you see that affecting your bank as well? 8,25,000. Next, premium should be transferred to P&L, but they have not asked you to prepare the premium account. So P&L account debited to premium on redemption of debentures. Then finally, what should you do? Whatever DRR you had created, everything will be transferred to general reserve. Is this clear? Done. So what is the order? It has a boundary. Debenture redemption. What? If you have debentures, 10% should be there in DRR, 15% should be there in DRR investment. Then before redeeming, if any debenture interest is pending, pay it. And if any interest on investment is pending, receive it. Then what you do? Check if DRR and all are proper. Then sell the investment, get the money. Okay. Then pass the due entry for redemption. Pass the payment entry. Premium, if it is there, transfer it to P&L. And finally, DRR, whatever extra is there, just transfer it to general reserve. That's the end of the situation. Okay. Question number 3. Why I have chosen this question is because here they have converted debentures into shares. Okay. Company has issued 1,012% convertible debentures of 100 each, redeemable after a period of 5 years. According to the terms and conditions of the issue, these debentures were redeemable at a premium of 5%. You are supposed to pay what? 5% more. Now, debenture holders also had the option at the time of redemption to convert 20% of their holdings into equity shares. Can they convert everything into equity shares? No. Only 20% of whatever they have, they can convert into equity shares. Okay. At a price of 20 per share and balance in cash. Debenture holders amounting to 20,000 who had 20,000 worth of debentures opted to get their debentures converted. Now, can they convert full 20,000? No, they can convert only 20%. So, debentures which is getting converted is what? 20,000. Clear? Now, plus we are not supposed to pay them 20,000. We are supposed to pay them 5% premium. Add 5% to that, it becomes 1000. So totally I'm supposed to give 21,000. Is that correct? Now this 21,000, 20% can be converted and 80% you have to pay cash only. Is that right? 20% of 21,000 is 4,200. 4,200 I will give in shares and 16,800 I will give in cash. Is this clear? And shares I am issuing at what price? 20 rupees per share. So 4,200 divided by 20. I am going to issue how many shares? 210 shares. I am going to issue 210 shares. Balance is going to be paid in cash. Clear? Can you see over here 210 shares? I want to stretch this question a little more and tell what if they ask you journal entry? What if they ask you journal entry? Debentures, if they ask the journal entry, it will look like this. Whatever percentage, debentures account debited 20,000. Clear? Premium on redemption of debentures debited 1,000. 2. Debenture holders 21,000. Is that clear? Next, after that, debenture holders debited 21,000. How much are we giving money? 16,800. 2. Equity share capital account. No, 2,100. 2. Securities premium 2,100. That is why I passed the journal entry. Is this clear? It cannot be 4,200 because equity shares are of 10 each, issued at 20. So 10 will go to equity share capital, 10 will go to securities premium. After that, premium will be debited to P&L. All that things I'm not going to discuss. Clear? Question number 4. Okay, why I just kept that question number 4 is just to tell you, see the merger. To give existing shareholder option to purchase 1 rupees 10 share for every 4 shares held prior to bonus distribution. What is it? They are giving existing shareholder option to purchase some more share. What is this? Right shares. This is called as right shares. This option was taken up by all the shareholders. How many shares are there right now in the question? 20,000. Don't get fooled by the 30,000. That is authorized capital. 20,000. Every time ICA doesn't make same mistake. Sometimes authorized capital will be higher also. Okay. So 20,000. 20,000 shares into, okay, for every 4 shares they are giving how many shares? 1 share into 1 by 4. That means it is 5,000 right shares. Right shares are issued at what price? 15 rupees. So the entry should be bank account debited to equity share application to equity share capital to securities premium. 5 rupees is premium in that. It should go to securities premium. Clear? Then after that, what do we have? To issue 1 bonus share for every 5 shares. Now, right now, do you have 20,000 shares? No. You have 25,000 shares. Just now you issued 5,000 shares. And bonus will be 1 share for every 5 shares. That means you are going to issue 5,000 bonus shares. Face value is 10 rupees. That means it is 50,000. We need 50,000 for bonus. Do you have in your reserves and surplus CRR? No. Do you have securities premium? No. But yes. No, but yes. Why? Just now we got 25,000 securities premium. We can utilize that. So securities premium account debited, P&L account debited to bonus to equity share holders. Clear? Next, bonus to equity shareholders to equity share capital. Sir, what are you doing, sir? The chapter was redemption of debentures. Yes, very correct. To repay the debenture holders at a premium of 3%. Finally, can you see 3 things are merged? You're like, sir, I'll study one chapter, 1 unit, I'll skip in company accounts. You don't know whether that 1 unit will be merged with the other 4 units which you have studied, and it will become totally useless, the other 4 units also. Okay. So now, finally you see, P&L account debited to DRR. Why? 10% should be there in DRR. It was not there. DRR investment to bank. Why? DRR investment was not there. Make the investment. You have to follow the rules. Then debenture account debited, premium on redemption debited to debenture holders. This we have already seen. Then debenture holders account debited to bank. I think last they wrote that entry. Then premium is a loss. It should be debited to P&L. Then DRR is, the redemption is done. DRR to general reserve. Investment is not required. Bank account debited to investment cell. Same process. Create DRR investment, due entry, payment entry. If there is premium has to be debited to P&L. After that, close the DRR, sell the investment. If interest is there, that pending thing also has to be calculated. With that, we are done with redemption of debentures. With that, we are done with company accounts. Okay. Now we finally move into incomplete records. Our life only is incomplete, sir. What you are talking about, incomplete records? From morning you are torturing us and you are telling now incomplete records are. Little. Okay, we have, I want to see question number 54, question number 55, question number 56, question number 57. Done, that's it. Only 4 questions. 4 questions from incomplete records. Yes, yes, only 4, only 4. Lucky number 4. What? Small. See the question size? Small. Okay. Now understand this. Actually, all the in this marathon, what did I do? All the chapters before I started, we had some concepts, right? Incomplete records, there is nothing. Actually, there is no concept. You have to study all the other chapters and you'll be able to do it. There is no concept. What will I tell you? I should tell you in concept page, I should tell you study other chapters. I should just tell you study other chapters properly. That's all. Okay. But there are some things. See, incomplete records can go up to any level of difficulty if required. But at foundation level, I don't think they will push you into that stage. Okay. They are having one boundary. So in incomplete records, yeah, in incomplete records, let's see. No, in this it's not there. I just want to tell you, you have to be thorough with certain things. One, to prepare a debtor's account. Okay. Reason I'm not going to tell you. You're like, sir, debtor's account, I know, sir. Why I am preparing? To find the credit sale, sir. Sometimes credit sale will be given, sir. Amount received will be not there. Are you getting my point? There is no fixed strategy. You just need to know how to prepare debtor's account. Clear? Then debtor is always linked to bills receivable account. So you need to know how to prepare bills receivable account. Then you need to prepare creditors account. Then you need to prepare bills payable account. Clear? Then you need to prepare cash account. Then you need to prepare bank account. These are some of the regular things that you need to prepare. Then this is actually the working notes. The main thing is trading account and P&L account and balance sheet. This is actually the solution. Clear? Now, incomplete records, actually the concept is only this much. Okay. Now, opening balance sheet. Yes, opening balance sheet we have to prepare by to find capital. Now we can't call it as balance sheet. We will call it as statement of affairs. Chetan. No, I'm telling you that statement of affairs we have to find out. Okay. Yes. Is this clear? Why are we calling it now? Simple question. Why are we calling it statement of affairs and not balance sheet? To prepare balance sheet, you need to know balances. If to prepare balances, you should have had complete records. That is there in final accounts. Completed records. They gave you trial balance. You don't have completed records here. So we are just calling it as statement of affairs. Clear? That means from limited information, we are trying to find the assets and liabilities. Is this clear? That is it, guys. Let's go into the chapter. Incomplete records is actually beautiful. It's like solving a puzzle. It's like solving a puzzle. You got a question, no, last time, incomplete records? Small question. Yes. Can be asked for 20 marks. I'm telling you, can be asked for 20 marks. And ICA, obviously, think logically. Think from ICA side. Okay. In final accounts chapter, what you are doing? Preparing trading account, P&L account, balance sheet. In incomplete records, after doing some working notes, then what you are doing? Preparing trading account, P&L account, balance sheet. Correct? Now, as ICA, if you're thinking like ICA, will you give final accounts also? Will you give incomplete records also? Doesn't make sense. No, both the places you are doing same thing. So if I was ICA, I would never give final accounts. I would always give you incomplete records. Correct? Why? Because same thing, you are going to learn it in more advanced way. Trading P&L balance sheet only. Okay. So you should be actually thinking from ICA's side and you should be actually preparing for incomplete records as well. You never know which chapter will come difficult. Incomplete records will come easy. If incomplete records is asked for 15 marks, it will be easy. I am telling you it will be easy. Why? They don't want to keep, it was a chapter which was there in CA Inter. They shifted from CA Inter to CA Foundation. They don't want to keep it so advanced because they know you're at the basic level only. So they'll give simple questions which are already there in the ICA database. That is study material and past RTPs. You just see that. It will be enough. Clear? And they will not make it too complicated because then it'll be too lengthy for you to solve also. Time constraint also is there. Okay. Now we'll start with question number 10. We'll start with question number 10 from the material. Very, very simple chapter it is. Don't worry. All chapters are simple only till now. You know, according to me, which is not simple chapter. Every chapter I told you it's simple only. You know, which is not simple? Inventory. You know why? Because in study material they made so many things are like different. Okay. Inventory, those 4 practical questions are, everything is a 1-1 level. Okay. Now, we'll see that also today itself. Okay. We'll go into questions, guys. Oh, online students. Hi. You're still there. 2. Huh? Pratham is still there. And one more person who was not there yesterday. Yes, question number 10. Question number 10. Now, Mr. Anup runs a wholesale business wherein all purchases and sales are made on credit. One extra work is not there to worry about cash sales and cash purchases. Everything is made on credit. He furnishes the following closing balance. Did he give the balance at the starting of the year? Did he give the balance at the ending of the year? Yes. So now whatever balance is there now at the starting of the year will help you prepare the opening balance sheet, which will give you the capital. Not capital fund. Capital. We are not doing NPO. Okay, we are doing PO. Profit organization. Okay. So now here, can you see the opening balance sheet which is there? It will be a working note. 31st March 2021. Okay, end of the thing it will be there. 31st March 2021. Statement of affairs. And can you see balancing figure? Nothing in this came from anywhere outside that table. In the table, whatever is there, you should know what is asset and liability, and you enter it over here, you'll get the balancing figure. Similar things we were doing in NPO also. Clear? Now, then we'll go into PO now. NPO done. Now, what I'm going to do is see what are the ledgers that are supposed to be prepared as working note. Debtors account, bills receivable account, creditors account, and bills payable account, and summary of cash and bank. Okay, both together they have done. What they have done, they have prepared like a cash book, cash account, bank account. You can prepare separate ledgers also, no problem whatsoever. Then you are going to prepare trading P&L and balance sheet. Now, understand this, you should do it at once. You cannot do it in parts. Basically, if you are doing income records, this question right now before you start, your debtors account, creditors account, bills receivable, bills payable, cash account, bank account, trading and P&L, balance sheet, all should be open and ready. When you read the question once, you should enter into all relevant places. Clear? Now, this will be opening balance of debtors account and closing balance. This will also go to balance sheet. Okay? This will also go to balance sheet. Opening balance sheet already finished. Okay, bills receivable, bills payable. To balance brought down, by balance carried down. Bills payable, by balance brought down, to balance carried down. Sundry creditors, by balance brought down, to balance carried down. All these items will also go to balance sheet. Okay. Inventory, we are not preparing the inventory account. This will be opening stock, closing stock in the trading account. Can you see opening stock and closing stock? Clear? And closing stock also goes to balance sheet. You remember that? Yes. Now, bank account, to balance brought down, by balance carried down. Cash account, to balance brought down, by balance carried down. This much you should first fill all the opening balances and keep. We are not coming back into the solution, into the question. Once we go further, we are not coming back in search of anything. So, at the same time, if I was solving this, I would have written the balances in every ledger, and also I would have written all these balances in the balance sheet. Closing balance sheet. Clear? Now, deposited to bank after payment of shop expenses. 600 per month. Salary 9,200 per month and personal expenses 1,400 per month. 7,62,750. How much did you deposit? 7,62,750. That means all these expenses were in cash or through bank? Through cash. It was through cash or through bank? Through cash. Why? They said deposited after these expenses. That means these expenses were in cash only, no? You deposited money after these expenses. That means these expenses were in cash itself. Okay. Shop expenses 600 per month. That means it is 7,200. Salary 9,200 per month. That means it is 9,200 into 12. 1,10,400. Drawings is 1,400 per month. That means it is 16,800. What is the entry for all this? What is entry for all this? Shop expenses account debited, salary account debited, drawings account debited to cash. To cash. So now one thing is go to your cash book. Here you can find in the cash book. Cash book, where are you? Here. Yes, by shop expenses, by salary, by drawings. Can you see? And after doing all this, what did they do? They went and deposited the money. For depositing money, what is the entry? Bank account debited to cash account. Bank account debited here, cash account credited here. Your journal entries have to be very strong when you are preparing incomplete records. Clear? That first point is done. Second point, we'll go into the second point. Okay. Cash withdrawn. And one more thing, please. Let's finish that also. All these, some of them were expenses, right? Yes, it will impact your P&L also. Can you see salary? Can you see the salary which we saw there? Can you see shop expenses over here? Sir, one more thing was there, sir. Drawings. I'm not finding it here. Why? You'll find it in the balance sheet. Can you see 16,800? Drawings is subtracted. Okay. Now, the next thing is cash withdrawn from bank. 1,20,000, 1,21,000. Can you tell me the entry? Cash account debited to bank account. Cash account debited to bank account. Is this clear? Yes. Next, after that, let's go further. Cash payment to supplier 77,200 for supplies and 25,000 for furniture. Cash we have paid to suppliers 77,200 for supplies and 25,000 for furniture. What should be the entry? You paid to supplier means creditor. Creditor account debited 77,200 to and furniture account debited 25,000 to cash. To cash. So you'll go into your creditors ledger. Can you see in your creditors ledger? Creditors account debited to cash 77,200. Clear? And in your cash account, can you find over here 77,200? Furniture ledger we are not preparing. Furniture account debited to cash 25,000. This furniture, should it also go into some other part of your solution? Yes, it should go to the balance sheet as well. So in the balance sheet, you should find furniture. Is this clear? This Anup's question is actually one of the advanced question of incomplete records. Okay. Now, next, after this, checks collected from customer but dishonored. Oh, very good. Checks collected from customer but dishonored. What is the entry for checks collected? Bank account debited to debtor account. Bank account debited to debtor account. What is the entry for dishonor? Debtor account debited to bank account. So can you see both the sides you are finding in the debtor account? That means you should find both the sides in the bank account also. Yeah. See over here. 5,700, 5,700. Is this clear? Check received and check dishonored. Yeah, it won't make sense, but transaction might be on different dates. That's why they are showing it. It will not have any impact, but it might be on different dates. Obviously, it's on different date. No, you deposit a check today. Will it dishonor today only? It might dishonor tomorrow. It can dishonor today also, but usually it takes some time. No, okay. So that's why they are passing that those entries. Next, bill accepted by customer 40,000. Bill accepted by customer. What should be the entry? Bills receivable account debited to debtors. Bills receivable account debited. See bills receivable. Can you see 40,000? And can you see over here 40,000? Debtors account. Is this clear? Next, after that, bills endorsed 10,000. What should be the entry for bills endorsed? Bills endorsed. Creditor account debited to bills receivable. Can you see creditor account debited 10,000 to bills receivable? So in bills receivable you will find 10,000. Clear? Now, after this, let's go further. Bill discounted 20,000. Discount was 750. Yesterday we did bills of exchange. Tell me what's the entry. Bill discounted. So bank account debited, discounting charges debited, two bills receivable. So in your bills receivable, can you find bills receivable over here? By bank 19,250, by discounting charges 750. Discounting charges is an expense. It should also go to P&L. In your P&L, can you find, where is your P&L? Okay, they added it with some other discount. Okay, 750. Clear? And you should also find this in the bank account. You should also find it in the bank account. Bank account debited to bills receivable. Sir, here that 750 is not there because you have not received 750. It's not there in the bank account. Clear? Now, after this, we go further. Bills matured and duly collected. Bills matured and duly collected. What should be the entry? Bank. Bank account debited to bills receivable. Bank account debited to bills receivable. Can you see in your bills receivable account 16,000? Can you see in your bank account 16,000? Clear? Bills received. Amount is received. Okay. Next, after that, bills accepted 24,000. Bills accepted. That means it is creditor account debited to bills payable. So in your creditor account, can you see creditors account 24,000 to bills payable 24,000? Is it clear? Okay. Next. So if we had not done bills of exchange, we would not be able to attempt this question itself in the exam. Okay, bills we would not know. Paid supplier by check 3,20,000. You paid supplier by check. Entry. Paid. Supplier account debited to. Creditors account debited to. Bank account. Can you see creditors account 3,20,000? And in bank account you should find 3,20,000. Is this clear? Yes. Next. After that what happens? Receive 20,000 on maturity of one LIC policy of the proprietor by check. What is entry? Final accounts point. Bank account debited to capital account. So the proprietor's LIC policy, if it has matured and we got money, bank account debited to capital account. So you should find it in your capital. You have to add that 20,000. Can you see that 20,000 is added to capital? Okay. And in bank account, it should be there on the debit side. Can you find the 20,000 which is there here to capital? Is this clear? This is not a point of this chapter. It is a point of final accounts. Okay. Next. Rent received 14,000 by check for the premises owned by the proprietor. What should be the entry for this? No. Rent is received. What should be the entry? Bank account debited to. Bank account debited to. Capital account, not rent, because rent is received for the premises owned by the proprietor. Personal. Are you getting my point? It is personal. So this 14,000 also should be added to capital. Can you see it is added to capital here? And it should be there in the bank account. Is it there in the bank account 14,000? Yes. Clear? Now, after that, a building was purchased on 30/11/2021 for opening a branch for 3,50,000. Building, we know the entry is bank account, building account debited to bank account, and some other expenses were incurred on this building, details of which are not maintained. That means we have to find it. When you purchase a building, if there are other expenses, what will happen? You will add that to the building only, no? Correct? You will add that to the building. Building amount they know, those other expenses and all, they did not keep track of that. So we have to find it. Somewhere this will be the balancing figure later. Somewhere this will be the balancing figure later. We will figure it out later. Clear? Electricity and telephone expenses bills paid by cash 18,700, due 2,200. What should be the entry? Expenses account debited to cash account. Okay. 18,700. You should find it in cash. Do you have? Now you are like, sir, we should put this into P&L. Yes. But in P&L, when you are putting, no, you should add the outstanding as well. 18,700 plus 2,200, 20,900. Okay. So it should go to balance sheet. 2,200 should be shown in the balance sheet. Over here, telephone charges 2,200. Is this clear? What you paid is only 18,700. Oh, you're getting too many Snapchat notifications. Okay, 18,700 to cash. What is not paid? Expense account debited to outstanding expense. So it will go to balance sheet. Clear? Next, other transactions. That means they are not cash. Already they told over here, list of summary of cash transactions during the year. Whatever you find in other transactions cannot be cash. Claim against the company, against the firm for damage of 1,55,000 is under legal dispute. Legal expenses are 17,000. Firm anticipates defeat in the suit. Somebody filed a case for 1,55,000. You hired a lawyer, you have to pay him 17,000. Contingent liability, but it became a provision. You know why? When it is contingent, you don't know whether you're going to lose the case or not. Here they said firm anticipates defeat. You're going to lose. Okay, and they said they have estimated that it is 1,55,000 and 17,000. Now tell me one thing, when you are going to lose the case, will you create provision for that or forget about it? You will create provision for that. So now tell me one thing, will it impact my cash or bank account? No. It will not impact my cash or bank account because already my cash and bank transactions are done. Correct? So now you're going to create provision. P&L account debited to provision should be the entry. Now in your P&L, can you find 1,55,000? In your P&L, can you find the 17,000 legal expense which is not paid? Is it paid? No. That means it should also be there in the balance sheet. When you go to balance sheet, can you find 17,000 outstanding legal expenses and also provision for the damages you have created and kept? Is this clear? Are you following this? Next. Goods returned to supplier. Please tell me the entry. Goods returned to supplier. What should be the entry? Goods returned to supplier. What should be the entry? Creditors account debited to purchase returns 4,200. So creditors account debited 4,200. Okay, to purchase returns. Purchase returns should be subtracted from purchases. In our trading account, can you see they have subtracted it? Can you see they have subtracted it? Clear? Next, after that, goods returned by customer. Sales return account debited to debtors. Can you see what is the amount? 1,200. Can you see 1,200 subtracted from sales here? And can you see the debtors ledger? 1,200. Is this clear? Now, next. Discount offered by supplier. Yes, entry. Correct. Creditor account debited to discount received. Creditor account debited to discount received. Yes. Can you see discount received 2,700? Okay. And 2,700 should also go to P&L. Where is P&L? Here. 2,700. It's income. Okay. First you should get the discount. Then you can transfer it to P&L. First only you are telling transfer to P&L entry. Okay. Discount offered to customer. What should be the entry? Discount allowed account debited to debtor. Should we find this in the P&L? Yes. This 2,400 plus 750. That time 1,750. This one 2,400. Okay. And in the debtor account you should find 2,400. Clear? Next. After that, the business is carried on at the rented premises for an annual rent of 20,000 which is outstanding at the year end. What a smart guy. He had his own premises which he gave on rent, got the money and put into his capital account. But he is staying in a rented premises. Entire year he did not pay the rent at all. Wow. This is called as ultimate jugaad. Correct? He stayed in rented premises. See over here. Received 20,000. Where is that? Received 14,000 on by check for premises owned by proprietor. His own premises he gave on rent and got the rent also. But he is staying in somebody else's premises, didn't pay 1 rupee rent. What should be the entry for this? Yeah, entry. Rent account debited to outstanding rent. So therefore, we should find rent here in shop rent 20,000 and outstanding rent should be in the balance sheet. Rent outstanding 20,000. Is this clear? Actually, we are done, no? Done with the question. Yeah. Like building, there is also sale, there is purchase. So many things are missing. Now, see over here. Okay, debtors. Debtors account. Actually, opening balance we have put. Okay. So many missing things are there. I'll give you a tip. Should never close debtor account before closing bills receivable account. Go to bills receivable account, close that. Opening balance, we know from where it comes. Okay, everything is there. Closing balance is given. So, still it is not tallying. Closing balance is given. If closing balance is not given, what is there? Balancing figure is closing balance only. Closing balance is given. Now see, opening balance, new bills accepted, bills endorsed, bills discounted, okay, and bills honored, all are given. What is missing? Dishonored only is missing, correct? So bill dishonored is 3,000. What is the entry for bill dishonored? What is the entry for bills dishonored? Debtors account debited to bills receivable. So here, can you see 3,000 came over here to debtors account? If you would have closed this before that, you would be in trouble. Now in debtors account, actually if you notice, sale amount is not there, but amount received is also not there. Sale amount is not there, amount received is also not there. Are you getting my point? So after bills receivable, it's always better before that go and close the cash and bank account. Cash and bank account. Okay. Now, if you see in the cash account, if you notice, everything is there. Opening balance, closing balance, everything is there. Okay. If you see cash account, no, they have told amount deposited. They have told shop expenses paid. They have told salary paid. They have told drawings. Everything they have told. But where did they tell about money coming in? Money did not come only, but they have deposited 7 lakhs. Are you getting my point? It can be only because of two things. One, cash sale, or it is amount received from debtors. Cash sale is ruled out because first only they said only credit sales in this question. So from where can the money come? Only from debtors. This is the balancing figure. Cash account debited to debtors 8,97,150. Cash account debited to debtors 8,97,150. When you go and put this to debtors account, that time you'll get the balancing figure, which is credit sale, which is sales. Debtors account debited to sales. Sales will also go somewhere else. Our trading account. Can you see 9,59,750? Sales. Clear? Now we need to find purchases also. Bills payable account you have to close first. In bills payable account, opening balance is given, closing balance is given. Okay, it's given in the question, in the table, starting of the question. Okay, new bills accepted was also given. What is missing now? Can I tell bills dishonored? No. When bills honored is given, then you take the balancing figure as dishonored. If bills honored only is not given, so balancing figure, bills paid. What should be the entry for bills paid? Bills payable account debited to bank account. Go to bank and put that 22,000. Can you find 22,000 in the bank? Yes. Can you see that? Yes. Now, bills payable done, no? When bills payable is done, can we close the creditor? In creditor, everything is given in creditor. Opening balance, closing balance is given in the question itself. So, in creditor, amount paid was there. In debtor, it was not like that. Amount received was also missing. Sales also was missing. But creditor, amount paid was there. So, missing figure is what? The purchases. Entry for purchases is purchases account debited to creditors. 4,54,100. Now, when we go into trading account, can you find 4,54,100 over there? Clear? After that, debtor closed, bills receivable closed, creditor closed, bills payable closed, cash closed, bank is missing. In bank, something is missing. What is that? Building purchased. Now, can you see the bank account over here? Opening balance was given. All other items of receipt is given. Closing balance is given. You are getting one balancing figure of 3,72,000. They told in the question, building was purchased for 3,50,000 and some other expenses we missed. We don't know. Now, you will be in deep trouble if when you check the balancing figure, you got 3,20,000. Why? They already told you building purchase is 350. Some other expense, if you add, it should be more. So when you're checking balancing figure, if you got 320, that means you have missed something else. Are you getting my point? When they've already told building purchase is 350, that means minimum balancing figure should be 350, no. And they said some other expenses are there, so the extra thing should be added to building, no. When you check the balancing figure, you got 320. Now you are like, you have to depreciate the building, not depreciate. You have to sell one floor and then you have to take the building. Are you getting my point? So balancing figure is 372. This 372 will go where? It will go to balance sheet. You can see that in your balance sheet. Building 3,72,000. Clear? Other things are inventory, debtors, bills receivable, bank, cash. Everything was given in the question. Opening balance of capital where we got? From opening balance sheet. Okay. Net profit where we will get from P&L. Trading and P&L, everything is done, only net profit calculation. That I am not going to check. You do the calculation. Is this clear? This is your Anup's question. Next. Anup is done. Let's go further. Question number 55. Illustration number 9. Illustration number 9. Here it's actually simpler. I am actually going from the tougher questions to easier questions in incomplete records. Okay. Now we are going backwards. Illustration number 9. Okay. Question number 9. Okay. From the following data furnished by Mr. Manoj, you are required to prepare trading account, P&L account, and balance sheet as at that date. All working should form part of your answer. Everyone is sending you notification. Binance is sending, YouTube is sending, Snapchat notifications are there, Instagram notifications are there. Oh. How many notifications from Snapchat? Everybody is maintaining their streak and sending you notifications. Pinterest also you have notifications. Grow you have notifications. See, they're also telling you to grow. That's why you're here, yes. Google Pay also you have notification. Oh, someone sent you money also. Huh? Yeah, but Google Pay notification can be what? Only two things. Someone has sent you money or you got a scratch card. That's it. Third thing can happen. Someone whom you blocked is sending you a message on Google Pay. It happens. Yes, someone told me recently that they had a breakup. Okay. So their girlfriend, it seems that girlfriend blocked them everywhere. Wherever you can message, that person is blocked. He tried calling from his friend's number. It seems that friend's number also got blocked. So now he is like, I don't know how to contact. So today morning I sent good morning on Google Pay. On Google Pay, send the message. I don't know if you can block on Google Pay. Can you block somebody on Google Pay also? Yeah, it's possible there also. So that means they already predicted somebody will be there like this sending message. Why someone will block on Google Pay? Okay, now next you can go to Phone Pay. There also you can send message. There also you can block. Then Paytm is there. Huh? There also you can block. Oh. Yes. Question number 9. Last? What is that? Pigeon. Yes. That is the only way. Pigeon man. You have to write a letter, tie it to the pigeon's leg, send it. Once upon a time, someone was doing it. That's why he has experience. No. He was not using pigeon. He was sending email. Email can be blocked, but his email went through. That's why it's here. His email went through. We were laughing at him when he told that I sent email, but it worked. What to do? Correct me. What's your name? Ishwar. What to do, Ishwar? From where are you? Tamil Nadu. Where? Oh, nice. You're also ICU batch. So all this, you all traveled all the way. Nice. Okay. Let's continue. Let's get out of ICU. Okay. Now, question number 9. Here. See over here. Opening balance sheet I prepare first so that I can get one capital and keep it aside. But here they are playing with my mind. In opening balance sheet also one thing is missing. In opening balance sheet if one thing is missing only, then I will take it as capital. But here in opening balance sheet two things are missing. Debtors also missing. How will I get the debtors? No. How will I get the debtors? Prepare the debtors ledger. Opening balance will be the missing figure. Clear? So then after that only you can prepare the opening balance sheet. Clear? Now details relating to transactions in the year. Okay. Cash and discount credited to debtors. Very good. What is the entry? What is the entry? For cash the entry is different. Discount the entry is different. If you give me total like this, what I will pass? The entry is actually cash account debited, discount allowed debited, 2 debtors, total 64,000. Somewhere down the line you will find it. Don't worry. Okay. This we don't know right now. Sales return, what is the entry? Sales return, what is the entry? Sales return account debited to debtors. Very good. Sales return account debited to debtors. Can you find this sales return? 1,450. Okay, should you find it in sales return in trading account? In trading account, 1,450 returns. Yes. Yes. Done. Next. Bad debts. What is the entry? Bad debts account debited to debtors. So in the debtors ledger, I should find that 420 and then bad debt is a loss. It should also go to P&L. In P&L, can I find 420? Yes. Clear? Next. This is a smaller question compared to the previous question. Okay. Sales, cash and credit. Oh sir, what again? Two things together. cash account, cash sales, I'll pass the entry, cash account debited to sales, sir. Then credit sales, I'll pass the entry, debtors account debited to sales, sir. I cannot pass entry only for this. But where can I take this? In trading account. In trading account, I need to know what is the total sales. Can you see 71,810? Cash and credit, we have to find. Down the line, we'll find it. Right now, we don't know what is cash sale, what is credit sale. Okay. Discount allowed by creditors. Discount allowed by creditors. What is entry? Chirag, AC is working perfectly. Tell me what is the entry. Good. It is also telling you to study. Now tell me, what is the entry for discount allowed by creditors? Yes. Creditors account debited to discount received. They allowed it. For us, it is received. Creditors account debited to discount received. So, where are your creditors? Debited to discount received. Discount received is an income. It should also go to P&L. How much? Can you find that in the P&L? Yes. Clear? Next. Purchase returns. What is the entry? Creditors account debited to purchase returns. In your creditors account, can you find purchase return 400? Should this also bother you somewhere else? Yes. In your trading account, purchase return has to be subtracted 400. Clear? Next. Additional capital paid into bank. What should be the entry? Can you see the starting? Cash and bank is together. So you don't have to prepare two ledgers. Directly you will pass the entry bank account debited to capital account. So in capital, we have to add that additional capital of 8,500, and in bank account, we have to add that 8,500. Cash and bank combined. Okay, they didn't give us separate, so we don't have an option. It's good for us. Okay, now after that, then they told realization from debtors paid into bank. We got money from debtors paid into bank. Should you remember something? Here two things were given together. Details, cash and discount credited to debtors. Now I know how much is the amount received from debtors. 62,500. That means how much is the discount here? 1,500. Now can you tell me the entry? Bank account debited. Discount account debited. To debtors. Now we will enter it in the debtors ledger. In debtors ledger, can you find 62,500, 1,500? Clear? Will this also bother me in the bank account? Yes, 62,500. Will something also bother me in the P&L account? Yes, 1,500 should be shown as discount. Clear? Next, after that, cash purchases. What is the entry? Purchase account debited to cash. So it should be there in your cash and bank account. Sorry, not that one. That one only. 1030. Clear? Will it also go somewhere else? Trading account. In trading account, can you find 1030 as the cash purchase? You will add credit purchase and show the total later. Now, apart from that, cash expenses. Expense account debited to cash. But guys, sundry expenses outstanding is also there. Remember that, okay? First you tell me expense account debited to cash. How much is the expense? 9,570. So I'll go to the bank account or cash account and will write by sundry expense 9,570. Then I'll go straight to P&L and I will not find that 9,570 over there. Why? 9,570. What should I do? Last year's outstanding minus this year's outstanding plus 9,570 minus 600 plus 330. You will get 9,300. 9,300 I'm finding. 9,300 I'm finding. And that outstanding should also be there in the balance sheet 330. Can you see that 330 over there? Did you get it? This is a thing which we learned regularly in NPO. Okay. Now, next. Paid by check for machinery purchased. 430 rupees. Calculator they purchased, I think. Okay. Machinery account debited to bank. And see over here. The machinery which is there or assets which is there, 11,610 became 12,040. This is nothing but 430 rupees difference. This is nothing but 430 rupees difference, and that is the 430 rupees which is there over here. Clear? If at all, after adding that, the value would be lesser. That means depreciation also can be there. Okay? 430, what should be the entry? Machinery account debited to bank account or cash account. By machinery, can you see 430? Clear? Next, after that, household expenses drawn from bank. What should be the entry? Drawings account debited to bank. So I should find this 3180 in my bank account, and I should also find this drawings in balance sheet minus Clear? Yes. Now next, cash paid into bank. Contra actually. Actually it's contra. Actually not required, but ICA is showing it. Not required because we have cash and bank together. No. What would be the entry for this? What should be the entry for this? Bank account debited to cash. Cash drawn from bank. What should be the entry for this? Cash account debited to bank. Okay, they are showing the contra also. 5,000, 5,000. 9240, 9240. Clear? Next, after that, you have one more thing. Cash in hand on 31st of March 2022, 1,200. Ignore. Why? Because we already know the closing balance of cash and bank. Why do I need separate? Are you getting my point? Okay, you know cash and bank. Show it as balance carried on. Put that balance in the balance sheet also. Next, checks issued to creditors. What should be the entry? Checks issued to creditors. Creditors account debited to bank account. Creditors account debited to bank account. Okay, and in the bank account you should find the 60,270. Is it done? Done. Now, in debtors account, your first account is debtors account which we were doing. Opening balance is given in the, closing balance is given in the question. Okay, opening balance is not given in the question. Now here, this is also missing. So I can't find it now. So what I do, no bills receivable. So what I will do, I will go to creditors. Creditors, can I see? Opening balance is given in the question. Not given, huh? Why they wrote balancing figure then? Creditors it was given, no? Okay. Yeah. But they wrote a balancing figure for opening balance. This should be the balancing figure actually. Opening balance is given. Closing balance is also given. So purchase is balancing figure. What purchase is this? Credit purchase. Where will I put this credit purchase? I'll put to the trading account. In trading account, can you see 58,000 plus that cash purchase, total purchases. Is this clear? Are you following this? Okay. Creditor closed. Debtor is not yet closed. But cash and bank account, can I close cash and bank account? Yes. Cash and bank account when I'm closing balance was given in the question itself. Opening balance is given in the question itself. Okay. Only thing missing is one missing figure over here, that is sales. What sale is this? Cash sales. If I know cash sales, can I find credit sales? Because my total sales was given. Cash and credit, total sales was given. Can you see over here? 71,810 cash and credit. So you found the cash sales as the balancing figure in the cash and bank account. Okay. That time you will get cash sales. So now what you will do, 71,810 minus 4,600 which came from here will be your credit sales. If you get credit sales, then you can have the opening balance as a missing figure. When you get the opening balance of debtors, someone is FaceTiming you. Ignish. Okay, when we get the cash sales, then what will happen? Once we get cash sale and credit sale, what will we do next? What will we do next? Yes, Shira, tell me, what will you do next? Okay, after cash and credit sale, you will put both those amounts into your trading account. Cash sales, credit sales, you will put into trading account, and debtors will give you an opening balance. Okay, the opening balance of debtors, what are you going to do? Put it to the opening balance sheet and you will get the capital as well. Clear? Okay, that should be it with that. Debtors closed, cash and bank closed, and creditors also closed. Yes, Vignesh, how are you? Yes, let's continue. Now, let's go into the next question. Question number 9 done. Now, gross profit, net profit, you're going to calculate on your own. Okay, I'm not showing that calculation also. Now, SM practice question number 2. And after that, we have practice question number 3. Practice question number 2. Okay. Let's go to practice question number 2. Yes, Mr. A runs a business. Okay, ready-made garments. He closes the books of accounts on 31st March. Okay, drop the call now. 31st March. The balance sheet as on 31st March is given to you. They gave the balance sheet. Otherwise, you'll go and prepare no opening balance sheet. They gave the balance sheet. This is the balancing figure. They only gave the capital also. Don't worry about it. creditors, furniture, stock, debtors, cash in hand, cash at bank. Now he's sending iMessage also. What is this? Experience. Yes, you are furnished with the following information. You are furnished with the following information. Okay, now listen. What are repetitive transactions? I'm not going to discuss only. Okay, but important transactions only I'm going to discuss. See, his sales for the year ended 31st March 2022 were 20% higher than the sales of the previous year, out of which 20% sales was cash sales and total sales during the last year was 5 lakh. Oh, very good. So what we will do? Last year's sales is 5 lakh. This year's sales is 20% more. So this year's sale is 6 lakhs. Out of this 6 lakhs, 20% is cash sale and 80% is credit sale. That means 1,20,000 is cash sale, 4,80,000 is credit sale. Is this clear? Now, this should be there in your trading account. Okay. Second question, can you see the trading account? Credit sales 4,80,000, cash sales 1,20,000. This is your total sales. If you are preparing debtors account, okay, when you are preparing debtors account, see over here, only 4,80,000 will come to debtors account, okay, and 1,20,000 will go to calculations closing balance of cash at bank. Okay, sorry. I think we are going into different question, no? Same question, no? Okay, they have not prepared ledger and all, just calculation they are doing because see over here, cash sales 1,20,000. They could have prepared ledger only, they are preparing a statement, that's all. Okay, now after that, let's continue. Payment for all purchases were made by check only. For all purchases, the payment is made by check only. But how much is the purchase? Nobody told you about that. Okay, we'll keep that pending. Goods were sold for cash and credit both. That we already know. In the first sentence only they told us. Credit customers pay by check only. So when customer is paying, debtor is going to pay only by check. Okay. Depreciation on furniture is to be charged at 10% per annum. Very good. So what we are going to do, depreciation 40,000, 10%. 4,000 will be depreciation in P&L and 36,000 will be the balance in the balance sheet. Mr. A sent to bank the collection of the month at the last day of each month after paying salary of 2,000 to the clerk and office expenses of 1,200 and personal expenses of 500. I think this was already there. Okay, this is already there. Mr. A is sending to the bank collection of the month on the last day. So 2,000 into 12 will be salary. 1,200 into 12 will be 14,400 and 500 into 12 will be 6,000. Clear? This will be the entry. This we have seen in the previous question itself. Analysis of the bank passbook for the year ended disclosed the following. Payment to creditor. What should be the entry for this? Creditor's account debited to bank account. Analysis of the bank passbook. Clear? Payment of rent up to 31st March. Till last day you paid the rent. Rent account debited to bank account. Cash deposited into bank. Bank account debited to cash account. Now you see over here. Okay. Rent will also go to P&L. Rent will also go to P&L. Following are the balances as on 31st March. Closing balance is given. Simple question it is. Only thing was sales was little different calculation. Okay. On the evening of 31st March 2022, end of the year, when we are ending the year only, okay, cashier absconded with the available cash in the bank. That time I felt, God is there. I have already deposited 80,000 into bank. Otherwise, he would run away with this 80,000 also. I was so happy that this 80,000 I have deposited into bank. Correct? Cashier deposit absconded. So, cash account cannot have balance carried down. Cash account, whatever is the balance carried down, is abnormal loss. Okay, and that abnormal loss will also go to P&L. Sir, wait. For abnormal loss, you had told me yesterday, sir, entry is abnormal loss account debited to trading account. That is if the goods are lost. Here cash is lost. You cannot put it to trading account. Abnormal loss account debited to cash account. And loss is always a loss. So P&L account debited to abnormal loss. Clear? Okay. You are required to prepare trading P&L balance sheet. Only that abnormal loss part I want to show you. Now see over here. They prepared a statement. They could have just prepared cash account only. Opening balance is given. Cash sales we calculated that time. See, salary, office expense, drawings, and that 80,000 which is deposited. Clear? Remaining whatever is there, 23,600 is the loss. This loss, he ran away with that. Yes. This loss should also be there in the P&L. See our P&L should be there in the P&L. Other things are all simple. Salary, rent, office expenses, okay, depreciation 4,000 which we discussed, okay, all those things are regular, okay. How will I find sales? I already found sales. How will I find purchases is my question. How will I find purchases? Creditors account, you know the opening balance, you know the closing balance, okay. We don't know the payment. We won't know the payment. Payment where you will find when you prepare bank account. In bank account, what will be the, did they give you the payment somewhere? Payment through bank, creditors account, it was there, right? In one small, this one, yeah, payment to creditor. That means in the creditors account, balancing figure will be purchase. That purchase you will put it into trading account. That's the end of the story. Clear? One more question we have from incomplete records. That is this third question. Okay, that is this third question. Why I have kept this question is because, see, hello, there is inventories. Not last question for the day. There is inventories. Okay. Now, why I kept this question is for only one reason. See, listen. However, he always maintains 10,000 in cash and deposited balance into the bank account. So, when you are preparing this cash account, no. Opening balance 10,000, closing balance 10,000. Always. Clear? Then, he informs you that he has sold goods at profit of 25% on sales. Okay, profit of 25% on sales. That means that information will be used somewhere. Okay, very good. Now, analysis of his bank passbook reveals the following. Payment to creditor. What is the entry? Creditor account debited to bank account. Bank passbook. Payment for business expense. Business expense account debited to bank account. Receipt from debtors. Bank account debited to debtors account. Loan of 1 lakh taken on 1/10/2021 at 10% per annum. Bank account debited to loan account, but 1 lakh into 10% into 6/12 will be 5,000. This 5,000 will be interest and this interest will be outstanding. Clear? Interest will be outstanding. Cash deposited into bank 1 lakh. Everything is regular. We have seen this. He informs you that he paid creditors for goods 20,000 in cash. Creditor he paid 20,000 in cash. So creditor account debited to cash account and salary is 40,000 in cash. So salary account debited to cash account. He has drawn 80,000 in cash for personal expense. So drawings account debited to cash account. During the year, Ram had not introduced any additional capital. Surplus cash, if any, to be taken as cash sales. That means in your cash account, balancing figure is cash sales. All purchases are made on credit basis. That means there are no cash purchases. Is it clear? Now, sir, everything you told, sir, one thing is missing, sir. What is that? Closing stock is missing. Ram's capital, no need to worry. You will know how to calculate it. Closing stock is missing. How to calculate that, sir? I will get sales. I will get sales, right? How will I get sales? Cash sales I'll get in the cash account. Credit sales I'll get in the debtors account. Clear? Balancing figure. That time I'll get sales. Whatever sales I get, okay, 25% if I subtract, I will get, okay, or I'll teach you in a better way. Sales I'll get, calculate 25%, you will get gross profit. That means in your trading account, missing figure is purchase. That means in your trading account, trading account missing figure is stock, because purchase you will find in the creditors ledger. Clear? I will show you the solution also so that you understand. Can I see here? Closing stock, balancing figure. Closing stock is balancing figure. Cash sale and credit sale is already given. Purchase is already given. Can you see gross profit? We calculated using that percentage. So closing stock, sir, what would happen if I would not? I already know gross profit now, sir. Calculated the gross profit. I can just carry it down to P&L and continue. Then your balance sheet won't tally because closing stock should go to balance sheet also. Is this clear? That's why you need it in both places. Okay, that should be it with incomplete records, guys. We have one chapter remaining, that is inventories. Okay, students, next chapter, inventories. Okay, what is inventories? Stock. Nothing but stock. Opening stock is stock leftover of the previous year. Closing stock is a stock leftover of current year. When we are talking about inventory, we have three types of inventory. Raw material, work in progress, finished goods. Even tools are there sometimes. Clear? Material used in production is called as raw material. Half finished or semi-finished goods are called as in work in progress. And ready to sell goods are called as finished goods. Okay, valuation of inventory will always be at cost or NRV, whichever is less. What is cost? Cost of purchase plus cost of conversion. Clear? Cost of purchase is I purchase the raw material, but I'm not going to sell the raw material, am I? I'm going to convert the raw material into finished goods. That is cost of conversion. Any other expenses? Basically, whatever expenses you have spent for bringing that inventory from there till here, everything will be added. Clear? Net realizable value. Estimated selling price of finished goods minus estimated cost of conversion minus estimated selling expense. So net to what I am going to get after selling, that is called as net realizable value. Clear? Now, methods. First one, FIFO method. First in, first out. That means usually closing stock is last in. Okay, LIFO method. Last in, first out. Usually they don't ask questions on LIFO. Closing stock will be first in. Average price method. How will you calculate closing stock? The balance. Now see, they might ask you to prepare one big table. Okay, purchases, issues, balance. Everywhere where you have balance, that is actually the closing stock of that particular day. Okay, average price will be total prices divided by number of prices. Weighted average price method. Total value of the stock. Quantity into rate you do, you'll get the value of the stock divided by the total quantity. CAGS and gross profit computation. Trading account we already know. I'm not going to discuss only trading account. Okay, in trading account usually balancing figure is gross profit. Do we have a formula for it? Gross profit is equal to sales minus cost of goods sold. It will be important when you solve those questions. Okay, cost of goods sold is equal to opening stock plus purchases plus direct expenses minus closing stock. This is called as cost of goods available for sale. This is called as cost of goods not sold. Cost of goods available minus cost of goods not sold. That means cost of goods sold. Clear? Okay, examples. I'm not discussing it. This is basically, I hope you know this. Gross profit on cost is 25%. Then it will be on sales 25 by 125. Okay. On sales, if I tell 25%, then it will be 25 by 75 on cost, which is basically 33.33%. Okay, that you should be able to know. Inventory maintenance system. You have two types of inventory maintenance system. What are they? Periodic inventory system and perpetual inventory system. Periodic inventory system means what? I will go and count. When I count, what I find is my closing stock. Are you getting my point? Closing stock found by physical counting. That is periodic inventory system. I'll pull the shutter down, start counting. Whatever I find is my closing stock. Perpetual inventory system is, I will keep one person at the door. He will be counting, he will be writing in the book. Goods came in. Remember, you are preparing one table. That is perpetual inventory system. Purchase, issues, balance. Someone will stand at the door and do that. Purchase, issues, balance. So anytime I go and ask him, how much is there? That he will tell me the closing stock. Otherwise, I have to pull the shutter and start counting. That will be the closing stock. Clear? Drawbacks of periodic inventory system are goods which are not found. When I counted, I did not find it. So I thought that it is sales. But it can also be abnormal loss. Somebody could have just stolen those goods. I did not find. Whatever I don't find, I'll think that it is sold. Clear? Now, stock count can't be found whenever we want. Can't be made whenever we want. Can you count stock whenever we want? No. Because when we are counting, we can't do our business. We have to shut the business. So, business loss for on counting day. Whenever you're counting, business loss. Why? You cannot keep the shutter open and start counting. When you count over here, some goods will come and fall this side. Then somebody will take some goods and sell it. So, you have to stop the business and count. Clear? Now, here what is the drawback? Expensive. You have to hire one guy. Expensive it is. Books and actual may have mismatch. Books are something, he's sitting at the door and writing everything. Inside someone ate one chocolate. Nobody will get to know about it. It never went out, no. Chocolates which came in, he kept account. Chocolates which went out, he kept account. Inside two people, he ate the chocolate only. Is it possible? So always, whichever methodology it might be, whichever methodology it might be, physical counting will happen in every business. So physical counting you have to do to check whether books and actuals are matching. Now consignment. Sir, it's not there, sir, in our syllabus, but it will impact us in our inventory chapter. What is consignment? Chetan is there, who is the consigner. Okay, and we have one consignee over here. Now Chetan sent goods to consignee. Is Chetan the owner of the goods? Even after sending also, is Chetan the owner of the goods? Yes, consignment means one principal will be there and one agent will be there. Consignee is the agent. When consignee sells it, consignee will send the money. Clear? On balance sheet date, goods which are unsold, who is the owner? Consigner only is the owner. So, who should show it as closing stock? Consigner only should show it as closing stock. Closing stock of consigner, closing stock at own factory, plus closing stock at consignee's go down. So for me, closing stock will be what is there in my go down is my closing stock. Plus what is there in consignee's go down also is my closing stock only because I am the owner. Is this clear? Yes. Sale of goods on approval or return basis. I think we have discussed it little in rectification of errors. We'll discuss it again. If goods are not accepted or rejected on balance sheet date, we have to know this. If goods are not accepted or rejected on balance sheet date, what should we do? We should reverse the sale and take it as closing stock. Reversal of sale will be done at selling price, but closing stock will be done at cost price. Adjusted selling price, one method is there. One or two questions are also there on that. Okay, for a very long time, it's never asked in exams. For a very long time. At least some 10 years, I don't think they have asked anything from adjusted selling price method. That means it is highly due. Are you getting my point? Okay, here closing stock will be mentioned at selling price in the question. So what should you do? Closing stock at selling price, remove the gross profit, you will get the closing stock at cost. Clear? Gross profit percentage is gross profit divided by sales into 100. Couple of questions are there, you should be able to see that. I don't think there is anything else, and final accounts only. Okay, we have to discuss the questions. Few questions are there. Usually inventory, what is there in the study material are all illustrations, are all silly questions only. What is the irritating questions are the ones which are there at the end, practical questions. So first question that we are going to discuss is inventory SM practical question number 4. One of these questions in one of the recent exams came ditto. Copy paste it came for 5 marks. Okay, now let's see. Only inventory is remaining, no? We have inventory sale. Okay, guys. Practical question number 4. What is the practical question number 4? This one. Very, very beautiful question. Okay, now. Physical inventory of stock in a business was done on 23rd June. Okay, they were actually supposed to do it on 30th June, but they did the physical inventory on what day? 23rd June. The value of the stock on that day was 48 lakhs. How much was there? 48 lakhs. Now from 23rd June, I should go to 30th June and find the closing stock. Clear? Now, out of the goods sent on consignment, goods at the cost worth rupees 2,40,000 were unsold. Okay, it was unsold. So what should you do? If it is unsold, you should be happy or sad? You should be sad only, but we are calculating closing stock now. Wait, so many extra pages are there. 1 second. Oh, what is this? Thank you very much. Next one also will move to trash. Okay, yes. Thank you, Chirat. Now, okay, now understand this. Can you see over here? 2,40,000 unsold stock, consignment, we have added it to the stock. Inventory we have added. Clear? Next, after that, we'll go to the next thing there. What have they told? Purchase of 4 lakhs were made, out of which goods worth rupees 1,60,000 were delivered on 5th July. If you purchase goods, what will happen to your stock? Increase or decrease? Increase. Goods are not delivered, still it will increase. Why? Goods are in transit, but it's still you're only the owner. No, already sale of goods act. Ownership is transferred. It's still in transit. Purchase is 4 lakhs. 1,60,000 is still in transit. So still it will be considered as your closing stock only. Are you following this? Huh? What physical verification? I didn't understand. What is the doubt?
Saying that they're physically verifying the stock, so that technically how will they?
They did it on 23rd June. They physically verified the stock on 23rd June. Okay. Now they are telling us the no, we are not assuming anything. Okay. They have given the transaction between 23rd June and 30th June. 23rd June I counted and kept. After that, what happens? I should do plus minus. I'll get the 30th June closing stock. 23rd June I counted and kept. That day it was 48 lakhs. Clear? Now 4 lakhs is the value. Shh. Hello guys. Is it a joke? Next. Purchases 2 lakh 40. Goods in transit 1 lakh 60. Both are added, which is 4 lakhs. Which is 4 lakhs. Is this clear? Any doubts? What are you writing? I just asked. I was curious. Okay, now sales were 13,60,000, which include goods worth rupees 3,20,000 sent on approval. 3,20,000 sent on approval. Half of these goods were returned before 30th of June 2022. Okay. Now, goods are sold at cost plus 25%. That means on sales it is 25 by 125, which is nothing but 20%. However, goods costing 2,40,000 have been sold for 1,20,000. That is something else that we will see. 3,20,000 goods were sent on approval. Clear? Now what happens? Half of these goods were returned before 30th of June. What will happen now? What will happen? Stock will increase. Huh? Can you see? 80% of 1,60,000 they are telling. Okay, we have to take the goods at cost. Can you see 1,28,000 over here? Okay. Now, sales, everything is done. Plus, 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 plus. Now, sales we cannot minus. What should we minus? We should minus cost of goods sold. Okay. Opening stock, this stock was there. Stock increase, stock increase, stock increase, stock increase. Clear? Now, what we need to minus? Sales is the only thing which made the stock decrease. But sales is given at sales value. We have to take it as cost value. Now, sales is given already 13,60,000. Can you see the actual sales is 13,60,000? In that, there is also an abnormal sales. Why? Abnormal sales. What is this abnormal sales?
So
Which is not sold at normal selling price. Okay. Return of goods on approval. When goods are returned, what will happen? Sales will get reversed, no? So 1,60,000 is removed from sale. So 13,60,000 is my sale. When goods are returned, 1,60,000 is gone. I have 12 lakhs. All this 12 lakhs, did I sell it normally? No, I did not sell it normally. How do we know that, sir? They have told that, sir. Where did they tell that, sir? Here. Okay. Goods costing 2,40,000 had been sold for 1,20,000. Is it normal for us to sell it at lesser value? No, usually we sell it at cost plus 25%. We sell it usually at cost plus 25%. So now here what happened? Now understand this. Here I have sold 1,20,000 abnormally. This is my abnormal. Okay, that means 10,80,000 is my normal. Is my normal sales. Normal sales I have sold at what profit percentage? 25% on cost. So it's 20% on sales value. 2,16,000 I got gross profit over here. But this I did not sell it at profit. I sold it at loss. Cost was 2,40,000. So I made 1,20,000 of loss over here. So on the net basis, I have actually made 96,000 of profit. Gross profit is 96,000. On normal sales, I made profit. Abnormal sales, I made a loss. On a net situation, I made 96,000 of profit. Yes. This is goods returned. Goods which are returned. Goods sent on approval returned. No. When goods are returned. I have added it to closing stock, no? Okay, sales side should reverse, no? From sales I have reversed. Okay. Then after that you see what happens over here. 10,80,000 is normal. Okay. 1,20,000 is abnormal. They only told goods are sold at 1,20,000 when actually goods were costing 2,40,000. Okay. So now 2,16,000 you got gross profit here. Here it is a loss. Net it is only 96,000 profit. So now see over here, sales 12 lakhs. Sales is 12 lakhs minus gross profit will give you cost of goods sold. That is how you get the closing stock. That is how you get the value of closing stock. Cost of goods sold if you remove. Now, usually what people do, okay, goods purchased, add. Goods purchased, add. Okay, goods are returned, add. But there when goods are returned, if you are adding at selling price, you will go wrong. Goods returned, you should add it at cost price. And then goods are sold, okay, reduce. No, goods are sold at selling price. Find the cost of goods sold and reduce it. Is this clear? This is a very important question. Okay. Yes.
Sir told like we can, instead of creating this portion, we can use
Trading account. Yeah, you can use trading account. Yes, you can. Yeah. You will get marks. Finally, you have to find what? Closing stock now. Do the trading account. No issues. No problem at all. Okay. Now, SM practical question number 3. This is then question of Hanuman. I think it was repeated in the exam also as Ram. I think they asked this exam, same question in one of the exams and it is asked as Ram. Okay, this question also we have to see. Practical question number 3. We can do one thing. We'll keep the solution here. Okay, so that scrolling is saved. Now, profit and loss account of Hanuman showed a net profit of 6 lakhs after considering closing stock of 3,75,000. Very good. You have calculated everything. What do you want me to do? Subsequently, following information was obtained on scrutiny of the books. Actually, rectification is happening over here. Okay, now, see over here. See over here. Can you see net profit is 6 lakhs? Okay, go to the end of the question. From calculate the value of stock and the adjusted net profit. Adjusted net profit means something is missing. You have to make the changes, correct? Okay. Purchase for the year included 15,000 paid for new electrical fittings of the shop. By mistake, you took it as purchase. Now you should remove the purchase. If you remove the purchase, profit will increase or decrease. If you remove the purchase, profit will increase or decrease? Profit will increase. So now here, can you see, buy electrical fittings 15,000. Profit has increased, credit side. Clear? Now, after that, Hanuman gave away goods valued at 40,000 as free samples for which no entry was made in the books. Tell me what is the entry for free samples? Sorry. What? Advertisement expense account debited to purchases. Advertisement expense account debited. That means profit will decrease. Purchase account credited. That means profit will increase. Sir, what is this entry, sir? See, usually that entry has a sense. What is that? Advertisement account debited to purchase means we are crediting purchase so that we can remove it from trading account and we can show it in P&L as an expense. Expense is expense only. Purchase also expense, advertisement also expense. But why we pass the entry advertisement account debited purchases, remove from purchase so that it is not there in the trading account and show it in P&L. Now already P&L is done. So now you see the impact of that. Buy samples to advertisement. Can you see the net effect of that? Purchase has to be reduced. Profit. Advertisement expense has to be created. Loss. Is this clear? Yes. Next. Okay, next. Invoices for goods amounting to 2,50,000 have been entered on 27th March 2022, but the goods were not included in stock. That means goods, what did they do? Okay, they have already goods amounting to 2,50,000 were entered on 27, but goods were not included in stock. That means you did not take it as stock. If you don't take closing stock, what will happen to profit? Profit will decrease now if you don't take stock. So now you have to take that. No. See over here. Buy closing stock. 2,50,000. Clear? 2,50,000. You did not take it. Now you are taking the closing stock. Profit is increasing. Next. In March 2022, goods of 2 lakh were sold and delivered. Were taken in the sales for April. March you sold. When did you take the sales? April. Is it a mistake? Should you take it as sales in March only? If you don't take sales, what will happen to profit? Now, if you take sales, what will happen to profit? Increase. Can you see over here? Buy sales 2 lakhs. Buy sales 2 lakhs. Clear, profit is increasing. Now, after this, we have a couple of transactions only. Now, goods costing 75,000 were sent on sale or return basis in March at a margin of 33.33% on cost, though 25% on sales. Though approval was given in April, these goods were taken as sale of March. If I told you, only one part I showed you of sale of goods on approval or return basis. Goods are, listen. Goods are not approved, not rejected. What should I do? I should take it as stock and I should also reverse the sale. If I reverse the sale, what will happen? Profit will reduce. Profit will reduce. So here, can you see two sales? 1 lakh, not 75,000. Because 75,000 plus 25,000. What is that 25,000? Profit. Okay, goods costing 75,000 was sent. Sales has to be reversed at sales value. So, stock has to be taken at cost only, and cost is 75,000. When you take it as cost, profit will increase. Sales you reverse, profit will decrease. Closing stock you take, profit will increase. That is not the only thing that they have asked in this question. They have also asked you to calculate the closing stock. Closing stock was already given as 375. One closing stock was missing 250. Do you remember you took it over here? 250. And now this closing stock on approval also came 75,000. Your total closing stock is 7 lakhs. See how they recently they gave that 5-mark question from inventories. Ditto they copy pasted from the study material itself. This Hanuman question also came in the exam as Ram. They just changed the name and same question they gave in the exam. Okay. Next, practical question number 2. Practical question number 2. Let's discuss that as well. Okay, guys. Okay, guys. Let's continue. Almost there. Yes. IIT. How's it, Josh? Josh is very high. Yes. From the following information, ascertain the value of stock on 31st March 2022. Are they asking you to calculate opening stock or closing stock? Closing stock. Value of stock on first day of the year is what? 7 lakhs. Nothing to worry. Opening stock. Correct? Now, purchases during the year is how much? 34 lakh 60. What will you do? Add. Opening stock plus purchases. You will add. Correct? Manufacturing expense. You will add that also. Correct? Sales during the year. You can't take sales, you have to take cost of goods sold. At the time of valuing stock, a sum of 60,000 was written off on a particular item which was originally purchased for 2 lakhs and was sold for 1 lakh 60,000. But the above transaction of gross profit earned during the year was 25. Abnormal, same calculation what we did. Okay, same but different. Now, how much is the sales? 52 lakh 20,000. Okay, in this we have normal and abnormal. Abnormal, it they tell you. Okay, at the time of valuing stock on 31st March 2021, is it starting of the year or ending of the year? Ending of the year. Okay, sum of 60,000 was written off. Last year only they already wrote off. Okay, now it was originally purchased for 2 lakhs. They already wrote it off. Now it is sold for 160. 160 is an abnormal sale for you. Correct? So abnormal sale will be 1 lakh 60,000. Abnormal. 52 lakh 20,000 minus 1 lakh 60,000. 50 lakh 60,000 is your normal sales. On your normal sales, what did you do? You earned a profit of 25% on cost, which is 20% on sales. 10 lakh 12,000 is your profit. Did you make 10 lakh 12,000 as profit? Okay. On abnormal sales, how much profit did you make? Abnormal sales, it was 2 lakh. 60,000 was already reduced. That means now it is at 140. You sold it for 160. That means you made a profit of 20,000. That means 10 lakh 32,000 is your profit. 10 lakh 32,000. So sales minus 10 lakh 32,000. 52 lakh 20,000.
6 lakh 42,000.
41 lakh 88,000. What are you telling?
Closing stock.
Okay. Closing stock. Fine. 41 lakh 88,000. So 41 lakh 88,000 you will minus. So 7 lakhs plus 34 lakh 60 plus 7 lakhs minus 41 lakh 88,000. 6 lakh what?
46.
I'm getting 6 lakh 72,000. Okay, just we'll check the solution. 6 lakh 72,000. Somewhere you missed something. Opening stock, purchases, manufacturing expenses. Can you see 10 lakh 32 over here? The gross profit which we calculated, sales minus gross profit, you will get cost of goods sold, which will lead to the closing stock. Is that clear? Yes. Now, question number 1. Okay, practical question number 1. Last question. Huh? I'll add all this MTP RTPs. I'll add because otherwise I don't know when we would have finished. Huh? He'll sit. Obviously, we know the reason. Yes, X was closing his books on 31st of March 2022. Failed to take the actual stock which he did only on 9th April 2022. When did he take the closing stock? 9th April. Now we should do reverse. We should come backwards. When it was ascertained by him at 2,50,000. 9th April they found the stock, that is 2,50,000. Now, if at all something is sold, what should you do? Reverse it. If something is purchased also, you should reverse it. Now, it was found that sales are entered in the sales book on the same day of dispatch. You know why it is very important? This question is very, very important. You know why? They did not ask you what is closing stock. If they tell you what is closing stock, it is as per books. They told you ascertain the value of physical stock. Everything is fine. Let's go. Ascertain the value of physical stock. What did they tell? Ascertain the value of physical stock. I don't care what is there in the go down. I mean, what is there in the books. I want to know what is there in the go down only. Clear? 2,50,000 is there. Now, it was found that sales are entered in the sales book on the same day of dispatch and return inwards in the returns inward book as and when the goods are received back. That means what they're telling, sales I am putting in the sales book when I send the goods. When the goods leave and I am returning, when the return goods are returned, I will enter in the book when I receive it. Purchases are entered in the purchase day book once the invoice is received. That means I have received the goods also, but I did not get the bill, I will not pass the entry. Are you getting my point? Did you understand this? Understanding this is very important to understand this. Clear? Sales, I have given the bill, I will not pass the entry. When the goods are going, that time I will pass the entry. Sales return. When it received back, I will pass the entry. Purchase, I got the goods, I will not pass the entry. I will wait for the bill. I will see the bill and I will pass the entry. So purchases are entered in the purchase day book once the invoices are received. Is this clear? Now, it was found that sales between 31st of March 2022 and 9/4 as per the sales day book are 17,200. As per sales day book, it is 17,200. That means goods have gone. When will I enter in the sales day book? Only when goods go. So, goods went 17,200. What should I do? I should bring it back. Because already it is in future. I am reversing the transaction to come to 31st March. 17,200. Now, understand this. 17,200. Now, rate of gross profit is 33.33% on cost. That means it is how much on sales? 25% on sales. Minus 25%. 17,200 minus 25% will give you 12,900. Is this clear? 12,900. Can you see? We have added it. Goods are sold, but we are adding it. Why? Because we are reversing the sale to come backwards in time. Okay, this is your first transaction. Okay, next. Purchase made between 31st of March and 9/4 as per purchase day book are 1,200. Out of these, goods amounting to 500 were not received until the day of stock taking. How much is there in the day book? 1,200. But how much we actually did not receive? 500 was not received. So what will I do? 500 is not received. So what will I do? Will I take 500? No, I will take what? Only what I received, because they have asked for physical stock. If they would have removed this word physical and asked stock, then I would take everything. but they asked only physical stock. So what will you do? Only 700 will be reversed. Why are you reversing it? Because purchase means goods came in, you're going backwards in time, so remove the goods out. 700. Okay, last thing you have goods invoiced during the month of March, but goods received only on 4th April amounted to 1000. Goods invoiced, but goods were received only on 4th April. Okay, if you invoice the goods, somebody gave you bill, so you entered it, but goods did not come. Somebody gave you bill, so you entered it, but goods did not come. When did the goods come? When did the goods come? Goods came only on 4th April. So what should you do now? Are you getting my point? See, understand this. It's only because of, see, goods were invoiced in March. Goods were invoiced in March. Okay. So it came on what date? 4th April. Now see the starting of the question. Okay. Failed to take actual stock, which he did only on 9th April. On 9th April when he counted, even this was there, no. Even this was there, no. But it is already there in the, this thing, physical stock on 31st March, it is not there, no. Are you getting my point? If you are telling, sir, it should be stock of March, 100% it should be stock of March. But is it there in the physical stock of March? No. They asked you to calculate physical stock. When did you get the bill? In March. When did you pass the entry? In March. But when did you receive the goods? In April. That means in March it was not there. So 1000 is also subtracted. And that will give you the value of physical stock. Is this clear? Yes. With that we are done, guys. That's it. We are done with the marathon. Okay, CA Foundation marathon completed. Now it's your job. You have to go and study. Okay, get out of all ICU and whatever this thing batches you are in. Focus on getting into CA Inter regular batch. Okay, focus on getting into CA Inter regular batch. Please put your marks card as your wallpaper on your phone, so that whenever you feel distracted and go into the phone, you will know. Only two things you should do. Either put the marks card as a wallpaper or put your parents' photo as the wallpaper. So when you look at parents' photo, you're like, okay, I want to disappoint them. Okay, I'll go to Instagram and watch reels. Okay, when you see I don't want to disappoint them, I'll go and study. Is this clear? Yes, guys. See you in Inter. Bye-bye. Bye. Let's check the RTPs and the past examination questions of incomplete records. Okay. So question number 10, Ankur keeps his books of accounts by single entry system. However, he is able to give you the following list of his assets and liabilities in the beginning as well as at the end of the year on 31st March 2024. Now, whatever is there at the beginning of the year, cash in hand, cash at bank, bank overdraft, bills receivable, stock, debtors, furnitures, creditors, and bills payable. Okay. So what are you going to do with that? You will get the opening capital using that. When you put all that, you will get the opening capital. See, statement of affairs on 1st April 2023, balancing figure is capital. All the items from the table, you just enter it over here. Next. Okay, after that, when you put all the items from here, okay, to the statement of affairs, can you see statement of affairs on 31st March 2024? You enter all these things. What has adjustments? Make the adjustments. Ankur introduced 10,000 as fresh capital on 1st October. He also withdrew 5,000 every month for his household expenses. So 5,000 every month means 5,000 into 12. This makes up to 60,000. During the year, there was no sale or fresh purchase of furniture and fittings. Ascertain the profit earned by Ankur during the year ended after depreciating furniture and fittings at 10% per annum and creating a provision for bad debts at 5% on debtors. So whatever furniture you found over here, 65,000. Okay, that got depreciated at the rate of 10%. Whatever debtors you found over here, provision got created on that at the rate of 5%. Then rest of the things are directly from the table itself. And you got capital. Okay, you got capital. So now what happens? What is the opening capital? Opening capital was 2,05,250. What did they tell? That there was no, 10,000 as fresh capital. So 10,000 gets added to that. And then what did they tell? 5,000 every month is drawings. So minus drawings, 60,000 is drawings. So you should actually get 2,05,250 plus 10,000 minus 60,000. It should have been 1,55,250. But what is the capital over here? 2,17,300. That means 62,050 is the profit. 62,050 is the profit. Clear? This is your solution. This is incomplete records from RTP May 2024. Let's go to RTP September 2024. Okay, September 2024, you have a question. Shivam Enterprises maintains its books of accounts under single entry system. Balance sheet on 31st March is already given. That means opening balance sheet is given. You know the capital already. You don't have to worry about it. Then, what did they give you? The following is a summary of cash and bank account for the year ended. Cash and bank account is also given. Now, what are you going to do? Let's see what they have asked. Go to the end of the question. You are required to prepare trading account, P&L account for the year ended and balance sheet as at that date. Okay, you already have the opening. You have the summary of cash and bank transactions. Okay, now have a look at this. Cash sales. Where will cash sales go? It should go to your trading account. See, in your trading account, you have cash sales 1,10,000, 1 crore 10,70,000 direct. Okay, next thing, you have receipt from debtors. Receipts from debtors, where should that go? It should go to the debtors account. Go to debtors account. The entry for it is receipts from debtors is, okay, cash or bank account debited to debtors account. You can see 27,75,000. Next, payment to creditors. Creditors account debited to bank account. You can see creditors account debited to bank account. Then you have sundry expenses paid. Expenses should go to your trading and P&L. P&L you will put into P&L over here. So in your P&L, okay, in your P&L you will find sundry expenses 9,18,750. 9,31,050 is there. So 9,31,050. Okay. 9,31,050. And can you see over here outstanding expenses? Last year's outstanding minus 67,500. And do we have more outstanding? Anywhere have they given anything about outstanding? No. So this becomes 9,31,050 minus 67,500, 863,550. 863. I think there is more outstanding expenses which are given. One second, guys. See here, outstanding expenses 55,200. So what will you do? You will add 55,200. This year's outstanding 55,200. So you get plus 55,200. 9,18,750. 9,18,750 is your expense. And in the balance sheet, you have to put 55,200 outstanding expenses. Okay. Then you can see drawings 3,60,000. Directly in your capital, you have to remove 3,60,000 from capital. Okay, then you have closing balance of cash that should go to the closing balance sheet. You can see in the balance sheet 1,90,950. Next, they are telling discount allowed to trade debtors. Okay, discount allowed to trade debtors. The entry is discount allowed account debited to debtors, and then you also have to put that to your trading and P&L account. You can see your P&L discount allowed 54,000. Next, after that they have received from trade creditors amount to 54,000 and 42,500. So discount received is creditors account debited to discount received. You can see it in the P&L 42,500, and in the creditors ledger you have to debit the creditor 42,000. Next, annual fire insurance premium of 9,000 was paid every year on 1st August for the renewal of the policy. Okay, when are they paying? They are paying it on 1st August for the renewal of the policy. Okay, you can see that in your P&L. Sorry. Yes, insurance premium. Every year they are paying on 1st August. Okay. Annual insurance premium 9,000 is paid every year. So what happens? It is paid on 1st August. That means you are paying till 31st July. So 4 months. So 9,000 into 4 by 12, that means 3,000 will be prepaid. 3,000 is going to be prepaid. Now, do we have that information prepaid in the opening balance sheet? Yes. Can you see prepaid? So last year's prepaid will get added and this year's prepaid will get minus. So net effect will remain same on the sundry expenses. Your sundry expenses which we have seen that time, it will be same. Last year's prepaid 3000, this year's prepaid 3000. You'll just add it and you'll subtract it. Okay. Then after that, what is going to happen? The next thing, prepaid insurance also should be shown in the balance sheet. Can you see 3000 in the balance sheet? Prepaid insurance. After that, you have furniture and fixtures were subject to a depreciation of 15% per annum on diminishing balance method. What is the furniture that is given in the opening balance sheet? 1,50,000, 15%. 1,50,000 into 15%, that is going to be 22,500. Okay, depreciation 22,500, and this should be after depreciation 1,27,500. Then after that, what did they tell? They said the following are the balances. Stock, closing stock. Where will closing stock go? Go to trading account, 9,75,000, and also put that into the balance sheet. Debtors, any provision for doubtful debt? Nothing. Directly in the balance sheet, closing balance sheet. Then gross profit is to be maintained at 10% on total sales. Now till now we don't know the total sales. So if you see debtors account, we know the opening balance of debtors, we know the closing balance of debtors. Balancing figure is going to be sales. 28 lakh 60 is your credit sales. Go and put it to your trading account, 28 lakh 60. Now you know your total sales. When you know your total sales, automatically you can find out your gross profit. They said 10% of your total sales is gross profit. Okay. Now opening stock is given in the question. Closing stock is given in the question. Okay. Opening stock plus purchases. Okay. Minus closing stock is basically your cost of goods sold. Okay. Using this formula also you can find the purchases. Otherwise, this is just going to be the balancing figure over here. In the trading account, you can just take it as the balancing figure. Clear? Next. After that, what do we have? Purchases. Creditors account, you can get the purchases as well. See, creditors account, you have opening balance given, closing balance given, balance brought down, balance carried down, discount received, everything we have put, balancing figure, closing balance. Oh, purchases closing balance is not given. Okay, sorry. Creditors closing balance is not given here. Where is the creditors closing balance? No. So you have to find purchases using the cost of goods sold formula and then you can fill the creditors. Okay, that should be it with this particular question. Not much of a problem. Only thing is find purchases using COGS formula. Clear? Next, Jan 2025 RTP. We'll see incomplete records. What did they ask? Following is the incomplete information of Moonlight Traders. Following balances are available on 31st March. Okay, all this information they have given. You are required to prepare trading P&L and balance sheet. Now, okay. Let's start trading P&L balance sheet. First, you have land, plant and machinery, office equipment, debtors. Debtors opening balance is missing. So when you prepare debtors account, you'll get the opening balance. Creditors for purchases, closing balance is missing. So when you prepare the creditors account, you'll get the closing balance. Creditors for office expenses. Okay, that means outstanding office expenses. Stock, opening stock is missing. In the trading account, you should get the opening stock as a balancing figure. Okay, then long-term loan from FBI 12%. Bank closing balance is missing. So you have to prepare the bank account and closing balance will be their balancing figure will be your closing balance. Now collection from debtors 9,25,000. Collection from debtors. What are you going to do for collection from debtors? You have to prepare your debtors account. Yes. Can you see over here? By bank 9,25,000. Okay. Then payment to creditors for purchases. What should be the entry for this? We have discussed many questions. Creditors account debited to bank account. Then payment to office expenses excluding interest on loan. You have paid for office expenses. So entry for this office expenses account debited to bank account. Salary paid, salary account debited to bank account. Selling expenses to bank account. Cash sales, bank account debited to sales account. And this will also go into your trading account. Credit sales, 80% of total sales. Credit sales is 80% of total sales. So 2,50,000 is your cash sales, which is 20%. Okay. How much is 80%? 2,50,000 is 20% into 80 divided by 20. So basically 10 lakhs. 10 lakh is your credit sales. Okay, 10 lakhs is your credit sales. You can see credit sales to sales 10 lakhs. Okay, only the tricky information we will discuss. Credit purchases 5 lakh 40,000. What will you do? Purchases account debited to creditors. Cash purchases 40% of total purchases. Okay, so what happens now? 5 lakh 40,000 is 60%. How much is 40%? Because we want the cash purchases. So 5 lakh 40,000 into 40 divided by 60. So this becomes 3 lakh 60,000 is your cash purchase. Let's have a look at it. Okay, I think they have prepared cash account. See, by purchases 3 lakh 60,000. Then gross margin at cost is cost plus 25%. So you know the profit percentage 25%. On sales it is basically 20%. That time you'll get the gross profit. Whatever missing figure. What is the missing figure in the trading account? It's going to be your opening stock. Missing figure in the trading account is going to be your opening stock, because opening stock was not given. Okay, see over here the balancing figure. Can you see opening stock is a balancing figure 25 by 125 on sales. Okay, you will get the gross profit. Missing figure is the opening stock. Discount allowed shouldn't be a problem. Discount allowed account debited to debtors. Discount received creditors account debited to discount received. Depreciation to be provided as follows: plant and machinery 10%, office equipment 15%. Plant and machinery 10%, office equipment 15%. That also shouldn't be an issue. Okay. What will you do? Show it in P&L and also reduce it from the asset when you prepare the balance sheet. On 1/10/2023, they sold a machine having book value of 40,000. As on 31st March 2023, at a loss of 15,000. New machine was purchased on 1/1/2024. Okay, they have told about machinery now. Machinery, do we know the opening balance? 2,20,000. Okay, 2,20,000 is the machinery, and they have told on 1/10/2023. So if I'm preparing a machinery account, okay, this is our machinery account. Opening balance of machinery is 220, closing is 330. So 2,20,000, 3,30,000. Clear? Okay, and they told that they sold a machinery having book value of 40,000. Okay, machinery depreciation is 10%. So first what you will do, book value 40%. As on 31st March, it is sold on 110. So 40,000 into 10% into 6/12. 2,000 is going to be depreciation. By depreciation 2,000. And then it is sold at a loss of 15,000. So 40,000 minus 2,000, 38,000 minus 15,000. That means it is sold for 23,000. So it should be by bank 23,000 and by P&L 15,000. By P&L 15,000. You can go and check in your bank account. They have prepared the bank account. Okay, in the bank account you should find sale of machinery 23,000, and in the P&L you should find loss on sale. In P&L you will find loss on sale 15,000. Clear? Then they said that a new machinery is purchased on 110. 110 a new machinery is purchased. This shouldn't be the 3,30,000. So now what happens? 2,20,000. Out of that you have removed 40,000, so it should be 1,80,000. But it has become 3,30,000. That means 1,50,000 is the value of the new machine. 1,50,000 should be the value of the new machine based on the closing balance that is given in the question. So go and check in your bank account. 1,50,000. 1,50,000. See, purchase of machinery 1,50,000. Can you find 1,50,000 there? Yes, that should be it. Now after that, what are we going to do? 1,50,000, but this one 1,50,000. Now understand this. Out of 2,20,000 which I had, 40,000 is gone. So I have 1,80,000, and this is used for full year. So 10% depreciation, 18,000, and 1,50,000 which I purchased, 10% depreciation only for 3 months. 3 divided by 12. 15,000 divided by 4, so 3,750. So 18,000 plus 3,750, 21,750. This is going to be the depreciation 21,750 on the plant and machinery. Now, we should have the depreciation figures with us in our plant and machinery account. They have prepared only to find the purchases. Then you have to calculate depreciation. Can you see 21,750? It is showing 23 because even this 2,000 is there, depreciation on the machinery which is sold. Okay, total depreciation is 23,750. That 2,000 we had already put over here itself. Okay, remaining is 21,750. Office equipment was sold at its book value on 1/4/2023. Office equipment was sold at its book value on 1/4/2023. That means at the starting of the year itself, what is the office equipment that they have given? 1,05,000. It became 85,000. That means 20,000 is sold. 20,000 is sold. You should find it in the bank account. Can you find in the bank account sale of office equipment? 20,000. Okay. And now whatever is remaining, 85,000, on this you're going to calculate depreciation on this. At what rate you're going to calculate? 15%. Okay. This depreciation at the rate of 15%. That means 85,000 into 15%. You should find 12,750 as a depreciation. 12,750 depreciation on office equipment, 12,750. Clear? Next, after that, what do we have? Anything twisted? Loan was partly repaid on 31st March 2000 together with the interest for the year. Can you see the loan here? How much was the loan? 1,60,000. It became 60,000. That means you have paid 60,000. Okay. And plus you have paid interest. How much is the interest? 1,60,000 into 12%. Okay, you have paid interest at the end of the year. When was the loan repaid? Loan was repaid on 31st March, last day of the year. So 1,60,000 into 12%, 19,200 is the interest and 60,000 is the loan which you have repaid. You can check the bank account. 60,000 plus 19,200, 79,200. Rest of the things you should be able to handle. Okay, that shouldn't be a problem. Only the tricky things we have discussed in this particular question. RTP Jan 2025. Let's see in RTP May 2025 what question they have asked. The most recent RTP for your exams. Okay, Saraswati Enterprises maintains their books of accounts under single entry system. Balance sheet on 31st March 2024 as follows. Can you see they have given the opening balance sheet? Capital is already there. Outstanding expense is also there. Prepaid expense 300. A similar question was there. See cash and bank account. Just now we solved one similar question. Okay, which was there. Discount allowed to debtors. Annual fire insurance premium 1st August. Furniture and fixtures, depreciation 15%. Okay, closing balances are given. Gross profit ratio. Exact same question we have just done. That was, I think, in September. Yes. See, exact same question. Here it is 3,000. There it became 300. Similar question is just done. So we are done with that. Copy of May 25 also done. June 2024, they had asked one question, incomplete records. Can you see Arshit Traders, retail business, capital is there. Okay, capital is there. Opening balance sheet is given. Summary of cash and bank account is also given. Then what did they tell? Gross profit ratio is 12.5% on sales is maintained throughout the year. So you have the sales information, you get the gross profit. During the year, discount allowed to debtors and creditors. Similar question again. The closing balance of debtors and creditors are also given. 31st March amount of 14,800 was outstanding towards salary. So what you're going to do? Add this to salary and show it in balance sheet as liability. Depreciation at 10% to be charged on motor vehicle and furniture. Similar question we have just done. Okay, shouldn't be a problem as well. There is no headache in this. Incomplete records. Following information relating to Mr. Prem, who maintains his books under single entry system, is unable to ascertain the amount of bad debts incurred by him and seeks your help. They are asking only bad debt information. Debtors. Can you see opening balance is 6,50,000 and closing balance is 8,50,000. Then sale for the financial year is 16 lakh, out of which 80% is credit. So 16 lakh into 80%, that makes it 12,80,000 is 12,80,000 is credit sale. Okay. Then payment received during the year is 7,50,000, out of which check of 18,000 were dishonored. So 7,50,000 minus 18,000, take the net here, 7,32,000. Bills of exchange accepted by customer. So bills receivable account debited to debtors, 2,90,000. Okay, discount allowed is 1% of credit sales. So what we are going to do? Discount allowed. Yes. So 12 lakh 80,000 into 1%, that's going to make it 12,800. Now you can just check the missing figure. 6 lakh 50 plus 12 lakh 80,000 minus 7 lakh 32,000 minus 2 lakh 90 minus 12,800 minus 8 lakh 50,000. You're getting 45,200 as the balancing figure, and that should be your bad debt. B. See, bad debts balancing figure 45,200. Easy 5-mark question was asked in September. Let's go to Jan 2025, guys. Jan 2025, they have asked this. Assets and liabilities are given of Mr. Sarthak. Okay, I think same question is there in the study material as well. All the assets are there. Building closing balance is not there. How will you get depreciation 5%? 1,90,000. Furniture by 10%. 67,500. On 1st June, additional capital brought in and proprietor has withdrawn 2,500 for meeting family expenses. So what you will do, opening statement of affairs you prepare, you'll get the opening capital. Okay, then you prepare the closing statement of affairs, you'll get the closing capital. To the opening capital, add the additional capital, subtract the drawings, that will get one value, compare it with the closing capital, whatever value you get, the difference between these two is the profit. Difference between these two is the profit. Is this clear? That should be it with the incomplete records. We have discussed all the questions of incomplete records, all the partnership RTP questions. On 31st March 2023, the balance sheet of X, Y, and Z sharing profits and losses in the proportion to their capital stood as follows. So that means their profit sharing is 2:3:2. Okay. And the entire thing is given. On 1st April 2023, X desired to retire from the firm and the remaining partners decided to carry on the business. Retirement of a partner. It was agreed to revalue the assets and liabilities on the rate on the following basis. Okay, land and building to be appreciated by 20%. This is a revaluation point, and plant and machinery 30% revaluation point. Stock of goods to be valued, revaluation. Old credit balance of sundry creditors to be written back, revaluation, shouldn't be a problem. Provision for doubtful debts to be provided. This is also a revaluation point. Joint life policy of the partners surrendered and cash obtained is 22,650. Can you see joint life policy over here? No, this is a point which you need to understand. Okay, shouldn't make a mistake in this one. Now, see over here. They have put 22,650 directly into revaluation account itself, or you can also put it into partners capital directly. Partners capital, you can distribute it to partners in their profit sharing ratio, and later when you're preparing balance sheet, remember you have to add 22,650 to the bank balance because there is joint life policy amount received. Clear? That is one point. Goodwill of the entire firm is valued at 42,000 and X share of goodwill is adjusted in the accounts of Y and Z, and would share profit, who would share profits and losses equally. So 1:1 is their future ratio. So you have to calculate the profit sharing, you have to calculate the sacrificing ratio, then you have to do everything. Clear? Okay, so goodwill you have to distribute, gaining partner will give it to sacrificing partner. The total capital of the firm is to be same as before retirement. Individual capital is in the profit sharing ratio. They said total capital should be same. So total capital was how much? 60, 90 and 60. That means 60, 60, 120, 120 plus 90, 210,000. 210,000 was the total capital. It should be the same. That means it should be in the same ratio between the new, continuing partners, 1,05,000 and 1,05,000. If you look at the solution, you will find the balance carried down in the partners capital should be 1,05,000, 1,05,000. Okay, then amount due to Mr. X is to be settled on the following basis: 50% on retirement and balance 50% within 1 year. So what happens? Whatever you find in the balancing figure in the retiring partners capital account, 50% you will write to bank and 50% will be transferred to loan account. 1 year later, they're going to pay it. Okay, that shouldn't have been a problem. Easy question. Dissolution of partnership. Okay, you are required to prepare a statement showing distribution of cash using maximum possible loss procedure. So you have to prepare a statement showing distribution of cash. Let's just quickly discuss that one as well. Okay. Now, Seema, Meena and Tina are partners sharing profits and losses in the ratio of 5:3:2. These capitals were 13,440, 8,400 and 11,760. See the starting point: 13,440, 8,400, 11,760. Okay. Liabilities and assets of the firm are as under. Trade creditors, you are supposed to pay 2,800. Can you see 2,800 trade creditors? And then loan from partners 1,400. Loan from partner is 1,400. Okay. Next, after that, assets are there 1,400, 2,800, and all these. Assets are realized in full in the order in which they are listed above. Meena is insolvent, they said. Prepare statement showing distribution of cash. Patent, first you will get 1,400. You got 1,400 from patent, you give first to creditor, and this is the balance that is remaining after that. Next, you got from furniture 2,800. You'll give 1,400 to the creditor and you'll pay the remaining amount to the partners. Next, you are selling the machinery, you're getting 1,680. 1,680 now you are supposed to give to partners. Now your maximum loss procedure starts getting applicable. 33,600 is the amount what you're supposed to pay to partners. Out of 33,600, if 1,680 is there with you, 31,920 is maximum loss. Distribute the maximum loss in profit sharing ratio. See what has happened. Okay, when you distributed, you got negative for two partners. Negative for two partners. They said somebody is insolvent. Who is somebody? Meena is insolvent. Okay, Meena is insolvent. So both the negatives will be borne by the person who has positive. 1,680 will be paid fully to Tina. Clear? Now you have the balance remaining. This is the balance after all the payments. Now, next last amount is stock. 5,600. You see, still you have to pay 31,920 and you have only 5,600. That means again maximum loss. Maximum loss is distributed in the profit sharing ratio. That time you'll get a resultant figure. This is the amount that is paid and this is the final balance that is there. That is the loss of the partners. Clear? Yes. We'll go to RTP September 2024. First question of partnership there you have is calculation of goodwill. Calculation of goodwill. A and B are partners in a firm. Their capitals are 6 lakh and 4 lakh. During the year ended 31st March 2024, the firm earned a profit of 3 lakhs. Assuming that the normal rate of return is 20%, calculate by capitalization method. Capitalization method is normal value of business minus actual capital employed. Okay, so normal value of business is what? Average profit divided by NRR. So 3 lakh divided by 20%. 3 lakh divided by 20%, you're going to get 15 lakhs. 15 lakhs minus 6 and 4, 10 lakhs. That means your goodwill should be 5 lakhs under that capitalization method. Yes, see, goodwill is 5 lakhs. And here, super profit method, if 2 years purchase, average profit, see, capital employed into NRR. So capital employed is 10 lakhs. 10 lakhs into NRR is 20%, 2 lakhs. And what is our average profit? 3 lakhs. 1 lakh is the super profit into 2. So the goodwill should be 2 lakhs. Goodwill should be 2 lakhs. Okay, let's go further. Admission of a partner. P and Q are partners sharing profits and losses in the ratio of 3:1. As at 31st March 2024, following is the balance sheet. They've given you the balance sheet. Reserves are there. You should distribute it. Okay. They agreed to take R into the partnership on 1/4. Goodwill is to be valued at 2 lakh, directly given. R is unable to bring cash for his share of goodwill. So it is decided that due credit for goodwill to be given to P and Q or their sacrifice in favor of R through R's current account. Through R's current. This is a very important question where a lot of students are making mistakes. See, they said goodwill, for example, now R is admitted for 1/5 share. Let's say R is admitted for 1/5 share. So 2 lakh into 1/5. That makes it 40,000. 40,000. And in this case, I think the sacrificing ratio will be 3:1 only. 3:1. So 30,000 should go to who is the old partner? P. 30,000 will go to P and 10,000 will go to Q. And they told it sacrifice in favor of R through R's current account. It should be given through R's current account. So if you see over here, okay, 13A, 30,000 and 10,000 is given into partner's capital account, but it is given through R's current account. So R's current account debited to the gaining partner's current account debited to sacrificing partner's capital account. Just because they told give through R's current account, that doesn't mean that it will come and fall into the capital account of the sacrificing partner. Here, I mean, current account of sacrificing partner. It is falling into capital account only. Just give it through the current account. Pay 1,40,000 is the capital. This is revaluation, this is revaluation, this is revaluation. Shouldn't be a problem. Capital account of partners are readjusted on the basis of the profit sharing arrangement. R's capital will be kept as base. I think similar question we have already seen. R's capital is 1,40,000. Keep that as the base, compute the total capital, and then you will be able to find surplus or deficit. Okay, surplus or deficit, you will be able to find. That shouldn't be a problem. Jan 2025 RTP, we'll see what they have given. Do we have one more question from that? No, that's it. Okay, Jan 2025 RTP. First one is computation of, okay, P&L appropriation account they have asked. Akbar and Bali are partners in a firm sharing profits and losses equally. What did they tell? It is decided to transfer 10% divisible profit to reserve account, prepare P&L appropriation account for the year ended, and show capital account and current account of partners. P&L appropriation account they have asked. Now, on 1st April, the balance of their capital account was Akbar 50,000, Bali 40,000. Akbar 50,000 and Bali 40,000. Can you see the opening balance of their capital account? Yes. On that day, the balance of their current account was Akbar 10,000 and Bali 3,000 debit. Current account 10,000 and 3,000 debit. Then interest at 5% is allowed on the balance of capital accounts as on 1/4/2023. So give the interest on capital. Okay, what is the balance? 50,000 and this thing. On 50,000 you are going to calculate, and on 40,000 you are going to calculate. That is the interest. Okay, shouldn't be a problem. Then Bali is to get annual salary of 3,000 which had not been withdrawn. So you have to give that annual salary of 3,000. Correct? See, salary to Bali 3,000 over here. Then drawings of Akbar and Bali during the year was 1,000 and 2,000 respectively. Drawings will not bother us over here. It will go to capital account. Can you see drawings 1,000, 2,000? Then the profit for the year ended before charging interest on capital after charging Bali's salary. Was 70,000. So what you're going to do here, add the salary back, 70,000 plus 3,000. You're going to add the salary back, and this is going to be 73,000. Then remove the salary in P&L appropriation account. Next, it is decided to transfer 10% of the divisible profit to reserves. After removing this and this and this, so 73,000 minus 3,000 minus 4,500. You have 65,500. Okay, on that 10% you transfer to reserves. Remaining everything will go to partners' current account in profit sharing ratio. Okay, there shouldn't be an issue with that. Anything? Okay, interest on capital came, salary came, profit share also came, and remaining is balance carried down. Here we don't have any transactions in capital account. That is it. Next, calculation of goodwill. The following information given below: total assets, external liabilities, normal rate of return, average net profit for the last 2 years, capitalization method, and super profit. Just now we saw it shouldn't be a problem. You have, okay, capital employed. How will you get? 8,80,000 will be your capital employed. Okay, then rest of the things we have just seen. Admission and retirement of partner. Acme & Co is a partnership firm with X, Y, and Z, sharing profits and losses ratio 10:6:4. Balance sheet of the firm is given as under. XYZ they have given reserves, unappropriated profit. Okay, rest of the things are all regular. It is mutually agreed that Y will retire from the partnership and in his place P will be admitted as a partner with effect from 1st April 2024. For this purpose, the following adjustments are to be made. Goodwill of the firm is valued directly 3 lakhs and it will not appear. Directly see 3 lakh is the goodwill. See the persons, whoever is gaining partner, see their share, give it to the sacrificing partners. Building and plant and machinery to be depreciated. 20%. Investments are to be taken over by the retiring partner at 45,000. Provision of 20% is to be made on trade receivable. All this is completely for revaluation. In the reconstituted firm, the total capital is 6 lakhs, with which will be contributed by XYZ and P and XZ and P in their new profit sharing ratio. Surplus funds, if any, to be used for repaying bank overdraft. Total amount of due to retiring partner shall be transferred to loan account. I think similar question is already there in the study material. Okay, where one partner goes and another partner comes. Shouldn't be a problem again. Dissolution of partnership. Neptune, Jupiter, Venus, and Pluto had been carrying on business in the ratio of 3:2:1:1. They decided to dissolve the partnership on the basis of the following balance sheet as on 30th April 2024. You can see the balance sheet. Capital account is given. General reserve is also there. General reserve and also capital reserve is there. Okay. General reserve, capital reserve. The assets were realized as follows. They have given the information. Expenses of dissolution is there. Further creditors of 12,000 had to be met. General reserve, unlike capital reserve, was built up by appropriation of profits. You are required to drop realization account, partners capital account, bank account, assuming that Venus becomes insolvent, nothing is realized from his private estate. Apply the principles of Ghana versus Murray. Okay, dissolution of partnership. We'll have a look at this. 14th question. Okay, retirement admission. We have seen too many questions. Okay, let's go further. Now, premises, furniture, stock, debtors, four things. Just transfer it. Premises, furniture, stock, debtors. We have transferred it to realization account. Bank will be there in bank account itself. Okay, you have to go to bank account, opening balance. Next, this is the capital with capital overdrawn, Venus and Pluto. So there will be a debit balance, 10,000, 12,000, debit balance, two balance brought down. And here it is buy balance brought down, 1,60,000. Then you have general reserve, 56,000. Distribute by general reserve, you are just going to distribute to all the partners. Capital reserve, that also distribute to all the partners. Done. Sundry creditors and mortgage loan both will go to the realization account. Sundry creditors and mortgage loan. Next, assets realized as follows: 24, 60, 16 and 90. You got the money. 24, 60, 16 and 90. You got the money. This is the amount that you got. 1,90,000 will be in the bank account. Next, after that, expenses of dissolution 4,000. Realization account debited to bank account. Next, after that, that's it. They have told. So you have to pay your liabilities. What are the two liabilities that you have? Creditors and mortgage loan. So you'll write creditors. Okay, realization account debited to bank account. Okay, that is it. Now, whatever loss is there, loss will be transferred to realization account. One partner is insolvent. Who is the partner who is insolvent? Venus. Venus became insolvent. So when you transfer this loss, see the loss will come and fall here into the partner's capital account. But Venus cannot pay. So the partners, when they bring money, only the solvent partners will bring money for their realization loss. Now, whatever is there in this person, that has to be borne by partners in Ghana versus Murray. That means it is going to be borne by Neptune and Jupiter only, because Ghana versus Murray tells that it should be borne by solvent partners in capital ratio. So 5:3. In 5:3 ratio, they will distribute. Can you see 5:3? Then remaining after that, you're just going to see who has to get, who has to receive, who has to pay. This person has to bring money. These two will get money. That's the end of it. Okay, that shouldn't be any problem. Okay, capital ratio, they've added this also. Capital, general reserve and capital reserve also they have added, and then they have taken the ratio, that is 13:8. Sorry, not 5:2, whatever. It is 13:8, the capital ratio. Clear? May 2025, we'll see what is the relevant question that they have asked for May 2025 partnership. Seema, Yedant and Zoya are in partnership sharing profits and losses. Zoya died on 30th June. The balance sheet of the firm is as follows. They have given the balance sheet. Okay. Now, in order to arrive at the balance due to Zoya, it was mutually agreed that land and building, this is revaluation. Debtors are all good. No provision required. Revaluation. Stock revalued. Okay. Goodwill will be valued at 1 year's purchase on the average profit of the past 5 years. Zoya's share of goodwill will be adjusted in the accounts of Seema and Edan, that we anyways knew. Zoya's share of profit on 1st April 2024 to the date of death to be calculated on the basis of average profit preceding 3 years. They didn't tell preceding 3 years till the date of death. They just told preceding 3 years. So just take the preceding 3 years profit. Okay, we are in which year? We are in 30th June 2024. Okay, that means 30th June. That means 31st March 2023 is the last year in. Okay, 23, 22, 21. These 3 years you are going to take for goodwill calculation. Let's quickly have a look. It took 5 years. Last 5 years. Goodwill should be valued 1 year's purchase. Okay, sorry. Last 5 years. But share of profit till the date of death will be based on the average profit of preceding 3 years. Okay, goodwill 5 years only. Goodwill is going to be 5 years itself. And then you're going to take 1 year's purchase and give it to Zoya. Okay, share of profit, you see. Share of profit. P&L adjustments, see 3 years profit they have taken and multiplied into 3/12. Why multiplied into 3/12? Because this person has died. Okay, Zoya has died on 30th June. That means April, May and June. 3 months it's going to be considered. That should be it. That shouldn't, then there shouldn't be any problem. Okay. You are required to prepare evaluation account, capital account, and balance sheet. And in balance sheet, don't forget you have to put one more thing, that is P&L adjustment. Whatever the profit share you are giving, P&L adjustment should be there in the balance sheet. That should be it. Okay. Yes. Let's go further. We'll see if there is anything tricky here. Agarwal, Samuel, and Khan are partners. On 1st April, their fixed capital stood at 2,50,000, 125, and 125. As per the provision, Khan was entitled to salary of 25,000. All partners were entitled to interest on capital. Profit and loss to be shared in the ratio of capital. Net profit for the year ended 31st March 2023 was 165. And for 31st March 2024 was 225, was divided equally without providing for the above adjustments. You are required to pass an adjustment journal entry to rectify the following errors. Oh ho ho. Now, see, already they have distributed profit. Share of profit 22 and 23. 22, 23 and 23, 24, both the years. It is 165 and 225. 1,65,000 plus 2,25,000, 3,90,000. 3,90,000, this should be it. Okay. Now what you're going to do, amount which should have been credited. Okay, which should have been credited. Khan's salary. Khan's salary is 25,000 per annum. So 2 years he is supposed to get 50,000. Interest on capital, what you're going to do, the capital is there, directly take the percentage. These are your interests. Okay. Then after removing that, the share of profit should be only this much. So net effect is what we gave actually. Okay. We have to check share of profit. Balance will be 1,70,000. So 40,000 is the difference. 45,000 and here it is 5,000. 5,000 is the difference. So what you're going to do, remove from one person's capital account and give it to the others. Whoever has negative, give it to them. Whoever has positive, remove it from him. Here, see Samuel's capital account. This you're going to remove and this you're going to clear. That should be it. Then dissolution of partnership. Dissolution of partnership. They have given this thing and then they have told these are the assets realized. Okay. Creditors accept a stock in full settlement of their dues. There is an unrecorded asset that you're going to do. Okay, which was taken over by Aman. There was an old furniture. Okay, if it is taken over by Aman, you're going to take 4,500 value or 3,000 value. Are you going to take the value of 4,500 or are you going to take the value of 3,000? You are going to take the value of 3,000. Unrecorded asset valued at 4,500, which was taken by Aman at 3,000. Have a look at that. Taken by Aman at 3,000. Okay, you can see Aman's capital account debited to realization. Then there was an old furniture which had been written off. Yaman agrees to take it over at 12,000. Okay, Yaman to realization. Firm had to pay 12,000 for outstanding salary which is not provided earlier. Firm has to pay 12,000 for outstanding salary which is not provided earlier. So now what happens? Realization account debited to bank account. Where is that outstanding salary? Yes. Realization account debited to bank account. Prepare realization partners capital and bank account. There shouldn't be any issue. Okay. That was it. The RTP questions, last 4 we have discussed. Partnership examination questions. I don't think there is any issue. Okay. That should be it with partnership discussion, guys.